me just go ahead and draw it in a line format. Okay. If you have squiggly lines going through a vertical chart, you have to understand that it was not designed that way. And if you continue to rely on said squiggly lines, such as EMAs, MACD, SMA, if you continue to rely on these things, you will not be successful. You will not be successful on the charts. You have to understand that the charts can only go one of two ways: up or down. Okay? The candlestick. I want you guys to understand that these candlesticks can only move in two directions: up or down. And everything is based off of levels. Why do you think you see price reacting at the same area? For example, say you have market going in an uptrend, okay? And market found an area of resistance, okay? So an area of resistance is going to be an area where people decide to sell at, okay? So you're going to have sellers here. If price decides to come back up, price has a good chance to short at that same area, okay, of resistance. Since people sold there the first time, has a good chance to sell there the second time, okay? And then you're going to have areas of support. And these are going to indicate buying zones, okay? And even if it doesn't congruently happen like this, a setup can commonly look like this. I call it the support mirror, resistance mirror, or the stack mode mirrors, okay? So you might see a setup that looks similar to price might come up, it might rally past the resistance, you know, come back down, and then mirror the resistance, you know? Very common. You have setups like this for a downtrend type of setup. And then for an uptrend type of setup, could definitely look like this. Price might bounce here. And then price might come back up and then validate it again. So even though it invalidated at this area here, it decided to come back up over here and then go in an upwards direction. Okay. So we have to understand the market is a vertical chart. You're looking at a vertical chart. That's why I do not want you guys to fall into the indicators traps. Okay. Now, there are going to be some pretty good indicators. Okay. Volume. Okay. A lot of people don't even know what volume is. What is volume? Volume is going to be the amount of orders placed at a specific area or time. So volume is the amount of orders placed at a specific area or time. That's going to be volume. So that's the term you always hear. So you want to be buying at key areas of support, okay, because it's going to have most of the volume there. You want to be selling at key areas of resistance because most of the volume is going to be there. Now, let me go ahead and give you guys some secret sauce here. Way more powerful than indicators. Okay, understand that sometimes in the market, resistance can be broken and turned into support. Okay, resistance can be broken and turned into support, and then price can bounce in an upwards direction. Just the same way, support can be broken and turned into resistance. Okay, so resistance can be broken and turned into support, and support can be broken and turned into resistance. Even if it doesn't happen this cleanly, it can happen something like this. And price might run through there, come back up, turn this resistance here into the support later on. Okay, go to the support area, support, say price decides to run under here, come above it, and then come up again. Boom. This area of support made this area of resistance created here. Okay, so I make it simple for you guys, man. I do not want you guys to be struggling. Okay, there's going to be times life is going to be hard. The charts are going to be hard. People are going to be doubting you. People are going to be hating you. And there's going to be times you might not even believe in yourself. And all that doubt has to be killed. Okay, and indicators equal doubt. If you have to rely on indicators to trade, then you can't be a profitable trader. Okay, if you can't just look at the chart and be like, okay, I see why price bounced here, 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 and here, then you cannot be a profitable or successful trader. You will continue to struggle. You will continue to go through hard times. Okay, and it's going to be very, very hard for you to elevate. And the indicators are what's holding you back. So I want you guys to do this. Okay, for a year, no indicators. Okay, no indicators. Just read the candlestick chart clearly. Read it raw. Read it raw. Okay, that's what I need you guys to do. So for a year, no indicators. And I want you guys to just go hard, man. Go hard. Put in 16, 20-hour study sessions. Live on these charts. Understand every single micro reaction. Understand why price bounced at every single area that it did. Understand why price sold off at every area that it did. We have to get the full congruent picture. We want to get to the next level, and we're pushing harder than ever. We're not stopping for nothing. Okay, this is real therapy for me, guys. Just sitting here teaching you guys these charts. I'm so passionate about this. You know, I live for God, and I live to just get people out of financial poverty. I don't want to see anyone struggling. I don't want to see you guys blowing up your accounts or committing suicide over the markets or just going through any financial hardships. I want you guys to be successful. I want you to get to the next level. And I want you to win. Okay? And I want you to win. And best way to win on the charts, okay, is you have to have your setup. Okay? Follow your heart. Okay, if God put it in you to trade, trade. Don't let anyone stop you. Don't let anyone stop you. You have to trade. Okay, whatever's inside of your heart, you got to go with that. You got to do that. It's going to be times you're going to be feeling doubt. It's going to be times you're going to feel like, oh, it's not for me. I don't know. But God put it inside of you for a reason. So go hard. Okay, follow your heart and follow your setup. Okay, you tell yourself, I'm only going to play break and retest. Okay, if you're a break and retest trader, why are you trading anything else other than break and retest? Why? If you're a mirror trader, okay, someone who trades resistance or support mirrors, okay, why are you playing anything else other than mirrors? You need to, if you're a trend line trader, okay, why are you playing anything else other than the trend lines? Okay, that's the things. You have to follow your heart and follow your setup, and most importantly, follow God. Okay, you can get successful. Investing, it's important in this world. Okay, the more shares that we buy, the more companies that we can help, the more that we can help each other on this earth. Okay, faster healthcare products, more communication so we can communicate with our parents, grandparents around the world, etc. Okay, investing in the stock market is crucial. It's important, and don't let anyone else stop you guys from doing it. Very, very passionate about teaching this, and if you want to learn more about it, and if you want to get a free stock watch list, I should see you at stackmode.net. So I pray up to God, keep grinding. Catch you in the next one. Peace.
Quantitative tightening has officially ended, and trust me, this changes everything for investors. For the past few years, the Fed has been draining money out of the system, shrinking its balance sheet, and putting pressure on stocks, real estate, and even crypto. But now, that pressure valve just opened, liquidity is flowing back in, and whenever liquidity comes back, asset prices don't just react, they move. But here's the truth that nobody tells you. The end of quantitative tightening doesn't automatically mean a bull run. It does mean volatility, though. It means opportunity, and it means that the smart money is already positioning while everyone else is still confused about what quantitative tightening even is. So what does this shift actually signal for you? Expect easier borrowing, potentially higher stock valuations, stronger risk-on sentiment, and most importantly, a window of time where early positioning matters more than ever. So let's figure out how we can plant our seeds, what quantitative tightening even is, and how we can learn how to invest. Inshallah. Let's go. Quantitative tightening has ended. All right, let's go on this breakdown how it's going to affect investors and the future of everything. So what was quantitative tightening in the first place? So quantitative tightening is the reverse money printer. Okay. So you know quantitative easing, right? QE. And that's when the Fed prints money to buy bonds. Quantitative tightening is going to be the exact opposite of that. Okay. For the last few years, the Federal Reserve has been destroying money to fight inflation. Okay. Printing more constantly over and over and over and over and over again. Okay. And the mechanism. Okay. So it's when they let bonds that they own expire and don't replace them. Okay. And the result of that is cash disappearing from the economy. Okay. And the goal of it all is to slow the economy down to stop prices from rising. Okay. So quantitative easing is turning the water hose on to fill the pool. Okay. And quantitative tightening is sticking a vacuum in the pool and sucking the water out. Okay. So let's head over to the next slide. So the Fed cannot suck money out forever, or the system would go ahead and just break completely. Okay. So they're stopping or tapering quantitative tightening because inflation is cooling. Okay. The job is pretty much mostly done. And let's talk about the liquidity risk too. If reserves get too low, then banks will start to fail. Okay, and that cannot happen. The whole United States economy and infrastructure is based off of banks, companies, and money flowing through business owners. Okay, an economic slowdown, okay, they don't want to cause a massive recession for pretty much no reason. Okay, so the danger zone. So imagine braking a car to slow it down. Okay, and if you keep holding the brake after the car stops, you don't move. Okay, but if you brake too hard, you skid and crash. Okay, so right now, the Fed is releasing the brake. Okay, that's all it is. So imagine braking a car to slow it down. Okay, if you keep holding the brake after the car stops, you don't move. Okay, and if you brake too hard, you skid and crash. So right now, all the Fed is doing is releasing the brake. Okay, that's it. All right, into the market. Okay, because money's no longer being deleted pretty much. Okay, so liquidity is the lifeblood of the market. It's easily how money moves around. Okay, and risk on. So historically, the end of tightening is a green light for risk assets. Okay, letting us know that there's going to be more money circulating in the economy, giving us a higher chance for our assets to head in an upwards direction, since A, more people will be investing into something with value, okay, or B, people will have more money to purchase things with value. So valuations. So with less pressure rates on PE ratios, okay, stock prices can expand and head in an upwards direction. Okay, and tech and growth. High growth companies like tech or AI companies usually benefit the most when money becomes easier. Okay, because then they're going to have more money to invest back into their company and circulating instead of having to be tight and restrictive with the advancements and innovations, especially tech and AI companies, because the whole point of tech and AI companies is to profit off of future innovation and psychology involved into it, right? Investors then stop fearing the Fed and start fearing missing out. Okay, they're like, hold on, quantitative tightening is, hold on, it's pause. What we got to do is put some risk on, put some money down on the table before market heads up to all-time highs without us. Okay, so when the Fed was selling, okay, you sold. Okay, so now the Fed is stopping. Okay, so the headwind is gone. Okay, the headwind is gone. Make your decisions. Plant your seeds for your asset classes. Okay, so you don't have to struggle in the future. Okay, the market can do two things: go up and go down. It goes up and it goes down. That's it. Okay, you're not playing an intricate math problem that you have to solve every day. All you have to do for the most part, is invest in something that has future value and hold and be disciplined with your money. Okay, fight your flesh. You can't be indulging in things that you want to buy every single other day. Okay, stay down. Should be putting majority of your money away into asset classes. Okay, I'm not saying don't enjoy life. We are here only once. You know what I'm saying? Enjoy life. Do your little thing. Okay, get you some little food, buy you some little clothes, live your life, do your thing. But it can't be that week after week after week after week after week. A lot of the time, you should just be staying down, planting your seeds for your family. All right. So over to the next slide. Supply and demand. So during quantitative tightening, the Fed was a massive seller or non-buyer of bonds. Okay, and this forced interest rates up. So quantitative tightening ending leads to less supply of bonds flooding the market. Okay, and bond prices should stabilize or go in an upwards direction. Okay, and yields should stabilize or go down. Okay, so the real world effect of everything is that mortgage rates are tied to bond yields. Okay, if quantitative tightening ends and yields drop, then mortgage rates could finally come down, making real estate and real life a lot more affordable. Okay, so the fact that quantitative tightening is being ended is a really, really good sign for the future of the economy. Okay, and this is really going to help the housing market, get a lot of people off the streets, okay, and really just help a lot of people out in the world, making life more affordable again. Okay, because we shouldn't be stressed out every single day, you know, just trying to live our life, especially when we're already grinding hard. So let's go over to the next slide. Okay, the biggest risk of stopping quantitative tightening too early is that inflation has a chance to creep and come back up, God forbid. Okay, so the mistake that happened in the 1970s, for example, right? The Fed stopped fighting inflation too soon, and it came back double the strength, ready to bite everything in the tail. Okay, banks crashed, companies crashed, CEOs crashed. A lot of CEOs and a lot of companies ended up selling their companies to other major companies to make up for the fact that they couldn't keep up with that recession crash. Okay, and the market bubble. So if market ends up going up too fast, okay, it creates a bubble that might pop later. Okay, it might pop later super duper hard, and the economy will face its consequences for that. So the currency risk. Okay, the dollar might weaken if they print too much. Okay, if it's too much of something, it's no longer valuable. Okay, if something is everywhere, it's not valuable. Okay, so just think of it logically. If something is everywhere, it's not valuable. Okay, but if something is scarce, it's rare. Okay, it's valuable. Okay, so though we aren't printing, okay, just stop the shredding. Okay, so watch the CPI, Consumer Price Index reports. That's going to be one of the most important reports that come out. That's going to determine how cryptocurrency and the stock market wants to move. Okay, and if inflation ticks up, the Fed might have to restart quantitative tightening, and that would be super duper bad for stocks. So cash yields might peak. Okay, try to lock in rates or move your cash to assets. Okay, keeping your cash in that asset river, especially if the dollar weakens, then that means assets are going to become more valuable. Okay, because people have to have some type of value in something. Okay, so once again, if cash gets weaker, then assets become more valuable. Okay, and the quality growth of everything. So look for companies with low debt that grow regardless of the economy. Okay, and it might be a good time to buy bonds before yields drop as well too, if you'd like. Okay, so review your cash position too. Okay, see how much cash you have and see what you can plant within your asset classes. Okay, don't be scared of the market anymore, and keep an eye on inflation data is ending. Okay, money is back. Okay, it's trying to get healthier. It's trying to flow back into the markets properly. Okay, and liquidity stabilizes, which is really, really good for the market, letting us know that there's going to be more money available, which means more money could be flowing into asset classes such as the stock market or the crypto market. Okay, and this gives us a chance for rates to likely stabilize or drop. Okay, and risk shifts from the Fed fear to inflation watch. Okay, so stay invested, stay alert, keep up with the reports, stay prayed up to God, keep grinding. Make sure you guys aren't buying any assets at all-time highs. Okay, I don't even care if it's real estate. Okay, even if it has nothing to do with the charts, don't buy any assets at all-time highs. Okay, wait for the dip, buy, and catch the V sweep up. Okay, stay prayed up to God, keep grinding, and head over to Stackmode.net if you guys want to learn how to invest. Peace. All right, let's go and let's talk about how to catch big moves, right? This is going to work for crypto, stocks, forex, whatever. All right, how to catch big moves. So, what is a big move? A big move is going to be pretty much a move that involves catching a lot of points and potentially can make you a lot of money. And the reason why we want to be focusing on big moves is because big moves help you turn a little amount of money, okay? So if you have a small account, for example, and the whole goal of trading is to turn a little bit of money into a lot of money, okay? We don't want to be trying to turn, risking a lot of money to make break even or the same thing, okay? We want to be using a little bit of money to try to make a lot of money, okay? And that's going to be scaling with the amount of figures that you have. So 5, 6, 7, 8 figures, etc. You're still going to have the same mental perspective, using a little bit of money to get a large return, okay? So, and that's going to mean a little bit of your portfolio, once again, relative to your scaling. So if you have a $10,000 account, then ideally you want to be using max 10% of your account per trade. Okay, so max $1,000. That's what you want to be using. Okay. Don't want to go over that because then you could potentially just be out of your risk management parameters, throwing you off. Okay. So you want to be using, once again, 1 to 10% of your account per trade. So if you want to catch a big move, focus on the chart too. Okay. Forget about P&L. Forget about the dollar sign. Okay? We got to learn how to read the chart, learn what we're looking for if we want to catch a big move in the first place. Okay. So when catching big moves, once again, don't focus on the profit. We got to be focusing on the process. Okay. Let's go ahead and let's jump into it. How to catch big moves. So if you're on the crypto stock market, you're most likely trading an upwards trending market. Okay, so I can pull up most stocks and I could see that most stocks from left to right goes in an upward staircase direction. Okay, so that's going to be the same for stocks. And let me go and pull up Bitcoin here. Even if I zoom out on Bitcoin, I can see the same thing here. Price started below down here, and I can see price made its way all the way up here to this day. Yeah, so that's going to let me know that price makes upwards direction. Why is price making upwards direction? Okay. So price is making upwards direction movement due to the fact that, one, for stocks, these companies aren't just moving for no reason. Okay, these companies employ people. Okay, so these companies help the economy. Okay, the more people working, the more people paying taxes. Okay, the more people paying taxes, the better the economy can be because the less debt the United States will suffer. So these stocks aren't just stocks for no reason. Okay, they're not just going up in value as well for no reason. They're helping people, they employ people, they feed families. Okay, and as far as the cryptocurrency tokens, right? So the crypto tokens, a lot of crypto tokens are created by humanitarians. Okay, like Ethereum, for example, created to counter Bitcoin's power wattage mining system. Okay, so a lot of humanitarians create crypto. Okay, people who care. Okay, it's people coding these networks. Okay, coding the blockchain network, coding the hash, etc. Okay, lots of coding involved within the cryptocurrency network. So there's people behind these projects. Okay, they want to see these projects succeed. Okay, they want to see it go up in value. And not only that, a lot of these CEOs of these stocks and owners of the token currencies own shares or a percentage of the crypto token. Okay, so they also want to see it go in an upwards direction. So once again, why else do things go in an upwards direction? Let's talk about safety. Okay, when people feel safe to invest into something or keep their money into a certain place, everyone's going to do it. And the benefit of that on the stock market and the cryptocurrency market, etc., is that the more people doing one thing within the trading world, so if a bunch of people are doing some buying, then inshallah, you can go and put into place and assume theoretically that price wants to go in an upwards direction. Okay. If you start seeing a bunch of buying on the order flow on your tape,
you start seeing whales buy in, etc., okay, you can assume that price wants to go in an upwards direction. Everyone's doing it. Everyone's putting big money at it, and everyone's betting on it going in an upwards direction. Okay. So keep that in mind. Things that are safe, people are going to feel comfortable investing in. Okay, that's why Bitcoin's been going up exponentially past couple of years, especially once the SEC, okay, government body, decided to gain regulation over the Bitcoin. Okay. And regulation then leads it to a whole new masses. Okay, people who watch the news and stuff like that, etc., then they're going to feel safe to invest. Hence why Bitcoin rose to 112,000 as of right now. Okay. Fairly quickly as well too. So let me know if you guys were an early investor as well. So that's going to be a reason why price goes in an upwards direction. Now let's talk about them. Two things. We'll break down resistance and support. So the market can only move one or two ways, okay? One or two, it's simple, that's it, okay? It can either move down or up. When market is moving in a downwards direction, right? All it is people selling. So I like to do everything on my higher time frames too. Personally, I like to use the daily and 4-hour time frames. Okay, those are gonna be the 2 time frames I scan everything with. So I'm gonna start off with my daily here. And I could see, once again, this is a left to right chart, but I could see that even from all the way back here in 2017, why did price make this spike right here and then dip down? Why didn't it just go up to infinity? Okay, let me go ahead and answer this question for you guys. This is why stuff just doesn't go up in a straight line. And this is why you shouldn't panic when stuff dumps as well too, because anything that goes down will try to come up within the market. So check it out. Price created this area of resistance right here. Okay. And resistance is going to be an area where sellers are present. Resistance means people sold heavily on this or at this level. Okay. And it's going to be best to see resistance on things like the higher time frames. Okay. You want to see resistance on the weekly, on the daily, on the 4-hour. Okay. You want to see support on those time frames as well too. But resistance means that people sold heavily. So why would people sell? Okay, if they're already up so much profit, why would they not think that's going to go to 1 million? Okay, let's put in the logical perspective here. So this is why it's kind of difficult to trade at all-time highs. So people got in way over here to the left. Okay, and then price just starts pumping in an upwards direction. Okay, they have no take profit above them. They don't know how high it wants to go up in this one cycle. Okay, so the market's going to start collectively selling. Okay, creating a massive sell-off. But once again, anything in the cryptocurrency or market world, as long as it finds its value within the world, it will make its mark. And we could see here, once certain things started to change, when people started investing into it, you can see this area of resistance here, where price fell down heavily at, decided to be passed. Okay, when market decides to pass a heavy area of resistance or support, we know that's going to be called a breakout. So a price broke out right there easily. Okay, and a breakout couldn't be a good move here because why? You don't know how high price wanted to run up to. Price ran up all the way to here. Okay, and there was no previous highs. So this is why when they're structured, it's a lot easier to trade. Okay, and there's going to be some things that you buy and hold and sit in a long-term position. But as far as catching the trend and catching a big move, you want to make sure you know where price wants to exit, where it started at. Okay, and what type of trade it is. Okay, is it a bullish trade or is it a bearish trade? So let's take this example here, right? I have Amazon here. So one thing I know about the market too, I know market's always trying to break all-time highs, okay? Because everything's trying to be the best, okay? Companies want the highest rated currency, stocks want the highest rated value as far as numbers, Okay, tokens want to be the most popular and most used. Okay, so it's very, very competitive. So, in order to compete, let's analyze. So you can see here, this area of resistance up here, and this area of resistance up here. Okay, why is that important, Chris? So areas of resistance are going to be extremely important due to the fact that price is always going to hunt them. No matter if price is at $0, if all-time highs is at 200, it's going to try and break that one day, inshallah. Okay, if an investor gives them $2 billion to revive the company from the ground and people start buying into it, it's aiming right for that previous all-time highs, looking to break it. Okay, because it's looking to be the best. Okay, it's looking to break its future records, break its future numbers. Okay, and a company is trying to get better. Okay, just like human beings, we're trying to get better every day. Companies are trying to be the biggest. Okay, and be in new levels, have a new stock share value, so they can pay out their workers and shareholders more if they give dividends. Okay, so Amazon, for example. So I could see this area of resistance is up here, and I have another area of resistance up here. Okay. Price pause. I just think of resistances as areas where price paused. Okay. Check out this area here. Price decided to create this V area here and bounce in an upwards direction. Okay. So the opposite of resistance, we're going to have support here. Support's going to be an area where price decides to bounce from a downwards demand area. Okay, so price is gonna come down, make a low, okay, and then bounce up from that low. Okay, and that's gonna mean it's in demand at that place. Okay, so demand is gonna mean support, and resistance is gonna mean supply. Okay, so if you ever heard the two terms, that's how you break it down. So when market is shorting, okay, and shorting means selling off, okay, going in a downwards direction. Market is always trying to meet with a area of support below current price or an area of resistance below current price. So resistance can be broken and turn into support. And when price is going in a downwards direction, especially on the stock and crypto market, it's not crashing. What it's doing is looking for a new low. Okay, it's looking for an area where people demand it, and then they're going to go ahead and get it. Okay. So the area of resistance is always where we're going to know where we want to exit at. So if I have this strong area of resistance up here, I know I'm going to go ahead and close and take my profit up here. Okay. And this is how you can catch big moves, especially on things like options. Okay, it's just closing at the right time and one buying at the right time as well too. Okay, so if price starts showing me price action down here from this area of support, and that breaks all-time highs, etc., okay, then you can keep studying that congruency. Okay. So we got Google here. Okay. Create an area of resistance all the way up here at 257. Okay, we're dumping down to 237. Let me go to my 4-hour here and check it out. Okay. So price kind of met up with this area of support over here. Okay. And I don't like to just get in on the first week once again. I like to wait for that daily close. Okay. Once it's the daily close, I'm gonna wait and then go. So we'll jump into another example here, some Tesla. So I can see area of resistance above current price. Okay, price is falling in a downwards direction. Okay. Once I start seeing price curve and give me some bullish momentum, I know price is going to try to reach this area of resistance. Okay. Trying to beat its competitor. Okay. So take this example here. Okay, amazing example. So we have this area of resistance all the way up here. And you can see price decides to create its own area of support system here. Okay, and then look into curl and fill in these areas of resistance. Okay, that's 50 points here of Oracle. And finding a trade just comes down to really just taking your time. So Visa here. Price has this area of resistance up here. My daily, let me zoom all the way out. I can see we're making higher lows. Ultimate low, higher low. Low, low, and then higher low. Okay. So let's start seeing higher lows, price going in upwards direction. That's definitely gonna let me know we're trending hard. Yeah. So I'm gonna go ahead and mark out this other area of resistance over here. Got resistance right here too. Cool. Price falling down in the same exact area. Okay. So A, wait for price to curl, or wait for price to blast past this area, turn it into some support, and then take it up to the next area of resistance. Okay. And then a ruler. And you always know price is trying to hunt resistances. Okay? So don't think that these gaps won't try and fill itself, okay? Because inshallah, they really will. So boom, and that's about 20 points here. And it's definitely a neck out flipper. So I'm going to pull up some crypto examples here. Okay, same thing on the crypto market. Okay, we're not going to make it hard. Just keep it simple. So I'm going to pull up Ethereum here. Okay, market's making that big red dip on the daily. Okay, let me delete all the drawings here. All-time highs is going to be all the way up here. So price is looking to make a low. Okay, so we do have a strong area of resistance right here. Right here. Right here as well too. Okay, two very strong areas of resistance. And I believe way over here as well too. Okay. So then price came down, broke the area of resistance, and then turned it into support. Now price is heading within an upwards formation. Okay, and everything remaining till the area of resistance is going to be a move you can catch. You could just enter in the middle of it. Okay, don't stress over perfect entries. Our only God's perfect. And we're going to slow down, see what the price action is talking about. If we can catch our take profit still, we're going to catch it. Okay, if price made a low, it made a low. You start seeing daily closes and curves, you know what time it is. Okay. It's about having the risk appetite too. So even right here, have this area of support right here. Area of support right here. And then area of support right here. Or resistance right here. So support got broken, turned into resistance. The resistance got broken, turned into support. And now price is trying to sweep with an upwards direction. Okay. So if this is successful, I see price wants to sweep here. And I'm going to go ahead and catch the whole rest of the move up to this level up here. And then you catch the rest of the upward up here. Okay. And then the whole remainder of the move is pretty much going to be in your pockets. Okay. So that's going to be 1, take profit, and then 2. So extremely simple. That's just making it easy for ourselves. Knowing what we're investing into, knowing what we're buying, knowing what we're going to exit. It's really going to be imperative to just making good decisions, okay, and just making sure we're profitable at the end of the day, which is really what matters. So cool. So I'm going to go and pull up another example here. Let's do some XRP. XRP just took a massive dip. The price might be trying to bounce here. We'll see. It bounced really quickly. There's also an area of resistance over here too. Yeah, we have this area of resistance here. Looks like price is reflecting off of that here, and may potentially be going to go in an upwards direction. Okay, so let's go and let's check out this area of resistance up here. Okay, you know we're trying to break all-time highs, so we can keep making new highs. Inshallah. Okay. So think of market logically like that. Solana, for example. Yeah, Solana is super duper useful. Can't trade Bitcoin without it. Can't trade not Bitcoin, like Pepe the Frog coin with etc. Can't trade without Solana. Okay, so meme coins. So even the same layout here, have support, turn into resistance, turn into support. Okay, so the same thing as Solana. Okay, so this is why it's important to have a just certain strong mindset too. Don't panic sell the same place everyone else is doing it. Okay, be calm. Okay, and you got it. Okay, really sit on your trade, let take profit get hit, and yeah, and doing that is really gonna help your flow out. So let me pull up TRX here. It's the same thing. One thing you're gonna notice too about me pulling up all these crypto pairs, they're all very similar. Each and every single one of them are really similar. So they all do the dip. Okay. And price action was just a little different here. So it looks like we had a dip here. We had a heavy dip on September 6th too. And that's also another thing too when it comes to catching big moves. Be aware of like news too. Be aware of news, the most volatile times, etc. too. Okay. So cool. So yeah, that's gonna be how to catch the big move. So prep to go, keep running, and head over to Stackmode on it.
Future trading can be a little tricky if you let it be. You only want to buy when buyers are buying. Try not to ever buy when sellers are selling. In this video, I'm going to teach you guys exactly how to trade pullbacks and how to buy when the buyers are buying and what to identify and look for. Let's go and let's jump into it, inshallah. All right, so here's going to be buying at the right time. You want to buy after sellers are done selling. So sellers need to sell first, and you want to buy when buyers are buying. If you buy when sellers are selling, you're going to go ahead and just get destroyed. Okay, if you're looking to buy at the right time, we have to wait for pullback. We have to wait for price to form an area of support. Okay, so playing pullbacks is going to be really important. And here's going to be the things we have to look at. Okay, one, you need to make sure that you're trading in a trending market. So if we're going to trade pullbacks, which is just price coming down, lower, and then going back up. That's all it is. So if price goes up, comes down, and then goes back up, that's a pullback. So you want to get on your weekly time frame ideally, or be on your higher time frames, such as your weekly, daily, or your monthly. And then we need to analyze the full chart.
So I'm going to start off with my weekly here and get the full bird's eye view of absolutely everything. So I can see here on my weekly that price decides to trend upwards year after year after year after year, no matter what. Okay. We're still ending up at new all-time highs, regardless of how many dips that it's made. Now, the way that price works within a staircase manner. And in order for price to progress, it has to make higher lows. So that means that the new low that price just made is going to go ahead and be higher than the previous low that it made. If that's happening, then that means price is trending within an upwards direction. Okay. And you need to buy when price makes these areas of supports, also known as the higher lows. Okay. So I'm going to break down how we can time and what we're looking for. So you want to buy when market is down, so then you can profit on the sweep up. Once again, buy when market is down, so you can profit on the sweep up. So in order to do that, you have to be trading something that's trending in an upwards direction anyways. Okay, so get on your higher time frame, start off on your weekly, and look at absolutely everything. So my weekly here, I can peep. We have this low starting from 2020. Okay, and I can see here, we have not stepped back here since. And I'm on my weekly here. So I can start marking from the bottom of this low. And I'm going to go through and mark all the higher lows up until current price, just to show you that price is trending. So I can start seeing price trending in the upwards direction after it hit this 21,000 area here. Then price bounced super duper heavy. Okay, I made another higher low here near this 26,000 area. Price came up, topped out right here. Okay, when price tops out, all it is making the left side of the V. Then once price makes support, it's making the bottom of the V. Our job is to catch the right side of the V. So even right here, you can see price come up, top out at this area, and then come down. After it come down, stopped right here, then bottomed up. Okay, price stopped up here. Price came down, and then bounced up, stopped right here, came down. Okay, so this is going to be a whole area in itself. Got price coming up here. Looks like price stopped towards this top, bottomed out right here, and then kept going. Right here, came up, stopped at this red candlestick, pulled down, made a low right here. Stopped up here, pulled down, made a new low right here. Okay, then over here, price decides to get underneath the lows. Okay, made a higher low right here. So even though we fell all the way down right here, it's still higher than this low right here. Okay, so that's good. So this higher low is still valid. Price was deciding to come in the cut here. Decided to bounce up the same area twice. We just still see price just trending, doing its thing. Try to make a low here. Kept trending up, kept trending up. Price came down. Okay. And this low is still higher than this low here. So we're still in an uptrend, regardless of how hard we're dipping. We're still in an overall uptrend. This low right here. This low right here. Low right here. We can see price heading in upwards direction. Okay. Now, what is price hunting? Price is hunting these areas here. These areas of resistance. These are going to be the areas that price are hunting. Price can't make new all-time highs unless price breaks previous areas of resistances. So after market decides to pull back, okay, your take profit, ideally, a lot of the times is going to be an area of resistance above current price or an area of support above current price. So you want to wait for price to pull back, wait for sellers to stop selling. And once you've identified sellers have stopped selling, which you'll see, and a good indicator to know that sellers have stopped selling is going to be on either your daily or your 4-hour candlestick. After you see a candlestick make an abrupt stop on your daily and 4-hour, pay attention to the next candlesticks. If you're looking for a long trade, if price action decides to randomly stop in the bottom, and then you start seeing multiple green candlesticks going in upwards direction, then you know buyers are going to be buying. And ideally, you're going to be looking for around 2 to 6 daily or 4-hour candlesticks after an area of support was created. If you see 2 to 6 daily or 4-hour candlesticks going in an upwards direction after it makes an area of support, then that's how you know it's going to be true. Okay, and you want to be looking on your daily or your 4-hour. You're going to be looking for 2 to 6. So even take this low right here, for example. Price decided to make this super low right here. Okay, and so here's the super cool thing. Market does all the work for you. You don't got to do too much. You just got to chill. Be patient. Okay. Pray to God and just live your life. So boom. Market made the left side of the V for us right here. Market came down. Sellers were selling. Boom. Made an abrupt stop. Okay. And here's how you know if it's true. The candlesticks afterward were multiple green candlesticks. So after that abrupt stop, I have 1, 2, 3, 4. Okay, so that went 4 green candlesticks on my 4-hour here. Okay, and then even on my daily, I would have had 2 green candlesticks. So at the bottom, and then I had 1, and then I could have entered on this candlestick here and caught the rest of the resistance fill. So let market make the left side of the V. Let market make the bottom of the V. And you can see if the bottom of the V is real, knowing and seeing what candlestick come afterward. Okay, take this example. You see price trending in a higher low scenario here. You see this low right here. Okay, price bottomed out. I'm on my daily candlestick right here. Okay, I'm on my daily. After it bottomed out right here, I'm looking for 2 to 6 candlesticks, either on my daily or my 4-hour. So I can see price made the left side of the V up here. It's about patience. It's really about patience. Market decides to come up, top out right here, and then fell all the way down right here. This is how I know that the bottom is real. Okay, I paid attention to the candlesticks afterward. Okay, so after this bottom got created here, and sellers were done selling, you could see 1, 2, 3, 4. Okay, 4 candlesticks. And as soon as we got to like this upwards direction, I would have liked that. So I probably would have entered around like right here. Stop loss below the daily candlestick supports. And then take profit at previous resistance from where price decided to fall down from. Okay. Because I could see price already made the ultimate support, and all I did was catch the higher low entry. So let's go and let's do a fresh example here and see if I could find the setup. So I'm going to pull up the micro Bitcoin. Let me analyze from start to finish. So I'm going to get on my weekly time frame here. Okay, great looking thing I'm looking at here, because we're not at all-time highs. So that's why it's a great looking thing. If you're at all-time highs, you can't long. Okay, you cannot long at all-time highs. Don't do it. Okay, because price always wants to be chasing an area of resistance above current price. That's going to give a reason for buyers to step in. If there's no resistance above current price, there's no reasons for buyers to step in. So only play pullbacks, okay? Because then you're going to be buying when buyers step in. It's going to be extremely, extremely simple. So buy after sellers have sold. So I can see here from all-time highs, heavy aggressive selling has been coming into place these last couple of weeks. Okay, extreme selling to the downside. We met up near this area of support here. Okay, met up near this area of support here, and we're gonna go ahead and see what this is gonna entail. So on my weekly here, we have a red candlestick. Get on my daily here. So on my daily here, start seeing price try to curl up, but it's a lot of mixed match candlesticks. A lot of green, red, green, red, green, red, not the same color. Okay, if these were just straight green candlesticks for the most part, heading in upwards direction, then it'd be a lot more definitive. But in this case here, it's very, very spotty, not direct big candles. Right after like this low, for example, okay, heavy green candles, 1, 2, 3, 4 heavy green candles. Even after this one, kind of, we had a heavy green candle here, had to run one. But then after this higher low, straight green candles. This one here, we hit this low, and then a green candle, then a red candle, a green candle, and then kind of a doji, and then a red candle. So this one, I don't believe is fully ready yet. We could see this could be a higher low in the formation, and then we could see if maybe this low wants to hold or something. This low right here. Price seems to be trying to find itself some support here. Okay. So this is why we scale down to our smaller time frames, just to see things a little closer. So we're gonna go ahead and have this. We have this super low here. We got a higher low than that. So as you can see from this higher low, the V did get filled in from right here. So that's really good. So we'll see about this V. All right, because we're looking for a setup right now. So on the 4 hour here, I see price. I actually like this a lot, honestly. Even if I don't take it to all the way up there, this area of resistance will be fine. Same thing with this area here. Okay. Even if I wanted to just take it to this one up here, that'd be fine. So I like this a lot, actually. This is what I've analyzed. Is price making higher lows recently? Yes. Bottom, up, pause, down. Okay, and the pause that it made down is higher than the previous pause. So this high is higher than this low. Higher lows mean staircase trending in upwards direction. Okay, and we're buying after sellers sold. We're buying after all-time highs dump. So I like this a lot. Okay, I see higher lows being in place, and I think this is a new low being in place. Why? Because I have one area of support here. And guess what? I also have a whole nother candlestick. It has me so excited right now. Boom, whole nother candlestick. Boom. And I'm on my 4 hour here. Here we have 1, 2, 3, 4. 4 green candles headed in an upwards direction. So get on my daily here. I could wait for one more daily candlestick to be green. Like if this daily candlestick closes green, then I would feel comfortable for sure taking it up to maybe like at least this resistance up here. Honestly, I won't be scary. Play big, take profits. I would at least take it up to this resistance up here for sure. So I need at least one more. I'm gonna be patient though. Patience is everything. Don't just get in and be like, oh, higher lows, because sometimes your lower time frames could be your worst enemy. So on my 4 hour, do I like it? Yes, but we don't tunnel vision. You know what I'm saying? We need the real thing in life. So boom, have this super low being made, higher low being made, and then another higher low being made. Okay, so I have 4 green candlesticks on the 4 hour. I like it a lot. Okay, I'm gonna decide I'm gonna close all the way up here at these 2 areas of resistances. Right here. This is where I want to close. Okay, this is the strong area of resistance. You see how price marked it and hit it twice? Definitely not for no reason. So strong area of resistance, price has beef with. So what I'm gonna go ahead and do is, you can either do this too, but yeah, you can analyze your higher lows, and I can get on my 15-minute here. Four hour. Okay, so either going to be looking for like a tiny little 4 hour wick. Okay, because right now the 4 hour candlestick is red. So right now selling is in place. Okay, so I only want to buy when it's buying. Okay, so right now it's making a little mini V. So I believe this is the top of the V right here that it's making with these 2 resistances. Let's get on the 15-minute. You see these 2? Okay. So you want to remember, you do not want to buy when price is selling. So you would not buy right now on the 15-minute and the 4 hour. Price is heading in a downwards direction. But overall, we're in an uptrend. Okay, but you want to be buying at the right time, though, is the thing. You want to be buying at the right time. So right now, sellers are in place, but overall, buyers are in place. Okay, so to get that specific entry, you can scale down to your 15-minute, be like, okay, I could see these two areas of resistances. That's why price is falling down. Once you start seeing green candlesticks, or once you start seeing a green candlestick on your 4-hour or your 15-minute, then a lot of times that's how you know buying will be ready. But right now it's falling down from an area of resistance. I need to wait for this candlestick to go from red to green to show me that buying is real again. Okay, I do not want to buy when selling is occurring if I'm trying to buy a pullback. That's just not what I want to do. It's not what you're going to be looking for. It's called a pullback for a reason, because you're expecting it to go back up and it's just pulling down for a second. So right here, sellers are in place. Red candlestick. Price is heading down even on the 15-minute. Okay, now if I'm on my 4-hour and I get a red to green candlestick, then I would feel a lot more comfortable with going ahead and to enter. Because price might want to honestly fall down a little bit lower. I could get a little bit lower entry and save myself on some drawdown. But if this red candlestick were to go from red to green, that means buyers were to go ahead and be in place. And then from there, I should be able to go ahead and you can have your target all the way up there, for example. And then, you could do your stop loss under here. And this would be, give me about a 1 to 3. Okay. So this would be about a 1 to 3 here. Extremely profitable trade. Really nice trade. So catching your setups is about taking your time, really. It's about just seeing what you need to see. So I'll do one more setup here. So I hit on my weekly. Not mark at all-time highs, because this is going to be the most obvious place that we've recently fell from. So I'm on my weekly. Okay, not quite all-time highs. It's going to be over here. It's exactly what we get on the weekly. You want to zoom all the way out, see all the price action you can. That's going to be all-time highs. Then from there, I'm going to go ahead and put a line down at this new area of resistance here. Okay, the area of resistance where we're recently falling down from. I could see price making higher lows. Price has a super low here. And I could see higher lows being put in over time, which means that we are headed in a upwards direction. Okay, we're trying to get up here to all-time highs. So this is what I analyze here on my weekly. So on my weekly right here, the current candlestick is red. So we would not be buying right now. Okay, we would not be buying right now because we're currently selling at the moment. So we want to see if there's any reason why. Yep, I can see exactly why we are selling. So try and analyze why price is doing it, what it's doing. It's price doesn't just do stuff randomly a lot of the times. As you can see on the weekly, I have this area of resistance here. You'll be able to see it a little clearly on the daily. This area of resistance is linked to this new area of resistance that just got created. So that's why price is falling in a downwards direction, logically. Now let me head over to my daily here. You're going to be able to see the curl a little bit closer here on the daily. Okay, price at the area of resistance that it matched with over here. Okay, price did some break and retest. Price came down and then wicked back up to the specific black line and then tanked down. Okay, so this is a very nice area of resistance that price likes. So we need to get back to this area though. So now this is so simple. It's the easiest way to play pullbacks. Just wait for sellers to sell first. So you can see that's why sellers are selling. Price at an area of resistance. So right now sellers are selling straight red candlesticks on my daily time frame with it right now. I'm waiting for price to bottom out. Okay, and this is the easiest way to not get faked out. So people got faked out on this candlestick, for example. And let me head over my 4-hour. Okay, so this candlestick right here, people bought this. And price decided to wake up and people probably thought they caught the ultimate bottom. You never want to try and catch the ultimate. Okay, you want to catch the higher low entry. So check it out by staircase. You see how this low is here? And then you have this low. Then you have this low. If I zoom in, I have this low. This low. This low. This one. Okay. So we could see price dumping in and making each of the higher lows. We'll go ahead and start it from all the way over here. Got price all the way down here. Support. Higher low. Another higher low. Price continues to just go in an upwards direction. Okay, we got these areas of support here. Mixed with this one. Mixed with this. Trending. All we're doing is buying the bottom, higher, low entry. Exactly, yes sir. That's all we got to do. Just buy the bottom entry. See how these two supports over here are correlated with each other? Very, very cool. Let's check this out. Check out this higher low right here with the recent higher low that we just did. And then we're still trending in the upwards direction here. I'm on my 4 hour right now with it. You can see we came down a little bit. Still, this low is higher than this low. And then we decided to trend up again and continue the higher lows. As you can see, we're filling in multiple of these. Each one of these pullbacks are a trade. Each one of these pullbacks are a trade. Boom. Pullback. Pullback. And it's the same parameters every time too. No. So boom, pullback. So now we just need price to bottom out at an area. And we need 2 to 6 green candlesticks. And once I start seeing that and price filling in the right side with some green candlesticks going up, I'll catch the right bottom. Okay. But right now, I'm going to wait. I'm going to wait. People probably got burned right here with these candlesticks. Yep. But if you get on your daily here, we only have 1 candlestick. So this is why you need your daily. This is why I say 2 to 6. So that's why your daily and your 4 hour is really important. You can't just tunnel vision on your 4 hour. You need 2 to 6 candlesticks on your daily and or your 4 hour. Okay, so right here, it was only what, 1 green candlestick on the daily probably, and then another one open red. So if we have 1 green candlestick on the daily and another one open green and we're heading in an upwards direction, I'm taking that. Stop loss below the lows, taking it to the highs. Gotcha. So a lot of the times I'm overnighting. So I'm always overnighting actually. So each one of the setups I'm overnighting because I can just focus on my higher time frames, which is the real bread and butter. And yeah, and that makes it really, really easy. And that's going to be how you can play pullbacks. Trading can be difficult sometimes, but through prayer, discipline, and being consistent, you won't have any days of you just sitting at your screen wondering how everything slipped out of your control. Emotional trading days feel heavy, but they don't have to follow you into tomorrow. The truth is, recovering starts with separating the market from your identity. One bad day does not make you a bad trader. Sometimes it's just the wrong mindset meeting the wrong moment. So let yourself step back and give your mind space to cool down, because the clarity never shows up when your emotions are running the show. Once the noise fades and once things shift, the mistakes you made earlier stop feeling like failures and start looking like signals. Little messages from the market about what needs to change, and that shift alone is powerful. It turns frustration into fuel, because the real comeback doesn't happen on the charts. It happens in your head. When you decide that today's chaos isn't your story, it's just a chapter, when you choose to reset instead of spiral, when you remind yourself that disciplined trading is built on composure, not emotion, then that's when you'll start seeing the profits flow in. Let's go and let's jump in how we can control ourselves and become a more disciplined trader, inshallah. So, trading discipline, it's going to be the factor that determines if you're going to be profitable or not. Okay, if you're not going to stick to your trading plan, if you're not going to stick to your risk parameters, okay, and if you're going to lead with your flesh, you're going to continue to get those results over and over and over again. Okay, so being spiritually grounded is going to be extremely important. In Quran, okay, it states, and those who, when they spend, do not excessively or sparingly, but are ever between that, justly moderate. Okay, so that means that you want to be spending your money not in excessive manner, even when you start making 10, 20, 30K a month from trading. Okay, you don't want to excessively be blowing through your money. Okay, take your time and having that grounded mindset, trade after trade after trade mindset, stacking it up over time. Okay, no matter how much money you make from the markets, you're going to stay patient.
Okay, you're gonna still stick to your risk parameters. I don't care if you start making 50K a trade. Okay, you still wake up, pray, you stay disciplined, and keep taking the same type of setups, because exactly what got you there is what's gonna keep you there. So don't lose that consistency. Don't lose that discipline that's been built into you just because you start touching the money and the numbers that you finally want to get. Okay. Do not start spending excessively, and do not start making excessive decisions once you start getting to a certain point. Okay. That doesn't mean once you start getting a 90% win rate, okay, to just start putting on 5 trades a day just because you have so much conviction, okay, based off of past results. It's about being consistent today and every single day, okay, and finding peace through God, balance, and moderation. So let's go to the next slide. So you got to recognize the tilt, okay? Check yourself emotionally, okay? You know when you're about to get upset. You know when you have a feeling of wanting to trade over and over and over again, okay? You know when you're having feelings of wanting to crash out, okay? So keep heed of your emotional red flags, okay? Before you can fix it, you got to admit to yourself, okay, that things got to change, that you're broken right now. So an emotional trading day usually involves revenge trading, okay? So if you take a loss for $200, okay, say that was in between your 1 to 10% of your account risk parameters, right? That's fine. But then you take another trade. Okay, so instead of just using $200, you now lose $400. Okay, and then say you try to put on some size trying to make back that $400. Okay, and then you end up losing $800. Okay, and that's how the cycle starts, and that's how quickly you can blow up your account. So don't revenge trade. Okay, if you take a loss, close your trade, and that's it. Okay, plot out another trade, a cleaner setup, and stick between your 1 to 10% of your account rules per trade. Okay, because trying to make it back will end up turning your account into a whole different spiral in a different direction than you'd expect it to go a lot quicker. Okay, because if you lose, you might lose again. If you lose again, you might try and risk more than normal trying to make back the double losses. Okay, so I'm telling you, if you don't recognize the tilt, you could lead into a whole different spiral and mental mind space than you'd want to be in the first place. And paralysis. Okay, so staring at the screen, making you unable to execute a good setup. This is why it's really important to have your stop loss set up as well as your take profit too, with limit orders, especially if you're trading futures or Forex. Okay, this way you guys aren't going to have any emotional paralysis. Say something just clips way past your mental stop loss, you're not going to freeze, okay, because you don't want to lose all that money and close out your trade, even though you know you should. Okay, and increased size. Once again, increased size usually comes into play when revenge trading comes into play. Okay, but for the most part, you shouldn't just be increasing your size out of the whim. Stick between 1 to 10% of your account per trade. Okay, so don't double down on risky trades out of anger or out of past losses. Okay, and check yourself. Okay, so ask yourself, are you feeling anxiety? Is your heart racing? Okay, are you cursing at the monitor? Are you breaking things? Okay, if so, you got to stop immediately. Okay, you got to stop right then and there. Okay, get up, go pray, take a breather, hop off the charts. You immediately check yourself right then and there. Okay, it's not worth destroying your family's future, destroying your seeds that you have planted in the ground because of a quick moment of disparity and anger. It's not worth it. Okay, keep your account alive. In this game, it's not really about making money. It's about who can be consistent, who cannot be led by their flesh, and who can be disciplined every single day. Okay, so let's head over to the next slide, class. So the pattern interrupt. Okay, walk away physically. Okay, if you notice yourself, especially if you're on prop firm or trading something quick like futures or Forex, where you can instantaneously lose money fairly quickly, okay, you got to get off the charts. Okay, hop off the charts. If you notice you have a trading addiction, you got to pray to God, okay, and really ask to get better. Okay, ask yourself, why are you taking so many trades too? Are you chasing money? Do you have bills that you're trying to pay? Do you have some debt that you're trying to clear? Okay, because you can't trade out of desperation. Okay, trading is not something that you look to when you're dead broke trying to make it out. Okay, you got to get your life together first, get some income, then come onto the charts. Okay, get closer to God, build that relationship with yourself and know yourself intimately and deeply. This way you can check yourself and check any type of emotional parameters or boxes whenever you feel like you're about to crash out or having a rough trading period. Okay, you can't solve a trading problem with more trading. Okay, you need to sever the connection between your brain and the charts. Okay, so once again, you cannot solve a trading problem with more trading. You have to sever the connection between your brain and the charts. Okay, so close the terminal. Okay, if you notice yourself crashing out, taking multiple trades during a day, okay, you got to close TradingView. You got to close your broker and you got to just hop off, okay? Or sign out of your brokerage account and log into paper trading, okay? And change your environment, okay? Leave the room, go outside, take a breather, and the change in lighting will really help reset your circadian rhythm. So when you come back on the charts, you're going to be like, you know what, I was tripping. Why was I crashing out and doing all that? Okay? And don't check quotes on your phone, okay? Whenever you enter in a trade, stop staring at it tick by tick, okay? Enter your trade, have your alert set at your stop loss and take profit, or set your limit orders, okay? And don't look at it. Don't look at it, okay? Because I'm telling you, you might look at it, make a decision that will ruin your trade, okay? And then end up taking another trade, and that could start a whole downward spiral that you don't want, okay? So understand that trading is pretty passive and hands-off, okay? After you've aggressively studied and gained the knowledge, once you actually hop on the charts, it's going to be pretty passive, okay? So let's head over to the next slide, class. So you got to reset your biology completely and get out of survival mode, okay? Give yourself a cold reset. So your nervous system is in fight or flight mode, especially when you enter a trade for the first couple of times, okay? And you got to force it back to rest and digest, okay? So some actionable tactics. Number one, praying to God. Go to God about all your issues. It's really going to help and really going to build accountability within yourself too, okay? You can't just be blaming the markets like, oh, market's doing this, market's manipulated, market's not manipulated, okay? It's been going in an upwards direction, especially United States stock market, year after year after year after year after year. It's not manipulated. You have to check yourself and hold yourself accountable, okay? If you're making monkey decisions, don't make monkey decisions anymore, okay? Check yourself. There's plenty of times where I've made monkey decisions, okay? Plenty of times where I blew an account within a couple of minutes, okay? Due to the fact that I was chasing that quick money, okay? So checking yourself and staying in tune with yourself, even when you fail, is going to be an important part of being a CEO and being a boss. When you're a trader, you're not just on here trying to get some money, okay? You're signing up to be a business person, okay? You're signing up to be your own boss. You're in control of your finances whenever you come onto these charts. You're in control of when you get in, when you get out, and how much you're going to risk, okay? So don't run around blaming the market when you got to take accountability for the actions that you did, okay? So breathe, okay? Breathing is also going to be a really good tactic too, something I've been working on myself, okay? So breathing is really going to help you out, okay? If you notice you're about to crash out, close your eyes, take a big breath, okay? And working out in the morning too. If you notice that feeling of high anxiety or intensity in the morning, make sure you guys start your day with a prayer, okay? And then go work out, okay? When you guys work out, your body's going to release a lot of cortisol, okay? And it's going to be in more of that healing and building mode instead of fight or flight mode, okay? So your journal. Okay, make sure you guys have a trading journal. I don't care if you do it on Notion, Discord, a physical trading journal, whatever. Okay, just get it out. Write out your emotions. Okay, write out your goals. Write out how you're feeling. Okay, and emotions loop in your head until you write them down. Okay, once they're on paper, your brain is going to feel safe. Okay, to let it go. Okay, so if you notice yourself, you're struggling with over trading, like, man, I keep taking 4 trades a day. I can't accept a loss. Write down why. Write down what you're trying to chase. Why do you want the money that bad? Okay, and break it down logically, and it's really going to help you be more intimate with yourself, okay? And write answers to these 3 questions, okay? What specific rule did you break? If you notice yourself losing consistently based off of just emotional decisions, okay? Ask yourself how you're feeling before you enter the trade, okay? And ask yourself, what's the worst case scenario? If stop loss gets hit, okay? Because if I'm hitting my 1-to-4 risk to reward ratio trades, let's say I'm risking $100, okay? If I'm making $400 per trade, okay, then I'm still going to be profiting $300, okay, which is going to give me more extra room in case I ever have a losing streak, okay? So the worst case scenario is that you hit stop loss, but the thing about it is that if you stick to your rules, okay, you stick to your discipline, you stick to the plan that you wrote down, if you stick to your stop loss, how are you going to be unprofitable? If you have a decent win rate, you're sticking to your risk reward ratio, okay, and you're staying in between your risk management parameters, trading between 1 to 10% of your account per trade, how could you lose? The math is right there for you, okay? The only way you lose in this world is when you lead with your flesh, okay? It's the only way you will ever lose. If you are disciplined and consistent, it's almost impossible to lose. Let's head over to the next slide. So, radical acceptance, okay? Forgive yourself, okay? Beating yourself up creates more emotional pain, which leads to more bad trading tomorrow. Okay. And sunk cost. The money is gone. Okay. Once it's gone, don't try and chase it back. Don't try and boot up your account again and be like, oh, I'm about to recover all this. No, don't do that. Okay. You cannot trade to get that money back. Once it's gone, it's gone. Once something is gone in the world, it's gone. Okay. But that's perfectly fine. Okay. Because you can only trade new setups. There's going to be better setups. Okay. And view every single loss in life, in business, wherever. Okay. Just view it as a lesson. View it as tuition. Okay. Some of you might be in college. Okay. Paying for your tuition. Treat every single loss in life. I don't care if it's on the charts. Okay. Business, relationships, whatever it is. If you need to view it as a lesson to learn and progress and go forward. Okay. And you're not your profit and loss. Okay. You're your risk manager. You're still going to be the same person if you're making $50 a trade or $50 million a trade. Okay. You're still going to be the same person. Okay. Your spirit is still going to be the same. So the money is not the thing that changes you. Okay. The thing that changes you is the knowledge. Okay. And you learn how to keep your spirit happy, how to not go through pain. Okay. And that's what we're here to do on this earth. Okay. Pray to God and find out ways to keep our spirit happy and avoid pain. Okay. If you notice yourself crying at the end of the night because you crashed out your account and you got bills due the next day. Okay. You need to learn from that pain so it doesn't happen again. So you don't grieve your spirit. Okay. So if you're frustrated due to your own actions, stop doing it. Okay. Pray to God on it. Check yourself and come back stronger and better. Don't let it happen again. Let's head over to the next slide. So the return protocol. Okay. Start small. Okay. Don't jump back in with full size. Okay. If you got to scale down, take a step back. Okay. Because it's not about the money. It's not about the money. Okay. If you notice yourself crashing out, if you're trading with $200 a trade risk, okay, and you're crashing out with that, lower it. Maybe you should be risking $50, $100. Okay. Lower your size, especially when your confidence is damaged. Okay. So for the next 3 days, okay, try to trade with 50% size or less. Okay. If you just had a horrible streak of losing, crashing out, being led by your flesh and emotional decisions that led you to straight destruction, okay, take a step back. Okay. It's all good. You can always come back stronger. So try it for the next 3 days. Try and trade with 50% size or less. Okay. And prove to yourself that you can follow the rules before you're allowed to go back to risking your full normal size amount of capital. Okay. Because before you can even start touching the money, you got to have the discipline built in you. Okay. You're not going to touch a thing, or you're not going to be able to keep a thing if the discipline isn't built in you. It won't matter. I'm telling you, it won't matter. So if you're making $1,000 a trade, you should still be happy if you're making $100 a trade. Okay. Just the fact that we can come onto these charts, look at candlesticks going up or down and clicking buy or sell and being able to make money is a blessing. So why are you ruining it for yourself? Okay. Please don't make it hard. It's welfare. Okay. It's welfare here. And all you have to do in order to get it, you don't got to go sign up on no website. All you have to do is be disciplined. Okay. Be disciplined. And praying to God is going to be the #1 way on this planet to build discipline. Then from there, you guys can start working out. Then from there, start grinding every single day. Then from there, you're going to get very strict on your setups. When you're praying to God every single day, you have a strict health diet regimen. Okay. And you're sticking to your trading plan. Trading is not going to be difficult for you. I'm telling you, it's going to be very, very, very simple. Okay. But most people who struggle with this, and it just shows you how undisciplined 99+% of the world is. Okay. The main reason why 95% of people plus aren't profitable is because most people on this planet lead with their flesh. Everyone always wants to feel good all the time. Everyone always wants to be comfortable all the time. Everyone always wants to be happy all the time. And that's not realistic. Okay. You have to be disciplined, consistent, and you have to have that iron edge regardless of what's happening in life. Okay. If you want to live in a fake realm, okay, being led by your flesh, that's fine. You'll continue to get those results. Okay. But if you want to be the 1% in the world who's ready to reap the harvest, okay, who's ready to get the resources, who can help everyone else out, okay, you got to put yourself through the fire. Okay. And you got to come out not tripping. Okay. Let's head over to the next slide. So tomorrow is a new market. Stop tripping about the past. Okay. That little bread that you messed up, forget it. That account that you blew up, forget it. Okay, whatever happened back then, it happened back then. That was a weak version of you, and it's time for that version to die. Put it away. Okay, come stronger. Build yourself a whole new version and come way better. Think different. Okay, so wake up, pray to God, and work out. When you guys are working out consistently, it helps your cortisol run through your body a lot less intensely, so you're not going to have random crash out spurts. Okay, working out is really going to help you. Okay, and walk away from the computer too. If you notice yourself pansying on the market, spamming buy or sell because of a loss, relax. Walk away, go pray on it, check yourself. You probably did some emotional stuff that's your fault, and cool down physically. Okay, then go journal the mistake. Okay, throw it in your Discord, your Notion, your trading journal in real life, notes on your iPhone, whatever. Okay, you gotta release the loop. You cannot do the same things in life and expect different results. Okay, so if you're doing something in life and it's working, okay, you notice you're waking up, you're praying to God, you're grinding, and you're getting somewhere, continue to do that. Okay, but if you throw off the loop, if you notice yourself throwing in random days of doubling your leverage, okay, then your risk to reward and your consistency is not going to be able to be built like that. You can't be risking $100 one day and then 2 days later you're risking $400. It's not how you're going to build yourself. Okay, and then when you return to the market after a crash out series, start smaller. Okay, start smaller, because you're not even ready for the money right now. So if you're blowing up your account, you're not even ready for the money. Some of you guys are thinking about the money, but you're not even ready for the money. Too many of you forget about the grind. If you have a skill, a talent, and discipline in this world and you pray to God, you'll get to some money. But some of you forget about praying to God. You forget about the grind. You forget about the hours of studying that it takes to be successful in whatever you want to be in. Okay, I don't care if you want to be an athlete, if you want to be a CEO of a business, okay, whatever you want to do in this world. If you forget about the grind, and most importantly, if you forget about God, you're not going to be able to be successful. That emotional turmoil might catch you, and that one bad day could destroy you. But understand that one bad day does not define who you are in your career. Okay, stay hard, stay disciplined, stay focused on God, and keep grinding. Don't ever give up. I'll catch you on the next one. Peace. I'm going to be teaching you guys how we can use support and resistance in order to catch some profitable setups. Let's jump straight into it. The downward areas here where price decides to make a V and bounce in the upwards direction, that's going to indicate an area of support. And opposite to the area of support, we're going to have resistance. All right, resistance is going to be an area like this one, for example, where price decides to fall within a downwards direction. Okay, so that's it. So let's talk about logistics. Let's talk about why each of them occur. Let's talk about what support and resistance is on the charts. Yep. So one, support occurs on the charts because price isn't going to continuously dip down to zero for the most part. So even if the price dump happens, a lot of the times stocks, they have something called a short sale restriction, and cryptocurrencies most of the time, especially if it's not a meme coin, they're not about to dump down to zero like a good chunk of the time. So price will go ahead and try to find itself a certain low, okay? And people will like to go ahead and buy at a certain discount and go ahead and sell from there. And we also have to put it in perspective too. This is the left to right chart. So price started way back over here, okay? Even further from that. So people have shares from way over here. Of course, they're going to sell and take profit. So whenever selling occurs, whenever take profit occurs, then resistance is going to get put into place, okay? All it is people selling, okay? If people got in way over here, of course, they're going to take profit. Okay, they're going to go buy their boat. They're going to go put a down payment on their house, do what they need to do. Okay, so whenever you see market correcting, making sharp tops and falling in a downwards direction, that's going to legitimately mean that there's too much supply. There's too much supply and there's not enough demand, causing the price to go in a downwards direction. Okay, but then you're going to see price make a certain bottom, just like here, for example. So whenever we see price make a bottom and bounce in an upwards direction, that's going to go ahead and classify as support. Okay. And support is going to be important because that's going to be where demand is going to be put into place. That's going to be like, hold on, prices, it's done selling off. It's been selling off way too much. People are starting to find out that price might want to buy it at a certain area, create a certain low at an area. And then once everyone agrees that price wants to make the low there, price will go ahead and start sweeping back up in an upwards direction, okay, causing it as a verified level of support. So chatting about it again, resistance is going to be areas where sellers step in. Okay, it's a left to right chart. So the goal of the stock market, cryptocurrency market, etc., is to go in an upwards direction. There's coders behind it, people with jobs in it, heavy investors in it, millions of dollars invested into these cryptocurrency tokens and companies. So of course, people are trying to make some money by having their stock go up in an upwards direction too, especially when it comes to stocks. People are definitely wanting their share price of their stocks to go in an upwards direction because that's more money in their hands. Once again, say billionaires, for example, right? It's not $1 billion in fiat currency laying in their account. Okay, it's not a lot of bank accounts in the world that can even hold more than like 50 million, for example. Okay, so a lot of the core value is going to be in assets. So what makes billionaires billionaires for the most part is going to be their assets. Okay, so whether, and a lot of the times it's going to be shares, okay, because most of the time it's business owners. So if Tesla is valued at 500 billion, okay, then Elon Musk being the company owner and he holds most of the shares or a large majority of shares, he would then be a billionaire too. So this is what makes stocks so important. So the proof is in the pudding right in your face. So billionaires are billionaires not by certain amounts of revenue made, but how much the company is valued on the stock market based on their shares. Okay, or take an artist, for example. There's an artist and he painted something for Facebook. Okay, he painted something for Facebook in 2006, 2007 or something like that. And instead of Facebook giving him actual money, Facebook gave him shares. Okay, he was then able to retire a multimillionaire based off of just doing one mural or doing one painting for the company. Okay, so shares are going to be an important part to just becoming rich. Okay, so a lot of the times shares or even getting paid in cryptocurrency is going to be a longer term, smarter option to get paid. Okay, so he was able to go in there, paint what he needed to paint, and Facebook paid him his shares, and he was able to get wealthy and retire for the rest of his life based off of that. Okay, so that's the legitimate reasons between the two. So we have to understand that, okay, that's why resistance occurs and that's why support occurs. So now that we understand them legitimately, let's put everything in perspective. So let's talk about the two things that market will try to do before market can go in an upwards direction. So if I'm trading cryptocurrency and if I'm trading stocks, a majority of the time, I'm going to be looking to play to the upside direction. Okay, I'm not interested in shorting for the most part. I rather personally buy a dip. Okay, but shorting is going to come for something more like Forex, but we'll talk about shorting as well too. Okay, so the stock chart for the most part, as you can see, if I check out Microsoft, it does nothing but go up in a straight line. If you dollar cost average into Microsoft, you can see you're almost guaranteed to make some money. Okay, so year after year after year after year, the stock does nothing but go up in a straight place. Okay, so while people are spending money on anything on the block, okay, you can go ahead and be investing, keep dollar cost averaging, and he's going to infinitely make you more money. You'll retire quicker than everyone. You won't be stressing about bills as much as everybody. And you'll also be getting paid some dividends too, depending on how many shares you have. So it's a lot of advantages to being invested in the stock market. And dividends are going to go ahead and be quarterly money that the stock owners give you because they're like, hey, thank you for making us money by investing into us. We're going to give you some money back. So it's infinite money to be made as long as you know what you're doing. Is why education is going to be extremely imperative, and you can just see your portfolio year after year after year on the max long-term gain. You know, forget certain small just day trade gains. Okay, we want to see our portfolio all time when we pass away be positive. Okay, substantially. That's the goal here. Okay, so don't think so short term. Too many people are thinking short term, thinking now, thinking too quick, and that's really going to ruin your long-term perspective. Okay, so even when you are putting these support and resistance setups into play, okay, we need to be trying to make sure that we're holding trades for at least some time. We don't want to be closing like instantly. We don't want to be trading like that. We want to be making sure that we're sitting on our trades, making sure we're really having our money make us money. Okay, so let's go and let's talk about support and resistance setups and how we can put all this information into finding profitable setups. So, one, we always know that cryptocurrencies and stock market companies are trying to go in an upwards direction. Why? Because there's benefits to them. Okay, the higher the cryptocurrency,
whoever coded the cryptocurrency, whoever runs it, whoever created the whole idea, signed the white paper, etc., is going to benefit from them. So they definitely want it to go in an upward direction. They want people to be investing in their token. Okay, what pros does it bring? Okay, Bitcoin lets you send money, or cryptocurrency in general lets you send money to anywhere across the world instantaneously. So it already has some baked in value. And then it might do some other cool stuff as well too, like, throw on Solana. It lets you trade meme coins, create your own cryptocurrency coin. Okay, so bringing more power back to the people, making people feel even more involved. So certain cryptocurrencies expand on the fact that it just lets you send currency from one person to another at a quick rate, but it actually lets you put some power back into the economy. So this is why charts are going up and down. They're not just going up and down for no reason. I'm not going to give you guys fake mentorship, fake courses, just fake information. Like, it's not just about wicks. It's not just about candlesticks, and it's not just about logistical formations. We have to understand the true logical fundamentals of why the whole chart is even going up and down in the first place, because then we can understand things from a really big long-term perspective, and it's really going to help your anxiety too. Okay, if you're feeling emotional, like, man, I don't know if this is going to go up, you have to understand that the goal of it is to go up. No matter how low something dips down, the goal of it is to go up. Check out this Amazon example here. Okay, Amazon, it was at $188 a share in 2021. Okay, dipped all the way down to $82 a share. I'm sure people thought, oh man, that's it, Amazon's going to zero. But guess what, guys? As you can see here, and we'll jump into the technical basis of it here, all it did was bounce at the same area of support to the left. All it did was retest. Okay, all it did was retest. So instead of trying to predict the exact tops and bottoms, just understand that the goal and the basis of the market, okay, even Forex, for example, okay, the goal of the basis of the market, every single market, is to go in an upwards direction. I don't care if you're trading gold, stocks, crypto, understand that it's the basis of it is to go in an upwards direction. Now, that doesn't mean that you can't short when the opportunities arise, but understand that the whole reason price is dipping down is to find a new low and go back in an upwards direction. Okay, especially when it comes to stocks and cryptocurrency. So you can see here, and we'll jump into the technical understanding of this here. All market did was bounce at this area of support and then come over here and do it again at the same place. Market is not difficult. Okay, the real reason people make money is because they sell too early. They're playing with too tight of stop loss. Okay, so that brings me back to the point again too. If you're trying to be perfect within the market, you're going to struggle. Okay, don't be perfect within the market. Only God is perfect. Just get your money, understand how your levels operate and work, and make the best play that you can. Okay, now when it comes to something like options, futures, and Forex, you do have to be a lot more precise, but understand what type of directional bias that you're playing when you're getting into a trade in the first place. Okay, so if I'm trading Amazon here, right? Let's say I didn't catch this ultimate low, right? So price decided to bounce up this area of support once here in 2020, came down a whole 3 years later, bounced up the same place. All right, cool. Let's say I didn't even catch that certain low. You're fine. There's still going to be plenty of opportunity you can catch, okay? Because one, price is always going to try and chase the resistances above current price, okay? Because it's trying to break into new all-time highs. Investors are trying to make some money. Company holders aren't just slaving, busting tail for no reason. They want their company to be the biggest, the most profitable, okay? So share price is trying to increase for an incentivization. Okay, there's a reason why it's trying to increase. So say I didn't catch this ultimate support low here. Okay, and speaking of this, market will try and do one of two things. A, market's going to try and bounce at an area of support. Okay, or it's going to try and bounce at an area of resistance. Okay, just simply cleanly. Okay, so market will duplicate itself. Either just like this example here, you'll see two areas of support being bounced upon on the same exact line, same exact tick, same exact level. Okay, it's extremely simple once you start realizing what you're looking at. Okay, so market will either bounce at the same areas of support or bounce at the same area of resistance. I personally call that a mirror. So in the Stackmode community, this is what I call the mirror. Okay, so I'm either going to see a support mirror or I'm going to see a resistance mirror.
Okay, this is going to be a really, really just clean way to look at the market. Very, very simple. And the market's going to do this over and over again a lot of the times. Okay. So that's criteria number A. Let's talk about criteria number B. So A, say resistance can be broken and turn into support. Okay. So these two examples here, a support mirror and resistance being broken and turn into support, those are going to be examples that you take in order to long. So if you think or you speculate whatever you're trading is going to go in an upwards direction, these are the only two setups you should ever take. You shouldn't be taking anything else. Either you're looking for two areas of support to mirror each other, just like the blue line right here, or you're going to be waiting for an area of resistance to be broken and turn into support. Okay. And that's going to let you know that, inshallah, for the most part, price wants to make a structural continuation. Okay. And if you're going to take a downside trade, okay. So let's say you think price is going to go in a downwards direction. You're either going to take this setup where you're looking for two areas of resistances to mirror each other and then fall down, or you're going to be waiting for support to be broken and turn into resistance. So the opposite of resistance being broken and turn into support, you'd be waiting for support to be broken and turn into resistance. Okay. And this is going to let me know if I'm going to take a short setup. Okay, so these setups over here, two areas of support bouncing on each other at the same line, okay, and then bouncing in an upwards direction. Okay, boom. That's going to give me a support mirror. That's going to let me know that price wants to go in an upwards direction. Or I can wait for support to be formed after an area of resistance is broken. And that's going to be break and retest. And if I'm going to take a short setup, which means I'm speculating that market's going to go in a downwards direction, I'm going to wait for two areas of resistances to mirror each other and fall in a downwards direction. Or I'm going to wait for an area of support to be broken and turn into resistance and wait for price to fall in a downwards direction. Okay, giving me a downward staircase, or if I'm looking for an uptrend play, I'm looking for an upward staircase. So I'm going to go ahead and show you some examples here. So we're going to go ahead and scan the stock market, cryptocurrency market, and let's go and let's talk about how we can analyze plays. Okay, so first thing I like to go ahead and do, start off on my higher time frames. We're going to always start off on our daily. Okay, we're going to be on our daily time frame due to the fact that we see everything. Okay, we got to see the whole chart from left to right. We're not about to be tunnel vision on the smaller time frames. That can be really frustrating, misleading, okay? And it could really just make you look at something that you don't even need to be looking at in the first place, okay? It's giving you a whole different story, something that's just not true. So we're gonna be looking at the daily, okay? Zoom out, see everything, and get the bigger picture of everything. And after the daily time frame, you can go down to your 4 hour, especially on the stock market too, since it's 24/7. You got to go down to your 4 hour time frame to see certain wicks. Since extending trading hours is going to be a thing. So on whatever broker you're on, make sure you have your extended trading hours. If you're on TradingView, go to the bottom right, turn on ETH, extended trading hours. Go. So your daily time frame is going to help you see everything. So one, don't trade anything that's going to be at all-time highs. Okay. Don't short at all-time highs because that's gambling, in my opinion. Wait for support to be broken and turn into resistance. Okay. Or if price goes below and gives you a resistance mirror, then you could take a short. But even if price is at all-time highs, don't just short because it could really keep going in an upwards direction. But that's the thing. You don't really know how high it's going to keep going because there's no resistance above current price that's made up here or up here or up here, up here. Okay. So something's at all-time highs. A lot of the times I like to wait for a pull back. Okay. I'm not going to trade it way up here. I'm going to wait for something that's either below, okay, and then catch a sweep in an upwards direction, okay, or I'm just not going to trade it at all. So I'm not going to force myself to trade something at all-time highs. I'm going to go to the big, giant, mighty stock list that I have, okay, and I'm going to be able to choose something else, okay. So one, I want resistances above current price. So I can see here on Amazon. Amazon would be a great investment in my opinion. One, I got resistances above current price here. Okay. Tons of resistances above current price. So that's letting me know that one, price has somewhere to lead to. Okay. Price has space to fill. When I can see space that needs to be filled, okay, this is just money I'm looking at. All I'm looking at here is money. Okay. I know the stock market is trying to continuously break areas of resistance because price needs to keep making new all-time highs. So after price decides to make its own little base, make its own little low, like here, for example, okay, you can clearly see this is the most easy setup of all time. God is good. Okay. So when you just study, you have the eyeballs, okay, of just a warrior trader, things become easy. Okay. So check it out. You got support being created right here. And then you got an area of resistance being created over here. Okay. I'm going to go to my 4-hour time frame. Okay. I'm just super duper excited about this because check it out. I'm excited right here. So I'm going to let me know resistance being created right here. Okay. I can see the breakout happen. I'm not a breakout trader. Okay. So I'm going to let them have that. They can take the breakout. I'm cool off that. Okay. What I'm going to wait for is the area of resistance to come back down and turn into support. And I can see price decided to do that. So price decided to turn the resistance over there into support, letting me know that, okay, price wants to continue this staircase, doesn't want to push down any lower. This is going to be a pretty safe phase for me to go ahead and buy. Not only that, I see price making what's called higher lows. So I can see that. Let's go ahead and let's methodically map this out here. So I can go ahead and see that this low right here, right? This low is higher than this low. And this low up here is higher than this low. So not only do I see break and retest, I see price moving within a staircase direction. So I can go on my daily time frame, put everything into perspective, be like, hold on, okay, cool. So I can go ahead and use these two areas as stop loss if I wanted to, okay? And take profit and catch this whole area up here to the upside. Okay, I still got 15 points of price action I can go ahead and catch. So much money for me to go ahead and make up there. Okay, it's super duper exciting. It's exhilarating once you see the market structure like this. So putting everything in perspective, you can see that, okay, there's so much money for me to be made. Even though I didn't get in at the pixel perfect entry, a lot of the time you don't want to get in at the pixel perfect entry. You don't want to be getting in at the first wick of the blue. Okay, I'd rather get in on the second candle. I'm personally waiting for a candlestick close. Okay, you want to wait for candlesticks to be above the certain entry because you don't want to buy at the wick and then get dumped down on because then you're going to be upset. And then you might just be really in a situation where you're just praying it goes up. Okay, so play logically. I would personally wait for a candlestick close. I can see the area of support got tapped. Okay, price decided to try the zone multiple times. Buyer stepped in multiple times, held the same area. And I can go ahead and take this whole upside and catch the whole remainder of this amount of profit. It's crazy amount of money to be made. Okay. So this is how I'm going to be able to use support and resistance and put that into a logistical setup. Okay. So I'm looking personally for gaps. I'm looking for these gaps to be filled. I know that price is trying to chase the resistance. So I can use the whole gap as my profit window. Okay. Break it down logically. I'm going to go ahead and show you another example here. So class, it's about making it simple. Mark your levels. Okay. No indicator is going to help you more than horizontal lines. That's one thing I'm going to go ahead and tell you. Okay, I don't use any indicators, and most decent traders don't need indicators. Okay, don't rely on something that's late. Okay, your eyeballs and the way that you're reading your technical analysis is going to be a lot safer and a lot more reliable than an indicator that's going to be late. Okay, take this area right here. It's easy. You can see price breaking here. Okay, price decided to break through this area. Okay. And this area seems to be important. And if you don't see everything you need to see on your 4-hour, don't feel afraid to go down to your 30-minute in your 15-minute. Okay. So I can see supports being created at this area right here. All right. And price broke out right here. Let me scale down. Let me see what happened here. Okay. I'm going to scale down a little further. Okay. So it looks like price just wants to hold some support here. Okay, so price wants to just create its own structure. Okay, the support seems to want to hold. It could potentially break down. But we'll go ahead and we'll see. Okay, if it does break down, we can go and prepare though. So just like we talked about certain models,
I'm personally looking for resistance below current price to turn into support, or just like you see right here, supports to be mirrored upon each other. All right. So say the support gets broken. I'm cooling. I'm not going to be tripping. I'm going to go and put the next entry right here. Okay. I'm going to try again right there. Okay. You can go ahead and try an entry right there. Okay. Try a zone right here. And personally, if I see price come down to these areas of resistance, turn into support, then I know it's going to be a pretty safe place for me to go ahead and continue the staircase. Okay, so even if this area of support gets broken, I can go ahead and re-add or try again at these certain areas right here too. Go. So putting everything into logical perspective, once again, is really just going to help you understand how the market works. And it's really just about patience too. So patience, 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 patience. So waiting for the setup to happen, reading everything on the higher time frame, and just letting the market do its thing. Okay. And you could really just eyeball certain curls too. Okay. Even if you get on the line chart, for example, and I'm on my daily, if I'm on the line chart here, for example, I could use no candlesticks if I wanted to. Okay. I can just look at this pure line chart, see price curling up in an upwards direction here. Okay. And I can clearly see, okay, if I have a daily curve, like bottom on the line chart, for the most part, I'm good. I'm just going to be honest. Okay. That's just what I'm going to be looking for sometimes too. Okay. So I can clearly see that price wants to try and chase these areas of resistances up here and this area of resistance up here. Okay. So if I got on my line chart here, I can see price decides to create area of support right here. Okay. Look how simple this is. So you have the area of resistance right here. Okay. Being created. Price broke out. Then price decided to turn this resistance into support. And then price is looking to fill the whole rest of the gap. It's extremely simple. It's over and over and over again. It's every pair. Okay. You can make money every single day. Every single day. Okay. So even if I check it out on the candlestick chart here, it's going to show me a little bit different information, but I can see on my line chart here, everything plays out how I need it to. And it's confirming the fact that the rest of the space does actually want to be filled on the candlestick chart and the line chart. Inshallah. Okay. And then from here, I would go ahead and just buy a contract a couple weeks out and just take the whole rest of the gap fill. So let's jump into some crypto. All right. Stocks are easy. All right. Crypto can be a little bit more sideways. Stocks, for the most part, they just go on a straight line. If it's a decent stock, it's going to be really easy to read. Crypto is really easy to read though too. So it's just about trading what you want or trading both. Okay, because take this example right here. So I marked out this all-time highs a couple days ago, and we decided to break it. Looks like today or yesterday. So mark this out here, and looks like price decided to break out. So you can see I had the line there before we even got into the recording. So I know that price is always looking to break areas of resistance, what I tell you guys. So no matter if it's all-time highs, price is looking to break it, and we're going to keep breaking it over and over and over and over and over and over, inshallah. Okay. Even if we sweep all the way down, it'll still try and come back up one day and go right back up. Okay. We can sweep all the way down there. Okay. If price wanted to, price can sweep all the way down there and then still break all-time highs one day again. Okay. That's just purely how market works. When market decides to go down and find certain lows, all it's doing is collecting ammunition pretty much. Collecting more money, okay, from anybody who's trying to long. And all it is people selling who got in from way over here. Okay. Let them sell, let them sell, let them sell. And you know it's gonna whipsaw back up, inshallah. So all-time highs getting smashed. So boom, all-time highs got broken today and yesterday. So extremely exciting here. So I had these lines placed a couple days ago, and price decided to just meet with them. Okay, so you guys know I'm not lying here. Okay, price is always going to be looking to break all-time highs, certain areas of resistance here. Okay, so let's make it simple. So even if you didn't get in at the super Goku low all the way down here, okay, you could still see market doing its thing. Okay, so market bounced at this area of support here twice. Okay. We had one little area. Okay, if you would have missed it, it just was what it was. Okay, nothing to cry over. Plenty more entries. Okay, plenty of more entries. So we had this entry, for example, here. See, we had this area of resistance. Price decided to break above it. And then turn it into some support. And then price decided to go in a upwards direction. Okay. So very, very simple. Just clean area. And we're looking for a break and retest, waiting for price to go ahead and continue over and over and over again. Okay. Even here too. So just like I told you, support can be broken and turned into resistance. I like to call this support invalidation in the stack mode community. So you got this area of support here, and you can see resistance got created off of it. So support turned into resistance, and then price invalidated the support, met up with that area, right? And then, yeah, filled in that gap. So support and validation. If you see an area of support above current price, and price just runs through it, all right, then that's going to be a pretty safe area to go ahead and momentum trade as well too. Okay. Because an area of support above current price, if the resistance doesn't hold and price runs through it, then it just wasn't a strong area. Okay. So let me get on my daily time frame here. So I'm going to go ahead and put a line on the top of all-time highs here. Got this area of resistance all the way up here. Very cool. And let me go ahead and go to my 4-hour time frame here. All right, on our 4-hour time frame, and I can see we know where price is heading to break this all-time highs here. Okay, Ethereum's not about to reject here forever. Even if it created resistance on the blue line a million times, inshallah, and dipped all the way down to like 1K, inshallah, one day it was still trying to get broken. Still, it's just how the market works. Okay, because you have to remember there's still investors in from way back to the left. Way back here, people are invested, so they want it to go up too. So price is trying to reach this all-time highs area up here and fill in the rest of this gap here. Okay. So when you close, well, no, I won't say that, but when you close and when you buy are both extremely important. When you buy, I'll say it's less important than when you close, because you could buy at a pretty bad area, but if you close at the right time, like you'll still make money. Or you could just buy pretty late, but if you close at the right place, you'll still make money. Now, if you try and hold past an area where you should be closed, that's where things could get scary. And you bought a bad area, that's where things could get really, really bad. So yeah, it really depends. Like if you were to buy it right here and you just pop it at the all-time highs up here, that's fine. But if price hit this all-time highs and then dumps down, okay, you bought up here. So anything less than up here would be negative profit. Okay, so it really just depends how you play it too. So even here too on Ethereum, I could see this area of support got created here. And that's because this area of support bounced off of this area of resistance over here. Okay, resistance got broken through. As you can see, we even had another tap right here too. And then price decided to go in an upwards direction. And price came back down into the zone. Okay, turn the resistance here into support. Okay, it's really this wick right here. Turn the resistance here into support and bounce in the upwards direction. And as you can see, the whole area decided to stay and fill in. Okay. And then price decided to continue to just break and retest and do its thing. Okay, and it even spammed it again right here too. If I go ahead and put this line here, check out this area of resistance. And you can go ahead and see this area of support being created off of this area here too. And then price decided to go in an upwards direction. And no coincidence as well too, it's also going to be a support mirror. So once again, you could see price deciding to make this area of support over here because there's support over here. Okay, so support decided to mirror itself and bounce in an upwards direction. Okay, you can also see over here, price decided to create resistance here because of the resistance over here. Okay,
Then price broke that too and continued to go in the upwards direction. Okay, so all price is going to do is just mirror each other. Now, as you can see, whenever it does short, it's not lasting. It's not falling down to zero. That's because it's not time. Okay, it takes a whole market wave in order to have that happen. Okay, it takes a lot of traders, a lot of liquidity, and a lot of money in order to have that happen. Okay. So we'll jump into some Doge here. So this example here I marked out yesterday, and looks like we're getting some positive price action from here. Okay, pretty good trade. Very, very simple. So all I did was mark out this area of resistance here. I have this strong area of resistance right here, and even way to the left over here. This whole area is just letting me know that, okay, price keeps shorting here, and I could see that price decides to break the area of resistance, turn it into support. Okay, and now price is going in upwards direction. Okay, so I can go ahead and see price wants to try and fill in this whole gap all the way up here. Okay, so even a Doge gap here would be pretty simple to go ahead and take and play. Okay. So just take your time. Okay, whenever you're analyzing your setups, take your time, and you're looking for support and resistance in just certain key areas. Okay, you want these key areas to be reacted upon off of, and you want gaps to be filled. So, yeah, so you're just looking for gaps to be filled. That's all you're looking for, essentially. That's it. That's it. Okay, you know resistances have to be filled because price is trying to break new highs. Okay, and that's it. You're just taking advantage of knowledge. All right, so take this example. I can see price wants to go ahead and reach this areas of resistance up here. Okay, so I can go already and see price wants to fill this whole gap right here. Okay, so I go to my 4-hour time frame, check out the area of resistance, super duper clean area right here that reacted off of twice, once and then twice. Simple. Okay, and I can see that price wants to at least try and gap this area here. Okay, so how can we catch a setup? One, I already know price decides to create some support over here. Okay, once you see some support created like that with multiple daily closes, a lot of the times, you know, price wants to go ahead and sweep. Okay, so sometimes too, it's just about just buying. Okay, so if you see price starting to curl like that, or if I get on my line chart here and I start seeing a daily curve like that, okay, and I start seeing a sharp bottom with the V formation, and everything looks how it should, then ideally I can be like, okay, you know what, I think price wants to actually go in an upwards direction. Okay, and you can go ahead and you take your chance and you mark out your trade. Okay. So let me go ahead and check this out here. So I can see this area of resistance here on the line chart. And sometimes you can bust out the line chart just to see everything a little bit clearer. You can also see these areas of support over here too on the line chart. So I'm like, okay, is this area of support pretty decent? Okay, it's being reacted off of once, and we had a large area of support being reacted off of over there. Let me go back to my candlestick chart. Can see the support a little cleaner. So if you notice the candlestick chart is a little too jamboree or too much, feel free to turn on your line chart sometimes too. Verify your levels, look for curls, and get your gap fills. Okay. It's going to be really, really simple to make some profitable trades. Okay, so I can see from way to the left over there, the support level. It's not just any level on the block. It's actually a pretty good level. Okay, that price wants to react off of. So let me go ahead and let's do another example here. So let's pull out some BNB. Yeah, BNB is normally always at all-time highs. It's a really good crypto. So it's at all-time highs. How would I play this? So personally, I would wait for a pullback. Okay. If I'm going to short it, okay, well, let's talk about that for example. If I'm going to short it, I would take this area of support here, wait for it to turn into resistance, and then take it to the downside. And my take profit would either be the area of resistance below it or area of support. And the reason why I'm not too keen on shorting, honestly, is because my take profits are going to be smaller. Okay, you don't know how badly people want to just buy the dips. Okay, people could be fiending and hounding to buy the dips instantly. Okay, as soon as these things dip, people buy the sweep up. Okay, let's check out Bitcoin for example. Okay, the second Bitcoin dips, it recovers instantly. Okay, Bitcoin could have an extremely heavy dip, and it's not people thinking, oh, it's going to zero. No, it's people loading up their pockets in stack mode, ready to unload. Okay, so boom. Price dipped down to 100K. Okay, out. Okay, we dipped down to about 100K, and the dip instantly ripped up and recovered. Okay, instantly decided to just capitulate that whole reversal and just reverse the reversal. Okay, and as you can see, continue to see breaking new all-time highs or making higher lows constantly. And higher lows is always going to be a great sign here. Okay, I can go ahead and see here. Price decided to make this area of support here too, or make it higher lows. Okay, higher lows. It's going to let us know that we're trending. Okay, we're trending in an upwards direction. And that's what we're going to be wanting to just take advantage of. So just keep dollar cost averaging, looking at the areas of support, be like, okay, you know what, if this area of support gets broken, I can look for the next area of support. Okay, so you can use this for your short or your long end. Okay, or you can wait for price to come down, maybe bounce at this area of resistance here. Okay, and if you see price come down to any of these areas, give you a daily close with a sweep up, feel free to go ahead and buy any of these lows. Okay, they're already verified. So if price wants to retest these lows, all it is confirming that price wants to trend even harder. Okay, could potentially be this low right here from this support. Okay, could either be an area of support below current price or an area of resistance below current price. It's going to choose. Okay, and then from there, we're going to go in which direction. All right, so that's going to be the support and resistance masterclass. Head over to Stackmode.net for all trading education. Stay productive, God. Keep grinding. All right, Stackmode Chris here, and this is going to be everything that I wish I knew when I started buying and selling stocks within the stock market. So it can seem daunting, but it's definitely a powerful way to build wealth over the long term, and it requires a lot of patience, humbling yourself, being close to God so you don't lose yourself or your sanity, and just being disciplined. So what exactly is a stock? A stock is also known as an equity, and it's a security that represents an ownership stake in a company. And when you buy a company's stock, you become a shareholder, and you own a tiny fraction of that business. And as a shareholder, you're going to be entitled to the portion of the company's earnings, okay, so the company's money they make, and assets, proportional to the number of shares that you own, okay? So the more shares that you own of the company, the more piece of the pie you'll have. So the primary goal of most stock investors is to profit from the appreciation of their shares over time as the company grows and becomes more valuable. So imagine this, for example. So if I have a pie, okay, let's say the pie is called Stackmode pies, okay? So Stackmode pies, the name is going to be the stock, okay? Whatever the name is the stock, okay? So stock is essentially the name, okay? Say I own 50% of Stackmode pies and I own 5 million shares, okay? So shares are going to be the percentage ownership, okay? And then there's going to go ahead and be directional bias. So if I said I was going to hand out 4 slices of pie today and I was correct, then that's going to pretty much be an options contract, okay? A stock options contract. So options contract, you're getting paid to pretty much predict price within a good time manner, okay? So that's the difference between all of them. So for example, imagine a company, okay, Stackmode Network. Let's say we decide to sell 100,000 shares to the public, for example. And if you buy 100 of those shares, okay, you'll then own 0.1% of the company. And if the company's value grows from 10 million to 20 million, your shares value will likely double as well. So having an investor's mindset is going to be extremely important. Don't hop on the market thinking that it's a quick money grab, thinking that it's a quick get rich scheme. No, it's going to require discipline, day after day after day after day after day after day after day, repetition, not giving up, feeling like a failure. Okay, so many times where I just felt like I just wasn't for me, felt like I wanted to stop and was just feeling unmotivated, but I kept pushing through. I knew there was an end goal to it. And now, alhamdulillah, we're seeing green profits. Okay, so having an investor's mindset, having a resilient mindset is going to be extremely, extremely important. You've got to be patient. Okay, always be working on some other business or something like that while you're in a trade. Okay, you can't sit there having anxiety about the trade all day. You can't put yourself in lock. Okay, you got to keep going, keep flowing, keep building the wealth. Okay, and shalom. So investing is not about getting rich quick at all. It's about building wealth patiently and systematically and logically. And the biggest enemy to a new investor is often just their own emotions. Okay. So key principles of the mindset, long-term perspective. And think of terms and years, not days or weeks. Short-term market fluctuations are normal and often unpredictable. And true, wealth is truly built over decades, not quarters. Even if you run up $8 million, for example, in 2 years, okay, if you're not disciplined, if you're not structured, you don't know how to continuously win trades. Let's say you hit a couple meme coin plays, right? If you don't know how to continuously win trades, put the money away for taxes, budget, reinvest, you could end up definitely destroying that. Okay, you could destroy any amount of money by being undisciplined. Okay, so have a long-term perspective on it and avoid emotional decisions. Do not panic sell when the market drops. So the left to right chart. Okay, if the stock market or crypto market goes down, understand that inshallah, especially if it has value or something called market cap. Okay, market cap is going to show you the number of how valuable a company is. Okay, so if something has a high market cap, okay, and certain things occur on all of them, then you know it's also going to be something that you want to be looking at too. Okay, so a lot of the high market cap stuff can have decent volatility. Okay, and embrace that. Okay, the market's going to go up and down, and volatility is a natural part of the investing landscape. And you can view market downturns as potential opportunities to buy quality assets at a discount, also known as the dip. Okay, so if the dip is happening fast, people think price action is just willy-willy. Okay, so if you see your 4-hour candlesticks curling upward, daily candlesticks curling upward with closes, you know that you might able to find the low. Make your take profit in an area of resistance or support above current price. Okay, and just take your time. Okay, so taking my take profit is something that I wish I stuck to. I would hit take profit, but sometimes I would get greedy, hold past it, okay, or try and make 10 bands in a day instead of being happy with the 900 that I just made. Okay, I've had instances like that too. Okay, so it's about instances of being grateful, and this is why just reading the wisdom that God has left here for us, Quran, you know, etc. So it's really just going to help us put everything together and lock it all down. Understand, like, okay, I can't just be playing with my money emotionally. I actually got real people to protect and provide for. I gotta be serious with my trading. I gotta be serious with my money. Okay, and trade with this mindset. Never trade with the mindset of, oh, I'm trying to make some money. Not trade with the mindset of, I'm not going to lose money on this trade. Okay, and do your own research. Okay, never blindly follow a stock tip from a friend. Instagram, okay, there was times where I traded in a group of friends. That was before I even started mentoring on YouTube. Okay, I started off mentoring a group of friends, okay, and then they told me that I should start taking it on the internet. Okay, but that's how it started at first. Okay, I started helping people get funded. Okay, after I figured out how to get funded and stuff like that. Okay, but trading with friends sometimes can lead to bad decisions if you don't do your own research. Okay, because no one is perfect, only God is perfect. So sometimes, like, especially if they're not studying more than you, okay, just try and stay in your own lane and your bag and your investor. Okay, study from your mentor, okay, and just stay locked in with your mentor and focus on the charts. Okay, so God got you. Okay, find yourself a good mentor that you can trust. Okay, and just trust your vision and your view. Okay, don't be arguing with anybody who doesn't believe in your view. So understand what you're investing in. So fundamental investing concepts. So to navigate the market, let's understand the language of it before we're just on here lost. Here's some of the most critical terms and concepts you'll encounter on your journey here a lot. So stocks, once again, stocks represent ownership in a company. They're higher risk but higher potential return, and you can participate in the company's growth. So if you catch a good company at the low, let's say you catch it at $32 a share or something like that, okay, and then price decides to go to $100 a share, okay, you would make a large percentage gain on your money, okay? Why? Because $32 a share went to $100 a share, okay? That's a 68-point jump, if I'm not mistaken, okay? So it's a lot of points, a lot of percentage gains to go and be paid off of. So with stocks, you get paid as price decides to go in whatever favorite direction you purchased it in. Okay, whether be it you're wanting it to go up or down with the options contract, for example. So bonds are debt and stocks are equity. So bonds, they represent a loan to a company or government, and they're lower risk but lower potential return. And you receive fixed interest payments over time. And think of it as being a bank for the company.
So let's talk about market capitalization, a very, 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 very popular term. Market cap is the total value of a company's outstanding shares, and it's a simple way to gauge a company's size. So a large cap is going to be anything over 10 billion, mid cap is 2 billion to 10 billion, and small cap is generally considered below 2 billion. Okay. So small caps can be high risk, high reward because no one's really found them yet. But if you catch a small cap and it turns into a large cap, you'll be rolling in some dough, inshallah. Okay. Mid caps, they have some higher growth potential. Okay. But they can also be more volatile since it doesn't have the most value. Okay. And large caps, generally more stable. They do have a lot of volume though. So if price wants to correct, it'll definitely correct. So if it wants to dip down hard, it'll do that. So the art of research, okay, fundamental research versus technical analysis research. There was times where I only traded earnings, for example, okay? And I would just do research on the company, on the earnings, and that's fundamental analysis, okay? And then I started just trading with the charts, okay? And that's technical analysis, okay? And both are gonna be needed to mesh together the ultimate plan, trust me. So fundamental analysis, let's talk about what it is. So this approach is a company's intrinsic value, and you'll analyze its financial health, management, market share, and competitive landscape. Okay. And you're looking for a stock whose price is below its true value, believing that it's going to rise over time by helping people in the future. Okay. And putting smile on people's faces, inshallah. So some key metrics: the price to earnings ratio, also known as the PE ratio. Okay. Earnings per share and return on equity, also known as ROE. These numbers tell a story about a company's profitability and their valuation. So for a PE ratio example, if a company's stock is trading at $50 per share and its EPS is $2.50, the PE ratio is $50 divided by $2.50, and that equals 20. And a low PE might suggest a stock that is undervalued, but it could also signal poor growth prospects, and it's a key piece of a larger puzzle. Put together what you wish. And technical analysis. This approach ignores a company's fundamentals and instead focuses on chart patterns, such as waiting for support to be broken, turn into resistance, or resistance being broken, turn into support. Okay. So instead of focusing on chart patterns, fundamentally, you could focus on chart patterns technically. Okay. And that's technical analysis. Okay. So technical analysis involves chart patterns, trading volume, studying the market momentum, and how the candles are moving. And technical analysts believe that all relevant information is already reflected in the stock's price. Okay. And the golden rule, diversification. Okay. And I also wish I was just saving way more money too. I would buy a bunch of Bitcoin, but then I would always just sell it. And I was like, dang, okay, everything that I've been buying and selling for the past 3 years, if I would have just held it, okay, then I'd be very, very up. But I'm glad I didn't do that because I get to teach this lesson here today. Okay, so the golden rule, diversification. So one of the most important lessons is to never put all your eggs in one basket. Okay, so don't just put all your P&L into just one share play. Okay, diversify a little bit, maybe like 1, 2, 3 plays at max. That's crypto and stocks included. Okay, 1 to 3 digital plays max. And diversification is the strategy of spreading your investments across different assets to mitigate risk. And when one investment performs poorly, another may be doing well, helping to balance your portfolio's overall return. So I hope you invest across industries. Don't just invest in tech, consider healthcare, consumer goods, energy, and finance. Different sectors react differently to economic cycles. Okay, so as of 2025, when this is coming out, we're in like the AI cycle. Okay, so AI stocks, for example, are super popular. Okay, or crypto brokers. Okay, anything allowing people to trade cryptocurrency, it's going to be popular too. So invest globally. Okay, the US stock market is not the only one. Consider international stocks to capitalize on global growth and reduce country-specific risk if you want. And use ETFs and mutual funds. Okay, these are powerful tools for instant diversification. An exchange traded fund, an ETF. That's a basket of securities you can buy and sell or an exchange, just like a regular stock. An S&P 500 ETF, for example, gives you an instant ownership in the 500 largest US companies. Okay. And mutual funds. A fund managed by professional, which pools money from many different investors in a variety of assets. So here's some common mistakes I knew. So chasing hot stocks, okay? So especially after I made my first couple bands with like C3 AI, say seeing that, okay, making my first like flip like that, okay, I was just like, okay, whoa, trading can be super duper popular. But then after that, I ended up losing profit just buying some stupid stocks that didn't end up going anywhere. So be careful chasing hot stocks. So stocks that are currently making headlines or being heavily promoted are often already way overpriced, and the smart money has already made their move to go ahead and exit. Because remember, it's a left to right chart. So it's about who sees it first. And inshallah, I want you guys to see it instantly. And market timing. It's nearly impossible to consistently predict the market's short-term movements. And trying to buy at the absolute bottom and sell at the absolute top is a fool's errand. And time in the market is far more important than timing in the market. So ignoring your plan can sabotage you too. Many investors or traders have a solid plan. You know what you want to do. You know what your criteria consists of, but are you following it? Okay. Panic and greed could really lead you to abandon your trade, okay, or even frustration. Just why am I not winning the trade? Not accepting the fact that you lost instead of sticking to your clean setup criteria. Okay. If you're struggling, head over to Stackmode.net, but I really do assure you play break and retest. Okay, you could wait for support to be broken, turn into resistance, or you can wait for resistance to be broken, turn into support. Okay. And that's it. Just keep it simple. Okay. Don't destroy yourself over the charts. Please keep it simple. Set a strategy. Okay. Stick to it, regardless of the market noise or whatever's happening. And investing money you can't afford to lose. Never invest your emergency fund or money you need in the next few years. The stock market is for long-term capital that you're comfortable seeing fluctuate. Okay. So opening a brokerage account. A brokerage account is a financial account where you can buy and sell stocks and other securities. Okay, you can't just go to the company and buy shares. You got to go to the broker to facilitate the transaction for you. Okay, so brokers, you can check about their fees, see about their rules, see how their support is. Okay, and then you're going to be able to get a card. Okay, certain of them, like Robinhood, for example, offer a card where you can go ahead and use your day trading profits or whatever profits that you make from the market and withdraw straight on the card. So whatever broker that you want to use, go ahead and use that. Okay. So open your broker. You can start small. Okay. Don't just dump all your money. Okay. Take your time. Make sure you know what trades you want to invest to and do your research. Okay. Even if it's worth it to spend your money on education, mentorship first, and then come into the market. Okay. This way you're not going to have to get your education by just losing over and over again. Okay. So in dollar cost averaging, okay, so the most powerful strategy for beginners. And instead of trying to time the market, you just invest a fixed amount of money at regular intervals. Okay, and this ensures you buy more shares when prices are low and fewer when they're high, averaging out your costs over time. Okay, so make sure you guys know where you're purchasing. Okay, if you're not purchasing at the right time, that could really jurisdict your trade and really just sabotage certain things that you need. Okay, so focus on ETFs and mutual funds. So for your first few years, you can focus on a core portfolio of low-cost index funds or ETFs. Okay, that's going to be something to diversify too, especially as you're learning the market. So if you're new into the market, you still don't understand certain day trading while you're getting educated and stuff like that, ETFs can be something that you can look into as well too. Okay, so I wish I looked into more long-term stuff when I first started trading instead of just worrying about the instantaneous profit of like 0 DTE options. Okay, so look at long-term stuff because a lot of the time while you're learning the markets, you can still make money in these long-term plays, and your money a lot of the times is going to be a lot safer versus you just trying to throw yourself head into 0 DTE or something like that, or futures, and then losing everything. Okay, so that's where I wish I corrected myself. Okay, so start now. Okay, there's going to be no time limit, okay, to when you can start or end trading. Okay, you could trade till you pass away. Okay, and you can start trading right now, any age, any time, just start now. Okay, know yourself. Okay, this is why being with God is going to be really important. Already becoming humble is going to be really important. Okay, you can't be coming with ego. Can't be coming with thinking that you're bigger than the charts. You can't be thinking that you're right and the charts is wrong. Okay, and use the right tools. Okay, TradingView, big tool. Come for mentorship. Okay, I offer a free call where you guys can learn how to trade as well too. And then I'll put a trading plan together. Okay. And patience. Okay. Be patient. Even if you're making $10 from the market. Okay. Stack that up. Okay. And after you withdraw, So whatever amount of money that you withdraw, let's say you make $10. Okay. I like to leave 50% in my account of whatever I made. So I would only put $5 in my account. After that, 30% of whatever I withdrew needs to go to taxes. And that's how I break down my money. So I hope this presentation helped. Stay prayed to God. Keep grinding. I'll catch you guys in the next one. Okay, this is going to be the lesson on buying dips within the stock market and the crypto markets. So buying dips is going to be pretty simple. And buying a dip is pretty much just going to consist of buying a low whenever the market dips down. Okay, so we know the goal of the stock market and the cryptocurrency market. Okay, if I go ahead and pull up a profitable stock, for example, okay, I can go ahead and see from left to right how chart starts small. Okay, Nvidia stock started at $2 a share, let's say around 6 years ago. Now we're trading at $177 a share. Okay, large percentage increase on our funds. Okay, if you were to go ahead and hold shares for a couple of years. Okay, and same thing with the cryptocurrency markets. Okay, the goal of it is to just hold, and for the company or crypto token creators to keep innovating with the future. That way it's going to go ahead and bring value to whatever it is, and value is going to equal more people investing, and more people investing is going to equal more money, and more money is going to equal a higher share price, inshallah. Okay, so buying dips at the right time is going to go ahead and be an ample way for us to make money. So let's talk about it. So one, in order for us to buy dips at the right time, we need to be using our higher time frames. So the time frames we're going to need to be using in order to analyze everything is going to be our daily time frame. The daily time frame is going to be our eyeballs. We're going to be able to see everything we need to see on the chart. Okay, and one screen you could see 6 years, 10 years with the price action on one screen, versus if I get caught up on the 5-minute time frame, I can only see a month worth of price action on one screen. Okay, so it's not nearly as much price action. And the reason why we're using our higher time frames as our guidance is because this is where the whales, okay, and whales are going to be players with large amounts of funds, okay, hedge funds, okay, people collectively putting money together in order to trade in the markets, and banks and institutions. Okay, so people who are pooling large amounts of money together, we want to be trading when they're trading, and they're going to be trading at dips that are visible on the higher time frames. Okay, so this is why we're going to be using our daily time frame. When you're under higher time frames, let's say I'm on the daily, each one of these candlesticks will represent 1 day. If I'm on the 4-hour, each one of these candlesticks will represent 4 hours. So, and also, like we know, just like we talked about, the goal of the stock market and cryptocurrency market is to go in an upwards direction. And only way price can go in an upwards direction is if it breaks what's called an area of resistance. Okay, resistance is an area where sellers come in, causing price to go in a downwards direction. Okay, so once again, resistance logically makes sense because this is a left to right chart. So if someone got in from way over here at $2 a share, of course they would go ahead and take profit at this resistance up here at $32 a share. Okay, they're gonna go ahead and sell some shares. Okay, go take a nice trip, do what they want to do, reinvest their profits, pay off their house, rebuild their kitchen, do whatever you want to do with your profits. Okay, but eventually people are gonna take profit. Okay, because they got in way back here. Some people. Okay. So this is why we are understanding why resistances gets created. Okay, people are selling because they're in from way over there to the left. So when you see resistance get created, all it is people selling. Okay, so resistance equals selling. And we know that price cannot continue within an upwards direction until price breaks resistance. Okay. If price is trying to go up and break out and future innovate and be one of the biggest stocks of all time, areas of resistances have to be broken out of. Or an area above, an area of support above current price can also be broken too. Okay. For price to go ahead and progress in an upward direction. And sometimes support, prices underneath it, it can turn support into resistance. And then it could potentially try and break through it. Meet up with other areas of resistance. So this is implying that this opposite end bounce It's going to be called support. Okay. So support is when buyers step in. Okay. Unlike resistance where they're sellers, support is going to indicate when buyers are stepping in. Okay. So when buyers are stepping in, price is trying to go in an upwards price. People are trying to invest. They're trying to make some money. So buyers are stepping in whenever support gets created. So resistance here gets created whenever sellers are stepping in place. And support can be broken and turned into resistance potentially. And just like the opposite end, resistance can be broken, turn into support potentially. Okay, it doesn't happen every time, but it has a chance to happen. Okay. And price has to break resistances in order to progress in an upwards direction anyways. Okay, price has to break resistances in order to go in an upwards direction. Okay, so price is either going to try and reverse at certain resistances or is going to try and bounce at certain support points. Okay, or resistance can be broken, turn into support for a continuation to the upside, or support can be broken, turn into resistance and push to the downside. Okay, for a downside continuation. All right, so that's going to go ahead and be those put into perspective. Now let's hop onto the charts. So understanding everything here on the charts, we know that price is always trying to hunt and chase and break areas of resistances above current price. Okay, it's trying to chase, break areas of resistances above current price. Okay, so say Nvidia, for example, I could see here that price wants to meet up with this all-time highs. Okay, all the way up here. Okay, this is the highest point of resistance on the chart. Okay, and this is when I'm going to be really paying attention to my higher time frames. Okay, so we had a pullback area here. I can already see it. Okay, so I'm going to go to my 4-hour here, and I can go ahead and see something here. Okay, this is what's going to be called a support mirror. Okay, support mirror. Let me go ahead and do this. Okay, support mirror, check it. So we're going to see price mirrored the areas of support, just like we talked about. So if price bounces in an area of support, you're going to know that it's a good time to buy that dip. Okay, so we can see this support get created right here. And I don't ever like to buy the first candlestick. This is when I'll come to my 4-hour candlestick and wait for a close. What a close is I'm not going to buy at the candlestick that touches the blue line. If I'm going to buy a dip and wait for it to sweep back up in an upwards direction, I'm going to wait for a second candlestick above the blue line. It's not going to be later because it's going to be safer to trade that. Instead of buying it as soon as it wakes up on the blue line, price could easily dump right through that. But if a lot of the times if price wants to give you a close above the blue line, give you a second candle and show you it doesn't want to go up all the way just yet, but it wants to maintain above the blue line, that could indicate an entry area for a reversal without getting burned. Okay, so I'm trying to just give you guys the safest way to trade. So I would never enter on that first wick where price bounced directly off the blue line. But if price went 4 hours and then still stayed above the blue line, I would go ahead and enter. And that's what you're waiting for a close for. Each one of these previous candlesticks are called closes. Okay, and I can see that this area is strong. It's because one, I have this area of support right here where people are buying in an upwards direction right here. Okay, people are also buying right here. Okay, so price decided to break and then come back down, test this level, and shoot back up to this area of resistance up here. Okay, so we got R up here for resistance, and then we got S for support. Okay, and even right here, I'm gonna go put this tiny area of support right here too. Let me zoom in all the way. Okay, even this area of support right here on the blue line. Okay. There we go. Okay, area of support right here, area of support right here, area of support right here. 3 different bounces that I can see on my 4-hour time frame. So I can assume that this area of support wants to go ahead and be decent, especially after getting a close. Okay. And I can see price decided to just fall at this area of resistance right here. Okay, so price is falling from an area of resistance. You're gonna have one area of resistance here on my 30-minute now, and another area that was created off of that. Okay. So as soon as you start seeing price decide to curl in an upwards direction, especially on your 4-hour time frame, you can go ahead and take that for the most part and take it up to the next area of resistance, inshallah. So let me go ahead and cover another example here. So I have some
stuff here. Okay, let's go over KOP. Okay, even with KOP here, I can check out here. I can start off on my daily time frame. Always going to be starting off on my daily time frame. Okay, always start off on your daily time frame. It's going to be your bread and butter. Okay, it's going to be your bread and butter. So if you want to eat, let's grind. All right, so we know that on the stock market and the cryptocurrency market, people are putting in work at these companies, working their real life, trying to innovate new technology for the company. So once again, the company can make more money, and this way their valuation can be higher on the stock market. Okay, so then people can be called billionaires, etc. And that's due to stocks. Okay, so price once again is always trying to break resistances or supports above current price to progress in an upwards direction. Okay, it's not trying to stay stagnant. So your take profit a lot of the times and take profit means where you close your trade. Okay, and you close your trade at take profit no matter what. If you tell yourself you're going to close this trade here, you close that trade there. Okay, take profit is where you get your money. So I can go ahead and see here that price wants to chase this area of resistance. And realistically, this could be the trade. I don't really have to do anything else. I can get my ruler here. I can put my ruler down. I can see that there's around 3 points left. Okay. I could also do the trend line if I wanted to too. Okay, but that might give you a little later entry. But personally, once I see like my daily time frame with support curls at a heavy area, so let's say price is supporting at this area, heavy area of support down here. Okay, even down here, one area of support into another area of support. Okay, and then I can easily see price deciding to bounce within an upwards spiral direction. Okay, and then we also another area of support right here. Okay, so all these areas of support lined up let me know that, okay, price is doing the same thing in the same area and it's doing it again. I get on my daily time frame and I have closes. I get on my 4-hour time frame, I for sure have closes. Okay, and I can see that price wants to go up to the next area of resistance. Okay, it's just about making it easy, making it simple. Okay, not making it hard. Okay, buy a good expiration date for these contracts. Buy a good strike price that's relevant, and you'll have the keys to financial freedom, inshallah. So check it out here. Even Amazon here. If I wanted to, I could wait till Amazon goes down to the support. Okay, I could see if it wants to. Go to my 4-hour here. Yep, so I can see if price wants to come down to this area of support. And if it does, then we'll see if it wants to go ahead and bounce in an upwards direction. But as far as this is already pretty bearish. And yeah, price decided to break the trend line. So we had one bounce off the trend line, 2 bounces off of it, but then we had a push down below it. Looks like price wants to go ahead and fill this area of support right here. Okay. Also mixed with this area of support here too. So let me go ahead and grab this line, drag it all to the right, and you can go ahead and see this here. Okay. So it's about just taking our time, identifying the right setups. Let me go ahead and show you a crypto example here. So going over the crypto example here, let's go ahead and click on Ethereum. Okay. So going over Ethereum here, looks like price wanted to bounce at this area of support and break below it. Okay, let's break it down. Okay. Here we have an area of support. Being broken and turned into support. Okay. So once again, we have an area of support being broken. Okay. And if I get on my 30-minute here, I can see that support got broken all the way over here. Support broken, turned into resistance. Okay, if I zoom in extremely hard here, I can see the resistance was created right here. Okay, price broke underneath it, first 30-minute candle, then ran back up to the black line and decided to short downward. Okay, this is going to be an example of some downwards break and retest. Okay,
downwards break and retest. So say I still wanted to buy some Ethereum, for example. Okay, this is what I'm getting on my daily time frame now. I don't want to tunnel vision. So I know price could either A, reverse near this area of resistance here, potentially, or I can assume that price might potentially want to reverse at the area of support down here. Okay. Let me get on my 4-hour. It can also be this area of support. There we go. Okay. And you can go ahead and see the area of support right here being formed and formulated, and then the next step down below that in case the previous level above doesn't hold. Okay. It's just about marking the levels, making sure we got it until we are clean and crispy with how we're looking at the charts. So even XRP here, okay, I can see 4-hour time frame price potentially might want to hold this point. Okay, potentially. So XRP decided to go ahead and dump down. Supports are holding. Okay, and it looks like price might want to sweep back up, but it did fall back down, and we'll see if there will be a new low or something. Okay, but either way, this will be buying the dip. Resistances are up here. Okay, and if price starts giving you 4-hour daily closes, okay, and you get to think coherently, then you can go ahead and feel the setup. Be like, you know what, this is gonna go ahead and sweep here. Okay, it's lining up with this area of support, it's lining up with this area of resistance. X, Y, and Z are lining up. Let me go ahead and take this. Okay, check right here. So even right here with Doge, for example, right? So we got some break and retest right here. I have this area of support right here on Doge, mixed with this area of support right here. Okay, and on my daily time frame, we have the second candlestick being formed. Okay, 4-hour candlestick, second candlestick being formed. Okay, and it looks like price wants to go ahead and go up in an upward direction. Okay, close at resistance, close at resistance, close at resistance, close at resistance. Okay, so you can go ahead and mirror your supports, mirror your trades like that, and really just see like, okay, I know what type of trades I want to get into. I know what I'm going to be looking for within the market. Okay, and buying dips can just be relatively easy. It's just about not overthinking the trades, really taking our time, okay, and then just seeing, you know, inshallah, I can go ahead and do this. Okay, so just wait for either break and retest or wait for an area of support to go ahead and line up with each other. And a lot of the times, especially when you get a daily or 4-hour close supporting it, you can be like, oh yeah, you know what, that's it. Like, that's the one. Okay, so be confident in your trades. Head over to Stackmode.net for all trading education. So pray up to God. Keep grinding. Hey class, this is going to be the full masterclass on how you can turn your money into more money by just investing virtually. Let's go and let's jump straight into it. So, building the financial foundation. So before committing any capital to the market, okay, make sure you guys are humble, okay? Humble yourselves. Before you invest even $1 into the market, understand that the market is not a place where you can have ego, okay? If you don't accept your loss into the market, if you don't accept the fact when you're just not correct, you can destroy all of your capital that you've been working hard for. Okay, I don't care how much capital you're investing into, 4 figures, 5 figures, 6 figures, doesn't matter. Okay, the more capital you're investing into is not going to make you a better trader. Okay, so also try and have a steady income. Okay, so don't think you're just going to come into the market and just turn nothing into something and professionally just trade forever. It can happen for some people, but it's really stressful, really anxiety driven. So try and have a steady income. Okay, work on your business. Okay, and then come into the market and invest. Okay, so stay prayed up to God. Make sure you guys are worshiping God and be humble. Okay, have some humility before you come into the market and have a steady income. Now let's jump straight into it. So before committing any capital to the market, a successful investor must ensure their personal financial structure is stable. And this initial phase dictates your risk tolerance and emotional resilience. Okay, there's going to be times where the market's going to be trying to break you down. Okay, it's going to be trying to beat you up. It's going to make you think that you're not meant for this. Okay, especially on certain things like options, which we're going to talk about in this, for example. But you guys got this. Okay, invest your money, take your time, and buy at the right times. Okay, if you want to learn how to buy at the right times, head over to stackmode.net and I'll teach you how to read the charts. I also have tons of free videos on my channel.
So establish a solid budget and have a roadmap. So detail your income and your expenses. Okay. Know how much you make and know how much you are going to lose in bills, and then go ahead and have a leftover amount of that, whatever that is. Okay. Because you want to have some spending money just in case, because life happens. Put some of that away, and then whatever's left of that, you could go ahead and invest. Okay. And only invest money that you genuinely do not need for daily life or near long-term goals. So pay your bills, get your groceries. Okay, take care of whoever needs to be taken care of. Wife, kids, whatever, do your thing. Okay. And then you can go ahead and invest. And this way you can invest stress-free. Okay, if you lose money, you're not going to be tripping. That's not money that you completely need entirely. You're going to be fine. Yeah. And try and have a safety net too. This is going to be paramount. Try and have 3 to 6 months or 6 to 12 months for higher job instability, as certain recessions and stuff like that come into play, as the economy just becomes unstable in certain time periods. And you can have a bunch of living expenses saved up in a high yield savings account, or you can have it put in the stock market. Okay, stock market. I don't really recommend a high yield savings account though, because it's interest. Interest is wrong, so I don't really recommend a high yield savings account. But you guys can put it in a stock, put it in an ETF, and that's going to go ahead and make you guys some money. Okay, and this prevents you from being forced to sell investments during a market downturn just to pay your rent. So, and eliminate high interest debt. Okay, high interest credit card or personal loan debt often carries an effective return of 20% or more. Mathematically paying off this debt is usually the best guaranteed return and you can achieve before investing. Attack and eliminate consumer debt first. Okay, so try and eliminate your debt before you guys invest too. It's also just going to give you guys a bunch of mental health back. Okay, so if you have a credit card balance of $5,000 at 22% APR, then you must generate a new 22% return, okay, just to break even. And paying off the debt is a guaranteed 22%, okay, will significantly de-risk your financial future. So just pay off the debt so then you guys don't gain any interest, which is going to lead you to have to make more income in the future, just eating into your investing profit. So pay off your debt. It's logical. And core investor principles and account types. Successful investing is less about timing the market and it's more about time in the market and adopting disciplined habits. So timeless principles. Be patient, okay? Don't think you're going to be getting rich overnight. And in certain cases where you do make a lot of currency overnight, okay, that doesn't mean you just blow it, okay? Don't go blow it. You need to go ahead and put yourself on a withdrawal schedule, okay? Before I start telling you guys how to make money, this is what to do with the money. Once you make the money, okay, let's say you make $500, take 50% of that and put it away. So 50% is 500, is going to be 250, okay? Once you have that, this is going to be the amount that you can go ahead and put into your bank account, or you can go ahead and reinvest that into certain things like dividend ETFs we're going to talk about, okay? Or you can use it to pay off debt or pay your bills, etc. And diversification. Never put all of your capital into a single stock, sector, or asset class, and do not keep all of your eggs in one basket, okay? So try and have a diversified portfolio, okay? We're going to talk about the different types of diversification, but don't just put all your eggs in one basket. And DCA, dollar cost averaging. Invest a fixed amount of money at regular intervals, okay? So for example, $500 every month, okay? And this smooths out the entry price and removes emotional buying from just buying huge leaps at one time or another, okay? You're going to set yourself on a consistent schedule, take care of your bills, and keep stacking up, okay? This is going to be in stack mode. It's going to require sacrifice. If you want to get to where you want to be, it's going to require sacrifice. Stay down. Don't buy anything you don't need to be buying. Pay your bills, get some groceries, and that's it. No extras, okay? And your brokerage account, okay? This is what is going to be used for really just playing options, okay? Playing options, futures, or Forex, any type of short-term trading, okay? I would recommend a taxable account, and it offers maximum flexibility. You can have an infinite amount of money invested into it, and after tax and profits are taxed as capital gains when you sell, okay? There's also going to be some benefits though for long-term benefits if you hold for over a year. And retirement accounts, okay, they're tax advantage. So 401ks or Roth IRAs, they're incredible tools for retirement savings, and the tax benefits, either upfront tax reduction or tax-free growth, are critical to maximize long-term returns. And as far as Roth IRA, contributions are after tax, but all growth and withdrawals in retirement are 100% tax-free. So that's going to be the difference between that. And you can go ahead and use, once again, brokerage taxable accounts in order to invest into certain amounts. Okay, so you can go ahead and use that into just invest into your day trade or swing traders. But if you want a retirement account, then you can put that into your IRA. But you think about the IRA though, is that you can only invest a certain amount. It's going to be capped for a lot of the time. So I think it's around like $7,000 and $8,000 in 2025 this year. So yeah, it really depends. But taxable accounts, you can deposit an unlimited amount, make unlimited income. So depends up to you. So strategy 1, investing in shares in good companies. So the essence of value investing and buying a piece of a profitable business at a fair price and holding it for a long term. This is arguably the most stable path for beginners after index funds. Okay, so shares give you a piece of the pie. Okay, so say a company is the pie, say I open Stackmode, okay, on the stock market, and you want to own a piece of the pie, okay, you're going to be able to have jurisdiction and a vote in who runs Stackmode company, okay, and as Stackmode company increases on the stock market, you make money too, okay. So that's going to be the point of people investing into shares. As the share price increases within an upward direction, people make money. Okay, so let's go and let's talk about the economic moat concept. So what is a moat? It's a sustainable competitive advantage that protects a company's long-term profit and market share from competing firms. And the wider the moat, the safer the investment. Okay. And the value of service increases as more people use it. Okay, so the value of a service increases as more people use it. So the more companies putting a smile on people's faces, more people are going to use it. More people using a company's service or buying products equals more money. More money, a lot of the time, equals a higher value share price on the stock market. Because since they're generating so much money, it's going to be a valuable company. And valuable companies are normally highly priced on the stock market. And this makes it extremely incredibly hard for competitors to challenge, especially once they have a high stock price compared to the other ones. And intangible assets, brands, patents, and regulatory licenses. And think of pharmaceutical patents or universally recognized global brand names. And these cannot easily be replicated. So, analyzing growth versus value. Companies are often categorized by their investment profile, and beginners should be aware of the trade-offs involved in each style. So, growth investing, right? The focus. So rapid revenue and earnings expansion. And these companies often reinvest all profits back into the business to fuel future growth, okay, making it a money powerhouse. And valuation. They typically have high price to earnings ratios, which means that the company is making good profit year after year and being able to most likely pay their employees good money. So, and they typically have high price to earnings ratios because investors are paying a premium for expected future cash flows, but they carry higher risk. And let's talk about value investing. Value investing is buying mature, established companies that appear to be trading below their intrinsic value, often found in older, slower growing sectors, and they lower price to earning ratios and often pay dividends. Okay. And the expectation is that the stock market will eventually recognize the company's true value, leading to stock appreciation. Okay, just like the dividend, for example, SCHD. Okay, for Schwab, for example. And you can go ahead and start with broad market ETFs, food. You could do SCHD. Okay, and as you learn the market, okay, it's going to be a good way to just grow your profit over time and chill. Okay, but come on with a full plan and know what you're going to do before you just start investing. So, build passive income with dividend ETFs. Okay, a dividend is a portion of a company's earnings that get paid out to its shareholders. So after the company decides to go live on the stock market, okay, or the New York Stock Exchange, okay, it decides to go ahead and pay money to whoever owns the shares. Okay. And due to the fact that it's supporting the people who supported them. Okay. So it's pretty much putting the money back in the cycle. And dividend-focused exchange-traded funds offer a powerful, diversified way to generate income. So what are dividend ETFs in the first place? So dividend ETFs provide diversification and stability. An ETF holds a basket of multiple stocks, let's say for example 50 to 100 plus. The dividend ETF specifically targets companies with a history of paying and increased dividends, reducing the risk of relying on a single company. And dividends are typically paid quarterly. The ETF collects the dividends from all underlying stocks and distributes them to the ETF shareholders. And as far as dividend reinvestment plans, this is the key to compounding. So having a plan with it automatically uses the cash dividend to buy more shares of the ETF, and this increases your share count, leading to larger dividends next time, creating a powerful compounding effect. So you could look for ETFs focused on dividend aristocrats and companies that have increased dividends for 25 or consecutive years, right? Focus on high yield, stable sectors like utilities or consumer staples that pay out dividends, and make sure you don't see too many splits. Okay, split is when they're going to be paying out less dividends. Okay, so we're going to be wanting to look for an increase of dividend payouts, not a split to where they're going to be paying less dividends. That means that they can't afford to keep up with the amount that they're paying. So you could buy Bitcoin as well too. So Bitcoin, until it expires, until it's all fully mined up, it's pretty much just going to be virtual diamonds and virtual gold. Okay. It does have a limited resource. It's going to go away at some point in time. And Bitcoin is introduced to the world to the decentralized digital scarcity. So a decentralized world is a world where no middlemen are involved, like the banks we were talking about. It's peer-to-peer transactions, and everything's done via autonomous contracts called the smart contracts. Okay, and the whole Web3 decentralized space has been broken down on my channel multiple times. So if you want to learn more about that, you can check it out. So buying Bitcoin is also going to be a really, really good solid way to make some currency due to the fact that one has some value behind it. It's virtual diamond and gold. And two, it really helps society. People are able to trade money within a quick way all across the world, okay, due to the fact that Bitcoin exists and they get something out of it. So it's while a potential long-term asset, it carries significantly higher volatility. Sometimes it can go downwards in the downwards direction, okay, causing you to lose your money, but no risk, and different risk factors compared to equities. So the HODL mentality. Okay, HODL stands up for hold on for dear life. This reflects the need for extreme patience. Okay, so you cannot sell early. If you put yourself in a trade, okay, and if you marked it out and the trade's working out, don't just sell early, taking your profit. Okay, let it ride out. Try and hold the trade for some years, okay, and see how much progress it's gonna make. Okay, especially something on Bitcoin, like it's not something ideally that you want to be scalping. And given the volatility, most the time I would say try and keep your account with like the remaining amount of money that you have. So even after you bought your stocks and stuff like that, your crypto should be your final portfolio that you invest in. And unlike stocks and a brokerage, you're responsible for the security of your crypto assets. Okay, so use good brokers and use brokers that are going to be safe and keep your money secure. And you could directly buy cryptocurrency with your card, okay, like Coinbase, Kraken, or whatever. Okay, and then you can go ahead and send it to another wallet if you would like. So stock options. Okay, it's going to be a great place to make some income, but it's also going to be a great place to lose some income. Okay, so you have to really be technically advanced. Make sure you're studying. So stock options are advanced. They're leveraged financial derivatives, and as a beginner, make sure you guys are mastering and studying the charts before you even touch options. Okay, if you're struggling with options, head over to Stackmode.net. I'll teach you guys how to trade it. Okay, options is not something that you want to be playing around with without the information first. Take your time. So the contract. Okay, an option is a contract giving the buyer the right, but not the obligation to buy or sell an asset at a specific price, also known as the strike price, on or a specific date. Okay, so if you think price is going to go in the upwards direction,
then you would buy what's called a calls contract. If you think price is going to go in a downwards direction, okay, then you go ahead and buy a puts contract. Okay, so if price went from $32 a share, and you think it's going to go to $40 a share, and it did, and you have the right contract, you would make a lot of money. Okay, if you think price is going to go down to $20 a share, and price is at $25 a share and it goes down, and you're in a $20 a share contract, or $21 a share, $22 a share, anything, anything under that, and take profit's going to be 20. Okay, so anything under 25 would go ahead and be an ideal contract, and that would go ahead and work. And it gives you the right to pretty much get paid based off directional bias. And options allow you to control $100 worth of shares for a small fraction of the cost, and this magnifies profits, but critically it magnifies losses just as quickly. And the intrinsic value of the option decays over time. Okay, meaning the contract is constantly losing value as it approaches expiration. So, eighth wonder. So compounding is going to be the process of generating earnings on both your initial investment and on the accumulated earnings from previous periods. And it's the engine of long-term wealth creation. Put your money in a loop. Okay, when you get some money from your business, invest it. And then when you make money from that, invest that. Okay, put your money in a loop. Your money should be like a tornado, a big whirlwind. Okay, and that's going to cause exponential growth, inshallah. And the returns generated in the last years of an investment journey are vastly larger than the returns in the early years. Even if the dollar amount invested remains the same, the accumulated interest is doing the heavy lifting. And time is the key multiplier. Time is going to go on anyways, as long as you're on Earth. So just let your money make some money. A person who invests $5,000 per year per 10 years, okay, so let's say they have 50K, starting at the age of 25, will have significantly more money at 65 than a person who invests $5,000 a year for 30 years, okay? For a total investment, it's going to go ahead and be $150,000, okay? So, invest, okay? Get into stack mode, take your time, put money away, and just keep grinding, okay? You guys got it, okay? And don't let your emotions get to you, okay? This is why God's gonna be really important, staying humble, okay? Because sometimes you can have a little fear, especially as a beginner trader, and don't panic. Don't sell when it's not time to sell, okay? And don't buy when it's not time to buy, okay? That's being greedy and being fearful. Once again, being emotional can destroy it all within your trading assets. And buying into an asset just because everyone else is making money, okay, during a speculative bubble, for example, this usually results in buying at the peak at all-time highs. Make sure you please know how to read the charts. It's a left to right charts, and it's called trading for a reason. When you're losing, somebody's winning. When you're winning, somebody's losing. Stick to your fundamental analysis and plan allocation. Okay. And as far as the IPS, the investment policy statement, write down your goals. Okay. Write down what you want to achieve. Write down how you're going to achieve it. Okay. And write down how you're going to break it down. I reckon even if you guys have two accounts. Okay. One account for your long term, and then another account if you want to go ahead and day trade, swing trade, whatever. Okay, up to you. Okay, they have two different types of tax benefits. Your long-term account, I recommend you guys holding a trade for over a year. Okay, so you get the long-term tax benefits. And then if you're gonna have a day trade account, just use that and then pay your short-term tax. Okay. So get ready. Okay, fund your emergencies, pay your bills, clear your debt, and then you're gonna be ready to trade. Okay. And then you can go ahead and do a Roth IRA and a brokerage account if you want, okay? And go ahead and set up your initial long-term investments and start saving money through there. And stay the course, okay? Check your portfolio quarterly, not daily. Ignore the market noise and volatility, and let compounding work as magic over decades, over time. And the biggest risk is the risk of not investing at all. So start today, okay? Stay praying to God, keep grinding. I'll catch you guys in the next one. Peace.
Guys, what's up? God is good. It's a beautiful day. We in the coop, hanging out. Alhamdulillah. So, I want to tell you guys, it's a little deeper than just trading, okay? You can't just trade and just live off of your trading income alone. It's not good. It's not healthy. It's not healthy for, one, your mental health. It's not healthy for your pockets, too. A lot of people might ask me
Chris, why don't you just survive off your trading profits? One, I would probably go mentally insane. I wouldn't go insane, but what would I do all day if I couldn't coach? If I didn't do the thing or teach the thing that I'm just so passionate about, that I love, that pulled me out of depression, that pulled me out of a hard time? I'm not just gonna let that go because I'm just making good income and I can provide for myself and my family, thank God. You know, I want to do more. My soul wants to do more. As I mature, I'm 22 now. As I mature, I realize it's a lot more things to life than just money, of course. And I feel like I've always known that, of course, God, family, but I'm realizing that my soul and what I want to do to help the world is what really matters. So I want to tell you guys that if you have a business idea, if you have anything that you're passionate about, if you have anything that you feel like you're really good at, teach somebody it. Or help somebody by developing a product. Or coach somebody. Do something so we can just all be better on this earth. You know, it's not just about money, competition. And, you know, I'm an extremely competitive guy. It's just something God put in me. But still, I'm starting to realize that the world is about, one, worshiping God. And two, it's about helping one another. Of course, you're going to make some money through the process, inshallah, if God wills. But it's deeper than that. Yes, you got paid to coach somebody, but now that person has a lifelong skill. Now they can put food in the refrigerator for their family because of what they learned. You know what I'm saying? So it's deeper than just money and competition. So I'm just going to be going 100% on stack mode. You know, I want more books out for you guys, more audio books, and I'm going to just branch everything together. You know, everything is a big oak tree. So trading, you know, I like it to be my base, but then you're going to have the branches. I have business, other things I talk about. Fitness is involved with it. I want to write a book and tell you guys about the herbs that I use every single day, water that I drink, how I work out Monday through Friday as consistently as I can. You know, the clothes, how taking care of yourself and following God's rules, most importantly. It's the most important thing. You follow God's rules, you'll live a really good life. Inshallah, you'll live a really good life if you follow God's rules. I truly do believe, and your soul will be fulfilled. Try hard to get married. You know, I'm married. And if you guys can just find somebody you can worship God with, settle down, get yourself a house, and really build a life with, it matures you. It teaches you a lot. And I want you guys to grow your business because you can't have your family's hunger, right? Your family's mental health, whether you're thinking about a roof over their head and stuff like that in a job's paycheck cycle, right? Forever. You can. Now, if you have a job right now, run up that money, do your thing. But if you have a real talent and you're passionate about it, you have to get it out there so you could help the next generation, a wave of people. I'm going to die. Okay, I'm very aware of that. So this is why I try and produce the content I can. Yes, and thank God, God is so amazing that I can make money during the process of this, but I can help other people too. So that when I die, people are still going to be able to feed their families, inshallah, off of this content that I produced here. So we have to put a lot of things into perspective, and we have to ask ourselves, like, what's holding ourselves back? Is it the people around you? If you're in college or something like that right now, I'm not saying drop out. If that's what you really want to do, then do it. But are you in college because you were influenced by your parents, grandparents, something like that? Maybe you didn't want to disappoint somebody. But you have to ask yourself, ask your soul, are you disappointing yourself by doing these things? Okay, you don't want to be disappointing yourself. You got to start putting more focus on your mental health and what makes you happy as a person and a human being. Okay, we're here once on this earth. Why are we putting so much faith and trust in the system instead of God? Don't do that. Don't do that. You want that stable paycheck. You think it's stable. Whole time, boom, as you can see with the government shutdown, they clip, fire. people just lose their jobs. Okay? I've worked with people where people just got let go of their jobs. People got bills to pay. People got debt. All kinds of stuff like that. So if you love your family, get out there and really put your passion out there in the world. We are here one time on this earth. We can't be sitting around wasting time when we don't even know if we're going to wake up tomorrow. It's a blessing that we woke up today. If you're playing video games, hop off of that. The game is here. The game is here. You're your character. Level this up. Level this up. I'm talking to myself as I talk to you guys too. Level this up. Level up your character. Hop off the game. Start creating. We got to start helping each other. People want to complain about the world. Oh, the world is X, Y, and Z, but we're not out here helping each other. And I don't want to be a part of that cycle anymore. So I'm done suppressing myself. I try and go as hard as possible for you guys, but I feel like I can go harder. And my soul has been disappointed recently because I feel like I haven't been giving you guys as much fruit as I can. I don't want to hold in the business stuff that I know. Making the website. Making 4 to 5 figures during business or just online in a short period of time. I want to help you guys get paid off of YouTube so you guys can spend time with your wife, spend time with your husband, spend time with your kids, your mom, your grandma, cousins, your family, your close friends, whoever. I want you guys to have that time. And it's really important that I teach you guys the ways and the things that work for me so we can get this money. You might even be able to do things better than I can. You might be really good at making seasonings. You might be really good at playing tennis. You could be one of the best tennis coaches right now. Teaching plenty of kids. Making the next superstar. You never know. And then you're going to be sitting down like, yeah. Like, I made that guy. Like, not you made him, but like, you helped him get there. You taught him the sauce in the game. And even though you're not the one playing, your soul will have that satisfaction. You'll be happy that you have participation in greatness. So forget the money and understand that you have to participate in greatness. Don't just rely on your trading income. Go harder than that. We got people out here that are depressed, sad. Sadly, suicide rates going up. May God grant them ease. Okay? Me personally, and may God bless their hearts, I've had friends who I've sat down and ate food with who are no longer here on this earth. Okay? Due to mental health issues, jump into things like substances and stuff like that. Okay, there's things that I've struggled with. And this is why God has really saved my life. There's things that I've struggled with. Okay? Off camera. I'm not here to show you guys glitz and glamour and cars and trading and this and this. Life is not about that. I want to be a real person and show you guys the real things about life. There's times I go through depression, anxiety. Okay? There's times I feel fearful of things. Even though my income is straight, there'll be things outside of trading, outside of money that are stressing me out. Okay. So ask yourself, are you happy? Is your soul happy? And I'm telling you guys right now, the money will not make you as happy as you think. I'm telling you. If you think that the money will make you super duper happy, you're wrong. Okay, you're wrong. Yes, your problems will be relieved for the most part financially. You're not going to stress about that, and that's a beautiful blessing, alhamdulillah. And you can take care of the ones around you, and you can have fun. So it's super duper beautiful. I'm not saying it's not beautiful. I'm not about to lie to you guys. It's definitely beautiful having money. It's way better to have money than to not. But all your real life problems, let's say if you struggle with things like lust, okay, you're just going to go ahead and use that money and indulge more into your lust. If you struggle with substances, then you're going to use that money and get more substances. If you struggle with materialism, You're going to get more money and buy more stuff that's not asset related. Okay? So we have to ask ourselves, are we doing this for God, or are you doing this to please people in the world who don't really care about you for the most part? So stay prayed to God. Keep grinding. I'm going to catch you guys in the next one. I got some work to do. I love you guys so much. Head over to stackmode.net. Just wanted to give you guys a raw talk. I don't really care about numbers or anything. I'm just going to upload as much as I want. Pump as much content as out there as I can. I don't care who sees it. I don't care who doesn't. I just love you guys so much. And this makes my soul happy. Talking about life, talking about the charts, talking about income, getting this income. I love it. And I want to help you guys too. Stay prayed to God. Keep grinding. Just get out the darkness. Jump into the light. Put the past behind you. And go forward, man. Or woman. Catch you guys in the next one.
It's 2026. What's going on? We're back in the Stack Mode community, and first week, I just wanted to go ahead and recap and let you guys know what the business is. So we're up about 6% so far in the first week of 2026. I'm going to start doing a recap kind of once a month, just updating you guys on my P&L. Sometimes twice a month, showing you guys like the first week what my plan is, and then showing you guys like the end of the month result and showing you guys progression on how to start an account from nothing and grow it into something. So here, focusing a lot on AI stocks, tech stocks, and stocks that really have stuff to do with the future is really what I'm going to be going forward with this year. So a lot of people like to invest in stocks that have been around for decades and years and stuff like that. Me personally, I like to invest aggressively. This year, I'm going to be really focused on shares as well too, pretty heavily compared to options and futures like I have in the past. I'm really going to be just trying to go hard on shares this year, scouting out good companies, finding good buys, purchasing them, and just holding and sitting on my trades. That's noticing it's been working out for me really well. Been able to grow my account at a relatively fast pace. Been really happy with the profit. And one thing I really like about swing trading shares compared to options trading or futures trading is whenever you're swing trading shares, you can just sit back and chill on your trades. You don't have to worry about time, no expirations, no getting margin called. You could just buy your shares, sit and hold, and that's it. That's all you absolutely have to do. And taking your time on shares, trades, and scouting out the companies that are going to be making the most ample progression within our societies, getting rewarded for that, getting rewarded for your research, for your knowledge, for knowing to not buy at all-time highs and to buy at certain low areas. The reward that you get from shares compiled with the risk factor that's pretty much taken off, because say options, for example, I've changed my whole mental mindset. When it comes to options, people can pretty much sign a death contract. Your contract is pretty much locked in. It has to hit or it's going to miss. Okay, that's 100% just what it is with options. With shares, as soon as you buy, your money will fluctuate over time. But one thing about it is that you 100% do own. If your options is not going towards your directions, you're going to be losing. Okay, even with shares, if it's sideways or moving slowly towards your direction, you're still going to have all your capital. If you put down an options trade with not enough time and it's moving slowly towards your price direction, but it's still moving, okay, either A, your price is going to go negative on the contract due to theta and time decay, or your profit's going to be moving extremely slow and not how you want it. Also, another reason why I'm focusing on shares instead of options this year too is that at a certain point, when you get too rich, you can buy all the options contracts for most stocks that you're looking at. Okay, so that's why billionaires have to play shares. So I'm trying to get to the financial point to where I'm one of the best traders. Okay, so personally this year, I'm going to be focusing really heavily on shares. Got Bitcoin, of course, and in order to generate income, maybe later down the line towards this year, first couple months within the year, I look forward to playing some futures as well too. Okay, so I look forward to playing some futures within that. And I'm just going to be fully transparent with you guys at all times. I want to just show you guys stats, show you guys what I'm holding, and show you guys how I plan to continue to go forward. So let's go and let's jump into some performance, inshallah. So jumping into the stats here. So compiling an account, guys. Okay, I want to show you guys what it looks like starting an account from 0 to 4 to 5, 6, 7 figures. I want to just be fully transparent with you guys and show you guys how it's done. So starting here, you could see just have this account here, kind of restarted it in July 2025-ish. Okay, started growing it throughout this time, just reinvesting income from business, winning trades, adding over a single time. Okay, and as you can see, P&L is just heading in an upwards direction month after month after month after month. Okay, so your work income, your business income, or even your options and futures income should be funneled back into your account. Funnel it back into your account. Say your business, for example, if you're doing 5K a month in your business, okay, try and take 4K a month of that, okay, and invest it. Okay, you could put maybe 2K in the crypto, 2K in the stocks. Just try and break it down and invest what you're making. So your P&L is always going in an upwards curve. Okay, every time you guys get some money, try and invest. And then as you win trades, okay, there's going to be times where you may lose, okay, but then you're going to win more trades, get in different seasons, and continue to uptrend. Okay, if you feel like you have to invest every single time you get some money, then do that. Do that. Okay, I'm absolutely addicted to investing. I'm going to keep it 100%. Okay, shares is not something that I played past 2-3 years. Yeah, shares is not something that I've played or really looked at. It's really just been a lot of options in futures. I played options on Robinhood, TradeStation as well too. So I have some stats just spread across everywhere. But as far as Webull, I want to just use it for my shares portfolio. And I just want to be just fully transparent with my portfolio and how I plan to upscale it. Okay. So when you guys are growing your account, right, patience is going to be the number one thing. Okay. It's going to take time for you to know how to identify the setups you need to take. I recommend you guys go to stackmode.net so you guys can get with my trading mentorship so it doesn't have to take you a long time in order for you to understand what a decent setup looks like. But I went through a lot of unnecessary losses early on within my trading career due to the fact that I was just being uneducated and being impatient and being stubborn. Okay. So completely my fault while I was struggling in the beginning, but once I started getting my foot, I was able to go ahead and progressively increase my P&L year after year after year after year. Okay. So all your business income, all your work income, okay, after your bills are paid, of course, and make sure you guys are reinvesting the profits from the trades that you win. So your income vehicle generating skills are going to either be your options or your futures. Personally, I'm going to go with futures this year. I've played options for a few years and I like just the stability of futures and how you can just turn dirt into diamonds. Same thing on options too, but the time decay factor and stuff. But I don't know. I'll see even this year if I'll even touch futures or options at all, honestly. I might just stick 100% on shares, find little small caps, and just really try and turn up like that. And just continuously do my research on these stocks and these companies and try and catch some stuff at the lows. I'm really having fun doing that, finding the best companies and playing shares. Just really been having a blast. Options, it's really funky with options. Options has a lot of derivatives built into it. Price could be going in your direction and you could still be down due to multiple factors, due to like how much volume a contract has, etc. And all that stuff is just really ghetto, especially when I'm trying to protect and provide for my family. I don't really want little random factors determining whether or not I'm going to get paid. So I like shares a lot, even when if I, inshallah, if God wills, if I cross into like the 10 million plus range, 50 million plus range, I can comfortably trade I can comfortably trade shares even as a 100 millionaire into billions of dollars. Okay, due to the fact that shares are going to be pretty much always available for the most part. So shares are really just my favorite instrument. This year, I'm focusing completely on shares. 2023, I played a lot of futures. 2024 was a lot of options. Um,
Same with 2025, was a lot of options as well too. 2026, let's swap up the game. Going to be focusing on shares. I've been finding some success recently in just investing in little tech stocks and stuff like that. And just I want to just break down and give you guys full guides on what I do to find the stock that I want to play, why I'm getting in said stock, and what I see in said stock within their future, right? So is this stock even going to be half decent in the first place? And as you guys can see, this is completely live. P&L, you can see it moving up here. Market is closed right now though. So yeah, that's going to go ahead and be that. So keep all of that in mind. And let me head over to the positions here. So this is what I'm currently holding. Okay. We got some Path right here. Path is a stock that is been in the works in the limelight recently. I bought some more at like 16, but I sold some a couple of days ago. So we got Path. That's one thing that I am holding. Once again, bought it at around 17.75. Let me get on my higher time frames here. So on my higher time frame, I could see we IPO'd all the way up here at around 90. So I liked that a lot. So I can see a lot of upside room, at least to this 30 area here. They've been getting a lot of funding. I see higher lows being put in. So Path, really, 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 really happy there. Excited to go ahead and take that up as well. Let me go ahead and open up NVTS. So we got NVTS here as well too. NVTS, this is one I'm really, really excited for. So we're currently at 10.31 right now. We got price trying to head up. I bought around 9.89 right here. Okay, and once again, we got price heading in upwards direction. We IPO'd. IPO stands for initial public offering, which is where the stock decided to open at. So we IPO'd at around 22.19, and it looks like price just made this high resistance at around 17.82. So yeah, we're gonna go ahead and wait here, and wait for price to go ahead and catch up, do its thing, and then we should be able to make some good profit on this as well too. So I like this a lot. Big fan of NVTS here. They collabed with NVIDIA, and that NVIDIA collaboration, of course, helped it a whole bunch. Whenever we're collabing with NVIDIA on certain things, of course, that's going to be, pretty successful for us to be looking forward for the most part. So NVIDIA is going to be one of the biggest stocks, and I personally sometimes like to look at stocks that NVIDIA is collaborating with, or say Apple or something like that. Any big world-leading stock, if they're making collaborations with other stocks, I like to look into those too, and then I like to see if profit can be made. So EOS as well too. This is an energy enterprise stock, about around 14.22. Price is trying to push up here. Let me get on my monthly time frame here. So I can see price decided to IPO at this 31 area up here, 0.95. And we just recently created this area of resistance here at this 19.91 area up there. Okay. So just waiting for price to go ahead and go up. Feeling this area here. And I could see here, even on the weekly, I could see higher lows being put in constantly. Okay, constantly. We got constant higher lows being put in. Okay. And it's really just taking heed, noticing price how it goes up, goes down, goes up, goes down, and continues to just spam that. Goes up, goes down, comes up, comes down, and it'll just continue to spam that over and over and over again. Inshallah, especially since this seems like a half decent stock that people will care about. And once again, this is an energy enterprise stock, so I like this one a lot too. Price looking to swoop up. Let me head over to IONQ. Big dog right here. So IONQ, one of the leading quantum stocks. We just had a burst to this area of resistance at this 84 here. So as soon as I saw this higher low get put in, I was like, oh yeah, let me go ahead and hop in those. So that higher low, I loved it a lot. Was a big fan that I put in right here at this area. So as soon as I saw that, I was like, okay, price is looking to progress. And even after that, it came up, made new resistance, came down, and then made some new support. So I like that a lot. Even if I head over to my 4-hour here, let me turn off the poo-poo time frames. Get on my 4-hour here. So even if I hop on the 4-hour here, boom, could see price decided to come all the way up here, fall all the way down here, bounce up, create a new resistance wall here. As you guys can see, we have one push down here, another push down here, and then we got price falling down, making a higher low here. So this low is higher than this low. I like that a lot. Super big fan. And then from there, we can go ahead and wait for price to come up, smash past this area of resistance, and then after that, inshallah, we should be able to go ahead and catch price upwards right after that. Okay. So it's really just about taking your time, being patient, and waiting for the setup. Okay. Remember, you want your gap to be filled to the right. You want market to make the left side of the V, let it fall down, let market make the bottom of the V, and then we catch the right side of the V. Okay. We catch the empty right side of the V. Okay. That's what I want you guys to be doing. Catching the empty right side of the V. Okay. Like this. Okay. This is what we're catching. All of this whole empty space between this resistance and this area of support, right? This whole area is nothing but profit. Right? Nothing but profit. All up here. Okay. So 40 plus 40 points left between this area of support and this area of resistance up here. So a very, 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 very long way to go. Intel, check this out. Up crazy on this one here. All right, Intel, I got it at around this 35 area. I'm going to go ahead and hop up on my higher time frame here just to show you guys why I got in here on Intel. So Intel, I decided to get in this area. Kind of the same reason, even if I'm on monthly here. I could still see price making upwards progression for the most part. Yes, we did fall down and make this low here. Although after this low, I put that into combination with some fundamentals. Since all the tariff stuff was going on, the United States needed their own AI chip making company to make AI chips for them, and Intel decided to partner up with other companies. I believe NVIDIA is included. And as you can see, we're starting to get a lot of bullish reaction looking to fill in this V. So we first had price falling down from this resistance here on the weekly. And then we could see price deciding to come up and fill in this gap area up here. Okay, so just go ahead and let price do its thing. Let it fill up. Okay, and just give it its space, give it its time. Okay, let market do its thing. So that's going to go ahead and be that as far as Intel. This trade was super duper simple here, and I bought after this little higher low area here too. After I analyzed this higher low area, I was like, okay, cool. Yeah, super duper bullish after this. Check on the daily here too. Even after this resistance, we came down, made another higher low. After this higher low here, saw 1, 2, 3, 4 green candlesticks, bought in. So you can see you're getting a nice V fill here. And on my monthly time frame, we can go ahead and head up to this resistance up here and head up to this 40 area up here to all-time highs. I'm praying. Okay. So that's going to go ahead and be a flip from, let's see, I opened here. So it's about 28 points here. Very great flip. And then Webull here. You know what I'm saying? Webull, they're hating on Webull. We're waiting on this. I'm not going to lie. Waiting on some Webull here. I just keep adding into this. This is going to be a huge play. Webull is my favorite broker. I'm using this right now. If you guys are wondering what I'm looking at to look at the charts and do all this at once and see the price right here, Webull. Webull is going to be my favorite thing to analyze my stocks on. Well, I use TradingView, but honestly, I might just use Webull itself from now on because I think it's a cooler interface and you guys can actually see some specifics of everything too, which I really like.
So yeah, that's going to go ahead and be that. I pray it helped. That's how I'm opening this year. All the stocks I'm watching, that's the profit I'm up. And yeah, I'm just going to be fully transparent going forward. Just want to show you guys absolutely everything. Not going to be one of these mentors being cringe, making things uncomfortable, and just not trying to be truthful. I always want to show you guys the truth. All right, love you guys so much. Stay prayed up to God. Keep grinding. Catch you in the next one. Peace. Class, it's time to get in your bag. Crypto's getting regulated. A bunch of laws are getting passed, and it's time to start stacking up. It's time to start staying down, putting every single dollar we can back into the market, whether that's shares, some cryptocurrency, some tokens, meme coin you believe in. Let's go and let's jump into what crypto regulation means for the future. So what is crypto regulation in the first place? Crypto regulation refers to the laws, rules, and the guidelines set by governments and financial authorities to oversee the use, trading, and creation of cryptocurrencies and blockchain technologies. And it aims to protect consumers from frauds and scams. So as cryptocurrency gets more regulated, as the time continues on, as the government becomes involved into it, the more people are going to be secure into investing into it, okay? And the more people investing into it equals the more money into the market. More money into the market equals new all-time highs, okay? So crypto regulation, just one. It means that it's making crypto safe, okay? It's making it regulated, and it's making it so market can be stable and prevents any type of money laundering activities going on or any type of illegal activities going on for the most part. And it varies globally, leading to regulatory arbitrage. So for example, in the early days, Bitcoin was unregulated, which led to events like the Mt. Gox hack in 2014, where 850,000 Bitcoin were just lost, highlighting the need for oversight, security, safety, and for laws to be into place. Okay. The Bitcoin white paper as well too goes ahead and breaks down the future of Bitcoin, laws, regulation behind it, as well as the protocols. So some history of the crypto regulations. So cryptocurrency emerged with Bitcoin in 2009, and they originally operated in a regulatory vacuum. And over time, governments responded to risk and opportunities alike. And in 2013, the US FinCEN classifies crypto exchanges as money transmitters. And in 2017, China bans ICOs and crypto exchanges. So initial coin offerings and crypto exchanges. So crypto was not being supported within the China at the time. Okay, and then 2021, El Salvador adopts Bitcoin as a legal tender. Okay, so countries start adopting it, countries start buying it. US has been buying cryptocurrency. Other countries have been buying large amounts of cryptocurrency as well too, as of today's date. And 2023, 2024, 2025, EU enacts MiCA, and US faces SEC lawsuits against major exchanges. Okay, and in 2023, that caused Bitcoin to plummet for a bit, but a lot of the lawsuit stuff ended up getting passed. So God is good, bringing power back to the people's hands, making sure that we can control our money the way that we want to. And this evolution really shows a shift from ignorance to active engagement, balancing innovation with protection. So in 2013, for example, the FBI shut down the dark web's marketplace Silk Road, which primarily used Bitcoin for illegal transactions, spurring AML regulations. Okay, so just made people think that Bitcoin was only used for illegal transactions, stuff like that, which is definitely not the case. Okay, it's used to pay people all across the world for legal services that they've done, and just a good way for us to hold unlimited amounts of currencies without any type of centralized currency being able to shut it out. So the current regulatory landscape in the United States. So as of 2025, the US employs a patchwork of regulations from agencies like the SEC, CFTC, and the IRS. Okay. And the SEC, it treats most cryptos as securities if they pass the Howey test. Okay. So if you guys don't know what the SEC is, the SEC is the United States Security and Exchange Commissions. Okay. Securities and Exchange Commissions. So it's pretty much the independent agency that primarily controls everything regarding exchanges. Okay. So let's talk about the Howey test. Okay. So if you don't know what the Howey test is, the Howey test it's a test that the SEC created, and it was pretty much in a case in the Supreme Court that determines whether or not a transaction qualifies as an investment contract or not. Okay. So if it passes the Howey test, then the currency is going to go ahead and be able to be used as an investment portfolio. So yeah, it's going to be able to be classified as something like gold. Okay, so Bitcoin was able to pass the Howey test, and most cryptocurrencies were, and so they can be classified legitimately as actual investments. Okay. So the FTC, okay, FTC or CFTC, let's go and let's talk about what that stands for. So the CFTC, it initially allows spot and crypto assets to be registered and trade as actual commodities. Okay, so the CFTC is something that regulates certain cryptocurrencies, and it oversees Bitcoin and Ethereum as actual legitimate commodities that people can trade with their real money. And the IRS requires tax, so that's why tax is going to be being able to be implemented on these things, because things such as Bitcoin and Ethereum, such as the SFTC regulates Bitcoin and Ethereum as actual commodities, so they have to actually be required as tax. Since they passed the Howey test and they're legitimate actual things, the IRS is going to require tax reporting on crypto transactions via a 1099 form. And the recent approvals of Bitcoin and Ethereum spot ETFs mark progress toward mainstream adoption. So for example, SEC versus Ripple. The 2023 ruling that XRP sales on exchanges aren't securities provided clarity, but left ambiguities for other tokens. Okay. So upcoming regulations in the US, the Genius Act. So the Genius stablecoin bill is a key proposal for 2025, aiming to regulate stablecoins comprehensively. What a stablecoin is, let's say, for example, if you've heard of the coin USDC, that's going to be a stablecoin. That's going to reflect the US currency and the fiat currency of the United States economy. So the stablecoin is pretty much going to be like the stable dollar version of cryptocurrency that doesn't fluctuate all the time like Bitcoin, Ethereum, and other ones do, Solana, etc. And it requires bank issued stablecoins backed by insurance deposits. Okay, so this way stablecoins can actually be stable. Okay, so nothing can be rug pulled or anything like that because everything is actually insured, just like a stock market would be. So if you don't know how the stock market works before it can actually be listed on the actual market itself, someone has to buy all the shares. A private investor has to pretty much back it up. And it mandates transparency, audits, and one-on-one asset backing. And it prohibits CBDC without congressional approval. So the Genius Act, we're really waiting for it to get passed. And it's really going to go ahead and help cryptocurrency be even more legitimized, especially when people are able to trust things like stable coins and stuff like that. People are going to feel comfortable putting all their money into the stable coin, okay, without it worrying about fluctuation, okay? Or let's say you keep all your money in a traditional bank. If you were to try to get all of it out in cash, it just wouldn't be possible. Or if you try and withdraw a deposit out of it all at once, wouldn't be possible. Cryptocurrency, you could have however much you want of there. You can have however much of it as you want. And you can send however much of it as you want at any time. No limitations. So that's going to be the pros for Bitcoin. And the Genius Act aligns with EU's MiCA for global convergence. So it has to align with every single economy that crypto is allowed in. And this act shifts from enforcement to clear rules, potentially boosting innovation. So let's talk about some USDC compliance. So Circle's USDC already adheres to similar standards, positioning it well under new laws. And the impact of US regulations on users. So new rules like the Genius Act will affect how individuals interact with cryptocurrency. It's going to enhance protections, reduce scam risk, but increase KYC requirements, which are pretty much going to mean that any brokers who are trying to let you trade crypto or crypto futures have to have regulatory laws, jurisdictions passed before they can actually have people trade on their brokerage. So making it very secure, making it really, really scam proof, and just making it extremely, extremely nice. Okay. So if you're wondering what KYC means, okay, KYC is know your customer. Okay. Know your customer requirements. And it simplifies tax reporting with Form 1099, but more transactions can be tracked. And easier access to state ETFs for passive income. and some potential market volatility during transactions. And for everyday users, this means safer investments, but more compliance paperwork. Okay. So as the regulations continue to go, there's going to be more things to enforce when it comes to starting your own broker, trading on certain brokers and stuff, etc. But just know that everything's going to be very, very regulated, enforced, and safe, inshallah. So for example, for some tax implications, if a user is selling Bitcoin for profit, they must report it. And new forms automate this, reducing errors but increasing IRS oversight. And the current regulatory landscape in the EU, okay, MiCA. MiCA stands for Markets in Crypto Assets and is the EU's comprehensive framework, and it's fully operational since December 2024. So fairly new as of this video dropping. So it classifies assets into ARTs, EMTs, and other crypto assets, and requires CASP to obtain authorization and publish white papers. And white papers are pretty much going to mean the law behind the cryptocurrency token, what it does, which is going to state the future of it and exactly how it operates, etc. And it focuses on consumer protection and prevents market abuse. And transitional periods vary for 12 months for Germany and, for example, none in Lithuania. We'll talk about Binance in the Europe region. So Binance obtained MiCA licenses in several countries, allowing continued operations with enhanced compliance. And some upcoming developments in the EU. In 2025, MiCA's transitional phase ends in many countries, with the full enforcement by 2026. And the end of transitions, December 2025 in some nations, and it aligns with global standards like the FSB recommendations, and potential extensions to DeFi and NFT spaces as well too. And the EBA now gains oversight for significant tokens, making everything regulatory, safe, and pretty much not controlled, but controlled in a sense to where scams and bad things can't go down as easily. And this will harmonize rules across the EU, reducing fragmentation. So for some stablecoin caps, EMTs face issuance limits if exceeding certain thresholds, affecting issues like Tether, for example. And the impact of EU regulations on users. MiCA provides legal certainty, but imposes stricter rules, and provides better fund safekeeping and transparency for its users. Higher entry barriers may limit service options, but the brokers that are going to be available, it's going to make it safe to trade on. And stablecoin users can benefit from some reserve requirements, and their easier cross-border access within the EU. And individuals will enjoy safer ecosystems, but may face increased fees from compliance costs. So, investor protection. If a platform fails, MiCA mandates client asset segregation, protecting user funds, unlike in the FTX collapse, for example. So, some global trends in the crypto regulation space. So, globally, 93% of SFB members plan new frameworks by 2025, focusing on same risk, same regulation. So FATF, 75% jurisdictions are non-compliant with VA standards, okay? So FATF stands for Financial Action Task Force, and it's an intergovernmental organization that's made to combat money laundering and just pretty much scamming in general. So yeah, they need to make sure that it's compliant. Everyone needs to make sure that it's compliant, just so it can't just be used for scams or rug pulls, okay? Because there's also going to be a deceptive side to human beings sometimes, sadly. And, you know, this is why we're trying to be just God-fearing righteous people. So that can be reduced. So thank God that all these regulations are in place. So certain things like scams and stuff like that aren't going to be as common. So some emphasis on the AML, CFT, and travel rule implementation. And stablecoins, regulations, and Singapore, etc., starting to spread across, making it a safe choice for people to keep their money in. Okay. So the US and the UK plans rules for stablecoins and staking in 2025 with the full regimen by 2026. So that's going to be for the UK. I'm not too sure about the US, but for the UK, they're looking into a stablecoin decentralized future as well too. So stablecoins, they're the focus of new regulations. Stablecoins are seen as bridges to traditional finance, hence heavily regulated. Promises behind it, okay? Because it's going to be the dollar, the stable dollar, unlike other cryptocurrencies, which are In an investing capital gain sense, where people are trying to make money when it goes up, stable coins are meant to do what it says, be stable. And they must maintain one-of-one backing with high quality assets. And regular audits and transparency reports are going to be required. In the US, bank issued and EMT are its classifications and global limits on exposure for banks, 2% tier 1 capital. And this reduces systematic risk, but may limit innovation in algorithmic stablecoins. So for example, let's talk about the Terra USD collapse. So in 2022, UST DPEG led to $40 billion in losses, prompting stricter stablecoin rules worldwide. So after a lot of these crypto losses, crypto crashes, or crypto hacks or exploits, regulations get put into place and the whole system changes. And that's just how we have to learn as human beings, trial and error. Okay, only God is perfect. Sometimes things out. So AML, DeFi, and privacy concerns. So AML stands for anti-money laundering, and DeFi stands for decentralized finance. So anti-money laundering rules are tightening for crypto. So travel rule, exchanges must share users' data for transfers, and decentralized finance protocols may need to comply with know your customer laws. And the balance between privacy and security is coming into play. And non-compliance leads to bans in some jurisdiction because it can go down. They don't want people getting scammed, they don't want people getting rug pulled on, and they don't want a government that allows things like that. And for users, this means less anonymity, but safer ecosystems. So for example, the Tornado Cash sanctions. The US OFAC sanctioned the mixer in 2022 for laundering, highlighting decentralized finance risk. Okay, so if you guys don't know what the OFAC is, OFAC stands for the Office of Foreign Assets Control. Okay, so all of these are going to be just bodies of people just trying to protect money. Okay, trying to protect people from getting scammed and trying to protect people from losing money for no reason. So what it means for investors, regulation is going to bring more opportunities and challenges for investors. But more opportunities and the safer things get, more people are going to feel comfortable to invest into it once again, which means that more money is going to be put into the market. Okay, so institutional adoption via ETFs, exchange traded funds, and regulated products. Reduced fraud, increasing confidence, increasing more money flow being put into the markets. And clear tax rules when we're reporting, especially as we see companies buy crypto, government bodies buy crypto. It's going to become more regulated over time. And global convergence minimizes arbitrage risk. And investors should diversify and stay compliant to mitigate volatility. So ETF approvals, exchange traded funds. 2024 Bitcoin ETFs saw $10 billion in inflows, stabilizing process post approval. So what does it mean for everyday users? So for non-investors, regulations affect payments, remittances, and daily uses. So safer stablecoins for transactions. Okay, so people are going to feel more comfortable keeping large, heavy amounts of reserves in their stablecoin or in their wallet as well too. And mandatory know your customer rules are going to be put into place for wallets and exchanges. So faster, cheaper cross-border payments under rules are going to be available. Potential restrictions in high-risk areas could be put into place, and users gain protection but may lose some privacy. And in developing countries, regulated stablecoins could reduce fees from 6% to under 1%. Making it an extremely good option to go ahead and send and exchange currency. So navigating the regulatory wave. So risk, over-regulation could really stifle the innovation and cause certain market dips because it's really taken away from the point that people want is the power back to the people. But sometimes power in the people could be a little too much and people don't do right by it. People could be taken advantage of, and that's not what we want. So opportunities. Mainstream adoption and new financial products could come into as things get more balanced, safe, and regulatory. And they advocate for fair rules, and you can stay informed via reading the white papers and just looking at reliable sources, checking out the news and stuff like that too, to see what's coming out with the crypto laws. And the future is regulated, but it seems promising, power back in the people's hands, and seems to be a place where we can still make some good income and chill out. So EU leadership, for example, Micro positions EU as a hub that attracts firms like Coinbase expanding there. Okay. So in conclusion, crypto regulations are evolving rapidly in 2025, aiming for safety and growth in a positive direction. Some key takeaways. Okay. Understand that as stuff gets more regulatory, it might be more controlled, but it will definitely be safer. Stackmode is a guy. Keep grinding. Head over to stackmode.net to learn how to trade cryptocurrency. Peace. All right, let's talk about what liquidity is in crypto. Let's make it easy. Liquidity refers to the ease to which an asset can be bought or sold in a market without significantly affecting its price. And in crypto, it's critical due to the market's volatility and decentralized nature. Volatility means quick price action. Crypto is always going 24/7, so the market never slows down. There's going to be spikes that can happen in the middle of the night while you might be asleep, stuff like that. And it's also decentralized, meaning that everything is done on the peer-to-peer transaction system. Okay, and there's going to be no middlemen involved, no banks involved, and no one to approve whether or not yes or no the transaction is going to go through. Just as soon as it goes through, everything's automatically done via the smart contracts, and then the cryptocurrency can be sent from one party to the other very, very successfully, inshallah. So trading volume. Higher volume indicates better liquidity, okay, and volume is pretty much going to indicate money. Okay, so the higher volume something has, the more money something has, which is going to equal the more people playing it a lot of the times. And major coins like Bitcoin and Ethereum are more liquid than small cap tokens due to the fact that they have more money involved in them since more people trade them, and there's going to be big companies, governments, and hedge funds putting money into it. Okay, big whales. Whales are going to be people who have large amounts of money, and when you have whales investing into something, something's going to have way more liquidity than other things, depending on how popular it is and how heavily invested something is into. And centralized, it's going to be Binance, and something decentralized is something like Uniswap, and the type of exchanges impact the liquidity. For example, Bitcoin on Binance has a high liquidity due to its large order book, allowing large trades with minimal price impact. So why does liquidity matter in the first place? Liquidity affects trading efficiency, cost, and strategy. Low liquidity can lead to significant price swings and higher cost. Price stability. High liquidity reduces volatility for large trades, meaning that if someone puts on a long, prices are going to burst into oblivion, or if someone puts in a sell, prices are going to dump down into the ground. Okay. And execution speed. Liquid markets allow for faster trade execution. Since there's going to be more people trading, there's going to be more of that asset, whatever you're trying to trade, available. Okay, so the more volume means the quicker you're going to be able to get filled, and the faster you're going to be able to trade. And lower cost. Tight bid. Okay, a lot of the time the bid is going to be what you sell at, and the ask is going to be what you buy at a lot of the times. Tight bid and ask spreads in liquid markets reduce trading fees. Okay, so you want your bid and ask spreads to be as close as possible. Okay, you don't want your bid to be way like lower than your ask and stuff like that, vice versa. Okay, because you don't want to buy something with a high ask and then you try to sell it and then the bid is super duper low because there's not enough liquidity. Okay. And risk management. Liquidity ensures that you can exit your positions quickly. So I'm not too sure if you've entered into something with low liquidity, but if you ever tried to sell and price is just pausing, not selling, not doing what you wanted to do, that's most likely because the liquidity is low. Okay. So when you're trading things with high liquidity, you get to avoid that and you get to really just trade how you want quickly and almost instantaneously. For example, Bitcoin versus a low cap token. Trading 100K of Bitcoin on Coinbase has minimal price impact, okay, because there's so many people with millions of dollars worth of Bitcoin. While the same trade in a low cap token on a DEX might move the price 10%, okay, because you're going to be a lot of the liquidity, you're going to be a lot of the volume, you're going to have a lot of the money controlled in it, you're going to be one of the largest investors. So what you do can move the market, okay, but when you invest in things with high volume, okay, it's not going to have big impact because as it's going to be other whales too. So understanding slippage in the first place. Slippage is the difference between the expected price of a trade and the actual executed price, often due to low liquidity or market volatility. And what impacts slippage? Large orders in low liquidity markets cause significant slippage. Okay, so that means that when you try to sell, there's going to be no one to fill you. Say you buy like 60% of a random coin, who are you going to sell it to? You own majority of it. Okay, so it can be a little difficult sometimes when you own a majority of it. And yeah, timing. Slippage increases during volatile periods like the news events. Okay, and order types. Market orders face more slippage than limit orders. And you could still own, like, it's a little bit different between the stock, okay, because there's going to be a lot of legal processes and stuff in place to have shareholders buy like all the stocks on the back end and stuff like that. I'm going to make sure I detail how stock shares work and stuff like that more in depth again and again. But cryptocurrency, you can pretty much be centralized by owning a large percentage of it and just being a large investor. Okay. And automated market makers, AMMS, like Uniswap, can calculate slippage based on the pool swap. So on Uniswap, swapping $10,000 in a small pool might cause 5% slippage, meaning you get 5% less value than expected in the first place. And how does liquidity affect slippage? Liquidity and slippage are inversely related, and higher liquidity means lower slippage due to the fact that there's more orders, okay? So when there's more orders, there's gonna be less slippage, okay? Liquidity pools. In DeFi, larger pools. Okay, USDT, Ethereum, for example, they have lower slippage, okay, due to the fact that they're very popular. Market participation. More traders increase liquidity, which stabilizes prices. In thin markets, low liquidity tokens can see 20% plus slippage on moderate trades, okay, due to the fact that there's not enough orders, once again. And a 1 million USDC ETH pool on Uniswap has low slippage, okay, for a $1,000 trade. But a 10K pool for a small token might see 10% slippage, okay, which means you're gonna go ahead and receive less money when you sell. And yeah, it's pretty much what it's gonna mean. And factors influencing crypto liquidity. Several factors determine liquidity in crypto markets, impacting strategies. So think of slippage kind of like fees. So, exchange type. Centralized exchanges often have high liquidity than DEXs, and high market cap coins often attract more traders due to the fact that people know it's going to be a solid value investment, okay, and they can go ahead and get some APY, some annual percentage yield returns on their dollar, which means that year after year, they expect their dollar to go ahead and increase by just buying and holding in something with value. And trading volume. Higher volume correlates with better liquidity as well too. And market maker activity. Bots and institutions provide liquidity on major platforms, which help move the market. And 24/7 is how the crypto market moves. And the markets enhance liquidity, but they vary by region. For instance, Binance's Bitcoin USDT pair has a high liquidity due to its global user base and market maker activity. And let's talk about managing slippage in trading. Traders can minimize slippage through strategic approaches and tools using limit orders. Limit orders specify your price to unavoid expected limits, and with limit orders, you won't get your price filled until price comes in contact wherever you have your limit order. Check the liquidity. Review order books or pool sizes before trading and check out the volume. Make sure it's decent. Okay, don't be trading small stuff and then you have a large percentage of it you try to sell and then you can't get out. That goes for the same thing with options too. And smaller trades. Break large orders into smaller chunks to reduce the price impact. Okay. And timing. Trade during high volume periods to leverage better liquidity. And on an example, on PancakeSwap, setting a 0.5% slippage tolerance for a $500 trade ensures you don't lose more than $2.50 to slippage. So some tools for assessing liquidity. You can use CoinMarketCap, CoinGecko, okay, to check the trading volume and the market depth. TradingView shows you as well too, whatever you want to use. Check out the order book. Platforms like Binance show you the bid-ask spreads and what whales are doing and stuff like that too. You're going to be able to see some programs where you can check to see how large amounts of money are flowing in whatever token that you're researching. And the DeFi Pulse. It tracks liquidity in DeFi protocols, as well as DEX analytics, like Dune analytics to show pool liquidity. Okay. And we're not going to make that. Forget that. And Dune analytics can reveal a Uniswap's pool liquidity depth, helping you predict slippage for a $10,000 trade, for example. So low liquidity tokens on Uniswap saw 20% slippage during hype-driven trading, costing traders thousands of dollars and fees kind of for no reason. And high liquidity during the 2023 rally allowed $1 million in trade with 0.1% slippage, showcasing centralized exchange efficiency. So things with higher market caps, okay, are going to go ahead and have less slippage a lot of the times since there's enough orders, value, and enough back end, okay. And liquidity in centralized versus decentralized exchanges. Centralized and decentralized exchanges handle liquidity different, impacting slippages. CEX, this is centralized, is high liquidity via order books and market makers. Okay, for example, Kraken's BTC slash USDT pair, okay, or ETH slash USDT, okay, something like that. And a DEX. And liquidity pools vary by size, and they have small pools to increase slippage. And trade-offs. CEXs offer lower slippage, but they require trust. And DEXs are trustless, but riskier for low liquidity tokens. For example, $50,000 on Binance has less slippage than a small Uniswap pool. So monitor the volume, use stop loss limits so you know when it's time to close your trades. Make sure you're doing your research on what you're investing into. Okay, batch your trades, split large orders to minimize price impact. Okay, and for instance, splitting a $100,000 trade into 10 $10,000 trades on Uniswap can reduce the slippage from 5% to 1%, for example. So little tools and tricks you can use to go ahead and reduce your slippage fees. And exercises for understanding liquidity and slippage. You can check the BTC, USDT liquidity on Binance, okay, for 30 minutes, okay, just study the charts. Okay, you can simulate a $1,000 trade on a DEX and calculate the slippage, and you can analyze the low liquidity tokens order book on CoinGecko as well too. And go ahead and check out the trading forums, Reddit and stuff like that, and just do your research. And comment below, how have liquidity and slippage affected your trades? Did you lose any money to it? Talk to me about it in the comments below. What strategies do you also want me to cover? Head over to Stackmode.net. Catch you guys in the next one. Stay prayed up to God. Keep grounding. Catch you in the next one. Peace. Hey, what's going on? We're going to be talking about the psychology of a crypto trader, how things go, and how we can manage our emotions and avoid FOMO. FOMO is going to be fear of missing out. And it's pretty much going to be like say for instance, a candle burst straight up and you're going to be emotional. You're going to be excited to get in because you're going to be thinking money, 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 instead of thinking discipline, 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 discipline. So I'm going to be talking to you guys about how you can manage your emotions and turn those cringe emotions into discipline. So this is going to be a deep dive into the cognitive biases, emotional pitfalls, and some practical strategies we can do to maintaining mental resilience in volatile markets, such as the cryptocurrency one. Let's go. So the emotional roller coaster. The cryptocurrency market is a unique ecosystem, distinct from traditional finance, due to its 24/7 nature. So the stock market operates Monday through Friday, and same thing with Forex, okay? Forex and crypto, Forex, stocks, and futures, I meant to say, all operate Monday through Friday. Cryptocurrency operates 24/7. Okay, so whenever your levels get hit, as far as your take profit, say you're in a long trade, okay, and you're trying to close at an area of resistance above current price, okay, if take profit gets hit at 2 a.m. in the morning, you need to have your alerts set on your phone, okay? Your alerts are going to be a big use, okay? So what you can do is get on your phone, okay, or do it from your computer, whichever one, and just get the app of whatever brokerage you have, or get the TradingView app, okay, whichever one. Then from there, whatever stock that you're on, find the level that you want to close at, okay? You should know where you want to close at. You should know where you want to enter at, okay? And you should know where you want your stop loss to be, which is going to be a place where your trades is going to automatically close, okay? And you should know where you want to automatically close for a win as far as an exit. So if your take profit gets hit, you need to get up and close your trade, okay? You cannot be lazy when it comes to cryptocurrency. If you're deciding to play a 24/7 market, you need to be ready to 24/7 close your trades and manage your trade. Okay, so if you don't have limit orders set as far as stop loss orders and take profit orders set, then you need to make sure you're on top of it. Set your alerts and do what you need to do in order to succeed. So it's a lot different from the traditional finance system due to the fact that it's 24/7 once again. Has rapid price swings, and the influence of social media can make certain cryptocurrency coins or tokens or meme coins just skyrocket due to its popularity. And the more popularity something has, inshallah, a lot of the times the market cap is going to increase. Higher the market cap, people are going to trust it. Okay, the more trust something has, a lot of the times, more value it's going to have, because people are going to feel more comfortable with parking tons of money within there. Okay, don't go into a state of euphoria whenever you're trading too. So even if you're making large amounts of money, okay, you're seeing your bank account go from $100 to $1,000. Let's say you held the trade for a good while. Okay, you're like, whoa, cryptocurrency, you did yourself a nice withdrawal. Okay, put 30% away for taxes. Okay, every time you withdraw, put 30% away for taxes. Whatever your withdrawals amount is, put 30% away for taxes in some different bank account. Okay, really 50% of that in a whole other bank account. Keep breaking down your money like that. So this environment amplifies human emotions, turning every price chart into psychological battleground. And understanding the emotional psyche of the market is going to be the first step towards achieving a disciplined mindset. Okay. So euphoria is going to be a state you can get into, especially once you start making money, just like I explained. So euphoria can be a state of overconfidence when prices start to soar within an upwards direction, often leading to reckless decisions and over leveraging. And it's the moonshot mentality that precedes a sharp correction. Let's talk about anxiety and fear. The immediate reaction to a market downturn, it's a psychological response to losing money, often triggering panic selling. Okay, so if you see market dumping down and you're in a long position, relax. Okay, if you don't have your stop loss set, okay, just understand that, you know what, I'm risked in for this. Okay, make sure you have your risk management in place and understand that drawdown might be inevitable sometimes. Okay, you're never going to just enter in and always see profit. Sometimes it's going to be drawdown, but by the time you close your trade, it should be in profit. The trade is only over whenever you close. If you're in drawdown, that's fine. Okay, make sure you mark your levels of support below current price or resistance and tell yourself, you know what, okay, if price breaks these levels, I'm going to go ahead and close. Okay, don't panic though. And denial. Now, if price decides to break your levels, you have to close, because that can lead to denial. And that's the refusal to accept that the market's falling, which causes you to hold onto a losing position in the hope of a miraculous rebound, or hodling with no plan. Don't do that. Okay, that's trading out of desperation, not of a logistical plan, and which is going to lead you to a cycle of despair, which is something I put myself in when I was being ego-driven and not learning from my mistakes instantly. And that puts you in the final stage where people sell at the lowest point of the market. Let's say they're in a long position and market decides to dump. Okay, people are just selling way past their stop loss, selling at the lows, and just blowing up their account, all because of the fact that they were overconfident in the first place. Okay, let's say they had a nice winning streak, thinking they were the best trader of all time, started taking some losses, couldn't really handle the stop losses, started doubling down. That could lead you to denial. Okay, denial could make you double down, put on more size than originally needed, and then you could lead into a cycle of despair, blowing up your account. Okay, so don't do that. Stay disciplined. Only thing that should ever change is the contract amount. Your setup criteria should always stay the same, no matter what. It should always stay the same. So fear, uncertainty, and doubt. All right, God got you. You're gonna be cool. Okay, even if you go back to zero, you can run it up again. Okay, you're not trying to go back to zero, but understand you can run it up again. So it's a powerful psychological tactic used to spread negative information and create panic in the crypto world. Okay, fear, uncertainty, and doubt often come from the form of news, report, social media posts, or regulatory rumors that intentionally mislead. Okay, so if you ever see like the little posts like certain amount of money was wiped out within the crypto market today or stock market today, ignore it. Okay, market is going to go down. Market has to go down in order for it to bounce back up. Okay, it's not just going to go up in a straight direction forever. Okay, price might want to come back and retest an area of resistance below current price and sweep up higher, breaking new highs. Okay, it has to create liquidity. It has to gain ammo in order to break up further. That's all price is doing when it's going down. You have to think of it. People are in from like $100 too. So if price is at $100,000 and it dips down to $70,000, that's just people taking profit from whoever's in at $100 a share or $100 at value, whatever you're in. Okay. And this manufactured fear can cause otherwise rational traders to sell their holdings, creating a self-fulfilling prophecy of a market crash. And the whole time it's not. It's just leading to a new low that people are going to go ahead and buy who actually understand the charts. And if you want to understand the charts more, head over to Stackmode Network. So you can learn to differentiate legitimate concerns from baseless rumors, check multiple reliable sources, and question the motives behind sensational headlines. Now, if they said something like cryptocurrency is banned, okay, so that'd be really, really, really different. okay, and stuff like that, where actual laws are in place, okay, then that news is different versus just like, oh, a good crypto market lost $3 billion in the market today. Market has to dip down. Okay, all this is people selling. So fear, uncertainty, and doubt exploits the human brain's natural aversion to risk, and we're wired to avoid danger, and a perceived threat to our finances can override logic. And fear, uncertainty, and doubt as a strategy. Large institutional players or manipulative groups can strategically release FUD to drive down prices, allowing them to accumulate assets at a lower cost. So once again, it's just people willing to just buy the low again. So for example, there's been a China ban rumor going around, and for example, people would say that China bans crypto. Okay, and despite being old news or misinterpretation of the policy, these rumors repeatedly trigger sell-offs due to widespread fear, and traders who sell based on this FUD often miss out on the subsequent rebound and miss out on the lows. Okay, so do your research and read the chart. Okay, don't just go off of news. Read the chart. And FOMO is perhaps the most dangerous emotion for a crypto trader in the first place. It's the anxiety that an exciting or profitable event is happening somewhere else. And it's a feeling driven by the fear that you will miss out on a significant opportunity. In the trading, FOMO often leads into buying an asset at its peak, just as its price is about to correct. So a primary driver of FOMO is social proof. Okay, don't hop on a trade just because you see your friend hop on a trade. Do your research. Make sure it's something that you would get into. Make sure it's a trade you would make. And a primary driver of FOMO is when you see others celebrating their gains on social media. You feel a strong urge to join them, believing their success as a blueprint for your own. And the urgency trap, the feeling that you must act immediately, now, today. And the price chart shows a vertical ascent, creating a false sense of urgency, overriding the logical process of market analysis and risk assessment. So you don't got to trade every single day. You don't got to trade immediately. You can wait for a certain level that you want to. Get in there, do your thing, take your time, be patient. And scarcity. Okay, now Bitcoin, for example, is going to be a limited resource. Okay, so the idea that a particular asset is going to the moon and you need to get in before it's too late is going to be a powerful psychological trigger. Okay, so Bitcoin is going to be a good example of that. It's kind of like a gold or diamond. Okay, that's just digital. So that's all Bitcoin is. It's kind of like, yeah, digital gold and diamonds, and it's just a limited resource. Yeah. But certain other meme coins example might be trying to trigger a rally. And during a meme coin rally, a trader might see thousands of posts from different people. Sometimes people hack influencers. Sometimes people run ads that are paid ads, okay, in order to spread the meme coin, okay? And I've spoken with these individuals, okay? It's not something that you want to get into. Just invest with things that have a future, market cap, and companies involved into it. Try not to play meme coins. I don't recommend it at all, okay? So with meme coins, the investors, you can also see a large percentage of the pool who's invested into it. Let's say the people who created the meme coin, they own 60% of it. So what they're going to do is get in at the bottom, and by the time the meme coin goes up, okay, by people getting in, by the time ads explode, by the time influencers start posting, etc., they're going to be up a crazy profit, because remember, this is the left to right chart. So they're going to be in from the start, the jump. So since they're in from the jump and you get in at the highs, they're going to go ahead and sell, and since they own 60% of it, they're a whale. Okay, and what a whale is a shareholder with a lot of value. So since they own a large percentage of it, if they sell, it's going to go ahead and dump too. Okay, so by the time they make bread, and it's trading. So if someone's making money, someone's losing. And if someone's losing, someone's making money. So whoever got in at the highs, by the time they said that the meme coin would be decent, will go ahead and get what's called rug pulled and pulled back on. Okay, and the people who got it at the bottom, who created it, who own the majority of it, would go ahead and make money. So a trader might see thousands of posts from people, okay, trying to make it seem like the best investment of all time. And it's not, okay? Do your research on actual things that help the future out, that help people out, and try your best to invest into that, not meme coins trying to make some quick bread. So loss aversion and sunk cost fallacy. So these are two cognitive biases that are often intertwined with each other. And loss aversion is the psychological tendency to prefer avoiding losses over acquiring equivalent gains. And for a trader, this means the pain of losing $1 is far greater than the pleasure of gaining $1. Okay, so you're not even feeling your wins, okay, but you just want to keep losing, okay? So you want to keep losing due to the fact that you're not satisfied with how much you win, okay? So sometimes you might make some money within the market, right? And I've had some traders be like, you know what, it's not enough, and keep trading, keep trading, keep trading. And then the loss comes and then they're super salty. It's like you were already up bread, but you just weren't satisfied with it. Okay. And the discipline and the consistency is what's going to get you to be satisfied with your P&L. If you don't like the numbers you're seeing right now, be consistent for a couple of months and they will change, inshallah. Okay. So the sunk cost fallacy is also the belief that you already have invested a certain amount of time, money, or effort into an asset, and you should continue to invest in it, even if the asset is clearly failing or not a productive asset. Okay, don't do that. Don't hodl. Invest into a position that you know is going to have some future value, and hold it until your take profits get hit. Once your take profits get hit, go ahead and close. And have your stop loss set. No, you know what? If price decides to go to this level, I'm just out. And loss aversion in action. Holding on to a position for months or years, hoping for a return or break even, this prevents capital from being reallocated to a more profitable asset. Okay. So this money could be going into something that's profitable, something that's actually holding some future value and helping out in society and human beings. And you can go ahead and make some bread through there. Okay. So money is going to be available through the future. And sunk cost fallacy, let's talk about an example of it. So for example, let's say you were down 50%. Okay, and then you say, well, you know what? I'm already down 50%, so I might as well hold. Okay. I remember our first trade ever. Me and one other person I started to trade with, we making like 3 figures a day, like $500, $400, like our first trade, completely oversizing and stuff like that, just playing some spies or a team. And I remember the one time we held our trade down to negative 100%. Okay, and if you're on options, you know that means the contract goes worthless. Okay. And when that happened, we were extremely shocked because we were just making good money. Yes, we didn't know how to withdraw and stuff like that. It wasn't on a logistical system. So of course the money just went to zero. Okay, so it went to negative 100% for contracts. And I remember I was outside getting some work done on my car and looking at the position, and I was like, okay, you know what, the money was already gone. So, and I remember seeing like, you know, I'm down, let me just keep holding in case it sweeps up. And little did I know, it went to negative 100%. So that's not going to be the mentality. Okay, unless you size for that. Okay, let's say if you're on options, for example, the contract costs $70. You're okay with losing $70. Okay, then that's different. But if the contract is $300 and you only want to lose $70, and it's $70 stop loss gets hit and you don't close and then you lose $200, you're going to be mad. Okay, or sad. Okay, don't let that happen. Just follow your rules. Okay, follow your rules. Follow your rules. Because this rational thinking ignores the money that's already gone and that's holding an unprofitable asset. Okay. And manage your emotions. Here's some practical strategies. Okay, pray to God you're on the charts clicking buttons and being able to make money on the screen. Okay, so be grateful and don't lose yourself. And combating emotional trading requires structured and disciplined approaches. It's not about eliminating your emotions. We're all human beings. Only God is perfect. But it's about controlling your emotions and preventing them from dictating your decisions. And here are proven strategies to build your mental resilience. So once again, pray to God and be thankful that you're able to make money on the charts in the first place. And then develop a trading plan. If you're a retest trader, play your retest parameters. If you're a breakout trader, play your breakout parameters. If you're a reversal trader, play your reversal parameters. Okay, do what you need to do. Trade how you want to trade. If you're a trend line trader, trade your trend lines. Okay, do what you need to do. Okay, once you find your profitable strategy, go ahead and stick to that. Okay, farm it, run up your bread, but stay consistent. Okay, don't oversize. And if you're futures and forex especially, you don't want to get what's called margin called. And that's when you have to have a certain amount of money in order to open a position in the first place. And if you don't have that money available, you can get what's called margin call. So be careful and set your stop losses, especially on forex and futures, because if you get margin called, you can definitely owe the broker money, and you're not trying to owe the broker money or go to court for no reason or worry about the law. Okay. And do your own research as well too before you hop into anything. Okay, because if you get in a trade because someone else said it'd be good, you're going to be upset at them. Okay, so you can only be upset at yourself. Okay, do what you need to do and get in what you believe in. And the 24/7 nature of crypto can be exhausting. So set alerts, use time to your advantage, and step away from the charts. Okay, go grind bread in real life. Go grind your business. Do whatever you need to do in order to get some more comfortable, so then you can put some more money back into your account. Inshallah. And the power of journaling and mindfulness. So a trading journal is a critical tool for self-awareness. And it's not just a record of your trades, but a log of your mental state, emotions, and the rationale behind each decision. Reviewing this journey and over time, day by day journal helps you identify recurring emotional patterns and correct them, okay? Or see positive behaviors, okay? Positive or negative behaviors, either one. So log your thoughts, log how the trade made you feel, log how much money you made, log how you were thinking, okay? Log how you were feeling, okay? Were you feeling happy? Were you feeling sad? Okay, were you feeling pretty neutral after the trade? Okay, depend on however the trade went. Let me know in the comments below how trades normally go for you guys and how you like to structure your journal. So mindfulness and meditation. So these practices can train your brain to observe thoughts and feelings without immediately acting on them. Okay, this is why it's really important to wake up and pray to God. Okay, it's gonna bring a lot of gratitude, bring a lot of discipline, and just come on to the charts and come into the world with just a humble mindset. Okay, we can make 100 M's and we're still gonna come on and do the same thing every day and grind hard. Okay, like we have 0. Okay, we're still gonna be disciplined, still be hungry, and the only thing that's gonna ever change is our P&L. Okay, regular prayer and breathing can significantly improve your ability to stay calm and rational during market volatility. Okay, you can ask God for any assistance if you're feeling any type of anxiety, if you're questioning yourself, if you feel like it's not for you, you're good. Okay, God put trading in your brain for a reason. Okay, we're all blessed with intellect, just like Quran says, and you're gonna be fine. Relax, stay focused to the plan, and don't give up. Okay, let's talk about social media. Okay, detox from it. Okay, get off of social media. If you feel like it's ruining your brain, get off of it. If you post on social media, post and get off of it. Don't scroll. Don't sit there and look at this stuff. Okay, just post and get off of it. Okay, a lot of the times it can be nonsense. And only trade what you can afford to lose. Okay, this is the golden rule for a reason. Don't be trading with your rent money. No trading with grocery money. Okay, no trading with any money that we need to survive. Okay, because it's going to be horrific if you were to take a loss. You'd be sick. And question everything. Okay, be a skeptic. Question the narratives you see, the price action you observe, and most importantly, the emotions that you feel. A healthy dose of self-doubt can prevent irrational decisions. And celebrate your process, not just your gains. A positive reinforcement loop can be built by celebrating good decisions, following your plan, sticking to your stop loss, ignoring FUD regardless of the outcome, and pushing forward. Okay, ignore the FUD regardless of the outcome. No fear. Okay, no doubt. Just keep going. Keep going. Trust God and keep going. No fear and no doubt within your mind, your heart, your soul. Okay, just keep going. And the journey to becoming a successful crypto trader is really just a psychological one. The technicals are going to be extremely easy. I have a lot of technical videos, or you guys can head over to Stackmode.net for all trading education. You guys can also get my free trading ebook, free course. Okay, it's going to be a lot of stuff you guys are going to be able to get there. And the market is a mirror. It's going to reflect your mental state. Okay, if you're an impatient person, it's going to show you. If you're not humble, it's going to show you. And by understanding and managing emotions like fear or doubt and FOMO and overexcitement, you transform yourself into a reactionary participant into a disciplined, strategic investor. And the ultimate goal is not to predict the market, but to master yourself. Stay prayed to God. Keep grinding. Catch you in the next one. Peace.
So a single rate hike doesn't just cool the economy. It changes the math for every crypto asset in your portfolio. And here's the reality. When borrowing money gets expensive, the big whales pull out of risk and run to safety, leaving retail investors holding the bag. And we're talking about a liquidity drain that can wipe out months of gains in minutes. If you want to survive the next FOMC meeting without ever getting wrecked, you need to understand exactly how this mechanism works right now. Let's go and let's talk about rate hikes, inshallah. So let's understand when the Federal Reserve moves, global markets shake. And we have to understand the mechanisms of how traditional monetary policy dictates the fate of digital assets. And in this case, we're going to be talking about crypto. Let's continue on. So what is a rate hike in the first place? So it's the Fed's primary tool to fight inflation. Okay. And it's pretty much a tightening. And it's when they raise the federal funds rate, which is the baseline interest rate for the economy. And borrowing costs end up rising due to this fact. It becomes more expensive for banks, businesses, and consumers to borrow money. So it's going to be more expensive in order to get loans, certain private equity, and just borrow money in general. And spending slows. Higher loan costs mean fewer mortgages,
fewer car loans, and less business investments, which means the economy would slow down. So less people being able to get large sums of money. Okay, it's not a lot of people rocking around with over 5-6 figures. So less loans logically would mean less cars being bought, less mortgages equals less houses being bought, which would then cause the people who own the houses to lower the cost of the houses to try to get rid of it and make some profit. So whenever rate hikes come into place, it really just throws off the whole balance. And the goal of the rate hike is to reduce demand to lower inflation prices. Once again, this often causes pain in asset markets because since people have less money, less free cash, people are going to then have less money to flow into assets. So imagine if the economy is a speeding car, okay? Imagine that as inflation. And a rate hike is going to be the Fed slamming on the brakes. And the goal is to slow down without crashing the car, which causes a recession. Now, there is going to be repercussions for this, upsides and downsides. So keeping everything in mind is going to be extremely, extremely important. But when a rate hike comes into place, it means that banks, businesses, and consumers are going to have a harder time borrowing money. And the seesaw, so the dollar index, the DXY, you might have heard of it. So there's a strong inverse relationship between the strength of the US dollar and the price of Bitcoin. This is also because Bitcoin is used as an inflationary hedge since the US dollar is going to be a infinite currency. Okay, it can continuously just be printed, and owned by everybody. Bitcoin is going to be a finite currency. Okay, so only a certain amount of people will be able to own Bitcoin. Once it's gone, then it's going to be completely gone. So rates up equals the DXY would be up, which is letting us know that this is strong US dollar and that the economy is trying to progress. And crypto down, okay, would be in relative relation to this, okay, equaling weak asset prices. So when the Fed rates hike, global investors buy dollars to access those higher yields. And a stronger dollar makes it more expensive to then buy certain Bitcoin assets, other cryptocurrency assets, and stocks, which suppresses the price. Okay, so while crypto is going down, though, gives you a really, really good opportunity in order to save your cash and buy assets at a low. Okay, try and capitalize and always buy assets at a low. If you analyze that the setup or whatever you're looking at is meant to go up year after year after year after year after year after year, if it's hitting a low point, invest at the low points. Stop buying at all-time highs. Okay, and don't just look at when something is going down as a negative thing. Price has to pull back in order to go up. So if price pulls back, see that as an opportunity. Ask yourself, is that going to be a good buy? And if you're struggling to identify a setup, head over to stackmode.net or just watch my videos. Okay. Take advantage of the economy. Okay. When economy or when assets are down, take advantage of that. I don't care if it's real estate, Bitcoin, stocks, whatever. When assets are down, you have to take advantage of that low because just like everything else, price, inshallah, will sweep back up. And you don't want to be in a position to where like, oh man, I wish I invested at X, Y, and Z time when you could have. So take your action, do what you need to do, and make your decisions today. Okay, catch your assets when assets are at a low. When the economy is in shambles and everyone's panicking, that's the time you need to be buying. It's really important to try and have some cash on hand. This way you're going to be able to make some good decisions and invest into these investments when you need. So while rate hikes hurt crypto in the short term, the reason for the hikes might fuel the long-term bull case, okay, and the long-term counter narrative. If inflation wins, then the Fed raises rates, but inflation could still stay in a high stagflation point, and fiat currency loses purchasing power rapidly. And the hard money hedge, and that's why a lot of people look to and run towards Bitcoin, for example. Okay, Bitcoin, yes, is good for profit, but you can make a lot of money quicker playing options or futures, for example. But just the fact that Bitcoin has a fixed supply, it gives you a sense of asset superiority. So once it's gone and somebody has it, all right, and if you weren't to have it, then they would have an advantage. Okay, so Bitcoin's fixed supply, it's 21 million, and it's designed as an escape valve from failing fiat monetary policy, since we know that over time, the US dollar is meant to cost, or it's meant to give us less and less and less purchasing power year after year after year after year, since more dollars will just be printed. And the pivot hope. So the market's always trying to predict when the Fed will stop hiking and start cutting. And that's going to be the pivot. So the moment they pivot, crypto usually rallies super duper hard, because once they start pivoting, people are going to be like, all right, you know what, economy's safe. And then people are going to go ahead and start taking advantage of the buys. So mix in the economy news with the charts, and you guys are going to be able to make some really, really great decisions and some great choices. Use your higher time frames as well too. So you can check out the FOMC meetings on forexfactory.com. And the days the Fed announces rate decisions are historically the most volatile days of the year for crypto. So FOMC, a lot of times, is when they release a bunch of really important rate decisions and reports. And cash, understand that cash is going to be a position. You don't always got to be in a setup all the time. Cash is a position. So in a high rate environment, holding stable coins, right, the earning yield is often better than forcing bad trades in a bear market. You just don't need to do that. Don't do that, actually. Okay, don't force trades in a bear market. Just wait for price to pull back, wait for buyers to step in, and then go ahead and catch the low. Catch the low. Once again, if you're struggling with finding the right setup, head over to stackmode.net and look for decoupling. It's the ultimate bullish signal, and it'll let us know when it's time to buy. So when tech stocks drop on Fed news, but Bitcoin holds steady or rises, a lot of things are going to let us know when it's time to buy. Okay, so if you see tech stocks dropping really, really hard, and then the Fed announces some certain news, you start seeing rallying, put that together with your higher time frame analysis and put it together with the charts, and you can start seeing like, okay, price is ready to buy. Or after big events like CPI and stuff like that, etc. A lot of people hold their cash until these big news events come out, and then you'll start seeing market make its move that it needs to be making. And sometimes you'll even see market, let's say, for example, trending in a downwards direction weeks or days before this news event comes out. Then when the news event comes out, price will go ahead and blast in an upwards direction. Okay, so make your decisions patient ones. Okay, make sure they're extremely patient decisions, because the more patient you are, the better setups that you plan, the more money you're going to be able to make, inshallah. All right, I'm going to catch you guys in the next one. Stay prayed to God. Keep grinding. Head over to stackmode.net for all trading education. Peace. Hey class, we're going to be talking about the future of cryptocurrency. Let's go ahead and let's break down Web3, AI, and the interoperability of the whole blockchain and decentralized technology space. Let's jump into it. So let's talk about Web3. It's the ownership revolution. So Web3 is the next evolution of the internet, and it's characterized by decentralization and user ownership of data and assets. And it's the big shift from renting to owning. So right now, we currently use the Web 2 system, and it's run on centralized platforms like Google and Meta, and they own your content and data, which is susceptible to hackers and certain things like that as well. But Web 3, what the future is going to go ahead and concur. The users own their identities, data, and digital assets via NFTs, tokens, and the blockchain decentralized system, which means that transactions have to operate via autonomous codes called smart contracts, instead of a centralized system like banks, where transactions have to be confirmed by a centralized intermediary. And the transition empowers individuals and reduces reliance on large tech intermediaries. So decentralized finance, also known as DeFi, its financial service uses smart contracts systems without banks. Okay? And DAOs stands for decentralized autonomous organizations, and their governance run by code and token holders. So Web3 is a really, really big shift. It's putting power back into people's hands. So instead of you having your money being declined, let's say, for instance, you wanted to send money to someone in a different country. Let's say they built your website, for example, and, you know, as online business increases, people from other countries are also going to be participating as well too. And quick way in order to send transactions, invoices, whatever, is cryptocurrency. Okay, without any intermediaries, no fees, no wire transfer fees, and no ability to get declined. You try to send like $1 million USD to someone in Thailand, bot, right? It's going to be a lot different. Okay, you're going to run into fee issues. They might think that it's fraud, and it's a large chance that the transaction just won't go through. Okay, but whenever you're sending it via cryptocurrency on the smart chain system,
It's not worried about that. Everything is automatically being run through. Think of it kind of like a vending machine. When you go up to the vending machine, you put in that dollar, you get what you want. Okay, that's how cryptocurrency works. But when you go to the drive-through, the person has to hand you the food. Okay, the person could drop the food. The person could do a lot of stuff to the food. Okay, they could crumble up the food and throw it away. There's a lot of stuff that can happen. Okay, but if you go up to the vending machine, you put in your dollar, you're gonna get that. Okay, so it's up to the person whether or not they really want to give you your food, even if you paid. So that's the traditional centralized system. But decentralized is going to be the vending machine system. If you put in that dollar, it's going to automatically give you whatever you selected. Okay, it's a lot more efficient, it's quicker, and no deception or human emotions can even cultivate in the existence of your transactions. Okay, and you're dealing with money, you're not trying to be worried about getting your transaction declined. Okay, you're a human being, you got stuff to do, you got bills to pay, I'm sure you have people to take care of. You're trying to get from A to B. Okay, so cryptocurrency is going to be a good place to run transactions and large invoices relatively quickly. So doing big deals via cryptocurrency is going to be a really, really good way to quickly do transactions without having to wait for banks to confirm it, freeze your account, etc. So interoperability. All right, let's go and let's talk about breaking down the walls. So blockchains currently exist as walled gardens, and the future requires them to talk seamlessly. So the problem fragmentation, a part of it. So assets and data are locked onto the native chain, so such as Ethereum and Solana. And high friction is involved when moving tokens between the chains. And developers are limited to one single ecosystem. Okay, but as time progresses, as more development and coders implement different types of technology in order to make things more efficient, I can see things changing within the future. And users have fragmented digital identities across different chains as well too, making it extremely secure. So the solution, crisscross communication, and protocols are building bridges and standardized layers, also known as layer zeros. And bridges allow asset transfers, okay? So whenever you're trying to swap a meme coin, for example, let's say you hopped on Phantom Wallet, Coinbase, whatever, okay? If you're gonna go ahead and get Pepe the Coin Frog, right? In order to purchase Pepe the Coin Frog coin, you need Solana first, okay? So Solana is gonna be the first asset you're gonna need in order to buy a meme coin, for example. And that's gonna be a bridge. And layer zero is gonna be the infrastructure, like Cosmos or Polkadot, for example. And it's designed to connect independent chains. And the goal of it to provide a single fluid digital economy where value can move instantly and people can get what they want. So let's say, for instance, if you wanted to exchange USD for, once again, Thailand's currency, right? Thailand's currency is going to be bought, for example. Okay, let's say Swiss, okay? Or if you wanted to exchange Thailand bot for the Swiss franc, okay? Say if you're swapping certain things like bot from USD currency, then the bridge is going to go ahead and what's to be allowable with the asset transfer class. And layer zero, that's going to be the infrastructure like Cosmos, Polkadot. And that's designed to connect the independent chains and link everything all together. And the goal is for really to provide a decentralized space where it's single, fluid, and it's a digital economy where value can move instantly and people can exchange for what they want. So if you're going to the currency exchange, it could take some time. There could be fees and quite some other things involved when exchanging one currency to the other. You're also going to need another bank account system. Okay, in some cases too, if you're not getting all cash, and just a way to go ahead and spend that other currency as well too. Whether you're just getting a cryptocurrency card, you're going to be able to spend that all across the world as long as they take Visa, for example. Okay, so if you were to get like a Coinbase card that provides Visa or certain other brokers provide it too, then you could use that all over the world and use that to spend money. Okay. And AI and crypto. Okay, AI can monitor blockchain data for anomalies and instantly detect fraud or exploits of smart contracts. So certain things too, like bank hacks, can be susceptible due to certain errors, okay, and things like that. Certain transactions that could be completely legitimate could be declined, okay, due to human error as well too. But when everything is being dealt with via the smart contract system and AI, everything's going to be a lot more automatic and things are going to be seamless, okay, transitional. And stuff is not going to be as barrier locked. And AI models manage vast liquidity pools, optimizing lending rates, and they execute complex low latency strategies, implementing quick transaction swapping too. Okay, so even if you do $1 billion transaction from one person to another, it's all going to be automatically calculated, and it should be in one person's wallet within a couple of minutes or hours. And autonomous DAOs and AI can automate repetitive governance tasks
and it deals with the treasury management, proposal filtering, and it just makes DAOs more efficient. And AI becomes the intelligence layer running on the decentralized foundation of Web3 in general. And the converged ecosystems are powering the future and universal access. Let's talk about interoperability. Developers build once, deploy anywhere, and utilize liquidity and user base across every single chain. Okay, so whoever's developing a token or enhancing the Web3 space in general, everything is going to be seamless. Okay, and when it's on the decentralized space, it's power back to the people. Okay, once again, that's what we talked about. And the apps, they evolve their own functionality and security protocols based on real-time data analysis. And users can also retain sovereign control over assets which interact with intelligent cross-chain applications. And this trio of systems creates an internet that's smart, seamless, and owned by its users. Okay, so instead of transactions being declined, instead of superpower or someone being able to control a whole pot of the pie, everything is being dealt with power of the people. AI is really going to keep everything stable and safe, so no human superpower can take over one area of the finance space. Okay, so Web3 is going to bring fairness back to the global economy. And Web3 is the foundation. So the blockchain provides trustless ledger for ownership and transactions and a safe place to keep your money stored as well too. And interoperability is scalability, and the ability for chains to connect determines the speed of adoption and utility in general. And the next generation of innovation lies at the intersection of decentralization and machine intelligence. So if you want to learn more about cryptocurrency or the whole decentralized finance, DeFi, or blockchain space, head over to Stackmode.net. Step right up to God, keep browning, and I'll catch you in the next one. Peace. Discipline, discipline, discipline. I know you guys have heard of it, and it's time to stop struggling with it. Let's improve our discipline, okay? Let's stay humble. That's going to be the number one rule in order to stay disciplined. Stay humble. Even when you achieve your goals, when you start making the amount of money that you want, when you get the house that you want, when you get the car that you want, okay? When you start doing what you want to do, you still stay humble, okay? You still wake up every day. You pray to God. You work out. You stick to your trading plan. You stick to your budget. You keep putting money in the stash and you stay in stack mode. Don't lose yourself. And discipline in trading just refers to the ability to follow your predefined set of rules. If you're a break and retest trader, then you're going to be waiting for an area of resistance to be broken and turn into resistance, or an area of resistance to be broken and turn into support. Okay. Or if you're a short trader, you're going to wait for an area of support to be broken and turn into resistance. And if you don't see what you want, then you don't take your trade. Discipline ensures that traders stick to their plans, avoid impulsive decisions that lead to losses. So losses can come from a quick emotional stint within you. Okay, you might see a candle stoop up really fast, especially if you're on your 1 minute or smaller time frames. That can make you extremely emotional. I highly recommend you guys get off of your smaller time frames, such as the 1 minute and stuff like that, as far as planning out your whole trades. Make sure you guys are doing your higher time frame research first, okay, such as your daily 4 hour. Plot out your trades there first. Then if you're going to enter in after seeing your levels and seeing where the market wants to go on a higher time frame scale, then feel free to go down to your 1 minute time frame. Okay, because 1 minute candlesticks can be extremely fast, spiking up and down, might making you do emotional things that's not even the trend whole time. So check your higher time frames first to avoid making emotional decisions. So discipline also involves psychological control, risk management. Okay, psychological control just ensures that you're not crashing out. Okay, even if you take a loss, you know to hop off the trades. Okay, you're gonna hop off the charts. You're not gonna destroy your P&L that you've been grinding hard for. Okay, and you're gonna come back stronger. Okay, you're gonna be like, okay, what could I have done to make sure that loss into a win? Was that setup clean? Was that entry clean? Talk to yourself, journal. Profitable traders treat trading like a business. When you sign up to trade, you are a business. You are no longer an individual, okay? You're a business. And a business is trying to use money to make more money. Okay, that's pretty much what a business is doing, okay? And providing value to people, okay? So you're gonna be trading. So when you're making money, somebody's losing. When you're losing, somebody's winning, okay? It's a very strategical system, okay? It's not gambling, okay? And you can definitely make some money if you stick to your rules. Stick to things like your stop loss, where your trade is gonna automatically close. And continuously learn, okay? Always learn, see how you can get better, see what you can change, okay? And if you're on a hot streak, if you notice you're profitable, Stick to it. Okay. The only thing that should change is your contract size. Okay. Stick to your setup. Don't lose your discipline. Okay. And just don't trade for P&L. Trade from areas of take profits from your entries, and set your stop losses if you are trading like Forex or futures, for examples. Keep it simple. And we'll explore why discipline is crucial, common pitfalls, and how to build it step by step. Step number 1 is going to be just waking up, praying to God every single day, being grateful. Okay, gratitude is going to help you be disciplined. Okay, it's going to help you stay focused. You're not going to lose yourself. You're not going to get emotional, whether you're winning or losing. Okay, you're going to be fine. And consider a day trader who sets a daily loss limit. Discipline means stopping when that limit is hit, no exceptions. Okay, and why discipline matters. Studies show that over 90% of retail traders lose money in the long run. Okay, so say someone puts in 5 bands, even if they make 2K their next trade, if you check in at the end of the year, they might be down like 8K. Okay, and that's because primarily their lack of discipline comes in. So even if you start making money within the market, you have to know how to control it. Okay, withdraw, especially if I'm on my day trade account and I win a day trade. Let's say I make $500. I'm going to keep 50% in my account. I'm going to go ahead and put 50% back in my bank account. Okay, so if I make 500, for example, I'm going to keep 250 in the trading account. This way my account's going to keep growing. My contract sizes can increase. Okay, and I'm going to go ahead and give myself 250. That 250, what I'm going to go ahead and do is take 30% of that off, put that away for taxes. That's going to go ahead and give me the ample opportunity in order to keep stacking up, keep growing my portfolio over time. And discipline turns your real life from a game to really just a skill-based profession. And you're going to be able to stack up, take yourself serious, make certain power plays, and start building some long-term investments for your family. Okay, leaving some growth, leaving some wealth, and leaving some assets that are going to be important for people to potentially turn money into more money. Okay, so it's living an easier time. The more disciplined you are, the more of an easier time you'll have for yourself and loved ones around you. So it's worth it, trust me. And according to a report by the Financial Conduit Authority, disciplined traders have a 40 to 50% higher success rate. So trust me, wake up, pray to God, work out, okay, create your routine, hop on the charts before market opens, okay, or even plot your trades on a higher time frames before they come. Utilize things like alerts so you're not sitting there staring at the charts all day, and keep grinding more income. Grind your business, do whatever you need to do, get more income, set your alerts by the time your trade's ready. You're gonna have bread ready, put it back into the market and come dominate, inshallah. So long-term profitability is going to require patience too. Don't expect things to happen overnight. Sometimes you get to hold trades for a long time, especially if it's shares or crypto. Okay, don't expect to see profit instantly. It's going to take time. Keep your portfolio separate. Try not to touch it, and try not to overtrade as well too. Overtrading is going to be when you're taking multiple trades over and over and over and over and over again, not learning your lesson. Okay, if you want to stop that, okay, 1, think about your future. Okay, is your family gonna eat like this? Are you gonna eat like this? Are you about to pay rent if you keep losing money because you want to be emotional? Okay, you can't afford to lose money like that. Okay, take it serious. Okay, so you can go ahead and use discipline within your real life, and how you do one thing is how you do all. When you wake up, you work out Monday through Friday. Okay, your brain muscles are gonna get trained over time. And you're gonna realize, okay, I can do this, I can stay consistent. And your brain's gonna pretty much be disgusted if you're not being disciplined, okay? And once your brain makes that switch, it's gonna be a lot easier to go ahead and just dominate. You're gonna know what your setup criteria is, and you're gonna refuse to take anything else that's not it, okay? If it's not your setup criteria, you just don't take it, okay? And that happens by being disciplined. So I promise you guys, be as disciplined as possible for 90 days, okay? And watch how all of these things turn into habits. Okay, it might be hard at first. Okay, waking up. Okay, pray to God every day. Have a gratitude mindset. Okay, work out every day, even when your muscles are sore, when you feel like you can't do it. Okay, Monday through Friday. Okay, or at least just 5 days a week. Choose a schedule that works for you. Okay, and flow with the market, preferably Monday through Friday, because that's when the stock market's open. Okay, do your research. Make sure you guys have some hours in order to study the market. Okay, have some study chart time. You got to be checking the chart every single day. It's about discipline. You guys have to understand the type of individuals that you're playing against. If you want to call yourself a trader, you got to change it all. I've had to really look at myself internally and change everything. I had to improve in every single way possible. I realized where my faults were. I realized I need to be more patient. I realized I need to have more of a long-term mindset. Okay. And this is helping me improve, become a better trader, have more of a positive portfolio, lose less money, and increase my portfolio over time. Okay. So some common pitfalls from lack of discipline. Without discipline, traders and human beings just fall into traps that erode your capital, your soul. And let's go and let's dive deep into these issues. So overtrading, okay, this is going to come from greed. Okay, God talks about this. Don't be greedy. Okay, this is something I used to be. I used to be extremely greedy when it came to my trading. I would make some good money, especially when it came to prop firms, for example. Okay, let's say I made $1,000 on my prop firm 50K account. Okay, I would try and go ahead and trade again. Okay, try to make like 1.5. Then I would go down to 600, right? Trying to make it back up. And then, I might end up break even. Okay, destroying everything. Because why? Because I wanted some more profit. Okay, once you take your trade, you be grateful. Okay, you be grateful. Okay, have a gratitude mindset. Okay, be grateful for every loss or W that you take on the charts. It just is what it is. You're making bread on the screen. Okay, and I'm disgusted at myself for even not taking advantage of that. But it's okay. I learned, and this is why I come on the charts and come on here to tell you guys not to make the same mistakes I did, because it hurt emotionally. Okay, times where I was like, oh man, I could have used those bands. I could have used that money to do X, Y, and Z. I could have just reinvested that profit to make some more profit. Okay, but it didn't happen at the time. Okay, so don't overtrade, especially if you're a futures or forex trader and you can just spam buy and sell. Be careful with that. Okay, options, you got to be a little bit more strategic. You got to know what contract you want. You got to know what strike you want. Okay, it's a little bit different when it comes to options. It's harder to overtrade. But when it comes to futures and forex traders, make sure you guys are just, please humble yourself. Okay, humble yourself. Don't let that buy and sell button, don't let that instantaneous impulsiveness destroy your whole portfolio. Take logical trades. Okay, take your time too. Market's not going anywhere. Take your time. And trading too frequently can lead to high commissions and emotional burnout. You might feel like trading is not for you. Okay, take your time. You got to keep going. You got to keep grinding. Okay. For example, let's say a novice trader buys and sells 20 times a day. You'll be losing money on fees alone, depending on the certain brokers. Okay, the more trades that you take in a day, you're going to be subject to fees, bro. And that fees is going to be hitting at your P&L. So you're not even going to be making as much money as you think you are, even if you are hitting some profitable trades. Okay, so try and do 1 to 2 trades a day, max. No more than 1 to 2 trades a day. Okay, I like to trade a couple times a month, a couple times a week. Okay, personally. Revenge trading, don't do this, man. This is going to be one of the worst things you can do. When you take your L, you got to be grateful. You got to be grateful. Because if not, you're going to get mad. And you're going to think that you're right. You're going to think that the charts are doing something wrong. And it's absolutely not true. If the trade's not happening, it's just not happening. You can't chase losses with bigger bets. You can't take an L, put on double your size, and be like, you know what, I'm going to make up that loss. And I'm going to go ahead and make some money. Putting on double size, next thing you know, you lose again. Next thing you know, you're super down. And then you're emotional. You're upset at yourself. You're angry. Okay? You're like trading, you know what? I don't know if this is for me. Whoop-de-whoop-de-whoop. All because you got emotional. Blame yourself. Don't blame the markets. You got to wait for the cleanest setup that you can possible. Okay? And if it doesn't work out, it's fine. This is why you manage your risk. You shouldn't even be tripping if you lose. If you're tripping when you lose, you're oversized. You're not trading within good risk parameters. You're way oversized if you're tripping if you lose. So chasing loss over bigger bets is not going to be the play. And this stems from ego. Okay, whenever your ego gets hit, you got to understand, okay, you know what? I'm not going to win everything. It is what it is. I took a loss today. Don't double down and try and get back at the market. That's just going to lead to wipeouts, destroying your account, destroying your P&L. There's been times on prop firms I've been day 4 out of 5. Okay, about to get a withdrawal. And I blew day 4 out of 5. I blew it. Okay. Up like 3 bands on a 50K account. Boom. Destroyed it all in pretty much a day or two. Okay. Hit the daily drawdown. And then day afterward, boom, destroyed it again. Okay. Okay. All because of ego. All because I was trading for P&L. Not trading out of discipline. Not trading out of consistency. Okay. Ignoring my stop loss. Thinking I was more right than the market because I just had a little hot streak. Okay. I had to humble myself. I had to realize, you know what, I can't keep taking losses like this. I want to get better. I want to improve. I don't want to keep being the same type of person that I've been. I'm not going to keep holding positions and hoping for a turnaround. I'm going to play logically according to my plan. This violates your risk rules. This violates your soul rules. Whatever you're trying to do for yourself and your family, you can't do it when you're losing more money than you're expected. You got to stay down. Stay in stack mode. If you took a loss, come back stronger. Try again. But don't destroy it all in one setup. Take your time. Play an even cleaner setup and win that one. Start over again. Get in stack mode. Restart. Okay, you're good. God got you. Even if it's your last dollars, God got you. You're trim. Okay. Restart. Run it back up again. Try again. Plenty of times I've had to do that. Okay. FOMO. Don't let FOMO get to you too. If you just see candlesticks bursting, you just took a win, for example, don't be like, oh, it's a good opportunity to make some more bread. Relax. That's not the mentality. That's very greedy, extremely greedy, very ungrateful. And take your time. Discipline counters this with rules-based trading. And relying on rumors instead of analysis, okay, can be bad. Don't be social media trading. Do your research. Check out the TA, the technical analysis, and make sure everything just lines up together. Okay, don't be going off of what he and she says. Do your research. Put it all together. Make sure it makes sense with your trading plan. Your trading plan is not going to be the next person's trading plan. Okay, figure out what works for you, and then you go ahead and you dominate with your plan. Okay, figure out what works for you and dominate with your plan. That's all you can do. Figure out what works for you and dominate with your plan. Okay, that's gonna be the best advice I can give you. Okay, and just don't give up. Okay, stay prayed to God. Keep grinding, even when you think it's hard, even when you think it's not for you. I promise you, just keep going. Keep going. If you feel like that loss is frustrating you, keep going. Keep going. You have to. You want to call yourself a boss, you have to be ready to take every single loss in the chest. Take it as a lesson. Let it power you up. Mark an even cleaner setup the next time. You got it. So discipline, it starts in your brain. Okay. So in your brain is where it's going to start first. Okay. Not in your body. You can pretty much almost ignore your body. Okay. But your brain is going to be the thing that controls your body in the first place. So treat trading, everything that you do is a marathon. Even working out. Okay. You can't get a six pack. Okay. And then be like, all right, I'm done working out. Like, no, you can't do that, man. You got to keep working out. You got to keep grinding, keep eating clean, keep eating healthy. Okay. Keep taking your herbs and doing what you need to do. Keep praying, keep getting your sun. Okay. You can't just get your six pack and then start eating junk food again every single day, not working out, not being disciplined. You'll lose it. Okay. And just like that bag too, when you touch that big bag, okay, if you're not putting it away, if you're not in stack mode, if you're not being disciplined, if you're not reinvesting smartly, okay, if you're not taking your time, you'll blow it. Okay, just like the six pack, you'll lose if you're not keeping it up, being healthy, continuously working out, you'll lose it. Okay, anything that you don't consistently keep up, you'll lose. Okay, God puts it in front of us every single day, even in plants, for example. Okay, plants, they need constant sun, constant water. Okay, rain and sun constantly. Okay, decent soil. Okay, and that constant rain and sun has to constantly hit the plant in order for it to grow. Okay, it could grow into a giant bush, giant tree, okay, whatever it is. Okay, and that's how your account and your body works too. You need constant work. Okay, constant protein, constant water, constant cardio, constant weight training. Okay, that's how you get a six pack. Okay, when I was getting my six pack, I was grinding. Still do Monday through Friday, not giving up. Okay, pushing myself harder every workout, being consistent, watching my carb intake. Okay, certain things like that. It's really gonna help you. You can head over to stackmode.net. Okay, I do have my free trading education ebook too. Okay, there's a couple other ones you can check out, but you guys can check out stackmode.net. Key Steps to Profitability ebook. Take accountability too. Okay, trade with some buddies if they're solid. Okay, trade with your wife or your partner if you guys are investment partners. Okay, have someone to keep you accountable. Okay, you can't be doing anything on the block and hiding it. Okay, post your trades even. Okay, journal your trades. Do what you need to do, and balance life. You can avoid burnout by scheduling breaks. Okay, if you're about to get angry on the charts and crash out, get off, go pray, be grateful. Okay, work out before the charts. This way, you're gonna be too tired to even be angry. You're gonna come on the charts with a logical mind. Okay, think of this from a survival perspective. We're supposed to wake up, hunt for the food, hunt for the berries, and then we eat food. Okay, not wake up and then just eat food. Okay, your body's supposed to be tired before we sit down. Okay, so before we sit down, we got to be tired. So wake up and work out. It's really gonna help you guys calm your nerves. Okay, and really just put you in a clear headspace whenever you come onto the markets, inshallah. So the core of discipline. Risk management is discipline in action. Protecting capital is priority number one. Never risk more than 1 to 2% per trade if you're a new trader. My more extensive traders, you guys can do 1 to 10%. Position sizing is extremely important. You can calculate it based on your account size and your stop loss distance. Okay. So for example, 100K account, okay, your risk is going to be 1%. That'd be 1K. Okay. Stop loss 5% away. Position size would be 20K. Okay. Stop losses and take profits. Stop losses when your trade's going to close by itself, and you can set your take profit too to make it close by itself. But always set them. Deep explanation. Stop losses are limit losses, and it pretty much closes your trade if it goes down or up to a certain point. So then you don't lose more than you want. And take profit's going to close at an area and exit you, so you give your money. And diversification. Okay, be careful putting all your eggs in one basket. Okay, try and be invested in like 1 to 3 things. Okay, depending on what you play, because that way you're not going to be panicking, just hoping and praying that one thing goes up the whole time. Diversify. Okay, play geology and spread out your growth. And you could simulate certain scenarios too using paper trading and see how your strategies work out. Follow your trading plan too. Okay, put your Discord together. Put your Notion together, your journal together. Write what you're going to do. Write when you're going to get in. Write when you're going to get out. Figure out what session you want to trade. If you're a Forex trader, options trader, okay, figure out when you want to trade. Your performance, track it. Figure out how much you're winning, how much you're losing, how much money you're making, okay? What's your year and returns, okay? Are you profitable? Okay. That's really going to be the main thing. Are you profitable at the end of the year? Okay. Are you making money at the end of the year? Okay. Forget the money you're making right now. Are you profitable year after year? That's really what's going to determine who's profitable and who's not for the most part. And avoid deviations. Okay. Don't destroy your account. Being tempted to do anything that's fried or just not logical. Okay. If you see if it's a super bullish candle coming in and you're in a short, cut your trade. Don't hold past your stop loss with ego. Cut your trade. Okay. Follow your plans. Whatever plan it is, you can write it wherever you need to, your phone, wherever. Just follow it, stick to it. Day after day, year after year, and watch where you'll be. So, emotions, they can be the enemy, but you can transmute that into discipline. Okay. Discipline is going to tame them. You can use some certain key strategies in order to improve your emotional control. Okay. If you're feeling angry, okay, once again, have a gratitude mindset. Okay, wake up, pray to God. Just be thankful that you have the opportunity to come onto the market. Okay, be mindful. Be mindful of how much bread that you're playing with and what you're about to do to your account. Especially if you start making more money, you gotta have your emotional control intact. Okay, because it's gonna hurt you. It'd be a lot more traumatic to lose 7 figures than it is to lose a band. Okay, so keep yourself grounded. Keep yourself humble. Keep yourself hungry. Step away after losses too. Okay, go outside, go ground, go give someone a hug. Okay, don't go mute. Don't go shutting everybody out or being drawn. Okay, just because you're angry that you lost some money on the market. Okay, you're good. Okay, relax. Don't let it destroy your entire life or your whole day. Okay, that used to be me. You can't do that. Okay, be grateful. Okay, be grateful for the people around you. Okay, don't start treating anyone bad. And don't be frustrated all day just because you lost some money. Okay, come back onto the markets again. Plan a better trade, plan a cleaner trade, and you'll be good. So, disciplined traders use stops to exit early and then re-enter on certain signals. Okay, undisciplined traders like to panic sell at bottoms. Okay, so have your stop loss set. You can't just
Sell when you see marketers start dumping exponentially. Okay. Have a plan. Be like, okay, if market ever crosses under here, I'm going to sell my position. Okay. Have a plan. You're a business person. Okay. Be structured. Don't chase hype without plans. No meme coins, no meme stocks. Do your research. Do your fundamental research. Do your TA. And make sure it all makes sense. And play with the trend too. Playing with the trend is going to be a really good way, inshallah, in order to make some money. Okay, trading against the trend or trying to catch reversals, especially to the downtrend and like stocks or crypto, might not always work out. Okay, trying to predict perfect tops and bottoms, it's going to be a lot harder than just trading with the trend in general. Okay, so you can either wait for resistance to be broken and turn into support, or support be broken and turn into resistance if you're in a downtrend. Okay, either one. So, what challenges do you face with discipline? You can go ahead and comment below. Head over to Stackmode.net. You guys can get my free trading education, free ebook, free course, book a free call. I'll catch you in the next one. Say prayer to God. Keep grinding. Peace.
To survive volatile markets, discipline is essential, more so than strategy or indicators. Volatility punishes bad habits, not just bad trades. When a trade moves against you, or price runs, an undisciplined trader panics or chases entries, making them unpredictable, not the market. Discipline distinguishes consistent traders from the gamblers. It means that you stick to your plan, you manage your risk, and you wait for confirmations and wait for the right entries, even when your emotions urge you to break the rules. Long-term success requires self-control, as the most dangerous factor in a volatile market is an undisciplined person trading. And it doesn't matter how much you've made either. A season of having low self-control can wipe out months of progress. Let's talk about how we can train our mind to make the right and righteous decisions in the market, inshallah, if God wills. Welcome. This session will not focus on charts or indicators, but on the single greatest detriment of long-term trading success and success in general, whether it be in business, on the charts, wherever. Discipline is the separation factor, which is going to separate from who's successful and who's not, who's going to be sticking to their stop loss, who's going to be adhering to their risk management, and who's going to be able to take the setups that they said that they're going to stick to. Self-mastery and emotional control, whether in the business world, on the charts, is going to be the separating factor between who's successful and who's not, and who's going to be winning within this world. Let's go and let's jump into the presentation. So the volatility trap, right, where most traders fail and fall in a downwards direction. Volatile markets, like cryptocurrency, amplify human emotional biases. Same thing with futures, leading to impulsive and destructive decision-making that quickly can drain capital. But it doesn't have to be that way, I really promise you. When the market is volatile, it's extremely bearish, which means markets falling in a downwards direction quickly. Or if market's extremely bullish, which means markets going in an upwards direction quickly, you need to be prepared for either sides, okay? If you're telling yourself you want to invest into some spot cryptocurrency, right? Which is where you're going to be making money when price goes in an upwards direction. So if market is volatile and it's making a certain low, you need to think of that as a positive. If market's dumping down really fast, you shouldn't think, oh my gosh, I'm losing all my money. No, that's going to be an opportunity for market to collect more ammunition and sweep back up further. You have to understand that no matter how low the market's dipping, when you're trading a good asset that puts a smile on people's faces and helps the future, within a couple of weeks, months, or years, inshallah, a lot of the times, and you could check out some old price action to see if I'm lying, you'll see price recover way past where it fell below, okay, and previous all-time highs as well. In order for price to keep breaking into new all-time highs, market has to fall in a downwards direction. Market has to come down in order to go back up. It has to collect ammo and collect liquidity. So don't fall into FOMO, okay? There should be no fear of missing out, okay? The fear of missing out causes traders to enter late and buying near the top based on social media hype, ignoring their own analytical framework, and doing things like that. Buying based off of hype is going to destroy your P&L. You should be looking at the chart. You should be knowing what type of economic decisions or factors happen within the world to base your assessment on how much you're going to invest. Okay, once the SEC laws started getting passed and Bitcoin started becoming a more government-friendly asset, it started going up to new all-time highs. We started seeing 100K plus get passed. So analyze what's happening within the world and on the charts before just making a certain decision, before you just sell everything or buy quickly. And fear, uncertainty, and doubt, FUD, this can lead to panic selling at the bottom during a market correction. Okay, make sure you guys are trusting God. You guys don't need to be panic selling. You don't need to be making yourself lose money quicker than you need to. Sit on your trade and wait for the trade to cook. Wait for take profit to get hit. And locking in losses just before a rebound hits is what keeps people unprofitable. Wait for market to hit your take profit before you close your trades. The majority of you are losing money within the market because you're selling too quickly. You think you're going to hit your take profit overnight, the next day. No, sometimes trades are going to take days, weeks, months. That's why I tell you guys to do everything on your higher time frames. Okay, to remove that cognitive bias from you from the smaller time frame. You need to have your higher time frame bias and understand that the market is going to take months, weeks, years, and days in order to get to where it needs to be. So don't sell off of a quick couple of days worth of price action. Stay on your trade. And 2 key psychological phenomena drive irrational exits and entries. Okay, trying to avoid loss. The pain of a loss is psychologically twice as powerful as the pleasure of an equivalent gain. Okay, so humans prioritize survival mode, but don't just think losses as survival mode. When you're down in your P&L, don't think that you lost. You only lose your money when you decide to close your trade. Okay, when you exit the trade, then you are going to be out of your money. Okay, until then, market can continue to do whatever it wants. Hey, not saying to sit there and hold trades forever, but a lot of you are losing because your stop loss is way too small. So if you're on options, I recommend your stop loss be the contract itself. Try and buy 1 to 2 years out. Okay, buy a leap contract, and this way you can sit on your contract for some time. Same thing for your shares. Try and hold your shares for some years. There's also going to be some long-term tax benefits for crypto and shares when you're holding your trade for over a year, meaning that they want you to hold for a long time. Same thing with futures too. Don't get destroyed by the prop firm cycle. Boot up your own live account, have enough margin, and hold your trades overnight. This way you can play the real structure, and you're not going to be taking any trade on the block, destroying your account much quicker than you would trying to conform to somebody else's rules, or even worse, trying to make some quick profit. That's never how we want to think on the market. Never think quick in the market. Okay, and confirmation bias. Seeking out only the news and opinions that support a trade that you already entered, ignoring clear signs that the market trend has reversed. Okay, not everyone knows everything. Okay, read the chart and do your own economic decision making when it comes to getting in and out of trades. Okay, and you gotta have a plan. Lay out your blueprint. Okay, if you're a break and retest trader, wait for resistance to get broken and turn into support. Okay, if you're a reversal trader, wait for support to get formed and catch the right side of the V into an area of resistance or support above current price. Okay, have a blueprint. Know what you're buying. Okay, if you tell yourself you want to buy $500 or $1,000 worth of Bitcoin every single month, you got to do that regardless of where the price is, because you're trying to DCA, and DCA means dollar cost average. Okay, stick to your plan. I don't care what you're trading, futures, crypto, options, it doesn't matter. Having your blueprint and developing an ironclad plan that you pretty much never break is going to set you apart from every other trader. Discipline begins before you place a single trade, and an ironclad trading plan removes emotions by codifying exactly when you enter, when you exit, and how much risk you're going to manage. Okay, if you have $1,000 account, for example, right? If you have $1,000 account, you should not be trading with more than 10% of your account at a time, ever. Which means that no single one of your trades should ever be more than $100 if you're trading on $1,000 account. Okay, try and trade between 1 to 10% of your account at a time. This way, you're gonna have a significant advantage in many ways. Okay, make sure you have that advantage. Okay, to stick to 1 to 10% of your account per trade. Do not break this rule. I don't care how much your account is up or down, try not to ever break this rule. And define entry and exit criteria. Your plan must specify clear, objective, technical, or fundamental conditions for both entry and exit, and never enter a trade based on gut feeling or instincts. Make sure you guys have definitive, structured layouts and boxes checked. Be like, okay, market did this, okay, market did this, okay, cool, I think I'm ready to get in. And have a rule-based entry. Okay, here's an example. I will only buy asset X if the daily RSI is below 30, for example, or I will only buy asset B if the V formation is starting to form and curl in an upwards direction on my daily or 4-hour, or I'm only going to buy asset C if market hits this certain price and I'm going to buy the dip. Okay, see how you want to structure your plan and stick to it, and stick to your time horizon and review your schedule. Define whether you're a scalper, day trader, swing trader, or an investor. Okay, do you like to trade for ownership? Then maybe you need to look towards crypto and shares. Do you like to trade based off of speculation? Then maybe futures and options are going to be based for you. Or you could take that futures income and put it into crypto and shares. That way you guys are going to be able to get that speculative money based off of your skill quickly, and you're going to be able to take that and put that into ownership. This way you're going to be able to leave some crypto for your family if you ever pass, God forbid. Okay, or you'll be able to leave some things down for the future. Okay, so your future you is really going to be happy that you sat on your investments. So make your future self happy and plant your seed. Okay, think of it like a big tree. You got to plant it. Okay, water, sun, water, sun, water, sun. Okay, that's how you have to grow your account. Make sure you guys are getting the proper water and sun every single day. Okay, rather in real life too, you got to keep your emotions based. Okay, make sure you guys ground, try and get some outside time if you can. It's not good to live like a rat, especially in today's generation with all this technology and stuff everywhere. If you can, especially before the market, if you're a day trader or something, have some outside time, get some oxygen, touch some grass, touch some plants, take a walk, and really work on your mental health. Getting closer to God is going to be one of the easiest ways to get better mentally. Okay, it's going to give you the full layout on how to be a good person here on this earth. Okay, and keep yourself from being mentally sick. Keep yourself from hurting yourself. So when you lose a trade, you're gonna be like, oh, I'm broke, I don't know, this and that. No, you got to relax. Okay, you got to chill. Even when you lose a trade, understand that sometimes you're going to lose. It's how you handle that loss, and it's how you prepare for the loss too. And you must stick to your chosen timeline and resist checking shorter time frames if you're a long-term trader. Okay, don't be caught up on the 15-minute bias if you're on the weekly and daily time frame. Okay, your take profits aren't going to hit as quick as you think all the time. Give it time, let your trades cook, and take your time. Protect that capital of yours. Okay, what are you trading for? Some of you open up your broker account and just start losing all of your money. Okay, you're not on the market to lose money, and the main reason you guys are losing money is because one, you're closing your trades too early, especially my futures and options traders. Okay, you're just going to literally delete capital like that. Okay, my crypto and shares traders, you guys are a little more stable. Okay, due to the fact that you understand ownership. Ownership a lot of the times is going to make you profitable, especially when you're owning something that puts a smile on people's faces and helps the future in many ways. And the prime directive, right? Capital protection. Okay, the most important rule in trading is not how much you can make. It almost kind of doesn't matter, but it's how little you can lose and how healthy you can keep you alive year after year after year, month after month after month. Risk management is the mathematical enforcement of discipline. Extremely important to make sure you guys are trading within your 1 to 10% of your account rule. Okay, as you get better, you know, you can increase from 1%, but I recommend you guys even start off with 1% when you're first starting trading. Okay, this is really going to help you guys just get down to the motions of, okay, you know what, take profit gets hit, boom, let me go ahead and do this, let me go ahead and do this. Okay, but as you get better, you can increase it to like 5% and then even 10% at the max. 10% is going to give you 10 trades before you blow your account. Okay, 5 trades, 5% is going to give you 25 trades of your account before you blow it up. Okay, and then 1%, you know, you're going to have 100 trades. So depending on your percent, it's going to determine how quickly you're going to be gaining profit, but also how quickly you'll be losing profit too. So think about that. If you have a higher win rate, extremely high win rate, feel free to go up in your percentages within the 1 to 10% range. And a non-negotiable stop loss, right? Extremely important. If you say you're going to close your trade here, okay, I don't care if it's a stop loss or a take profit. If you say you're going to close your trade at a certain area, close the trade. Some of you guys are literally extremely undisciplined and you're wondering why you're not making money from the markets. Take profit literally gets hit. You got to close at that certain area before you get reversed on. Okay, it's not like you're just, oh, I'm going to close here. I'm going to close at this area of resistance because I want to. Oh, I'm going to put my stop loss here underneath this area of support because I want to. No, if price were to clip past underneath that area of support, price might fall down dramatically. And if you're a long, that's not what you want. Okay, same thing if you're in a long. If you win, you hit take profit, close at an area of resistance or support above current price. Okay, make sure you guys catch your gap fills. Get your money. Some of you guys are just losing your trades since you want to hold way too long. You got to know where you're exiting at. You got to know where market wants to temporarily reverse in order for it to continue its flow. Understand the staircase method and head over to Stackmode.net. I have a free course for you guys so you guys can understand the charts and market a little bit more, and tons of free videos too. A stop loss order that's pre-planned, right, is really going to help you out. You're going to know, okay, if market goes here, market will instantly close out my trade, or I'm going to close out my trade here. Okay, and it's where you admit the trade idea is going to be wrong at. And in volatile markets, a stop loss must be placed the moment the trade is entered. Okay, because market can make an extremely fast move, and you might not be ready for that emotionally. You might have a $500 stop loss. Okay, but if you didn't set your stop loss, say you were like, oh, I'm going to close manually, and market decides to go down and turn that $500 loss turns into $1,300 loss because the candle was so fast, you might freeze, you might pause, you might panic. And that's not what I want for you guys. Okay, so set your stop loss with a order if you can. This way, when market hits that order, it'll automatically close your trade the best that you can. And it's going to prevent catastrophic loss and help you protect against unexpected flash crashes or major news events, which definitely happens. Especially if you're on futures or Forex, you don't want to be getting what's called margin called. Okay, this is going to be something where you might be owing the broker money if you go below their requirements. So keep that in mind. Okay, and never risk more than a small fixed percentage of your total trading capital. Once again, stick to 1 to 10% of your account per trade. If you have $10,000, your maximum loss on any one trade should be capped at $100 to $1,000. And this ensures that a string of losses will not wipe you out and allows your edge to play out over many trades instead of just getting destroyed instantly and quickly because of a bad couple of emotional decisions. Okay, you got to callous yourself. Think of yourself like a turtle shell. You know how turtles have that shell? You got to put the shell over your account. Have the protection so you're not out here getting swooped up and eaten by every single bird and shark in existence. Okay, take your time, protect your account. Emotional detachment, right? The zen of trading. This is why it's really important. Wake up. I pray to God instantly. Okay, I read Quran and I just am in a way better mindset. I'm in a calm mindset. I'm in an entranced mindset, and I'm ready to succeed for the day. And once a trade is entered according to your plan and stop loss is set, your primary job is to watch the market execute the strategy without interference. Place down your trade, hold. Okay, you're either gonna hit stop loss or you're gonna hit take profit. Okay, you're gonna hold until either one of these. And it's really cringe too. Don't close your trade before stop loss or take profit gets hit, because what you're doing is destroying all of the math. You're destroying the risk to reward ratio. Okay, let's say you're taking a trade, right, and you win a 1 to 4. Okay, let's say you risked $100. Okay, if you risked $100 and you hit a 1 to 4, that means you would have made $400. Okay, so that's $300 in profit. Okay, so hitting your risk to reward ratio is going to be important for growing your account within a mathematically correct way. This is literally how the math of the market works. If you're making more than you risk, you will become profitable. Okay, you will become profitable, inshallah, if God wills. You have to make more than your risk. If you're risking $200, okay, then you should be at least trying to make $400 at the minimum. Okay, and that's going to be a 1 to 2. Okay, since you're going to be doubling your money within an asset. Okay, that way if you take another loss, you'd at least cushion. So try and at least always trade for at least a 1 to 2. You should at least always try and double your money within a trading scenario before it's closed. And once a trade is entered according to your plan and stop loss is set, you have to watch either take profit or stop loss gets hit. Please don't be touching your trades with your hands, because if you're impulsive, you're emotional, and you're led by your flesh, you're going to destroy absolutely everything. So overcoming impulsivity, impulsive decisions, and moving a stop loss further away, adding to a losing position, right, doubling down, or exiting too early are the quickest ways to violate your discipline. And mental reframing exercise, right? When you feel panic or greed, physically step away from the screen for just 5 minutes. Okay, go pray to God, go breathe. Okay, take a step outside and ask yourself, do the market conditions violate my original trade thesis, or is just this noise right now? And if the thesis is intact, you must adhere to the plan. Okay, you gotta adhere to the trading plan. Why are you breaking your trading plan? You say you want to go put your mom in that big crib. Okay, you say you want to take care of your wife and your kids, or you want to take care of your kids or whatever. You want to take care of yourself. You want to go get the lamb, yet you hop onto the market, breaking your discipline, breaking your trading plan, not taking the setups that you said you were going to take. We don't have time for this. We got to go harder. Okay, we got to go harder. When you feel panic, when you feel greed, you have to understand that that is the enemy. That is the devil. And we have to pray these emotions away. Okay, okay, it's very important for us to pray this away. This is just the devil trying to attack you guys, so you guys get pulled back away from the goals and dreams that you want to attack, that you want to feel and be attached to. Okay, the devil does not want you to be happy. Okay, but understand that God loves us. God wants us to be happy, and this is why God even talks about in Quran about spending moderately. Okay, you have to know how much you're risking, and you have to stick to your plan. And the art of taking profit is extremely important. Greed causes traders to hold winning trades past their logical target, and this is something that's happened to me. Okay, I'm trading straight P&L at one point in time. Okay, looking at the money. Okay, I remember I hit this one really good trade on C3AI, and I've started seeing the bands go up. Okay, start seeing the money go up. I've hit plenty of trades like this, and the next thing you know, instead of me trading based off of the chart, I start trading based off of P&L. And guess what? Since I'm greedy, and since I was trading with my eyeballs focused on the money instead of on the chart and focusing on my discipline, everything was taken away, or my win was not nearly as big as it should have been, due to the fact that I didn't stick to my logical targets. And I don't want you guys to go through that either. Your plan must include defined profit targets. For example, target 1 at 2R or target 2 at 3R. Okay, where you sell a portion of your position to secure gains, ensuring that you never let a winning trade turn into a loss. And make sure you guys also set your stop loss to above break even or certain levels too, to even keep the trade going and flowing. And only God's perfect, so if you make a mistake and overtrade a certain day, at least care about what you did. Journal down how you felt. Journal down the emotions you were feeling when the trade was in your face. Were you close to take profit, but did you close your trade too early, ruining your risk reward, leading you to take another trade and then crashed out your account? Or what type of scenario led to you losing that trade or over trading in certain scenarios? When you really write it down, you're able to visualize and see your mistakes. It's a lot harder to repeat them over and over again. Discipline is really a muscle that has to be trained, and the trading journal is the feedback mechanism that allows you to objectify your performance and eliminate certain weaknesses, especially when you have your numbers jotted down. If you see certain things that you're doing is leading you to lead certain results that's not making you happy, then you need to change some certain things up. And your journal needs to capture certain things. Make sure you have your pre-trade analysis, how you're feeling before the trade, why you entered, and make sure your criteria is met before you press buy or sell. And talk to yourself. How do you feel emotionally? How did you feel before, during, and after the trade? It's really crucial for identifying certain biases, especially when market changes certain directions. You know how to pinpoint certain issues that you're having. And violations. Did you adhere to your stop loss and your take profit rules? And ask yourself why. And talk about the market context too. Did you take a long? Did you take a short? And note the macro environment. And do your weekly and monthly review. Treat this review like a performance audit when you're trading your own business. So identify your most frequent violation and need to cut certain things out. If you're constantly moving your stop loss, your issues and strategy, you got to stop being led by your flesh. You got to be way more disciplined than that. If you want to touch that big bag, even when you touch that big bag, it doesn't really matter. It's about keeping it. You're not going to be able to keep it if you keep moving off impulse. Okay. Your loss aversion and lack of conviction in your plan can really lead you to certain areas that you don't want to be led to, such as overtrading. When you overtrade, one tiny loss can lead into a whole destruction series of your account. And it's a lot harder to bounce back from that, just from one tiny loss, especially on things like prop firm, where you're chasing certain parameters. So detach from the money, focus on the charts, and be more disciplined. And trading small is really going to help you in certain areas too. If you notice you're feeling a high amount of pressure, like I have to win this trade, you probably shouldn't be in it. Okay, if you lose the trade, you should be completely comfortable. And just like the previous slides we talked about, staying within that 1 to 10% risk management parameter percentage field is really going to help you out. Okay, it's going to be a lot harder to blow your account when you're not going over 10% of your account per trade. Okay, you could do 5%, have 25 trades, and that's a lot of trades before you blow your account. You shouldn't be that inconsistent, truthfully. You got to wake up, pray to God, and be consistent with every dollar that you generate. You also got to be a little more loose within the markets too. You got to stop being so restrictive. Having super tight stop losses and trying to micromanage every piece and point of price action is a good way to lose all your money and be frustrated. Okay, play with much bigger stop losses and give your trade some time. Sit on it for some days, some weeks, some years, and really let your money sit. Okay, if you're going to invest, you can't be desperate for income. One thing I recommend you guys do is hide your balances. On all your brokers, you should have the ability to either hold down your number, and this way, even if you're down, you're not going to be tripping. Okay, you could be down 50%. You're not going to be in anxiety. You're not going to be in survival mode, because I can assure you, within a couple of days, weeks, or months, price will reverse and go way past wherever your original take profit was. Okay, market has to go down in order to come up. So you can't have certain emotions, especially in volatile markets.
If market's moving super quick, you can't feel like you have to close your trade instantly because you're not going to be able to see the bigger picture. Being on the higher time frames, your monthly, your weekly, and your daily is really, really important. Because if you're too zoomed in on your smaller time frames, that fast price action is going to look like the scariest thing of all time, especially when it comes to futures, forex, and things with margin like that. But it's really not that bad. So I really recommend you guys stay on your 4-hour plus, turn on your extended trading hours, of course, but try and stay on your 1 hour on like the lowest time frames a lot of the time. Because when you're on your super small time frames, price action, especially during volatile days, news days, etc., it's going to look a lot quicker than it needs to be. And on the 4-hour, it's going to look like a normal trade or going in a completely different direction than you might think. On the 5-minute, you might be looking at a bearish scenario. And then on the 4-hour, market's going in an uptrend. Okay. So you can't go off of your lower time frame bias. I truthfully believe it's there just to get your emotions riled up, especially when it comes to future scalpers and things like that. You have to know your higher time frame bias and don't get tricked about that. Okay. There's plenty of people who are successful within the market who just buy and hold, who never even taken a look at the charts. Okay, so before you tackle volatility, you have to build the discipline to execute your plan. And you have to get those psychological parameters down. It's really, really, really psychological, the charts. You can be really, really good technically, but if you don't close at your take profit, it won't matter. Or if you feel like you're better than closing at your levels, then you'll definitely get punished, reversed on certain areas, and get what you deserve. Market is also very, very fair. So if you're disciplined, you wake up, pray to God, you close at your levels, I can assure you 99% chance, just like my students, you'll see a very, very, very successful upwards equity curve in your account. But if you're undisciplined, getting greedy, even when you've hit your take profit, trying to trade past that, it's not about the money. Okay. If you break your cycle, break your consistency, and start averting from your plan, it's going to build into you, and then that's going to build into bad habits. That's going to lead to you being overconfident in certain scenarios that's not logical, leading you to overtrade. And when you crash out your account, you might be frustrated on the market, but you should just be frustrated at yourself. Okay, I don't want you guys to go through that cycle. That cycle can be really, really hurtful, especially when you've been grinding your business, grinding at work, and putting that money into the market, expecting to make some money, and then you lose everything. Okay, I don't want you guys to be going into debt, going through frustration, losing your account. So please just wake up, pray to God, and plan your trades. Okay, promise me, if you guys watch this video, plan your trades before you put a single dollar into whatever. I don't care if it's Bitcoin, options, forex, futures. Promise me you'll plan your trade. Okay, don't ever just trade thinking that, you know what, I'm gonna get in this making some money. No, have a technical plan. Know when you'd exit, know how much you're going to invest, know how you're going to close your trades as far as take profit and stop loss wise, and have this process repeated, especially once you find your positive flow. Once you find your flow, I don't care if you're taking break and retest. If you're a breakout trader, I'm not going to tell you guys to trade one way because different things work for everybody on the planet. It's the cool thing about life. Okay, God gave us all individual separate brains for us to do separate things. If you're a breakout trader and that's working for you, you need to stick to that. If you're a reversal trader and that's working for you, you need to stick to that. You can't get on YouTube, see what this person's doing, and then change everything even though something's working for you. Okay, find your process, find your flow, find what you like to trade, and then stick to that year after year after year after year after year. Think of it like working out, for example. You can't get on the floor, do 20 push-ups and 6 crunches and get a 6-pack. It takes days and days and days of eating consistently, eating clean, okay, working out consistently, getting the proper sleep, making sure your bones and your muscles regenerate properly. You have to treat your account and your income or your business the same way. Okay, you have to be consistent. You can't have $10,000 in Bitcoin and then think $20 is not a lot. Okay, this is why I say you have to detach from the money. You could have 5 million in Bitcoin and still, when you get $5 extra, throw that into some Bitcoin. It's about the habit. Okay, I'm telling you, when you build that habit and you start thinking and planning and doing your actions for the future you, the current you will be a lot more happy and you'll be leveled up a lot quicker. Okay, so head over to Stackmode.net for all trading education. Catch you guys in the next one. Stay prayed up to God. Keep grinding. Peace.
So imagine waking up in an economy where money can appear out of thin air, or one where every coin is locked behind an unbreakable vault. And that's the clash we're diving into today. Let's talk about quantitative easing versus Bitcoin's fixed supply. And it's a true economic showdown to be talked about. So in one corner, you've got quantitative easing. It's the central bank's money creation lever. And when the economy slows, they print even more, inject more, push more, and it can rescue markets. But it can also quietly stretch your dollars thinner over time. And in the other corner to fight against it, you have Bitcoin. It's a digital asset that refuses to bend, and only 21 million will ever exist. No printing press, no emergency button, just a predictable, halving-driven drip of new supply that's immune to human panic. So let's go and let's jump into it, class. Inshallah, if God wills. All right, so let's go and let's talk about the economic showdown. So, Bitcoin has scarcity involved within it. There's a limited amount of Bitcoin available. 21 million Bitcoin exist. But versus fiat currency, the traditional fiat currency, such as the US dollar, there's an unlimited supply, okay? But with that unlimited supply, things catch up over time. So let's go and let's talk about exactly what I mean. So mechanism, quantitative easing, right? So the term QE, let's talk about it. So QE stands for quantitative, Q stands for quantitative, okay? And E stands for easing. Okay, and here's how it actually works. So it's not just printing cash, okay? It's an asset swap. So step number 1, the central bank creates digital reserve, okay, out of nothing. And they use these reserves to buy treasuries and mortgage-backed securities from commercial banks, okay? And now banks now have the cash reserves and are incentivized to lend it out to companies and people. And in result of all of this, the central bank balance sheet then explodes, okay? And the Fed's balance sheet grew from 4 trillion, okay, to 9 trillion during 2020 through 2022, okay? So let's go and let's break down the further logic of what this all means, because there's definitely going to be consequences for everything that we just spoke about. And let's talk about it. The Cantillon effect. So who gets the money first? So new money doesn't reach everyone at the same time. It flows just like a river does, okay? And one, the insiders, okay, banks, okay, / government, they get the money first at near zero interest, okay? And they buy assets for cheap, okay? They buy it for a low price, okay? God says no interest anyway, so they finesse the whole system. So the asset owners, right? Let's talk about the rich people. So stock and house prices rise due to the influx of cheap capital, okay? And let's talk about the wage earner, okay? By the time money reaches you, prices for food, okay, just a basic item, let's say like a piece of chicken, for example, okay, or macaroni, okay, 1 year you might be paying $5, okay, for a chicken sandwich. Next year you might be paying $7, okay. 5 years down the line, you might be paying $13, okay. You went from paying $5 a chicken sandwich to $13, okay. Yes, we can print infinite currency, right? But there's going to be consequences to everything, okay? It's going to be supply and demand, equal opposite forces in everything, okay? So understand that the fact that infinite money gets printed means that over time things have to get more expensive in order to compensate, because people are going to start just having more money, okay? And there's going to be more money flowing in the river, so the numbers have to balance out logically, okay? So knowing this, we have to understand that your income has to catch up. So let's focus on point number 2 here, okay? So point number 2, the asset owners and the rich. So stock and house prices rise due to the influx of cheap capital, okay? So they go up due to the influx of cheap capital. We need to think about this logically, okay? So while food, rent, and stuff is getting more expensive, okay, stock and housing prices are also rising. You guys should be trying your hardest to stack as much assets as possible. If you don't know what an asset is, that's going to be anything that's pretty much going to turn your money into more money, okay? Whether it be real estate, okay, You could do stocks, okay, cryptocurrency, so many different avenues, okay, business, pay for ads and start you a digital business or physical business, whatever, okay? Just whatever is turning your money into more money, that's going to be an asset. Because you have to understand that your income has to catch up. I don't want you guys to be struggling in society. Okay, your income has to catch up. And just like God says in Quran, we have to spend moderately. Okay, we have to spend moderately. I'm really telling you guys, the key to life is just following what God says. Okay, if you guys aren't religious, you need to go start reading the word, man. Okay, it really helps a lot. It's a lot of psychology in there. Okay, especially as a trader, an investor, somebody trying to have their finances together, you need to definitely read Quran if you can. Okay, so spending moderately. Okay, so stop being so much of a consumer. If you realize, okay, there was times I was spending my whole bag on DoorDash, on this and that. Okay, having no assets stacked. Okay, and I'm not saying don't live life. There's gonna be times where we want to live a little life. Okay, I understand. Okay, there's times, you know what I'm saying, I go out, you know what I'm saying, you might pop it a little bit. Live your life, do your thing. But that doesn't need to be a consistent every single week, every single day thing. Okay, save your money, invest your money. Okay, so when I say save your money, save it in some assets if you can. Okay, don't just have your money sitting in your bank account, because inflation, food, rent, etc. is rising. Okay, which means if you just have money sitting still, you're going to pay more taxes over time. Okay, so always try and keep your money flowing in the river. Okay, this way, by the time tax time comes, you're going to have an easy time paying it off. Inshallah, if God wills. Okay, so let's head over to the next slide. So the response, okay, absolute scarcity. Bitcoin, where my Bitcoiners at? All right. So Bitcoin, the 21 million hard cap. Okay, and this limit is not something that needs to be taken lightly. Okay, Bitcoin is gonna go away one day. Okay, Bitcoin is not infinite. Okay, it is not infinite. Okay, you need to understand that it's a resource that is going to expire. Okay, that in itself, that alone gives it value. Okay, so there's 21 million, okay, Bitcoin that has to be mined until it goes away. Okay, depending on when you're watching this video, you should be able to do a quick Google search to see how much Bitcoin is left. Okay, people are starting to buy hundreds of millions of dollars worth, including the US government. So check your watch, okay, because time is ticking. Okay, so this limit is not a promise, it's math. Okay, it's enforced by tens of thousands of nodes globally. To change it, you would need to convince the entire network to devalue their own wealth, which would be practically not something that people will be wanting to do. Okay, and there's a whole decentralized consensus behind it. So that word decentralized, okay, you might have heard of it. Let's talk about it. Decentralized means no banks, okay, control anything. Okay, no banks control anything. What it is all peer to peer, okay, which means person. Okay, so we got Joe, and then I'm gonna go ahead and we got Jack. Okay, so we got Joe and Jack. Okay, Joe lives in the US. Okay, and Jack lives in China. Okay, Joe hired Jack to do some work for him. Okay, Joe hired Jack to make some ads for him. Okay, for his company. Okay, but he's in China though. He's in China. Keep that in mind, guys. Okay, if you're trying to wire transfer some money to somebody in China, okay, or somebody in, let's say, Africa, okay, for example, okay, because I know China has some cryptocurrency laws and stuff like that. So let's say Jack is in Africa, okay. So Jack is in Africa, and you're trying to send some money to him, okay. He's making some ads for you. He's trying to get his paycheck. And what's a good way to pay him? Okay, might be a little difficult to use PayPal. Might pay a lot of transfer fees.
might pay a lot of this. Okay, especially if you start trying to send large amounts of money, they might flag your account and be like, hold on, why are you trying to send so much money to somebody in another country? Okay, they might get questioned, and it's your money. Okay, not cool. This is where cryptocurrency comes in. God is the greatest. Okay, so thank God crypto exists now. Okay, if you want to send some money to somebody that you hired in another country, your family, whatever, however much you want, whenever you want, okay, you can instantly send your currency. And that's the decentralized network. Okay, that's the difference between centralized and decentralized. Decentralized, you can send it when you want, you can send it to who you want, and you can send it to where you want. Okay, whenever you want. Centralized, stuff works on times. Okay, I'm sure you guys know that direct deposit time. Okay, waiting for that 6 a.m., waiting for that check to hit. Okay, certain times like that. That's the whole centralized system. Okay, cryptocurrency strikes that out. Okay, and let's talk about an immutable ledger. Okay, so once a block is confirmed, it is thermodynamically secured by energy. Okay, rewriting the history would require more energy than a medium-sized country could consume. So once it's confirmed, once it's on the blockchain is going to be where all pretty much the cryptocurrency information lives. Okay, once all the blockchain information has been confirmed, okay, and set in stone, shouldn't change. Okay, inshallah, it shouldn't change. So that's what makes Bitcoin a big help in society, especially when we're just trying to live some life and do some things. Okay, we might have some family in other countries and we just want to live like people. Okay, come on, let's go to the next slide. So the supply shock. Okay, let's go and let's talk about the halving. Okay, halving. So half, as you guys know, 50%. Fraction is 1/2. Okay, because 1 plus 1 is 2. Okay, so programmatic disinflation. So every 210,000 blocks, okay, which happens every 4 years, okay, which is, yeah, pretty much how often it happens, the issuance cut happens by 50%. And this creates a predictable supply shock. So let's break it down. So pre-2024, the Bitcoin inflation, okay, was around 1.7%. Okay. Post-2024, okay, inflation went down to 0.85%. Okay, which became scarcer than gold. Okay. And projections, if this math continues, by 2028, we should have the inflation at 0.4%. And then 2140, when Bitcoin decides to go away, which is by the time when people calculate, inflation will be at 0.0%, of course. So while the fiat supply accelerates, right, exponentially to pay the debts, Bitcoin supply decelerates. Okay. You have to understand that it happens because it's a limited currency. Okay. It's limited. It's not something that's going to be here forever. Try and get it when you can. You don't want to be one of those people who regret it and be like, oh man, I should have bought some Bitcoin. And you just didn't. Okay. So make your decisions now. Put some money to the side. Okay. You don't need to be buying no clothes, McDonald's, no DoorDash, no right now. Buy some groceries. Okay. Buy some groceries and grind. Okay. Wake up, pray to God, grind, and stay down. Okay. Live a little life, of course. Take care of your mental health. But try and put some money away. Okay. We got to have this asset flowing. Okay. Let's get it. Inshallah. So the systematic comparison. So fiat currency, US dollar, man, cash, you know, good old dollars. Let's talk about it. So policy, okay, it changes based on politics and crisis. Okay, if the US economy is doing well, then that means our dollar is going to be more valuable. If it's doing bad and we have a lot of debt, etc., the US dollar is not going to be as valuable. Okay, and that's just what it is. And people will want to run to other assets, which once again, assets are things that turn your money into more money. Okay, because fiat currency, that money, is not as valuable. Okay, so they at least want to try and generate more, which makes logical sense. Defense, survival.
Okay. So, unlimited amount of fiat currency can be printed, press of a button. It's kind of just numbers on the screen. Even kind of same thing with credit too. And system, okay, permissioned. Banks control the access, okay? They can tell you no, and they can tell you yes, okay? And the outcome, right? Your savings lose value over time, okay? Due to the fact that it's not growing in anything, okay? It's not in the river, okay? It's sitting still on the rocks, okay? Let's talk about some Bitcoin. So policy, okay, set in stone with code, okay, can't be changed, which means Bitcoin is gonna have the same intrinsic value baked into it a lot of the times, okay? And of course, there's gonna be chart depending on where the price is at, all-time highs versus a low, for example, okay? But for the most part, with it having that fixed supply, okay, it's gonna remain valuable, okay? Fiat currency, if the US started getting bombed right now, the US dollar probably wouldn't be as valuable. Okay. So certain things just are logical with that. So supply, okay, strictly capped, okay, 21 million, and it's very costly to mine. Okay, you can't just spawn Bitcoin at a press of a button. You actually have to have a whole logistical system. Okay, Bitcoin is created by proof of work. Okay, the computers have to show math. When your teacher asks you to show work, that's what the computers have to do. So it's pretty much a bunch of computers, okay, or it might be one, however much the person has who's mining the Bitcoin, okay. And what they're gonna go ahead and do is look for mathematical equal signs, okay. They're trying to solve a code, okay, to give the hash, okay. And in that, the computer has to keep solving these codes, okay, and it has to show work, okay, and that proof of work, and if it's correct, okay, then they're rewarded with a piece of Bitcoin, okay, and then they keep doing that, and then every mathematical problem that's solved, then a Bitcoin gets created, okay, and it's all solved by supercomputers, okay. Could be very, very expensive to run depending on your country, okay, so before you just go try and boot it up, look into it. Please do your research. Pray to God on it. Take your time. Okay. And it's open to all. Anybody can buy Bitcoin. Okay. You can buy some Bitcoin right now if you want. I don't care if you got $2. Okay. Get in that habit of buying assets. Try and keep yourself broke. Okay. Because what do you have your cash in your bank account for? Go buy some assets. Live off of credit if you can. And stay down. Okay. Keep doing that. And then when it's time to pay your credit, boom, 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 and keep the money flowing. Keep it flowing. Okay. Don't stop hustling. Okay. I know life happens. Don't get depressed. Keep your head on straight, man. Okay. There's going to be things that go down in life. There's going to be times your emotions are going to be shook up. Okay. There's going to be times where you can't stack up. Okay. Your car might break down. Okay. Things happen in life. Okay. You might have to pay rent. You might have to pay direct deposit on a new crib. Okay. And rent. Okay. Depending on whatever it is, any situation, right? Hospital bills, okay? Just pray to God on it, okay? Pray to God on it and keep hustling, okay? Don't get in your head, don't get poopy pants, and don't get depressed because you got to get to this money, okay? I'm telling you, when you pray on it, you keep going forward, you keep hustling, things get easier, okay? But you got to keep hustling, okay? After you pray, you got to keep hustling, okay? Don't grieve, okay? Don't get sad, just focus. Okay, don't take that money and indulge in food. No alcohol, okay? If you're drinking, quit that. God says don't do it. It makes you weak, okay? No alcohol. Take that money, buy some assets, buy some Bitcoin, okay? Change up your lifestyle. It's really deep, okay? If you catch yourself buying certain kinds of food, ask yourself why, okay? Why? Why am I eating these Doritos? Why am I booting this up right now? Okay? When's the last time you had some vegetables, some fruit? Okay? You got to change your lifestyle. You guys are so obsessed with investing and trading, but we all have to realize that we have to change our lifestyles. Okay? This stuff takes money. Okay? It takes money to invest. So if you want to invest, you need to change your lifestyle up. Okay? Put some bread away. It's cool to stay down. Okay? It's cool to save some,
Okay, wear the same clothes for weeks if you got to, but you know how much Bitcoin you have in the stash. You know how much assets you have stacked up. Who cares what anybody's saying? Okay, because if you want to get to this Bitcoin, it's going to take a certain level of discipline. Okay, it's going to take a certain level of staying focused. Okay, we can't be being lazy when we say we want to be stacking assets. You got to choose. You got to be relentless. You got to be a dog. Okay. So before Bitcoin expires, I don't want you guys to be like, man, I wish I bought Bitcoin. And it's like, that's not how you want to go out. Okay. Leave something for your family. Okay. And take care of yourself. Inshallah. So let's go. Let's head over to the next slide. So the hardness of money, right? Stock to flow. So why hardness matters in the first place? So money is a technology for storing time and energy. And hardness measures how hard it is to produce more of it. So let's talk about the S to F ratio. Okay. And existing supply, okay, divided by the annual production. So let's talk about the real estate, right? High S2F, okay? Because real estate, it's pretty hard to build, okay? You need a whole crew of people. Stuff could be changing now, though, because they do have houses that you can just drop on a plot of land, okay? That's like carried by a giant truck, okay? So it really depends. That could change as humans develop more innovative technology and ways to get housing quicker. But as for now, real estate is pretty hard to build. And let's talk about gold, right? So gold takes about 60 years to double supply, okay? And Bitcoin, okay, it's the hardest asset ever discovered, ever, okay? So gold has a 60 S2F, Bitcoin, as of 2025, has 120 S2F, okay? And if money is easy to produce, right, such as fiat currency, which is limited, people won't save it. They're just gonna go ahead and dump it and blow it, okay? And if money is hard, okay, Bitcoin, civilization can save for the future. Your Bitcoin is like your gold, okay? You should not be touching your Bitcoin. You should not be touching your Bitcoin. You should not be touching your Bitcoin. You should not be touching your Bitcoin, okay? Keep it in the stash. Keep it locked away. Keep those secret keys locked up, okay? Don't be touching that Coinbase card. Don't do it. It's not worth it, guys. Okay, so let's stack it up. Let's stay down. Okay, spend that credit. Okay, spend that credit and build it back up. Spend that credit, build it back up. Pay your bills, spend that credit, build it back up. Keep hustling, keep grinding. Okay, spend that credit. Fiat currency, unlimited, pretty much almost not real. But think something like Bitcoin, okay, something like real assets like gold, okay, that there's limited resources and actually exist, okay? Whether you're buying the gold, ETF, etc., just understand that investing into assets that have value are going to be a lot more worthwhile than hoarding fiat currency for no reason. So let's jump into the next slide. So the verdict of everything, okay, we're witnessing a global competition between two monetary operating systems, okay? You got the debt path. Okay, fiat requires inflation to service global debt. So your savings are the fuel for the system, okay, eating it all up. And then you got your true savings path, okay. Bitcoin, it's an exit valve, okay, a savings technology that cannot be debased by any central authority, okay. And this is not financial advice. Do your own research, okay. Do your own research, okay. I'm not saying go take all your money, dump it into Bitcoin, but do your research, check it out. Okay, check it out and do your thing. Okay, stay prayed to God. Keep grounding. Head over to stackmode.net for all trading education. And I'm going to catch you guys in the next one. Peace.
Trading without discipline, you might as well go take yourself to the slot machine. And God says not to do that for a reason. You can be extremely disciplined and you can grow your account to 5, 6, 7 figures just by staying consistent. I want to teach you guys about being disciplined and about taking accountability because I want you to get to the next level. Let's go and let's jump into it, inshallah. So the accountability hierarchy. So not all accountability is created equal. You must construct layers of defense against your impulses. So level 1, So system accountability. So the hard stop. Automated rules that are physically set on your chart, okay, and set in your brain that prevents you from trading, such as a broker daily loss limit. You can go into your broker settings as well too, and have a certain amount that you can lose per day and per trade. Especially on that futures, you're gonna want to set your loss limit, especially if you're struggling with over trading, struggling with yourself, okay, and peer accountability as well too, or mentorship. Head over to Stackmode.net if you're looking for mentorship. A trading buddy on the same journey really helps you. Okay, helps you share plans, not just P&L, because I really care about getting you guys better. And a coach, okay, such as myself, someone with more experience who can spot behavioral leaks that you might miss normally. And systemized accountability prevents the action even in the first place. If you got your stop loss order down placed, right? Let's say you're in a setup, okay? If you got your stop loss order placed down and you got your take profit already placed down, it's going to be a lot harder to crash out when you already have your orders placed down in the proper areas. But if you come into a scenario where your stop loss, your take profit, your orders aren't placed down, and say price goes below your stop loss, okay, there's going to be times, because you're a human being, where you could potentially just ultimately freeze, okay? You might freeze. It might be hard to close because you don't want to lose a certain amount of money that's past your stop loss, okay? So this is why it's going to be really important for you guys to play with a stop loss and take advantage of your limit orders on your brokers. And data entry as accountability. If you don't track it, you can't improve it. Your journal is the evidence log of your business, and screenshots are going to be mandatory. Okay, try to keep it in a Discord. You can go ahead and put it inside of a Notion, and I'm working on the Stackmode app right now where you guys can also put your trades in there as well too. And emotional tagging. Record your state of mind. How are you feeling? You know, were you feeling pretty happy? Were you sad before the charts? Were you feeling quite mellow? Okay, all of these different factors and emotions are going to determine how we are for the day. Okay, are you greedy? Okay, revengeful from yesterday? Ask yourself these questions. And then the feedback loop. Okay, accountability isn't just writing it down. It's the review process at the end of the week or the day, asking yourselves, why did I take this trade? Where did I take this trade? Okay, why, where, and what did I make from this trade? Okay, so ask yourself why you took the trade, where you took the trade, and what did you get out the trade? Okay, and before every trade, write down your setup criteria, especially in the beginning. Ask yourself, does this line up? Okay, if you're going to play a pullback, for example, okay, if you're expecting price to curl back in an upwards direction after downtrending, we're going to ask myself, okay, did price create support? Did price create an area of resistance causing it to fall down in the first place? Okay, do I have 2 to 6 4-hour or daily candles going in an upwards direction after a heavy selling period? Okay, if so, I'm going to go ahead and take my long and take my best opportunity. So I have these things baked down into my brain of my criteria of what I'm looking for a setup. If I'm going to take a short, for example, I'm going to ask, okay, if I'm on my daily or 4-hour, is there an area of resistance to the left? Looking for a resistance mirror. Is there a reason why price wants to dump here again? So having your plan written down is really going to help you bake it inside of your brain. Okay, and the goal is to bake everything inside of your brain. Okay, as human beings, we can make mistakes, but through repetition, discipline, and grind, inshallah, and prayer, most importantly, we can definitely build this habit, the successful habit. So let's continue going. So a mentor, also known as the partner protocol, okay, structuring the relationship. So choosing a random person from Discord often fails. Okay, you need a structured agreement. Okay, you could sign up at stackmode.net and get some trading mentorship. You guys can speak with me for free for the first call. Then from there, we'll go ahead and I'll give you a price and we'll talk about how I can make you guys better investors and traders. Try to have scheduled check-ins. Okay, this way you guys are going to be able to meet your status quos, improve, and have a more of a reason to be more educated and bring better results to your mentor or your coach. Okay, and a good partner and a good coach is going to criticize your mistakes. I try and just make sure you guys are always catching the right setups, and I don't high-five your wins all the time. Okay, I want to ask you guys, did you follow your plan? Not just worried about, did you guys make money? Okay, even if you guys did make money, I want to ask you, was the setup correct here? Was it greedy? Was it an accident? Etc. Because I want you guys to make sure you're understanding what you're looking at wholeheartedly. and screen sharing. So I screen share my setups, and you screen sharing for me, for example. If you sign up for my mentorship, it really helps you, because then from there, you're not just looking at somebody else mark the setups, you're going to be able to mark the setups on your own. And avoid coaches or partners who are also struggling with massive discipline issues. And the blind leading the blind creates a toxicity loop where you validate each other's bad habits. So that's why ideally it is a lot better to get a coach or a mentor, somebody who's just on the better side, and it's going to be a lot easier to improve. So social pressure is extremely lame. Do not worry about what anyone thinks on this planet about your trades, about your money, about your P&L. Okay? Who cares what they think? Who cares what people have to think? Okay, who cares if you've been trading for a while and people think you're not going to be successful at it? It doesn't matter. Does not matter. Leveraging the fear of embarrassment for positive gain is going to be building in public. So posting plans, not just P&L. So try and post your plan before the market opens, especially early on in my career. That really helped me build a lot of confidence, like posting my certain setups and then seeing things play out. And now if you deviate, then you would look foolish publicly. Okay, and the Hawthorne effect. Humans perform better when they know they're being observed. Okay, and risk. So be careful not to trade for the audience. And the goal is to adhere to the rules, not just showing off profits. There was a little season in time where I was on prop firm, making really good winning days. But then I would crash out my account on like right before a withdrawal day due to the fact that I wanted to just have a big giant withdrawal that I could flex to everybody. Okay, so I had to start trading for myself, had to redo my mindset and get detached to the money and work on my own spirit. And you can create a small private Twitter circle or just a Twitter where you can tweet your setups as well too, and your breakdowns as well, and it really does help. And you could really have a lot of people come in as well too and see the same things that you see, and building that public confidence. Be like, you know what, this trade I believe will go here, and being able to say that and stand on that, and then it happens, builds a lot of confidence. Okay, so if you want, try and post your trades on Twitter, Discord, share them with a friend or somebody, and it really does help. And gamification is really going to be important to understand. Okay, so rewire your reward system to prioritize process over outcome. So the carrot, it's going to go ahead and be the reward. If you follow your plan 100% for the week, regardless of the profit, okay, treat yourself to a non-trading reward, whether it be a nice dinner, a massage, or something like that. Okay, whether you guys like to go outside on runs or hikes or whatever, follow your trading plan and then live your life. The more you follow your trading plan, inshallah, the more money you'll be able to have, and the more you're going to be able to live your life. So fix some balance with that. Live your life and then enjoy your trading. Live your life and then enjoy your trading. And that's going to motivate you to stay a lot more disciplined. And the stick, it's punishment. If you break a rule, then that means that you're going to be banned from trading for 24 hours. No exception. Okay, if you break a rule, then you need to unplug your keyboard, lock it in the closet, and you're not going to be allowed to log on for the day because you broke your rule. And that's going to bring a really big neurological shift. So eventually your brain is going to associate following rules with pleasure rather than just winning money. Okay, and give your accountability partner, whether $500 or something like that, or your mom or something. And for every rule you break, then they keep $50. And the immediate financial pain of breaking a rule stops the behavior faster than a futures trading loss. Okay, I do not want you guys destroying your account in 1 second. So if you take a loss, take it extremely seriously and discipline yourself. If you care, you need to discipline yourself. If you ever overtrade, if you ever crash out, if you ever buy too early at an area that you know wasn't confirmed, discipline yourself. Okay, this way it's going to be a lot easier for it to not happen again. You have to be your own business person. You have to be your own boss and your own parent. Okay, let's head over to the next slide. In the forensic analysis, so post-mortem. So accountability, it's useless if you don't learn from the data. You must be a detective of your own failures. And reviewing the why. So did you just lose because the market was choppy? Or did you lose because you were impatient? You didn't wait. Waiting is going to be the number one thing that separates a profitable person from a not profitable person. Is literally just waiting. You have to wait for the setup to come. You have to wait for the market to form the way that it needs to. Okay. And categorize certain errors. Identifies an execution error. Did you fat finger or did you buy the wrong side? Did you take a short and then maybe you bought a buy on accident? Okay. Did you take a buy and you accidentally bought a short on accident? Okay. Analysis error. Did you read the chart wrong? Did you think price was in a downtrend the whole time it was in an uptrend because you weren't on your higher time frames? Ask yourself these questions. Analyze what went wrong. A lot of times there's a reason why you lost. And psychological error. Did you enter out of FOMO? Okay, fear of missing out. Or did you enter on revenge? Ready to crash out, ready to tweak, trying to farm for some money back again. And then guess what? It just doesn't happen. It just leads to more gambling, more random impulsive decisions. It makes things really, really hard. And the fix. Create a specific rule to address the most common error found in your review. And traders find 80% of losses. Okay, let's just say a trader finds 80% of losses happen between 12 p.m. and 1 p.m. Okay, that's going to be the lunch chop. And during that time, European market is no longer active as well too. And the new rule, okay, they're going to tell themselves, you know, I'm accountable to not be on my desk during lunch hour. So they don't place down a trade, destroy their account for absolutely no reason, trading at the times that they don't even like. And the compound effect of discipline. Consistency is the only grail in trading, and accountability bridges the gap between knowing and doing. So small wins. Being accountable for one small rule today builds the muscle for bigger rules absolutely tomorrow. And the equity curve. An encounter trader's equity curve is smooth, and an undisciplined trader curve is jagged, stressful, super duper high, super duper lows, and sporadic. You want your account to be looking consistent and slowly curving up like this. Okay, in the infinite game, you're not trading to win today, you're trading to stay in the game forever. Accountability ensures survival in every way. And discipline is doing what you don't like to do, but doing it like you love it. Okay, and accountability makes sure you do it even when you don't love it. Okay, so real trading is going to be pretty boring. It's never going to be like, oh my gosh, we'll do it. Like a lot of times when you're on your higher time frames, waiting for confirmation, you already know what you're looking for days ahead of time. So when it finally comes, it's more of like, oh, finally, it's here. Because it's a patience game. All right, so that's going to go ahead and be it. Head over to stackmode.net. I want to be you guys' accountability partner. Make sure you guys are setting hard stop loss and take profit limits so your trade automatically closes and you don't have to worry about that. And commit to the post-mortem reviews. Okay, read your journal. Jot down anything you need to in here, and it really helps you be a lot more successful. So let's go and let's jump into these charts. When the dollar starts becoming worth less, people start running to assets such as real estate, gold, and silver. Today, we're going to talk about how to invest into gold and silver, why you should invest into gold and silver, and what inflation is, and why people run to asset classes in the first place because the dollar starts failing. Let's jump into it, inshallah. So gold and silver are going to be hard assets that are going to be pretty safe to invest in, especially in an inflationary world where things just get more expensive over time due to the fact that more currency just gets generated over time. So the problem, the currency devaluation. So purchasing power is melting over time. So inflation isn't just about prices going up over time. It's about the value of the currency going down. So prices go up to correlate with that. So governments print money to service debt, which dilutes your savings over time. This is why I tell you guys all the time about the asset river. Okay. You want to always try and have your assets and your money flowing in your river. If things logically get more expensive year after year after year after year, then you have to have your assets flowing in a way that your money is always making you more money. Okay. So once again, I'm going to repeat, your money should always be making you more money. Okay. Don't get outplayed by the certain calculations that just debase in the world normally. If things get more expensive over time, then logically, in order to counteract that, in order to feed yourself and your family, your money should always be making you more money. So we'll talk about the 1971 shift. So that's when Nixon ended the gold standard And since then, the US dollar has lost over 85% of its purchasing power. And the hidden tax. Inflation helps debtors, which is pretty much just the government's, but it hurts savers. Anybody just stacking up cash in your bank account. If you have just a whole bunch of cash stacked up in your bank account, it's actually doing nothing but hurting you. Okay, even if you've worked overtime for a job before, okay, you might have seen that you've actually had to pay more in taxes. Okay, the more cash that you have just stacked up stationary, the more that it hurts you. And it transfers wealth from you to the state, which goes back to the government. So in 1920, 1 ounce of gold bought a high-end suite. And today, 1 ounce of gold would be about $2,600. Okay, so it still buys a high-end suite. And the gold stayed constant and the dollar collapsed. Okay, so keep that in mind. The gold stayed constant while the dollar collapsed. So that means that having your money parked in an asset class like real estate, people are always going to need houses. Gold, people are always going to be wearing jewelry. And other asset classes that stay constant and only rise up while the dollar collapses are going to be the asset classes that you want to focus on for the most part. So gold, people call it the ultimate hedge. A lot of the times, if you pull up the chart, you'll see gold year after year after year after year heading in an upwards direction. Okay, it's not stopping. And due to the fact that something has to counteract the dollar. So gold is going to be the human standard that people just use whenever the dollar is crashing or the economy isn't in a good place. So here's why central banks buy it. And central banks are going to be the banks where me and you bank at. Okay, the banks that hold our fiat currency, where we can go pull out our money to pay our bills, go to the ATM, etc. And the fear trade. So gold performs best when real interest rates are negative. And that's when inflation is higher than bond yields. Okay, and central bank demand. So in recent years, China, Russia, and India have been buying record amounts of gold to de-dollarize their reserves. Okay, so they're trying to de-dollarize their reserves in a significant manner. Okay, buying less time storage for their fiat currency and buying more time on their actual currency by investing into assets. Okay, you're doing nothing but losing time if you have more fiat currency. So fiat currency needs to be thrown into the river immediately. Otherwise, you're wasting time. Think of theta on options, if you're familiar with that. Over time on a stock options contract, the options expires. Okay, think of your fiat currency the same way. Okay, if rent over year after year after year after year gets more expensive, if 1 year a house cost $200,000, but then 5 years later it costs $500,000, that means that your asset class has to be in a constant river, each and every single one of them. Okay, all your businesses, your profit has to be being reinvested into that. More stocks, more shares, more cryptocurrency. Okay, buying more houses if you're in real estate, etc. Okay, buying more land, and you could do whatever you want with the land. You could farm on the land, pay people to host ATMs on the land. Okay, people could build stores on your land. People could build antennas, cell towers, etc. But when you own assets and you keep stacking up your assets, it gives you a multitude of opportunities to be presented in front of you for your money to just make you more money because you invested in the right things. So volatility. So gold is slow, and it's not for getting rich. It's for staying rich, and it's wealth insurance, not a lottery ticket. Okay, so stacking up gold over time. A lot of people might buy certain jewelry. Okay, go smelt it, take it to the jeweler, whatever, and either the jeweler will give them an exchange rate for the gold. So you're going to have multiple ways to invest in the gold too, which we're going to talk about. If you don't want to go the actual physical gold route, you're also going to have the ability to buy things like shares, etc. So let's jump into it. So silver is going to be the industrial hybrid. So it's the green energy paradox. So silver is unique, and it acts like money during crisis, but trades like a commodity during booms due to massive industrial use. So as far as conductivity, silver is the most conductive metal on Earth, and it's essential for electronics, 5G, and EVs. So for modern technology, silver is going to be needed. So silver is also going to be something you could invest to too. If you ever see a pullback on the charts or anything like that, silver is going to be an asset class that goes up year after year after year after year very confidently, especially while the dollar is collapsing. And let's talk about the solar boom. So photovoltaic cells, okay, solar panels, consume massive amounts of silver. As the world goes green, demand explodes. Okay, So photovoltaic, okay, that's just solar panels. Solar companies are booming all over America, all over the world, and other countries as well too. Okay, especially countries with less green, less trees, taking advantage of that solar energy. So seeing silver going in an upwards direction year after year after year would make sense. Try to plant your seeds with things that make sense with the future, whether it being putting smiles on people's faces or helping people work throughout the day by day. Silver is needed in absolutely everything. And let's talk about the gold to silver ratio. So it's historically about 15 to 1. So 15 ounces of silver will give you 1 ounce of gold. And today it's often 80 to 1. And many argue that silver is undervalued relative to gold. And we'll see how that starts changing, especially during the AI era. When we start seeing robots and certain things start getting developed, the use of silver could go up in an industrial rate. So there's going to be two ways to invest. So you could either have a bunch of bars, whether it be it silver bars or gold bars, stacked up. Some people do that, put it in a safe or leave it with the bank, etc. Some people also have jewelry. You could buy Rolexes, Audemars Piguets, Patek's, certain chains, real Cuban links, whether it be it bracelets, chains, etc. And some people take it to the smelter, melt down the gold, take that to the jeweler, and then you can go ahead and get some money for that. Or you're going to have the digital way, which is going to be via stocks and ETFs. So you could buy shares that represent gold. So in the stock world, it's going to be the GLD. So if you want to buy gold shares, you'd have to look up GLD. You could also buy gold options as well too. I have some recaps posted on my channel, some wins I've taken on that. Used to trade that a long time ago. And SLV is going to be for silver. And then for miners, as far as the mining industry, in order to mine the asset classes of gold and silver, you can look up GDX. And the pros of them have very high liquidity. A lot of people trade gold, from Forex traders to stock traders, options traders to futures traders. Golden is extremely, extremely popular asset class that's traded. It's low fees. It's easy to hold in the Roth IRA as well too if you just want to buy shares and hold. And the cons, you don't own the actual metal. So if the fund fails, then you have a paper claim, not actual gold. And as far as investing in the miners, it gives you leverage. So if gold is up 10%, miners might go up 30%, but they have risk as far as fuel costs, strikes, etc. And the physical side of everything, you have no counterparty risk, total privacy, and it's useful in extreme disasters. That can be true and also not true. Your house could burn down, etc., and then it could be hard to get to the gold bars. The gold could maybe survive depending on how long it's in the fire, but still, that could be relative to a lot of cases. And cons, you got to worry about security. Hey, you can't be letting everyone know that you got a whole bunch of gold bars stacked up. That's not going to be ideal. Okay? You got to keep that very private between just you and your family. And storage issues too. When you start stacking up more gold bars, having a safe might be hard if you're trying to move houses or something like that, etc. Okay. And it can be hard to sell quickly. You got to go to the smelter, melt it down, and then go to the jeweler, get an exchange rate on that. And they might give you a lower price than you might actually should get because they're trying to make some money too. You know, it's the world. We're all trying to make some money. And tax. So it's often taxed as collectibles too, which is a 28% capital gains in the United States rather than stocks. So a strategic allocation. So how much is going to be enough? So most financial advisors suggest precious metals should be a hedge, not your whole entire piece of the pie. So be conservative, 5%. Okay, it gives you just enough insurance to sleep at night. If you want to have a couple of gold bars in real life, then that would be fine too. And just keeping your asset classes divided in certain scenarios could really help you, especially during hard times. You might not have access to the internet, and you might need to go take the gold bar to someone who could exchange it for either some fiat currency or a car or just an item that you need. So having multiple sources of backup plans for your income is really, really going to help you. And gold pays no dividends. If you do just have the actual gold bars, it just sits there. So try not to just invest 100% of your money into gold, or you're going to miss out on compound interest. And not even interest, but just
compound equity curve just in general. Whether you invested into a stock that goes up year after year after year, due to the fact that it's just making tons of profitable decisions, then you don't want to miss out on that. If you have one gold bar, 10 years later, if you don't do anything, if you don't get up and keep grinding and keep hustling, you're not going to have any more gold bars. Okay? But if you invest and put $1,000 into a stock, 10 years later, you could have did nothing and come out with $100,000. Okay, so having your asset classes divided is really going to help you. But there could be a time where you need to pull all your money out of your stock account and you have gold bars and you can exchange that, put it right back in your stock account. So there's going to be different scenarios and different floats, especially jewelry too. If you have any real gold jewelry that you don't care about, I would think about smelting it. Gold is extremely, extremely valuable, and just keep that in consideration. So is it a good hedge? I'm going to go ahead and say yes, but here's to clarify your goal. If you want to get rich, then focus on stocks, business, crypto. And if you want to stay rich and have protection over your purchasing power over decades, gold is going to be an extremely, extremely good standard. And if you want a speculative play to invest into, you could play gold futures. Gold is on Forex. Gold has stocks and shares you could trade. And same thing with silver too. So you could just make your decision in order to protect you over time. Take a look at the chart before you trade. If you're struggling with what to invest in, head over to Stackmode.net. Stay prayerful to God. Keep grinding. Catch you guys in the next one.
Yo guys, it's Stackmode Chris here. Today we're going to be talking about what calls and what puts are in the options trading space. Let's jump straight into it. Options 101, the core concept of a contract. So the definition, right, not obligation. So what is an options contract in the first place? So an options contract gives the holder the right, but not the obligation to buy or sell an underlying asset, like 100 shares of a stock at a specified price, before a specified date. This separation of right and obligation is the fundamental difference between buying a stock directly and buying an option. So let's talk about the contract size. Standard contracts in the US represent 100 shares of the underlying security. So whatever option you purchase, you're technically purchasing 100 shares in a leveraged time asset manner. So when you buy one contract, you now control 100 shares worth. And the premium. This is the non-refundable price you pay to the seller for the right granted by the contract. And it's the maximum amount an option buyer can lose. Let's talk about time constraint. So unlike stocks, options have a fixed expiration date. And if the option isn't profitable by that date, it typically expires worthless. So calls. You're going to play calls if you think price is going to go in an upwards direction. It's the bullish tool. A call option grants the buyer the right to buy the underlying asset at the predetermined price when buyers expect the price to rise in an upwards direction. Okay. And let's talk about puts. Okay, there's hedge tool. A put option, okay, so once again, a put option grants the holder the right to sell the underlying asset at a predetermined price. So put option is going to be bought if you think price is going to go in a downwards direction. Okay, if you think price is going to fall in a downwards direction, then you're going to go ahead and buy a put option. Okay, and it's important to understand the concept of leverage as well too. Options allow you to control a large block of shares. Okay, so it's 100 shares per contract. Okay, so it's a lot of leverage. Okay, it's a lot of power you're gonna have to control. Okay, when you start trading options, you're gonna realize that it's a lot different than Forex, futures, anything else. Okay, that's a couple of factors that come into its profitability. It's not just you get paid based off of directional advice. There's going to be time that comes into place, strike price that comes into place, etc. Stuff we're going to talk about and get into. So you pretty much purchase 100 shares for a relatively small upfront cost, which is at the premium. And this magnifies both potential gains and losses. Okay, so if you're a good trader, you can really take advantage of this leverage. But if you're someone who's not consistent, you could get punished. So time. So let's talk about the call option. Profiting from the upside. So once again, if you think price is going to go in the upwards direction, then you would go ahead and purchase a call option. If you think price is going to go in a downwards direction, you purchase a put option. An analogy I always tell my students, is call. What do you do to call? You pick up the phone. And what do you do once you're done with the phone? You put down the phone. Okay, so think of put down the phone and call, pick up the phone. So profiting from the upside. When you buy a call, you're predicting that the stock's price will move significantly above your strike price before the expiration date. So buying a call, right? Let's talk about a long call. So you pay the premium and your maximum loss is limited to that amount. And your profit potential is essentially unlimited if the stock soars. So the purpose of it, right, is speculation on a stock price increase or buying the stock cheaply if exercised. And your max loss is the contract cost. So if a stock option contract costs you $500, the max loss you could lose is $5. You can't lose any more than that. Okay, it's not leverage in that sense with margin. Whatever the contract costs is the max you can lose. It's pretty amazing. But the profit you can make is going to be unlimited. It's crazy. So the max profit is unlimited, theoretically, as the stock can rise indefinitely. So there's been times where people have turned $5K to $300,000 on certain pumps and stuff like that. Options is amazing. Okay, thank God for options. So let's talk about selling a call, right? A short call. So it's when you receive the premium up front and you're betting the stock price will stay below the current strike price. So the strike price is going to be the current price. So if you ever hear the strike price, it's the current price. So you're betting that the stock price will stay below the strike price. Okay. So the strike price is going to be the price that you think the options contract is going to be going to. Okay. Typically the price that, you just want your options contract to go to. And the purpose of it is to generate income. Okay. To where you can bet against significant upward movement. And as far as the max loss, right, it can be unlimited as the stock price can rise infinitely, forcing you to buy high. And the max profit, right, it's going to be the premium received. So for example, $200. So here's a call option example. So let's say stock A is trading at $50 and you buy a $55 call. The reason why you buy a $55 call is because you think it'd go up to $55. Even though it's trading at $50, if you think it's going to go up to $55, then that's going to be a contract you're going to go ahead and purchase. Okay. And so going back here, so the strike price is going to be the number that you want to buy, okay, non-current price. So if stock A closes at $60, right, and you bought a $55 call contract, you'd make a lot of money. You're getting paid based off predictions. So if you think price is going to go to 70 and it's at 60, if you buy a 62 calls contract, that's in between 60 and 70. So any strike price contract in between 60 and 70, you're going to be able to purchase successfully. Okay. So stock A closes at $54, right? And you thought it was going to go down to $50 and you bought a put option, okay? Then you'd be in the negatives, okay? If you bought a 50 puts and price at 54, okay, and price hasn't hit that, you'd probably be in the red, okay? Say price at 60, you bought it at, let's say you bought it somewhere near 60, right? And then you think price is going to go down to 40, okay? If price A goes up to 70, that's further away from 40. Okay, so your put contract would then be in the negative. Okay, so the further away of the opposite side would make your money go to the downside. Okay, so if you think it's going to go up and the price starts going down, you'd be losing. If you think the price is going to go down and the price starts going up, you'd be losing. So the put option, protecting against the downside. So buying a put is like buying insurance, and it gives you the right to sell your asset at a fixed price, limiting your losses or allowing you to profit from a price drop. So buying a put, right? Let's talk about long puts. So it's when you pay the premium for the right to sell. And this is the primary tool for betting on a drop in the underlying stock price. So you can speculate, which pretty much means you place a bet on directional bias, okay? Or you can hedge, which means you buy puts and calls whenever something's going to happen to protect a long stock position. And your max loss is going to be whatever you paid for the contract. So if you pay $300 for a puts contract, your max loss would be $300. And your max profit, okay, would be limited for a put contract as the stock can only drop to one, it can only drop to zero, and there's only a few instances of that happening. But if something's profitable and really helps the economy, there's short sale restriction laws to really prevent things from tanking down to zero like that. So keep that in mind. So selling a put. So especially when you're trading the crypto and stock market too, keep that in mind. Okay. When you're trading against a market where people are trying to buy and hold their money, expecting it to go up. So your downside trade is going to be pretty limited. So keep that in mind. So let's talk about selling a put, right? Short put. So it's when you receive the premium and you're betting that the stock price will stay above the struck price. And your risk is substantial if the stock crashes. So the purpose of this is for income generation. Okay. Or you could put on an aggressive bet on upwards or sideways movement. And your max loss can be substantial. Okay. And the max profit is going to be the premium received. And a put option example. Okay. Let's say current price is at 70. Okay. Let's say you think price is going to go down to 60. Okay. You could buy any contract in between 69 and 60 in order to try to make some profit. Okay. Now, if price goes up to 75, you'd then be in the negative profit. Okay. But if price goes down any number between 69 and 60, you'd be in the positive profit. So decoding the details, right? The essential terminology. So let's understand 4 terms that they're vital to really interpret any option chain. So the strike price is the agreement price. This is the fixed price at which the option buyer has the right to buy, call, or sell put at the underlying stock. And this price is set when the contract is created. And the expiration date, it's a deadline. So every contract has an expiration date. The further you buy out, the better. We're going to talk about leaps here soon. So what a leap contract here is. So a leap contract is pretty much just a really, really, really long contract. Okay, so it's whether a couple of months or you have some years on the options contract. Typically, you want to make sure you have your options contract for at least months or years. Okay, this way you guys aren't going to be getting destroyed by what's called the Greeks. Okay, some crazy things that could destroy your profit if you don't position or do your research. So the premium, right? Let's talk about what that is first. So the premium is the market price of the option contract itself. So you're going to see options contracts in decimals. So you're going to see an option contract be like 1.70 or something like that. Okay. Or you'll see like 2.10. And what you're going to do, any decimal that you see on the options contract, you're going to have to multiply it by 100. Okay. So that would equal $210. So 1.70 times 100 would equal $170. Okay. 0.75 times 100 would equal $75. Okay, so keep that in mind whenever you guys are trading options and you just see a bunch of numbers with decimals and stuff like that going on. Okay, that's what's happening. Keep that in mind. So moneyness, right? The profit status. So this refers to the immediate profitability of the option if exercised right now. And let's talk about in the money. It means the option has intrinsic value and immediate value if exercised. So for a call, stock price, or strike price. And for a put, you're going to be doing strike price over stock price. Okay. So at the money, it's when the strike price is equal or very close to the current stock price and contains only time value. And let's talk about the term out the money. It means that the option has 0 intrinsic value. And for a call, the stock price to be less than strike price. For a put, stock price would be greater than the strike price. And these only consist of time value. And rule of thumb, out the money options are cheaper, but they have a lower probability of becoming profitable. And the money options are more expensive, but they carry less risk. Okay. So that's the reason why in the money options focuses on the stock price. Okay. Especially for certain things like a call, for example. Okay. In the money option, you want to try and play or buy a strike price contract that's going to be as closest to the current price as possible. Okay, so focus more on the stock price more than you're focusing on the strike price level at the times. So let's talk about Greeks. Okay, these Greeks can be absolutely crazy. Okay, these are going to be things that could destroy your profit if you don't understand them. Okay, it could really destroy your whole portfolio, destroy a lot of things you're working hard for. So let's understand them. So the Greeks are measures of the sensitivity of an option price, right? The premium, to changes in key factors like time, price, and volatility, and they're crucial for serious risk management. So let's talk about the delta, right? So the delta tells you how much the options price to change for every $1 change in the underlying stock price. It also represents the probability that the option will expire in the money. And the theta. The theta measures the decrease in the option's value, right? It's the premium for every passing day. And as an options buyer, theta is your enemy. Once again, as an options buyer, theta is your enemy. As an option seller, theta is your friend as you profit from the time decay. Okay, but theta is typically a negative value. So gamma. So buying options and selling options are going to be two different things. I'm going to make a completely separate video on that. Buying options, you're wanting the direction to happen. Selling options, you're selling options to people. You're pretty much selling dreams to people. That's pretty much what selling options is, selling dreams. So gamma. Gamma tells you how much the delta value changes for every dollar change in the underlying stock price. And that doesn't mean a good selling dreams too. They're pretty much betting on you to lose. Okay. And it's gamma is going to be the rate of acceleration of your options profitability, and it's the highest for at the money options. Okay, and it's always going to be positive for option buyers. So the Vega, right? Let's talk about volatility. So Vega measures the change in the options price change for a 1% change in the expected volatility of the underlying stock. And high Vega means that the option is sensitive to market sentiment and expected price swings. So the investor's perspective. If you're buying an option, you want high positive delta, high positive Vega, and low negative theta. And if you're selling an option, right, selling dreams to people, betting on their optimistic goals, okay, or optimistic views, betting on them to lose. And if you're selling an option, you want the opposite. You're looking at profit from the time decay, okay, the theta, and you want a stable stock price for the most part. Okay, that's just what you're going to be looking for as a seller. It's going to be two different games between buying options and selling them. Okay, two different games. So some basic strategies, right? Long versus short option. All basic option trading can be broken down into two core activities: buying contracts, okay, that's for going long, or selling contracts, okay, going short. So let's talk about buying options, okay, long calls and long puts. So this is generally the starting point for beginners because the risk is defined and limited, and you pay the premium upfront. So it has defined risk. If you think prices are going to go to a certain place, you buy the contract for it in the direction that you want. Calls if you think it's going to go up, puts if you think it's going to go down. So you have a defined risk when you buy options, and your maximum loss is the premium paid. You can't lose more than the cost of the contract. But due to time decay, and this is why you would pay a leap contract. So a leap contract is going to be a contract over like 3 months to a couple of years long. So any contract with months on it, years on it, that's a leap. So you won't have a high probability of loss. Okay. So in order to counter high probability of loss, make sure you guys buy time. Okay. Buy leaps. Please don't try to trade 0 DTEs and weeklies and you don't know what you're doing. So due to time decay, theta, most options expire worthless. So this is why it's important to buy certain contracts close to current stock price. Okay, focus on the stock price. And you need a fast, large move in your favor to overcome the premium cost sometimes. Okay, but if you play options like shares, where you're buying options contracts years out or months out, expecting to hold for a long time, you can outplay the system. Yes, they cost more money, but trading is not just about making money. Okay, don't just focus on the trades that are going to make you money. Focus on the trades that aren't going to lose you money. Focus on the trades that are going to preserve your money. Focus on the trades that are going to keep you safe. And options has leverage returns. If the stock moves favorably, the percentage return on your initial cash outlay, right, the premium, can be really huge. So let's talk about selling options, right? Short calls and short puts. It's when you collect the premium up front. And this requires a much higher level of caution and often higher margin requirements. So there's going to be unlimited risk involved in between selling options. Okay. So for short calls, selling uncovered calls has theoretically unlimited risk, making extremely dangerous for beginners and a high probability of gain, right? Since most options expire worthless, depending on which ones you do, let's say price is at 60. If you sell an option that's at
75 and somebody's optimistic and they buy that, okay, then you would make money, okay, because they didn't win. So it's trading. When you make money, somebody's losing. When you're losing, somebody is making money. Okay, that's just how trading works. So since most options expire worthless, the seller has a statistical edge and profits if the options expire out the money. Now, if you're really, really, really good at the market though and eyeballing certain things, you could definitely slam buying options for sure. But the defined reward. Your maximum profit is strictly limited to the premium collected when you open the position. And a critical risk note, right? Never start by selling naked uncovered call options. This means selling a call without owning the underlying stock. If the stock unexpectedly surges, your losses can really wipe out your account really, really fast. Okay? And stick to just buying options until you have the advanced experience with risk management and margin to sell options if you wanted to. So, options give you the right, but not the obligation, to buy speculative direction. Calls give you the right to buy, and puts give you the right to sell. So remember, calls are what you purchase if you think price is going to go in an upwards direction. And you're going to buy puts if you think price is going to go in a downwards direction. And risk is defined when buying options. Okay, your max loss is going to be what you pay for. If you pay $400 for a contract, you're going to lose $400 max. But guess what? The profit you can make is infinite. Okay? God is great. So theta is going to be the time decay. In order to counter that, make sure you guys are buying months out. Okay, buy months out, years out, and give yourself time. And shorter term options are riskier due to high theta. So even though they might be cheaper and look more intriguing, stack up, get in a stack and buy the contract that's going to really get you to where you need to be. And practice first. Make sure you guys are paper trading. Try it out. Make sure it's what you guys like before you put in any type of real capital. All right. I want you guys to stay creative to good. Keep grinding. I'm going to catch you guys next one. I love you. Peace.
Yeah, let's go and let's talk about impermanent loss and DeFi. Let's talk about it. Let's explain it and let's jump straight into it. So what's DeFi in the first place? DeFi stands for decentralized finance. Decentralized is going to be a network to where there's going to be no middleman involved. So say you're trying to send $3,000 through a bank, for example. Okay, you, the person, would then go ahead and send the transaction, but the transaction would have to go through the bank first. The bank can go ahead and determine whether or not they want to decline it or put the transaction through. If they say no, then the transaction will be sent back to your account. But using decentralized network, or also known as the blockchain network, transactions can get sent from one person to the other quickly and automatically using smart contracts, which also provides security in order to make sure everything is decentralized. There's no centralized control and everything can automatically be done. So everyone can just get their bread from one person to the other extremely easily and efficiently. And some key components include lending, borrowing, trading, and liquidity provision. And anyone with an internet connection can participate, promoting financial inclusion. So anyone around the world can go ahead and hop into these crypto markets and start trading. And some risks include that smart contract vulnerabilities can go ahead and be in place, and market volatility. So make sure you have your risk parameters in place so you don't just lose money that you aren't prepared to lose. Okay, make sure you know what your stop loss is, you know where you want to close as far as your take profits, and understand the chart before you start throwing any type of money into the markets. And in DeFi, decentralized finance, users maintain control over their assets through non-custodial wallets. Like unlike traditional finances, where banks hold your money, okay, this shift powers to individuals, but requires personal responsibility for security. So cryptocurrency pretty much gives you the ability to be your own bank. You can go ahead and send your currency whenever you want, pretty much almost instantaneously, and go ahead and receive your codes. Okay, and it's going to do this by a long code that you guys can copy and paste, send it to people, or receive someone else's code in order to send money to them. Okay, and if you mistype the code, though, the money can be sent to somebody else or be lost in the void. Okay, so make sure all codes that you do within cryptocurrency as far as sending money, make sure that everything is exact, make sure it's everything that you need it to be, and pay attention. In traditional finance, you deposit money in the bank, which lends it out and pays you interest. And in decentralized finance, you supply assets to a protocol like Aave. And this is where borrowers pay interest directly to the suppliers, okay, via smart contracts. And what are liquidity pools in the first place? Liquidity pools are the backbone of decentralized exchanges, also known as DEXs. And they're smart contracts that hold reserves of 2 or more tokens, allowing users to trade without order books. And a pool might contain equal values of Ethereum and USDC. And liquidity providers, also known as LPs, they deposit tokens to earn fees from trades. And trades adjust the pool's ratio based on constant product formulas. The liquidity pools ensure that continuous liquidity is being added into it. Okay, so continuous money is always being flown within the decentralized and crypto markets, unlike centralized exchanges. And popular platforms like Uniswap, SushiSwap, and Balancer are all included too. And the security relies on audited smart contracts, which are the autonomous contracts that make the cryptocurrency space run automatically to prevent exploits. And liquidity pools can be permissionless, which allows anyone to add liquidity. And the concept originated with Uniswap's automated market maker, also known as the AMM model, where the product of tokens quantities remain consistent. Okay, so say for example, a value of X times Y equals K. So for example, creating a liquidity pool, suppose you deposit 1 ETH. Okay, let's say 1 ETH at the moment is just worth 2K for this example. Okay, and let's say you do 2K of USDC. That's a stable coin that goes off of the fiat currency US dollar. Okay, so what a stable coin is pretty much a cryptocurrency version of fiat currency. What fiat currency is a country's natural currency. So USD is going to relate to USDC, for example. Okay. And the pool now is a constant product of 1 times 2,000, which equals 2,000. And if someone buys 0.5 worth of Ethereum, they must add enough USDC to maintain the K equals 2,000 value. So how automated market makers work in the first place? AMMs are protocols that use mathematical protocols or mathematical formulas to price assets in liquidity pools, enabling decentralized trading. There's some constant product models. It's going to be X times Y equals K. Okay, so X times Y equals K. And that can be calculated via the Uniswap V2. And there's a constant mean model for multi-asset pools. Okay, and Balancer does that. And trade shift reserves, which change the prices. Okay. And slippage occurs on large trades due to the pool size. And LPs receive LP tokens representing their shares. And arbitrars keep the prices aligned with the external markets. And Uniswap V3 introduced concentrated liquidity to promote market efficiency. And flash loans also integrate with AMMs for complex strategies. So going in depth, the constant product ensures that one asset's quantity decreases and its price increases relative to the other, mimicking supply and demand dynamics. And trading in an AMM. So 10 Ethereum and 20,000 USDC. So let's say K equals 200,000. Okay. The price, $2,000 for USDC / Ethereum. Okay. So you'll buy 1 Ethereum and at 2,222.22 USDC. Okay. That's going to give you a new X value of 9. Okay. A new Y value of 22,222.22 and a new K value of 200,000. And the price rises due to the fact that the amount of Ethereum was reduced. And arbitrage, an example of it. If the external price is 2,100 USDC, traders buy from a pool until a line, profiting and rebalancing. So let's talk about impermanent loss and permanent loss, also known as IL. Impermanent loss is the temporary loss of value experienced by liquidity providers due to price divergence of pooled assets compared to holding them outside the pool. And impermanent loss occurs when asset prices change after depositing. And impermanent is because it's unrealized until the final withdrawal occurs. And it mainly affects volatile pairs more than stable ones. It's calculated as value in pool versus the value of held. And it's not a bug, but it's a feature of the AMM design. So it's supposed to occur. And impermanent loss can be offset by trading fees earned. And it's a lot worse than one-sided price movement. Okay. And in detail, when prices diverge, the pool rebalances automatically. But LPs end up with one of their more depreciating assets and less of the appreciating one. And here's a simple analogy. Imagine sharing apples and oranges. If apples become more valuable, the pool is going to give you more oranges for cheaper and fewer apples if they're valuable, leading to loss versus just holding them both equally in the first place. And impermanent, also for IL, okay, impermanent as prices returning to original ratios eliminate the loss, but the fees accumulate regardless. So here's a simple example of a permanent loss. So let's say you deposit 1 ETH for 2K. Okay, so 2 bands worth of Ethereum plus 2 bands of USDC. Okay, that's going to give us a total value of cryptocurrency of 4K. Okay. Let's say the Ethereum price then decides to go upwards to 4K. Okay. So remember, we bought it at 2K though. So let's say Ethereum goes to 4K. The pool is now going to rebalance. So now 0.707 ETH. Okay. We're going to add that plus the 2,828 USDC value, which is going to give us a value of 5,656. And if held, then that 4K Ethereum plus $2,000 of USDC is going to give us 6K. And the impermanent loss, okay, we're going to calculate that by grabbing the 6K and minusing that by the 5,656, okay, which we got from getting the 0.707 ETH plus the 2,828 USDC, which gives us the value of 5,656. Okay, then the original 4,000 plus 2,000 gives us the $6,000 value of USDC. Minus those, and it's going to give us an impermanent loss of $344. Okay, and the STI is going to be 5.73% loss. And the AMM sells some Ethereum for USDC as the price rises, leaving you with less Ethereum when it's more valuable. So the K value is going to equal 1 times 2,000, and that's going to still equal 2,000. Okay, 1 times anything is going to equal the original value. And the new price would be $4,000 for USDC / Ethereum in the pool. Okay, so it's going to be your K value divided by your new price ratio, okay, but simplified, and the loss is going to increase with price deviation. So detailed mathematical calculation of impermanent loss. For a deeper understanding, let's derive the impermanent loss formula. So let's assume there's a 50-50 pool. So we'll do 1/2, okay, 50-50. And let's talk about asset A and asset B, okay. That's going to give us a price ratio of 1, okay. And the new price ratio is going to be P, okay, times value B divided by value A. And the whole value is going to be the initial A times value B plus initial B divided by value P. Okay, and the pool value would be 2 times the initial A times the initial B times the P. And a permanent loss, okay, would equal 1 minus 2 times value P. And then we would divide it 1 plus the initial value of P. Okay. And for P equals 2, that'd be 100% increase. So the permanent loss would be 5.72%. And for P equals 4, the permanent loss would be 17.16%. And as P approaches infinity, then the impermanent loss is going to go ahead and approach 100%. And the formula shows impermanent loss is symmetric for price increases or decreases, and it depends only on the ratio change. And here's an advanced example. For a 10% price change, P equals 1.1. The impermanent loss would equal 1 minus 2 times the square root times 1.1. Okay, divided by 1 plus 1.1, which is going to equal 0.045%. Okay. And for 400% change, the P will equal 5, and the permanent loss would be 21.8%. Okay, and once again, as P approaches infinity, as the number increases, the impermanent loss would increase, and it could approach 100%. And some factors affecting the impermanent loss. So volatility. So once again, volatile pairs such as the Ethereum, Bitcoin have a higher impermanent loss risk in the first place. And correlated assets such as stable coins have minimized IL. So like USDC / USDT, something like that. Okay, they have nearly zero impermanent loss due to the fact that there's pegs. Okay, not a lot of fluctuations in between them. And the time of the pool, the longer exposure increases the impermanent loss probability. And there can be higher pool fees. Higher fees can also offset the impermanent loss and price deviation. Larger changes cause exponential impermanent loss. And pool weights, non-50-50 pools alter IL dynamics. And larger pools have less slippage but similar IL. And market events as well too. Black swan events amplify IL. So news, be on the lookout for that. And in practice, choose pairs wisely. Okay, determine what you want to play and make sure you're not going to go and be taking losses, trading something that's too volatile, hurting your account in the long run. We're here to make some money at the end of the year, not just get some instant bread in our hands right now. Stablecoin pairs like USDC, USDT, once again, have near zero IL due to pegs. Okay, and they have a real factor impact. During the 2022 crypto crash, LPs and volatile pairs like ETH/altcoins, for example, suffered a massive and permanent loss, and prices plummeted unevenly. Okay, so make sure you're monitoring on-chain data for volatility predictions. Keep checking your charts. And here's some strategies to mitigate permanent loss. Okay, provide liquidity for correlated assets. Okay, and Uniswap v3 allows range-bound positions. And in permanent loss insurance, protocols like Bancor offer protection. And you can also hedge too. You can use options and futures to offset losses. Okay. And short-term provision. Enter/exit during low volatility. And automated managers. You can use vaults like Yearn for optimized LP, and diversified pools means that it's spreading across multiple pairs. And you can calculate break even by ensuring your fees is larger than your expected IL. In Uniswap v3's ranges lets LPs act like limit orders, reducing apparent loss exposure outside of the ranges in general. And here's a mitigation example. In Bancor, single-sided staking, okay, which is going to be used to create like Ethereum, for example, instead of POW, which is used to create Bitcoin when power is exchanged. Okay, so single-sided staking with apparent loss protection. And after a vesting period, the protocol compensates for losses via token emissions. Always do your own research. No strategy is going to be risk-free. Okay. And here's some pros and cons of providing liquidity. So pros, you can earn trading fees. So you can get like a 0.3% on Uniswap, for example, and it can help you earn passive income. So you can get a lot of rewards from farming, okay, if you're staking or through LP tokens. There's a lot of support ecosystem too. It boosts DeFi's liquidity. And the more people trading is going to be the better. And compounding. Okay, you can reinvest fees for growth as well too. Okay, and opportunity cost. Locked funds miss other gains, and gas fees can be high on Ethereum sometimes. Okay, and sometimes smart contracts can be susceptible to hacks or bugs, but as laws and regulations decide to come on through, then things start to get more secure. And net outcome is going to depend on the volume, okay, the fees, versus the volatility, okay, the apparent loss. So net outcome, okay, it's going to be the fees versus implied or apparent loss. Okay, and during bull markets, high volume offsets apparent loss, and in bear markets, apparent loss dominates. Okay, and tools like APY.vision help track your apparent loss versus your fees. Okay, so stay prayed to God. Keep grinding, and apparent loss is a risk in AMM liquidity provision due to the price changes. Okay, balances with fees and rewards are a possibility, and you can use mitigation strategies like concentrated liquidity in order to help yourself out. Throw your trades and calculate and monitor your apparent loss in your positions, and the decentralized finance community is always evolving, and you can stay informed at Stackmode Network to learn how to trade. Okay, I'm going to keep dropping for you guys. Keep grinding. Stay prayed to God. Keep grinding, and don't ever give up. Catch you in the next one. Peace. Hey, welcome to Stackmode.net. Two things I want to do. I want to put a smile on your face, and I want to help you make some money by trading. Okay, so here's an example of a trade that I gave in my Discord here. So all we're going to do is understand some logical processes here. I teach stocks, Forex, crypto, options, as well as futures. Okay, and trading each of them is going to be fairly similar, but different for each sector. So whatever you specialize in, I can help you. Let's say we're trading the stock market, for example. I know that stocks have an incentive to go in an upwards direction due to the fact that these companies employ people. Okay, these people then pay taxes to the government. Okay, so as long as these companies go upwards in an upwards direction, the richer they're going to get, which means they're going to expand further, which will lead to further opportunities to employ people. So let's say, for instance, I'm trading the stock market. I personally wouldn't short the stock market. I'm looking to play call options or buy shares, catching my V directional fill. So as you can see here, I have an area of resistance above current price here. And as you can see, I have just some empty space here. And price decided to blast straight through it and fill in this area. Let's talk about how I caught this setup here. So here I can identify two things. We're going to have areas of resistance. Areas of resistance are going to be areas where price decides to fall in a downwards direction. Okay, and then we're going to have areas of support. Support are going to be areas where price decides to bounce in a upwards direction. Okay, using support and resistance together can lead to some very, very nice setups. So as you can see, market can only go in two directions, either up, okay, and once again, if market's going to go from a upwards bounce direction, that's going to be called support, and if market's going to go in a downwards bounce direction, that's going to be called resistance. Okay, so let's understand some things. So resistance can be broken and turn into support. So here I have this area of resistance being created. As I can see, market's falling downward here. And once the area of resistance decided to get broken, it decided to turn into some support. And then price went in the upwards direction. Okay, and I know that price in the stock market at least wants to go to all-time highs. Okay, same thing for cryptocurrency. There's tons of coders behind these tokens, tons of people putting in a lot of effort, wanting to see the token or the stock succeed. So of course the share price or token price wants to go in an upwards direction. So I play until areas of resistances for my take profit. So as you can see, resistance got broken here, turned into support. And then price would have met with the area of resistance and decided to do it again. Resistance got broken, turned into support, and then looks like price wants to keep going in an upwards direction. I try and make trading as easy and simple as possible for you guys. You guys see all the reviews from my students. I try and make it simple for you, and I adapt to your life. Okay, here's how the class system works. So one, I offer 10 classes. Okay, these 10 classes can be stretchable however long that you want. Okay, it could be between 10 weeks, we could do 10 days, or a class every 2 weeks. Whatever your schedule is, we're gonna be flexible, and I'm gonna maintain a optimal workflow for whatever you trade, your schedule, and what type of person you are. Okay, so I'm gonna catch you guys in the free call. Go ahead and book the calendar. Stay prayed up to God. Keep grinding. I'm gonna catch you guys in the next one. Peace. Let's master technical analysis the easy way. Charts isn't going to be that difficult, and once you learn how to run chart, you know how to read everything. So I'm going to give you guys the best sauce and the best strategies in order to read this chart and make the crypto markets pretty simple to trade. So one, starting off on the main thing, you're going to be needing to use your higher time frames. So your time frame is going to depict on the amount of candlesticks and how much candlestick price action you're seeing. So if I'm on the daily time frame, for example, each one of these candlesticks will represent 1 day worth of price action. Okay. If I'm on the 4-hour time frame, each one of the candlesticks will represent 4 hours worth of price action. If I'm on the 1 minute, each one of these candlesticks will then represent 1 minute worth of price action. The reason why we're using a higher time frames is because we want to be seeing the overall trend on the higher time frame scale. Okay, so year after year, and you have to understand that everything from the left that happens on the chart reacts with what we see to the right today. So everything correlates, everything works together, and we're going to be able to mash it all together. Okay, so now that we know that information, if we use our daily levels, okay, and we put the levels from the left to the right, we can go ahead and put out some trades. Okay, so let's talk to you about some different models, some different stuff I'm going to talk about, and how we're going to be able to introduce them into making profitable trades on the chart. So areas of resistance. Okay, so when you see me mark areas of resistance, it's going to be an area where sellers are going to come in from. Okay, understand that the chart is a left to right chart. Okay, so price action, let's say price action started all the way over here. People are going to take profit eventually. People are going to want to make their money. They're going to want to sell. Okay, so whenever you see price have periods where price dips down after making a high, that's going to be called an area of resistance. Okay, so resistance is going to be an important key factor to knowing where, okay, this is where sellers came in. Okay, so opposite of resistance, there's going to be support. Support is going to be an area where price decides to bounce in an upwards direction from. Okay, so this is going to indicate an area where buyers step in. Okay, so buyers are going to be trying to buy here, so then price can go up in an upwards direction from here. Okay, buying is stepping in since price is going in an upwards direction. Okay, and then when you see price making sharp downturns, that's going to go ahead and signal an area of resistance. Okay, so both of these things are going to be extremely important to go ahead and keep note of. Okay, so resistance has to be broken in order for price to progress in an upwards direction. Okay, so we know the goal of the cryptocurrency market a lot of the times is for cryptocurrencies to go up in price. Okay, so people are trying to gain APY, annual percentage yield, percentages on their dollar. Okay, I know I definitely am. Okay, by buying and holding and investing in something with value. Okay, so when you do that, you're going to be able to progress a lot faster, inshallah. So, noting that, we can determine that, okay, the goal of cryptocurrencies is to go up in a certain value. Okay, so if price starts at $100 one year, maybe the next year, price might head over to $10,000. Okay, so let's go and let's check out the chart, for example. So if I check out Bitcoin, I can check price is currently at 113,104 as of right now, today. Okay, so price is all the way up here. If I check 2 years ago or 3 years ago, I can see price all the way down here near the 15,000s area. Okay, so price is at 15,000 all the way down here. Okay, and price is now at 113,000 in just 3 years. Okay, price has increased that much value exponentially within an upwards direction. Okay, so now that we know that, okay, the goal of the tokens and cryptocurrencies are to go up over time, we can go ahead and put that and plot out some really solid, good trades. Okay, so let's go and let's check it out. So back to the drawings here before we jump into the chart. Areas of resistance, once again, have to be passed in order for price to progress with an upwards direction. So resistances have to be broken and turn into support. And then price can go ahead and blast up in an upwards direction. Okay, so once again, resistance can be broken and turn into support. It's not going to happen every time, but when it does happen, that's going to be a really good solid way in order to play a pullback. So let's say price is currently above and it goes back down to an area of resistance, it can turn it into support. Okay, so then price can go ahead and sweep up and you're going to be able to buy a low at the right time. Okay, or you're going to see price decide to bounce at an area of support twice. Okay, so if price decides to hold an area of support twice, then that's also going to be a valid way in order to determine, okay, you know what, price wants to head up in an upwards direction. Okay, so it really just determines on what you're looking at, okay, and the certain type of trades. Okay, so even if price is still going up here, price makes an area of resistance right here. If it comes down, turns resistance into support, I'll go ahead and swoop up and show up. Let me show you an example of this on Bitcoin. So I'm on the daily time frame here. I'm gonna go ahead and zoom in. So I can see price decides to create an area of resistance here. Okay, the major area of resistance that there's always gonna be is all-time highs. Okay, so all-time highs, also known as ATH, is gonna be when price is at the highs. Okay, it can't go any further. Okay, and this is the furthest price that it's at. Okay, so it's when the highest area of resistance is created. Okay, and price is trying to break it in order to continue further. Okay, so check this area out here. So check out this area of resistance here. We'll go ahead and zoom in. So you can see that this is an area of resistance due to the fact that price wants to fall in a downwards direction, okay, from this area. So price decided to meet up with the top of this candlestick here and fall within a downwards direction. Okay, price went all the way up from this low. Okay, went all the way up from this low. Okay, 2 candlesticks bounce at the areas of support on the daily. Okay, 2 separate days. Price decided to bounce all the way up, stop here. Okay, once it stopped here, this price decided to get broken over here. Okay, so an area of resistance isn't going to keep getting tapped over and over again a lot of the times. Eventually, price is going to attempt to break the area of resistance, turn it into support. Okay, and then price is going to try and head up in an upwards direction. Or price is just going to break the area of resistance and just break out. Okay, and just head up in an upwards direction. Or price is going to head in the breakouts direction. Okay, it'll happen. It'll break out a tiny bit and then pull back all the way down. Okay, that's going to be called a fake out. Okay, in order to avoid fake outs, you're going to, for breakouts, you're going to play break and retest. Okay, a lot of the times break and retest, you're not really going to get faked out. Okay, especially if you wait for your 4-hour close, which is when you're waiting for the time that you can see over here to the right. Okay. to finish. So let's say we entered at this black line. I would not enter at this candle here because it's in between the black line. And I would not enter at any candle that touched the black line. I would enter at a candle up here, okay, above the black line. So this way, if price decides to burst down below the black line, I'm not going to be upset that I lost, okay? I'm going to go ahead and just take the closed candlestick, okay, and take the trade this way. This way I know that, okay, you know what, price might want to go ahead and sweep up, okay? So the earliest entry might not always be the cleanest time to buy a lot of times. Sometimes it's better to just trade the confirm entry, okay, and just wait. So this right here would go ahead and be a good example, okay, of a close that I'd be waiting for, okay? And then my take profits, I'm going to go ahead and set it for either all-time highs, depending on what I'm playing. If I'm playing cryptocurrency or shares, I'm playing for all-time highs. Buying at dips, and I'm playing for all-time highs. Okay, I'm going to be waiting for price to sweep all the way up, okay, and to do its thing, okay? So you're just waiting for price to do its thing, okay? And once again, areas of resistance like these up here, okay, are going to be your take profits. If you're playing along and you're waiting for price to go up, okay, your areas of resistance are going to be your take profit. So up here's an area of resistance, okay? Up here's an area of resistance, okay? And both of these areas of resistance are going to go ahead and be able to be played, okay? So make technical analysis simple when it comes to trading cryptocurrency. So I pray up to God. Keep grinding. And head over to Stackmode.net for all trading education. Peace.
The strong reasons why market's going to be going in upwards directions is due to the fact that these stocks help the United States economy. That's going to be the strongest reasons, and there's a reason why the billionaires within the trading community are people who play United States stocks companies, whether owning shares and options such as Warren Buffett, etc. Because it's going to be honestly the easiest market to play. Forex market is very sideways. Futures you can't hold overnight unless you have a certain amount of margin. So the United States stock market and even cryptocurrency is going to be great realms to just buy and hold your money. Okay, so let's go ahead and continue the lesson here. So these stocks aren't just random stocks listed on TradingView or these brokers so people to just make invisible money. These stocks are real companies that people actually work at, okay, that we might have worked at in real life, okay, and they generate real income. So since they generate real income, they can also employ people. So they can employ people. And when they employ people, these people pay taxes to who? The government. Okay, so as long as these companies are making money, okay, and people are working at these companies, then the government will continue to make more money. So these companies being profitable, these companies doing well, these companies making money, they help out the government. And anything that helps out the United States government will be pushed. Okay, that's just what we know about trading and just fundamentals of things. Okay, if it helps the government, it's going to be pushed. Okay, there's a reason why cryptocurrency didn't get a big push until SEC laws and stuff like that were regulated. Okay, so until the government regulates it, and unless the government has something to do with it, it's not going to have too much value until then. But every single one of these stocks boost the economy since they put jobs out for people. Jobs include people who pay taxes. Taxes go to the government, making the United States more wealthy. Wealthier we are, more power we have over other countries. Okay, so it all starts from just simple things like wealth. So options and the fact that these shares and stocks go up in an upwards direction is really important. Okay, it's way more important than people even think. Okay, so market's not just, oh, I'm going to come on here and just make some money. Okay, it's real life stuff happening on these charts, and really understanding everything is going to help us understand what we're going to be trading for. So market's going in an upwards direction. So this is why we're going to be focusing on call options. Okay, so as we know, call options, they pay you whenever you think price is going to go in an upwards direction. Okay, if you speculate and you're buying a call option and you think price is going to go in an upwards direction and you're correct, then you get paid. Okay, so that's going to be a call option. And the reason why we're going to be focusing on call options is exactly what I just broke down. These stocks have incentives to go up. There's also going to be laws such as the short sale restriction that are going to be in place too to make sure that these stocks don't just fall flat down to zero. Okay, there's a reason why decades of these stocks of going in an upwards direction has been a thing. Okay, so it's about letting go of all the fear, trusting God, not having any weird anxiety of, oh, what if it just falls down to zero and it's time to start just investing and being a boss. Okay, so we're going to be talking about the proper levels to play at. Okay, and we're going to keep talking about why we're playing at these levels and what we're buying. Okay, I always want you guys to understand why. I never want you to just be like, okay, just do X, Y, and Z and just do this. It's going to work. No, I want you to understand the deep reasoning why this works, why people are billionaires buying just shares and call options. Okay, so it's about finding things that are undervalued and catching the sweep up. Okay, every company wants its share price to go down. It doesn't make sense to really play puts due to the fact that market is not built to go down exactly. And even when market does go down, exactly. Even when market does go down, people are quick to buy the dip. People are quick to buy the dip, and market will recover right back to wherever it dipped from heavily. It'll fill it right back up. All it is just a discount. All it is just like clothes and cologne and whatever. It's just going on sale. That's all it is. Market just goes on sale whenever it falls down. So puts don't really make sense to purchase, especially when you get on your higher time frames, especially when you're playing companies that have good revenue and actually make money and the share price increases year after year. Playing puts, not only are you going to have significantly shorter trades, your take profits aren't going to be as easy to put down because one, you can't predict where the market's going to bounce at. Okay. So you can't predict where the market wants to stop at all the time. Now, shorting and stuff like that comes really from Forex traders and is something that's seeped over to the stock market. But the Forex chart and the stock market chart is completely two different worlds. Okay, stock market just goes up in an upwards direction. Okay, and that's just the truth of it. Okay, if I pull up the Forex chart here, Forex is extremely sideways. Okay, you have price action all the way up here. We got price action all the way from here from 1977. We got all types of stuff going on. Okay, but if I click on the fluffy stock market, it's literally going up in a straight line. Okay, it's almost impossible to not make money in the stock market. This is why I'm so passionate about teaching in these videos. I'm starting to realize that they've literally made it to where we can just get money for free. It's welfare. It's genuine welfare. Instead of making stupid decisions, trying to flex for people who don't care about us, trying to make decisions that are just way too fancy right now instead of staying down and investing. Okay, those are the things that keep people back from being financially free significantly early. The opportunity is here for us to just invest money and infinitely turn your money into more money. This just goes up in a straight line. It's impossible for anyone to not make money on the United States stock market. It's impossible. Okay, and it's about just making really good decisions. So price has an incentive to go up. So forget put options. We're focusing on calls. Okay, we don't want to be shorting the stock market. There's a reason why you can't even short the stock market on a lot of brokers too. You also have to think about that from a logical perspective. Most people on most brokers cannot short with shares. Okay, they can't short with shares. They can only purchase shares. So everyone's trying to just buy the stock. Also, CEOs are trying to be richer than the next CEO. So they want their company's share value to be going in an upwards direction. They want to be classified as a billionaire. So also more incentivization to go in an upwards direction. And there's also something called dividends. Dividends are going to be what the stock pays out. So the more you invest into a stock, if a stock is making good income, it'll pay out what's called a dividend. And that's going to be money that it pays out back to the shareholders. Okay, so it's like, you know what? Thank you guys for investing in us. Here's some money back. Okay, here's your reward. And that's what it's going to go ahead and say. Okay, so if a company has enough money to do that, that means that it's profitable. If it's profitable, it's most likely going up on the stock market. Okay, so there's incentive for it. The more profitable something is, the more it's going up on the stock market. Hence why when a company makes a big deal, it just shoots up. Okay, because it's now more valuable. Okay, the more money and the more valuable something is, the more of a high share price it'll have on the stock market. Okay. So, cool. That's keeping those things in mind. So now let's talk about when a setup is going to be good to play and when not. Go. So let's say, for instance, here, I have this area up here. Okay. One area that we're not going to play at is going to be called all-time highs. Okay. We're just not going to be playing at all-time highs because, one, we're trying to catch a sweep up. Okay. So all of your setups will look like a V. Every single setup will look like a V. Okay. And what your profit is going to consist of is the right side of the V. Okay. So the left side of the V is going to be the resistance. Okay. This is where price is falling in a downwards direction. So you can see here, you could see price creating resistance here. Okay. This is the left side of the V. Price is falling down. Okay. The left side of the V. What we're looking for is playing the right side of the V. Okay. We're playing the right side of the V. All of your trades are going to be the right side of the V. Okay. You're going to be buying call options, expecting price to sweep up. Okay. That's what you're going to be looking for. So how can you play the right side of the V if price is falling the left side at all-time highs? You can't. Okay. So let me show you a good example of an actual good setup. So this is how we find a setup. What I'm going to be looking for is a couple of things. One, I'm going to be looking for higher time frame areas. So I'm going to make sure that I'm on my higher time frames. I'm going to make sure I'm on my weekly time frame first. My weekly time frame is going to help me see everything. It's going to be my eyes. I'll go from my weekly time frame to my daily time frame to my 4-hour time frame. Okay, so you're going to start off on the weekly time frame first, due to the fact that the weekly time frame is going to help you, once again, see everything. It's going to be like an eagle eye, okay, because tunnel visioning when it comes to trading can be extremely bad. Okay, you want to be able to see the full picture and not just what you're seeing on a smaller time frame. You're then going to go to the daily just to see the picture painted a little bit in more detail, and then you're going to go to the 4-hour to see any hidden candles. So what we're going to make sure is that whenever you're on your 4-hour time frame, and this is why we can't just use the daily and the weekly, we have to make sure our extended trading hours is on. So as you can see, the daily and the weekly don't have that. That's due to the fact that they don't show pre-market hours because the weekly and the daily go off of 24-hour blocks. So that's why we still need our 4-hour time frame. And then we're going to be able to turn on extended trading hours to see all the true candlesticks that we're missing. Okay. So So yeah, extended trading hours always needs to be on. So we're going to go from the weekly to our daily to the 4-hour. So let's go ahead and let's mark out a setup, for example. Okay. I'm going to talk about what I'm going to be looking for, and then I'm going to jump onto the charts. So my setup is only going to consist of 2 things. I'm only going to play setup 1, which is going to be a support mirror. Okay. If you see price bouncing at an area of support, you're going to be good to go ahead and purchase there. Okay. If you see price bouncing at an area of support, reacting from another area of support, okay, that's going to be a good area to purchase. Support is going to signify an area of demand where people want to buy the price. So it's going to indicate where buyers step in. Okay, so buyers step in an area of support. And we're buying call options, meaning we get paid when price goes in an upwards direction. Okay, so we want to be buying at areas of support. Okay, so if you see an area of support mirror itself one after another, that's going to be a good setup. Or it'll look like this. Sometimes you'll have an area of support. Price might run down through it. Okay, it might not bounce at the other area of support. It might break below it. but then it might come back up and bounce at the support again. Okay, even this would be considered a support mirror. Okay, so even if price runs down underneath the first area of support, if price decides to bounce at the area of support again, that's a clean support mirror, I like to call it. Okay, so you'll either see one area of support bounce right after another, or you'll see an area of support mirroring an area of support from the past that maybe didn't get reacted off of immediately. Okay, so your setup will either look like this or it'll look like this for criteria number 1. And criteria number 2, very simple. It's when an area of resistance gets broken, and an area of resistance is going to indicate where sellers are. So resistance indicates where sellers are due to the fact that people have too much supply. So that's why resistance gets created in the first place. There's too much supply. When people have too much of something, when they've made too much money, they're like, all right, you know what? It's time to close. I'm out. Okay. And then they're going to go ahead and close their trade simultaneously. And a wave of enough people doing that is going to create what's called resistance. Okay. That's going to create resistance. So let's continue on here. So if an area of resistance decides to get broken past, okay, if an area of resistance or support gets broken past, we know that's called a breakout. So resistance getting broken past and turned into support is going to be called break and retest. Okay, break and retest. Okay, waiting for resistance to turn into support after it's been broken. So it's when you're waiting for the resistance to turn into support after it's been broken. Okay, if you see this, you can take the trade pretty much safely. Okay, we're going to talk about some certain criteria, how to read daily closes, etc., what a close is. But let's talk about some more fundamentals we are going to be looking at. It's important to have a logical mechanical process before we put down any type of size or money. Okay, did price do this? Did price do that? Having a large checklist is going to save us a lot of money when it comes to making any type of mistakes on the market. Okay, so one thing we're going to pay attention here too is the earnings. Okay, whatever broker you're on will most likely tell you, but before you put down a trade on whatever stock you're looking at, make sure that you look at the earnings. The earnings are going to go ahead and let you know when the report is going to come out, and the stock can significantly make upwards or downward sweep when these earnings reports come out. So we want to be making sure that earnings aren't anywhere near. Okay, if earnings are 7 days or less away, and you're trying to don't open a new trade. If you're already in something, it's fine. But if you're trying to open a trade and earnings are 7 days or less away, don't do it. Okay, because the price action is already going to be weird, and people are going to be wary of the same thing. They're going to wait for earnings to happen first and then make the trade. Okay, so if you see earnings a week away, 7 days or less, don't take the trade. Okay, just don't take it. Now, if earnings is far, you're fine. So those are going to be the criterias we're going to be taking. Let's talk about it on the chart. So once again, we're always going to start off on the weekly time frame, doing what's called top-down analysis, TDA. T stands for top, D stands for down, A stands for analysis. Okay, top-down analysis, TDP, TDA. Okay, so what we're going to do is I like to always mark out, okay, where would I want to close this trade if I got in? Okay, I can see price made all-time highs up here. So let me just go ahead and draw a zone up here. Okay, and I like to just eyeball. Okay, we don't use any indicators. We're not going to need any indicators. What we're going to do is pay attention to straight candlestick price action. Just like I told you, price should be doing the right side of the V fill. Okay, so we can see price decided to fall in a downwards direction here. Okay, this is going to be the left side of the V. Okay, and what we're doing is catching the right side of the V. Okay, we're going to be catching the right side of the V. So let price form the left side of the V, and then we're going to get in and catch the right side of the V. Okay, so you can see price maybe potentially trying to make a low right here. Okay, potentially trying to make a low right here. Let me go to my daily. Okay, I can still see price making a low right here. Okay, I can see, okay, I'm on my daily time frame. So I'm going to get on my weekly, put an area of resistance, put a zone around it. Okay, because I know, one, price has an invitation to go in an upwards direction. Okay, it helps the government, helps the economy. It's trying to go and be the most profitable and helpful company. Okay, it's a lot of recognition, and as human beings, we care about things like that. Okay, so recognition will be coming with being the most profitable and best company. So in order for that to be credible, share price has to be decent. People have to be investing into it. So let's increase the share price. Okay, that's what people are hoping for. So let's drop better products so people buy from us. That is what people are really hoping for who are behind these companies. So let's think like them. Okay, so you can see price deciding to make a bottom here. Okay, so then I'm going to start on my weekly. Okay, I can see just this large gap of space here between here and up here. So here I have the left side of the V. Okay, I have the left side of the V. Price already created it for me. And then price already drew out the bottom point. Okay, so now I'm going to go to my daily here. I can see price drew out the bottom point for me here. Okay, now we can see price potentially wanting to fill up the V. Okay, so what we're going to be doing is catching the whole right side of the V. Okay, so we can see price made the left side of the V already for us. Okay, we can see it. It made it left side of the V. Now, price made a low already. I can see on my daily candlestick, and this is what I'm going to be looking for. Okay, no indicators, no nothing. If I'm on my daily and I see price bouncing from a low, okay, with a large gap of area from an area of resistance, and I see price making multiple daily candlesticks go up in a multiple color stick direction. So I can see here green candlestick, green candlestick, green candlestick. I see multiple green candlesticks in a row. Okay, multiple green candlesticks in a row, just like we have multiple red candlesticks in a row going down. If I have multiple green candlesticks in a row going in an upwards direction, and I see a large area looking to be filled in to fill in the right side of the V, okay, even if price falls down at the resistance and goes down to all the way down there, we don't care, okay, because we can clearly see that price wants to try this area of resistance again. It's like, hold on, how am I going to fall down right here? I'm not with that. Let me try it again, okay, and it's going to try it again. And when it goes to try it again, that's going to be our profit window. That's our opportunity. We're not here to get the best entries in the world. We're not here to predict the most high point of the market, the most bottom point of the market. We're here to react. We're here to come onto the market, scroll down, see, oh, market made a low right here, and it make it high. It looks like it wants to try this high again. Okay, it might want to break this area. And that's what you do, is you react within the market. Okay, and this is going to be the trick on options. So option sellers, right? Before we jump into the trick and why we're going to do what we do, let's talk about it. So option sellers, what they're preying on is that people make some ridiculous gambling dice decision. Okay, they want people to make some just fried, horrific decision. So options aren't just spawning out of thin air. There's a reason why certain stocks don't have any options attached to them. Because one, nobody is selling the options in the first place. Okay, so options are not just spawning out of thin air. It's called trading for a reason. Once again, it's called trading for a reason. Okay, contracts have to come from somewhere, and they come from people turning their 100 shares into a contract and then selling it. Okay, and what they're trying to make money from is that we don't win. Okay, they're trying to make money hoping that we're wrong. Okay, but we're trying to make money hoping that we're right as options buyers. Okay, so here is how an option buyer how we can make some good profit, right? Let's talk about it. So as an options profit buyer, okay, of course we want to make some profit and some money by being in the right direction of the trade, okay? So obviously we're buying calls, so we want market to go in a upwards direction, okay? So in order to outplay the option sellers, we're just going to play not ridiculous bets. So you can see we just did all that criteria to determine if price was ready or not. We looked at another trade and saw it was at all-time highs. We would not buy because that's the between 3 months to 2 years is a leap contract. Okay. So let's say this contract here, right? Let's say I bought this. Let's say I analyze this area of support, right? Let's say I'm like, yeah, price make the bottom of the V here. Okay. Just like a V, a V has a point. Okay. Let's say I like the bottom V here. Let's say I want to go ahead and catch the right side of the V, right? Let's say I believe in this. Okay, I'm like, you know what? I'm on my daily time frame here. I can clearly see market's been trending in an upwards direction for quite some time. Okay. You can clearly see we're just sweeping up year after year after year. You know what? This is a profitable stock. Oh, okay. Cool. We're beating earnings, beating earnings, beating earnings, beating earnings. I like that. We're paying out dividends to people. Okay. I like that. This is going to be a comfortable play. So I would go ahead and purchase a contract that makes sense. Okay. So this is going to be some sauce right here. So I'm going to buy at least a year out if I wanted to. Okay. So I would buy for a year out, okay? Or I could buy 2 years out to be even safer, okay? So let's say I want to buy 2 years out. This is how you know what's going to be the best contract to buy, okay? So what a lot of options people get destroyed on is the theta, okay? And what theta is a Greek, okay? So options has Greeks. We have delta, theta, and gamma, okay? Theta is going to be the Greek that equivalates to time. Okay, so whenever you think of time, think of theta. Okay, so once again, whenever you think of time, think of theta. So in order to outplay the theta, we need to make sure that we have plenty of time on our contract. So the theta and the Greeks don't destroy our mental patience, okay, and make us want to crash out. Okay, so instead of worrying about, oh man, I gotta close my trade in 2 seconds, like I gotta close my trade in a week. Nah, you have years on it to hold. Okay. And you can see price is already bouncing in an upwards direction. So what you're gonna do is whatever the current number is of your options contract, okay, whatever the current number is, and your options broker, wherever you're on, will always tell you. Okay, it'll always tell you, it'll be in the middle of whatever options chart that you're looking at. Okay, the best contract to purchase at all times, okay, is going to be the contract one number above, okay, we're going to purchase the contract one number above the current price. Okay, so if current price is at 26.20, right? What we're going to go ahead and do is purchase the 27 contract. Okay, that's all we're going to focus on since we're buying a call contract. Okay, because we only want to buy in an upwards direction. Okay, just like we broke down, there's reasons why stocks wants to go in an upwards direction and why they go up year after year after year. Okay, and why people get rich by just turning their money into more money by investing into companies that put the money in the government's pocket. So you can get rich by investing in companies by putting money in the government's pocket, inshallah, if God wills. So we're going to go ahead and focus on the call side, since that's the side that pays us whenever options are going in an upwards direction. Okay. So we're then going to focus on the current price. Okay. So let's say current price of this stock is 26.20. Okay. We just did all of our verification. Is price ready on the right side of the V? Okay. If price is ready on the right side of the V and already made a bottom point, we're ready to go ahead and purchase that. We're going to go to our options. We're going to make sure that we're buying at least 3 months to 2 years out, depending on how far your take profit is. Okay. My take profit here, let's say I did on the weekly, I think this gap is pretty big. So just to be safe though, don't be cheap. Okay. Be safe. Okay. Being safe is what's going to get you wealthy within trading. Okay. Focus on the trades that aren't going to lose you money. Okay. People want to trade zero DTEs, trying to make some money feeding for bread, but they end up blowing up their account over and over and over again, not making anything or making some money and then losing it all. Okay. Because it's not safe. It's not consistent. So play options in a safe way. Buy 2 years out and buy the number one above current price when it's already trending in a positive direction. So this way, you're going to get your bonus points too. So this is why we use our higher time frames for options too, because we want to be catching the whole move. Okay, so we're buying years out and catching the whole move. So the higher time frames is going to show us the whole move here. So I can see I would personally close at the area of resistance. Okay, you always want to fill in the V structure. This is why the V structure is important. Okay, price will make the left side, you catch the right side. Okay, and you fill in the V structure. Wherever the V started at, slanting to the downside, is where you close at. Okay, so it's going to be where you close at. So price started resistance here, fell down, made a bottom point. I'm going to keep my profit window is going to be the remainder of the V. Okay, the remainder of the right side of the V. Even if price was up here, okay, I would still be able to catch the remainder of the V up here. Okay, the earlier entry that you see is just the more money you're gonna get. But even if you enter later, that means that you have a higher probability of being right. Okay, and we're here to play safe. Okay, you want to focus on the trades where you're not gonna lose. Okay, you don't know if price wants to bounce down here. But once price has showed you that it wanted to bounce down there, it's a lot easier to get in and make your decisions based off of that. Okay, so let the market react for you. You don't have to predict, just react to the market. Okay, react. Okay, market decided to make a heavy area of resistance here, close at the heavy area of resistance here so we don't get reversed on here again. Okay, we don't know if price wants to reverse right here. Okay, it might not or it might want to. All we know is that price wants to go and give it another whirl, it looks like. Okay, and we're just going to take advantage of that and be happy with that profit. Don't ever try and 50-50 the breakout. Okay, your take profit will always consist of an area of resistance above current price, or it'll be an area of support above current price sometimes. Okay, sometimes your setup's going to look like this. You're catching the right side of the V and you're closing at the area of support. And that's because, just like the opposite, resistance can be broken, turn into support. Support can be broken and potentially turn into resistance. Okay. So we want to keep that in mind and trade safely. Yeah, it's really just taking your time and just letting the market react and do its thing. Okay. So these are going to be the two things we're going to be looking at. Okay. Close at areas of resistance above current price, which a lot of the time it'll be, or support above current price, since resistance can be formed there and you want to get in before market falls down. Since we're focusing on calls, we want to get paid whenever market goes in an upwards direction. Okay, so we don't want market to fall down. Okay, so keeping all this in mind, catching the right side of the V, we know what contract we want to purchase. Okay, I'm gonna go 2 years out. Okay, I'm gonna look at current price, and even though my take profit up here is 29, I'm still gonna look at current price and buy the contract one above. I'm still going to buy the 27 calls contract. The reason I'm not going to buy the 29 calls contract is because options Once again, you get paid based off of predictions. So even though our chart closing is going to be at 29, we're going to buy the 27 contract because all the profit we get is going to be bonus points. Okay, 27 is the number before 29. So even if we bought 28, you would get bonus points too. So any number of a contract that you buy before your take profit will be bonus points. So it makes sense to buy the number one above. So even if take profit was 35, I would still buy 27 just because 27 is before 35. And I would get all the bonus points. I would get, and the more points that you go, so if I bought at 27 and I closed at 35, it would get bonus points per number. So it would be bonus points at 28, at 29, at 30, at 31, 32, 33, because I'm so right. Because I'm right way before. Right? So because I'm so right, it just pays you out stupid amounts. And that's how people just do nasty flips. And I've done some nasty flips on option myself. Okay. So let's talk about another setup here. Okay. So you're always going to want to be looking for a price to be forming at a low. Okay. You want price to have made a low already. All right. And you want price to have made a high too. Okay. So in this instance here, market's still looking for its low. Okay. It hasn't quite made its low. It tried right here. And this is why I like to look at the daily here and wait for multiple candlesticks going in a green upwards direction. Okay. So you can see here, we wouldn't have gotten faked out by that. Okay. So this right here, say this low that people tried to buy, this is why we don't buy what's called falling knives. Okay. You don't know where market wants to bounce at. Okay. You can have a good idea of it, especially when it comes to the upside. Okay. And you don't know if market wants to break out. So if market creates resistance here, I'm going to close at this resistance. I'm not going to say, oh, market's not going to fall down there again. No, I'm just going to close at the resistance. Okay. It's a lot easier to play like this and play to the upside than it is to catch ultimate bottoms. Okay. Just wait for the bottom to form and then play to the upside that's already been formed. It's a lot easier. Okay. So instead of trying to catch every single bottom and then price keeps falling and then you're losing money catching a falling knife, wait for the bottom to form. Okay. Until I'm on the daily time frame and I start seeing green candlesticks going the upwards direction, I'm good. Okay. I want to see multiple green candlesticks in a row before I take any type of trade. Okay. So take some type of low like this, right? If I see price make a low and I see multiple green daily candlesticks in a row going up, I'm like, oh yeah, price wants to do that. But I can clearly see here, like an area like this, price just faked them out here, okay? Price tried to go up, but it's red, okay? Red candlesticks, and they're very sideways, and then market just dumped, okay? But then we have a low right here. Green heavy candlestick. I'm sure this candlestick was green too before the close. And then green candlestick, okay? Super heavy low right here. Green candlestick, green candlestick, green candlestick. Okay, even right here. Green candlestick, green candlestick, green candlestick. Right here. Okay, same thing. Green, 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 green. In a row. So if you're not seeing at least a couple of green candlesticks going in an upwards direction on the daily, then that low just isn't true. Okay, the low is just, it's pointless. Okay, it's what you want to be looking for. Look at this low here. Okay, this low worked out, it formed, and then we started seeing green daily candlestick. See, I would have answered on the second one. I never answer on the first one in the zone because I don't know if price really wants to bounce there. But if I see another green candlestick and then another green candlestick, I'm like, oh yeah, that's cool. But price, it was pretty much close to the area of resistance here, and then we'll see if price wants to continue from here. Okay. So price decided to fill in this area of resistance right here. Okay, we have this area of resistance right here, and then price falling down right here in the zone. Okay. And then one day price will try and break this area potentially. And then we'll try and go up to this area of resistance, I assume, up here. Okay. So could wait for price to find another V and then take the whole side upwards like that. Okay. But right now, it's just not ready. Okay, market is dumping on this, and it gotcha. So here, gotcha. So if I bought right here, I will close my first contract here, just because price keeps spamming this resistance. Okay, I would close, close the first contract here, and then if I have more, then I'll go ahead and I'll close the next one up here. And this is why I buy years out though. But even if yeah.
What's going on, class? Today we're going to be talking about dividend ETFs, and this is going to be a way to passively generate income every single month if done correctly. This is going to be the guide to unlocking consistent cash flow through exchange traded funds, also known as, once again, ETFs. Let's jump into it. So how do dividend ETFs function in the first place? So the collection and distribution process. So let's define the roles of each things. So the individual stocks. Companies like Coca-Cola or Verizon, for example, pay dividends, okay, which is quarterly money that's paid out to people who own a good percentage of shares, which is going to be something purchasable in order for you to be part of the company's infrastructure. Okay, so the more shares that you own, the more power that you'll have within the company, okay, whether it become voting rights or the dividends that they pay out to you. And usually quarterly dividends are paid out to their shareholders from their profits, because the people who bought the stock in the first place helped the stock go up, so they get some money back. That's pretty much how it works. So the whole point of stocks going on the stock market in the first place is so stocks can generate more income and advance the company, and then people can get paid for that. Okay, so the ETF manager holds shares of these individual stocks, and the fund receives dividend payments throughout the year. And the ETF collects all these payments and distributes them to ETF unit holders. And they often smooth out the quarterly payments they receive into more consistent monthly payments for the investor. So the passive advantage, the index following. So class, most dividend ETFs are passive, meaning they track an index, also known as an index of dividend aristocrats. Okay, so for example of that, this drastically reduces management fees and risk of human error compared to actively managed funds. So for example, the ETF receives $1 a share from, let's say, stock A. Okay, stock A is going to be Stackmode. Okay, so let's say Stackmode stock is going to be stock number A in January, and $2 a share from stock B. Okay, let's say stock B is Ben Corporation. Okay, in February. Instead of passing on $3 in March, the ETF might distribute $1.50 in February and $1.50 in March for better cash flow consistency. Instead of you getting paid different amounts every single time, it spreads it out quarterly, so then your earnings is going to go ahead and be paid out within a more spread and even amount. So advantages for passive income investing. Okay, diversification is going to be a big one. Okay, you might be in crypto, other stocks, or you might be a day trader. Okay, putting your money into passive income is going to be the goal. Money's a tool, don't forget. It needs to be used to be making more money at all times. Stay down, stack up, don't buy anything you don't need to be buying, and invest. It's time to get rich, it's time to get wealthy. And dividend ETFs solve several key problems faced by individual dividend stock pickers, making them ideal for long-term, low-maintenance portfolios. And core benefits: instant diversification. A single purchase provides exposure to dozens of companies across multiple sectors. For example, utilities, consumer staples, and finance sectors. And if one company cuts its dividend, the overall ETF payout is barely affected. And ETFs trade like stocks on major exchanges, offering high liquidity, which means there's going to be a lot of people trading them, lots of volume, okay, lots of money being flowed in and out of them, and you can buy one share as little as $50 to $100 and immediately be diversified, unlike mutual funds that often require high initial investments. And investors can utilize a dividend reinvestment plan, okay, to automatically purchase more fractional shares of the ETF with every dividend payout, accelerating growth through compounding. And ETFs require virtually no maintenance. You don't need to monitor the financial health of the 50 different companies. The fund manager handles the portfolio selection and balancing for you. So classification of dividend ETFs: high yield versus dividend growth strategies. Dividend ETFs generally follow one of the two investment philosophies, catering to different investor needs: income now versus income later. So let's jump into high yield ETFs class. So the goal: so maximizing current cash flow typically offers the highest dividend yield. Okay. And holdings.
often composed of real estate investment trusts, master limited partnerships, and high dividend utilities or finance stocks. And trade-offs. High yield ETFs, which are more income focused, have a lower potential for stock price appreciation and often higher sensitivity to interest rate changes. So here's the difference between that and dividend growth ETFs with total return focus. So the goal of them is to find companies that consistently increase their dividend payouts year after year, which means that the company is making more money year after year, and they want to pay out more of that money to their shareholders to just show that the company is healthy and holdings. Okay? So often financial stable, blue chip companies with durable competitive advantages. Okay, for example, dividend aristocrats. And the trade-offs for dividend growth ETFs. Okay, lower starting yield. Okay, often less than 3%, but it has better long-term total returns due to the price appreciation. And a lot of times you want to be trading on the point of where you're not trying to lose money. Okay, so you want to be trading the safest options possible. And the choice depends on your investment stage. And retired income investors usually prefer high yield, and younger investors prefer dividend growth. So crucial metrics and risk, and understanding yield, fees, and market volatility. So successful dividend investing requires looking beyond just the headline yield number. So some key metrics to evaluate: dividend yield, the annual dividend yield payments per share divided by the current share price. And a yield above 6% is often a warning sign of potential future dividend cuts. And the expense ratio, also known as ER, the annual fee that's charged by the fund manager expressed as a percentage of the assets under the management. So class, so you can look for ERs below 0.20 cents, okay, and 0.20% for passive funds. And the fee is always automatically deducted. And the day you must own the ETF share by the entitled time is going to be the time you're going to be able to receive the next distribution payment. Okay, so you must own the ETF shares to be entitled to receive the next distribution payment. And some principal risks. Interest rate sensitivity is going to be something to think about. So there can be a bond equivalent trap sometimes. And when interest rates rise, set by central banks, okay, many yield dividend sectors like utilities, REITs, and telecommunications become less attractive because safer assets like bonds begin offering competitive yields. And this causes the price of the ETF shares to fall, even if the dividend remains steady. And portfolio integration and tax implications, where dividend income fits in your overall strategy. Understanding where to hold these funds and how the income is taxed is essential for maximizing your net return. And tax advantage accounts, let's say Roth IRAs or 401k. And this is the ideal place for dividend ETFs, and all distribution are reinvested or paid out tax-free until withdrawal for traditional or permanently tax-free for Roth, maximizing the effect of compounding. So you can put them in those, but keep in mind that you can't really withdraw your money freely without getting hit by certain penalties. So tax accountable brokerage, and that's just for Roth IRAs and 401ks. So tax accounts, okay, for brokerage. And if held in the brokerage accounts, you must pay taxes annually on the dividend income, even if you reinvest it, okay, into phantom income. And this is necessary if you need the monthly cash flow to supplement living expenses. So tax treatment of distributions. So qualified versus ordinary dividends. If the ETF holds US common stocks for a sufficient holding period, the dividends are often treated as a qualified dividends. Okay. That's the term. And those are taxed at a lower long-term capital gains rate. However, income from REITs, MLPs, and some international holdings are generally taxed as ordinary income. And that's at your higher income tax bracket. And always check the fund-specific tax reporting. And dividend ETFs provide the best blend of income and diversification for the passive investor. All right, stay prayed up to God, keep grinding. If you guys want to learn more about passive investing, you guys can book a free call with me at Stackmode.net. I'm going to catch you guys in the next one. Peace.
What's going on, class? We're going to be talking about options mistakes that we just have to avoid, inshallah, if God wills. Okay, we don't want to be destroying our portfolio, destroying our future, destroying our dreams of buying the house, buying the car we want, living how we want, paying all of our bills and clearing our debt, etc. Okay, avoid these mistakes to avoid destroying your future. Okay, we got people to protect and provide for. Okay, and even yourself, you got to provide for yourself. Okay, so let's go and let's jump into the mistakes that we just absolutely have to avoid. Let's jump into it. So, mistake number one, having a gambler's approach. So, one, you gotta know how options work. Okay, you gotta know what you're doing. You gotta know what expiration date you want to buy, etc. Okay. So the problem that people have when they come onto options is that they see people posting. Okay, they see people making big flips, big giant profit flips, etc. And then they're like, "Whoa, options is gonna be crazy." And they come on with a lack of information expecting certain results. So don't have a gambler's approach. Have a logical approach. Know where you're going to close at. Okay, if you're going to take a long trade, okay, you should know that you should be purchasing a calls contract. Okay, if you're going to wait for an area of resistance to be broken and turn into support and then take it up to the upside, then close at an area of resistance. Know where your take profit's going to be. Know where your entry's going to be. And most importantly, know where your exit's going to be. Okay, don't just hold your trade forever and cook your trade past certain areas, because there's going to be a lot of things that come into play with options, such as theta. And theta is going to be part of what's called the Greeks. Okay, and theta controls time. Okay, so theta controls time. So keep that in mind. Okay, so there's going to be things we can do to get past this. So have a good time horizon. Okay, even if your take profit isn't that many points away, try and buy contracts at least, I'll say 3 months to 2 years out. Okay, and that's going to be called a leap contract. Okay, you want to be buying leap contracts. Okay, you don't want to be buying 0 DTEs, you don't want to be buying a week out, etc. Okay, due to the fact that you're going to be fighting time. Even if you're right, you're still going to be fighting time. Let me tell you guys a story. There's been times where I made $900, I think $30 in a day. Okay, I hedged on a Jay Powell speech. Okay, hedged on a Jay Powell speech, and I was up. I told myself I had a 0 DTE SPX contract. Okay, if you've ever played SPX, it tracks the S&P 500, but it's just a really boosted up version of it on options, pretty much. Okay, compared to the SPY. So I had an SPX contracts. They were boosting up. I'm up around $930. I'm thinking I'm going to hold all day, not understanding how theta works, not understanding how the time works on the options. So due to me thinking that, came back to the trade, and the trade was then in the negatives. Okay, so I went from up being almost $1,000 in a single day to coming back negative a couple hours later. Okay, due to the fact that I got eaten up by theta. Yes, the trade continued in a certain direction, but as the day decided to decline and go on a further downtrend, okay, the market decided to flatten out, killing the 0 DTE contract. Okay, so if a transaction that you buy for a contract is looking to expire on the same day, okay, you can't expect to hold for a long time. You can't see your trade out the way that you want it to. So make sure you guys are buying at least 3 months to 2 years out. Okay, it's gonna really, really be important. And having the gambler's mindset is gonna be the most fundamental error. And options trading offers high leverage, okay, due to the fact that an options contract, it lets you play with 100 shares. Okay, keep that in mind. So options trader offers high leverage, which attracts speculators. Okay, speculators is when you're playing off directional bias, and on options, that's how you get paid. Okay, you're getting paid based off of choosing the right direction. So if the current price is going to be at 50, you think price is going to go to 52, okay, and you buy a 51 or 52 strike price contract and price hits there, you're going to go ahead and make some money, inshallah, if God wills. Okay, so that's how it works. So anyone who treats options though like betting and has a lack of repeatable tested strategy means that your results will be entirely random and often negative by the end of the year. And why it fails. Okay, you could have inconsistent and entry exit rules. You got to know where you're playing at. You got to know why you're playing. Okay, ask yourself why and where when it comes to the market. Okay, where am I going to close? Where am I going to enter? And why am I going to enter? Ask yourself these questions before you press buy or sell. And traders enter on a hunch, right, and exit based on panic or greed sometimes, leading to inconsistent P&L, profit and loss. When you're just closing wherever, you're destroying what's called your risk to reward ratio. Okay, so if you risk $100, you want to try and at least be making $400 or at least $100. Okay, so then you would double your money. Okay, so 100 plus 100 is 200.
Okay. So put that into mind and do your risk to reward. Okay. You could play 1 to 2 risk to reward, 1 to 3. Okay. 1 to 4. Do your math. So, but just try and at least make your return back. Whatever that you risk, if you risk $750, try and make at least $750 back. Okay, so that's going to be a really a 1-to-1, I'll say. Okay, just try and make at least your risk back. So, and journal as well too. Okay, put your trades in the Discord and your notes, your physical notepad, whatever, wherever you want to do. Okay, I'm creating the Stackmode app, generating it right now, where you guys can go ahead and track all of your trades as well too, coming out very soon, inshallah. So you can have some emotional decision making can happen sometimes in the market. Don't do anything that you don't need to be doing. If you're invested heavily into a shares play, okay, don't just pull out your money. Okay, keep it. Okay, if you believe in your view, if you believe in your trade, you can't be disrupting your process because you want to take out some money and be hasty and do something real quick. Go grind and go get some more money. And when it comes to pure candlestick formation, if you see market just go in a big upwards direction, a big burst, and you don't have any logical plan around it, no area of resistance where you want to close at or support above current price or any type of plan behind the trade, just don't take it. Okay, and the solution, right? Define your edge. Okay, figure out what you like. Okay, do you like calls? Okay, you know that market's going to be an upwards trend. There's a reason why market goes in an upwards direction. They put jobs in the economy, and the company pays taxes, okay, which feeds the government, okay, and then the government can help the people, and it's a big cycle. So there's a reason why these stocks want to go up in upwards direction. So choose for focus. So ask yourself, are you an income trader? Okay, do you like cover calls on puts, or are you a volatility trader, where you like straddles and strangles? Okay, stick to one initially, and never enter a trade where the potential loss exceeds the potential gain. Okay, just don't do it. It's not really worth it at all. Okay, take your time. Okay, make sure you guys are getting at least try to get at least a 1 to 2 risk to reward ratio, 1 to 3 risk to reward ratio, and at least a 1 to 1. Okay, never try and go negative with certain things if you want to earn on a good trade. Now, if you lose, but try and make some money on your trade. Try and go for at least a 1 to 3 minimum if you want to start growing your account. And specify the maximum duration that you want to hold for, okay? Because the longer that you have, the more of a risk reward that you can get, because you can have bigger take profits. You can use your higher time frames to look at your take profits, okay? You can use your weekly time frame, your daily time frame, your 4-hour time frame, and set take profits weeks and weeks and weeks away. Grind in real life, wake up, pray to God, go work out, keep building yourself, keep working on yourself, and then boom, trade hits take profit, take the next play, take the next play, take the next play. Since you've been working on yourself so much, then inshallah, if God wills, you have some more capital. Put that into the next play and just keep going hard. So we'll talk about the Iron Condor. So a structured strategy is like the Iron Condor. Okay, it's a non-directional, and it relies on the stock not moving too much, meaning expecting it to go in a flat direction. Okay, and your strategy must detail how far out of the money you place the wings, the expiration date, and the precise profit target, for example, 50% max profit, and where you will close the trade regardless of the market movements. Okay, so keep everything in mind like that. So mistake number 2, right? The silent killers. Let's understand theta. Theta pretty much just equates to time. So options are decaying assets. So as soon as you buy it, it has an expiration date. You can hold shares forever, but options are leveraged. So if you're right in a certain amount of time, you will get paid. And options are decaying assets. And unlike stocks, time is going to be an enemy to the buyer and a friend to the seller. The rate of decay is known as theta, and it accelerates rapidly in the last 30 days before expiration. And the theta trap for buyers. Okay, sometimes there's going to be a steep decay curve, and an option may lose 20% to 30% of its value in a final week due to theta, even if the underlying stock price remains favorable. And buying too close to expiration. Trying to maximize leverage by buying 0 DTE, right? And 0 DTE means 0 days to expiration. It'll expire at 4 p.m. Eastern time, New York Stock Exchange time, and then can't be held overnight, and you have to reopen it again. Okay, or 7 DTE. Options increase the risk of total capital loss exponentially. And the implied volatility rate crush. The implied volatility measures market expectations
of future stock movement. And options prices surge when the implied volatility is high, usually before earnings reports or major news. And if you buy an option high IV and expected event passes without a massive move, the IV would crush, causing the options value to plummet, regardless of the stock's minor price change. And some practical fixes. Options bought with the 45 to 60 days to expiration offers a better balance between data decay and market responsiveness. And if your IV rank is high, right, let's say above 50%, consider selling the options. And strategies like spreads, okay, are going to be in the play too. And if IV rank is low, it's generally better to buy a premium in general. Okay. So, mistake 3, the blow up risk. So, using too much of your capital on a single trade. So, make sure you guys are trading between 1 to 10% of your account per trade, okay? And choose whatever percentage that you want and just stick to that, okay? Don't over leverage. Even if you hit a big giant chunky play, you make the most money in the world, okay? Stay between your risk parameters, okay? If you have $1 million, then the max that you ever want to trade with is 100,000, okay? You need to be doing it like that, okay? Break it down, okay? Break it down. Or I'll say 10,000. Yeah, 10,000, and break it down like that. Okay, decide how you want to trade and how you want to grow your portfolio. So options provide phenomenal leverage, which is their double-edged sword. And a beginner often uses 50 or 100% of their available capital on 1 or 2 trades. Now, if you know what you're doing, you're depositing your money in certain ways, like, okay, I'm going to use all this money for options, then that's different. Okay, but putting up your account where you have shares and everything, and then just showing your account on a couple of trades or bad decisions, it's just not. Okay, so believe in the high probability of return justifies the risk. And this single mistake accounts for the fastest depletion of trading accounts. Okay, please do not overexpend your risk. Take your time. Do not use too much capital over your trade at once. Okay, spread out your trades and grow the wealth over time. Get rich slow. Okay, it's important to take your time. It's important to just stay down, wake up, pray to God, and just grind. Okay, keep putting the money away, keep investing, and I promise in a couple months, the play that you're investing to, whatever, okay, just give it time. Inshallah, it'll pop. Okay, you have to give it time though. You can't rush by trying to use your whole account unless you structure your account like that. Okay, but if you know that you're trying to keep your account alive, don't just put it all into one giant trade. Try and spread it out. Diversify a little bit. So all of your capital can't just be tied to one underlying asset. And if that asset faces unexpected news, the entire account can be at risk. And sometimes there could be margin calls on spreads. Now, selling options or spreads without sufficient collateral means a sudden unfavorable move can trigger a margin call, forcing liquidation at a loss. And trading the farm. So risking more than 5% of your total account value on any single trade is mathematically unsustainable. Okay, so you could do 5 to 10% if you want, but 1 to 5% is going to be strong too, as a short losing streak could really wipe you out, honestly. Okay, but if you're losing if you lose 10 trades in a row and you blow your account, then yeah, I understand how you could lose 10 trades in a row, but 5 trades gives you a lot more trades. Okay, so the 1% rule of risk management. So the gold standard, right? Never risk more than, I'll say, 1 to 5% of your total trading capital per trade. And these mean that if your account is $10,000, your maximum potential loss in your position, it should be around $1,000. Okay, $1,000 if you're doing 10%, or it should be $500 for 5%. And this ensures that you can sustain a long sequence of losses while preserving your capital for future high probability trades. And this is for you to have protected stocks, choose trade structures with limited risk, like defined spreads, and trade smaller and with more manageable positions. So calculate your MAC loss as well. So before every trade, determine the absolute worst case scenario and ensure that your trade is meeting the 1 to 5% rule. Okay. So keep majority of your capital in cash if you're not sure that you want to trade, and then you can deploy your positions when you take your time. So mistake number 4, right? The hope and pray method. Okay, we wake up, we pray to God every single day, but we can't just make horrible decisions. And bad traders set a trade and then just ignore it. Okay, we gotta know where we want to close at. Okay, you can't just hope the trade is going to work out. Okay, you got to have a logical plan before the trade is even placed down. So make sure that you have a highly active process that involves a strict entry, exit, and stop loss criteria. And don't hold your winners too long. Close at take profits. So letting a trade run all the way to 100% max profit is rare and inefficient. You expose yourself to accelerated theta and assignment risk for a minimal additional gain. Okay. All right. So we pray to God every single day. Okay. We ask for hope. We ask for strength. And we're going to ask for wisdom to not make bad trades. Okay. We don't want to be buying at all-time highs and then expecting it to go up. Okay. There's certain things. Okay. Take Jesus, for example. Jesus did not jump off the cliff. Okay. Due to the fact that just didn't test God. Okay, so there's certain things that we just don't want to do as human beings. That's just a bad decision. Okay, I want to pray for wisdom. So cut your losses too. If you know your trade isn't going to work out, if you know you need to chop it up, chop it up. Don't hold past stop loss, especially on Forex and futures. Get margin called. Okay, so take your profit too. Take profit at certain places and make sure that you guys know what you're doing. And the unforeseen cost, okay, ignoring regulatory and tax complexity. So the IRS and other tax authorities, right, treats options differently than stocks. Furthermore, the risk of assignment or exercise of an option can create unexpected financial obligations, especially when dealing with short sold options. So the tax headaches. So certain options like those broad-based indices such as the SPX or NDX are at a tax beneficial of 60% long-term and 40% short-term rate, regardless of the holding period. Okay, and this is the macro factor ignored by many traders, so keep that in mind. And trading options can easily trigger complex wash sale rules, preventing you from deducting a loss if you reestablish a similar position too quickly, leading to unexpected taxable gains. And avoid risk at expiration. So when you're selling options, there's always a risk that the options holder will exercise it, forcing you to buy for a put or sell for a call. And the underlying stock, this could be especially dangerous when a stock closes exactly at the strike price. Okay. And for the solution for that, always close short options, even those worth just a few pennies, before market closes on expiration Friday to eliminate assignment risk if that's how you're selling options. And the tiny commission is going to be worth avoiding the overnight risk of being assigned thousands of shares of stock. So some key takeaways, right? Develop a mechanical, repeatable trade plan with defined entry and exit and management rules so you know what you're doing whenever you're putting down some size. And respect theta. Theta means time in options world. Can be mindful of the time decay. And trade strategies that benefit from high implied volatility when selling and the low implied volatility when buying. And adhere to strictly to 1 to 5% maximum of your account, okay, per trade to protect your capital from inevitable losing streaks. And you can close soon winners, okay, you could trim, okay, make sure you guys know where you want to close your trades at, okay, set take profits, okay. If you have 10 contracts, make it to where you can close 6 contracts at this area, 2 contracts at this area, 2 contracts at this area, if that's how you want to play it. Okay, and know the rules. Understand the tax benefits of Section 1256 and actively manage assignment risk by closing short positions before the expiration. Trading is a marathon. It's not a sprint. Okay, stay prayed to God. Keep grinding. You can't give up. Okay, whenever you feel like trading's hard, when you feel like you want to give up, you got to keep pushing. Okay, you got to wake up, pray to God, ask for wisdom, ask for strength, and keep persevering. Okay, I don't care if you blow in your account. Wake up. Get 2 jobs, grow your business, keep grinding, keep making plays, and keep studying. Don't ever give up. Stay prayed to God, guys. Catch you in the next one. Allah is amazing. Head over to stackmode.net for all trading education. Peace. Most beginners lose money trading futures, not because the market is hard, but because they start wrong. Today, I'm going to show you the right way and the simple steps to your first profitable futures trade. By the end of the video, you'll know exactly how to pick the right contract and how to avoid the traps that wipe out new traders, and the exact setup professionals use to stack consistent wins. No fluff, no complicated math, just a clean, actionable beginner framework that actually works in live markets, prop firms, and even if you've never traded futures in your life, inshallah, if God wills, you'll know how to trade it by the end of this course. Let's jump into it. Okay, so this is going to be how to trade futures and catch dips in certain lows. Okay, so we're just going to go ahead and jump straight into it. So what you want to do is start off doing top-down analysis. Okay, top-down analysis is when you're going to be starting from your highest time frame and scaling down to your smaller time frames. So what we're going to go ahead and start off with is our weekly time frame. Okay, our weekly time frame are going to be our eyes. Okay, you're going to be able to see absolutely everything you need to see on the screen. You got to start on a higher time frame. Especially on futures, you cannot sit there and tunnel vision on things like the 5-minute and the 1-minute and not understand the true directional bias. Okay, we're also going to talk about some logical things and some logistics of why it's better to play certain directions within the US market. Okay, and futures is going to be a US market. Okay, we're going to talk into everything, and this is going to be the full futures guide. Okay, so we're going to go ahead and have the weekly here, right? Weekly time frame is going to be our eyeballs. Okay, we're going to be able to see everything we need to see on the higher time frame basis. That's going to be pretty relevant. Then from there, you want to go ahead and head down to your daily time frame. Okay, you're going to go down to your daily time frame. It's going to show you a little bit more candles than you would see from your weekly. Okay, and each one of the candlesticks that you're going to see is going to determine the amount of price action that's happening within a certain time frame. So if you're on the weekly time frame, each one of the candlesticks that you see will represent 1 week. If you're on the daily, each one of the candlesticks will represent 1 daily. Okay, so that's how things fluctuate and change. Okay, so it's just about knowing when to use certain time frames and how to use the flow. Okay, and once again, the flow is going to be going from your highest time frame to your lowest time frame. Okay, highest time frame to your lowest time frame. So we're going to go from the weekly to the daily to the 4-hour time frame. Okay, the 4-hour time frame is going to be extremely important, and we're going to talk about why. So if I get on the 4-hour time frame, we're going to see here in the bottom right of trading view, okay, you're going to see the words ETH. Okay, so look in the bottom right here, you'll see the words ETH. ETH is going to stand for extended trading hours. Okay, it's going to stand for extended trading hours. And what that is going to show you more candles that would be hidden than if you didn't see. So market is open normally from 9:30 a.m. Eastern time, okay, to around 4 p.m. okay, Eastern time. Okay, that's going to be like the basic stock market time. But with extended trading hours and with futures, market is also open on Sunday. It opens at Sunday at 6 p.m. and is open until I believe Friday at around 6 p.m. as well too, Eastern time. Okay, so extended trading hour is going to show you the Sunday hours, which you need to see. Okay, if I turn off extended trading hours, okay, the chart is going to look a little different, and you're going to see little areas like this, okay, where you're going to see gaps in between certain spaces. But if I turn on electronic trading hours and I go back to the same place, I'm going to see price have a filled in area there. Okay, so that's why extending trading hours is extremely useful to use, and why you can't just live completely on your higher time frames. Okay, all your time frames are going to be useful. Okay, you got to use all your time frames. Got to. Okay, all your time frames are going to be important to use. They're all going to help you out, and it's about knowing when to use what, once again. Okay, so that's going to go ahead and be that. So you're going to go from your weekly to your daily to your 4-hour to your 15-minute. Okay, weekly, daily, 4-hour, 15-minute. Okay, that's how your futures flow needs to go. Do not just tunnel vision on the smaller time frames. Yes, the futures income is nice. Yes, you can scalp and make some money, but it's not just about that. It's going to be about the discipline. It's going to be about catching your nice big trades, okay? You don't want to be just trading for pennies, okay, especially on futures. This is why on futures,
I recommend be on the live account, okay? Because when you're on the live account on futures, things are a lot different, okay? You can hold your trades overnight, okay? When you're on prop firm, you cannot hold your trades overnight, which hurts your profit significantly, okay? The extended trading hours time is going to be when a lot of price action decides to occur. So when you get a good entry and you see which way price is flowing in, you can make some nice money and turn a small account to a lot, okay? Fairly fast with futures. Now it's going to be a lot of power in your hand, okay? When it talks about futures, it pretty much just means make or break, okay? You can make or break all your profit, okay? So let's talk about some certain things when it comes to futures before we get into the chart. Let's talk about margin. So margin is going to be an important thing when it comes to the futures market. Margin is going to be the amount of money required in order to open a contract. So in order to outplay this, right, thank God we have the new micro futures accounts. So micro's futures accounts cost less than normal's futures contracts. So let's say you're trading the NASDAQ 100, also known as the NQ, okay, which mirrors the QQQ, okay, stock or ETF. So index. So NQ, right? Let's say it costs $1,000 to open up one contract of NQ. Okay. On most brokers, it'll cost you like at least $1,000 to open one contract of NQ. Thank God, though, we have something called the micros, which helps us trade more efficiently. And this way we can trim and get more value for what our account size is. So now we have micros. So now you could play something called MNQ. Okay. And instead of spending $1,000 on a contract, you can then spend $100 on a contract. Okay. And you could flip that fairly simply. Okay. Let's say you're on YM, okay, which mirrors the US 30. Okay. It might cost you $500 to open one contract. Okay. And if you're trading MYM, for example, it will go ahead and cost you just $50 to open one contract. Okay. And you could still make some great money. And instead of buying one contract of YM, you could buy multiple contracts of MYM and be in a much better position. Okay. So you could think about that. So the micro contracts are going to be new contracts. I believe they came out like 2021, something like that. Fairly new. Thank God. And now we have the ability to trade with less money. So even if you do have a big account, you could trade a bunch of micros and trim and trade how you want and hold your trade as long as you want. And as well, when you trade the micros, they're going to have lower overnight margin. Okay. So OVM, overnight margin. Okay. So it might cost $50 to open a micro contract during the day. But if you want to hold it past 5 p.m. Eastern time, then the margin might go up to like $400 a contract. Okay. So you got to make sure you're having the overnight margin and the day margin if you want to hold overnight. Okay. So pay attention to that, and every broker is going to have its own different amounts. Okay. It's a lot of important things to know before we just jump into trading futures, because you can get what's called margin called, where if your account goes underneath the amount that required, let's say MYM, okay, let's say it requires at least $50 in your account. If your account goes underneath $50, let's say it goes to $48, it'll go ahead and just wipe all of that and put it straight at zero. Okay. And if your price action goes against you too fast, you might even owe the broker money sometimes. Okay. So you want to make sure that your dollar amount is a pretty good amount over the amount of margin. So if it requires $400 to hold overnight, then try and have at least like $800, $700 or something like that. Okay. This way you're going to have some wiggle room and things like that. So the things outside of futures are going to be really important too. And how long you hold the trade is also going to go ahead and be limited. So how long you hold the trade is going to be based on the certain month too. Okay, you can't sit there and hold futures forever because they do expire and have certain expiration months, which the broker will tell you a lot of the times. So now let's go ahead, and which is why you'll see on your broker sometimes it might ask you to roll over your contract. Okay, so once again, starting on your higher time frames is going to be our bread and butter. Okay, it's where we're going to succeed at. We want to see the higher time frame trend.
Okay, let's talk about some logical things too as well before we jump into the chart fully. Okay, I want you guys to pay attention to this. This is going to be MYM, right? Look at how this chart trends. Okay, year after year, even with certain dips, we're trending in an upwards positive direction. Okay, we're trending once again in an upwards positive direction year after year after year after year after year after year. So personally, I don't think it's smart to trade futures to the downtrend. Okay, the Forex community has spread over to US traders, and now US traders think that they should be shorting a market that goes up year after year after year after year. There's also certain laws in place called the short sale restriction, okay, SSR. And the short sale restriction prevents stocks from just flash crashing to 0%. Because if they stock, because don't forget, definitely remember this, but don't forget, futures are just indexes. They're just a bunch of stocks put into one big giant conglomerate, and then you can trade it like that. Okay, that's all it is. So if stocks crash, futures will crash. Okay, that's just how it is. So you want the stocks to be up and afloat. And same thing for the US government. It's beneficial for the world, okay, the global economy, okay? The more money the US has, the more we can look better and help other countries out, etc. Okay? So, if the stock market goes within a positive upwards direction, right? If futures goes in an upwards direction, okay, that's going to incline more companies to be able to hire more employees, okay? And the more employees that are hired, the more taxes that are going to be paid. The more taxes that are being paid is going to equal a richer White House. A richer White House is going to give the country more credibility, recognition, and ability to do more things. Okay? So, there's logical reasons why we want the stock market to go in an upwards direction. Okay, logical reasons why you don't want the market to crash down. So don't fear crashes whenever you're trading. But in futures, I recommend to buy lows. Okay, there's going to be two things we're going to be looking for in futures. We want price to already, and let's talk about support or resistance. So support is going to be an area where price is bouncing in an upwards direction. Okay, so if you're on your higher time frame and you see price made a certain low going in upwards direction, okay, that's going to indicate an area of support. Okay, it's going to indicate an area of support. Then the opposite of that is whenever you see price falling in a downwards direction. Okay, whenever you see price falling in a downwards direction, then that's going to be called an area of resistance, indicating that sellers are coming into place. So resistance is going to be when price is falling in a downwards direction. And then we're going to have support when price is bouncing in an upwards direction. Okay. And that's just going to go ahead and be the difference between the two. So putting this into perspective, we have to go ahead and realize, like, okay, support and resistance correlate with each other. Market can only go in two directions. Okay. But I can see on my weekly time frame, year after year after year after year after year, market's going in upwards direction. Okay, so my US futures traders, please do not have that Forex mindset. Okay, I want you guys to look at the Forex chart real quick. A lot more sideways. This is why Forex traders short. Okay, there's a reason why they short. Okay, because you can get off with things like this a lot easier, a lot cleaner, and a lot better. Okay, this market is not meant to go in an uptrend. Okay, as we can see, futures goes in a consistent uptrend. Okay, due to the fact that it's going to help the US in a lot more cases. Okay, so we have to keep that in mind. That's why price is going in upwards direction. So let's talk about once again how we can go ahead and trade. We want to be buying two things. Okay, you want to be buying when price makes an area of support. Okay, because all your setups are going to look the same. Your setup should always look like a V. Okay, so market will always make the left side of the V, and we'll talk about this in a second. And then you're going to catch the remainder of the right side of the V, because price always wants to try and break all-time highs. So as we can see on the futures market here, we're always constantly making new all-time highs pretty much. Okay, and that's due to the fact that, once again, it's most beneficial for the world, the economy, and the global infrastructure of everything. Okay, so price is always going to be hunting towards all-time highs.
which means price is always going to be hunting to go in an upwards direction. So even if price is in a downtrend, I personally don't like to short. I like to just wait for price to make a low, and then I'll go ahead and I'll take my trade. Okay, so let's talk about how you know when price is ready to make a sweep up. Okay, there's going to be two things we're going to be looking for. So you want price to be, once again, just bouncing at an area of resistance going in an upwards direction. Okay, and then you want to close at an area of resistance or support above current price. That's because price has an ability to reject at an area of resistance multiple times. Okay, and one day it might break, but you don't want to eat the reversal. Okay, you want to catch your formation and structure completion. Think of trading as a puzzle piece. Everything should click and form together. So resistance areas can short within a downwards direction twice. Okay, and then we're also going to go ahead and have an area here where resistance gets broken, turns into support, and then price goes in an upwards direction. Resistance here getting broken, turn into support. Okay, this is going to be another example of the V formation too. Okay, and in this instance here, you would have bought at this area of support here. Okay, and catch it up, because you know price wants to mirror or at least reach the area of resistance. You don't know if it wants to break out immediately. Okay, but price at least wants to go ahead and reach it, and that's what matters. Okay, catching your resistance gap fills. So let's go and let's keep talking about it here. So I like to go ahead and start on my weekly here because it lets me know, like, okay, am I at all-time highs or not? Okay, because if I'm at all-time highs, then I know I'm going to be needing price to dip down, make a certain low, and then I'll be able to go ahead and catch my sweep in an upwards direction. Okay, so let's go and let's go to daily here. Okay, and I'd like to go ahead and wait for certain formations. Okay, so take an area like this. This on the daily. Okay, I see price made an area of support down here twice. Okay. And even if I wanted to go ahead and just take it up to like this area of resistance, you know, that would have been solid. And as you can see, just based off this tiny support here, went ahead and caught the whole gap fill, and this would have been around 669 points within a couple of days. And on futures, that's disgusting money. Okay, that money is nasty. So what I'm looking for, especially on my, so I like to see my weekly here, make sure I'm not at super all-time highs, because I'm looking to long the market. Okay, and I'm waiting for price to make a little base on the daily. Okay, so I need price to make a little base. So right now I can see price making the left side of the V. Right now we're heading straight down. Okay, we're heading straight down, and then I need price to form a low, and then I'll be able to catch the right side of the V and catch it back up. Okay, so that's what we're going to be looking for. But in order to do this, we got to be patient. So right now I wouldn't short, okay, because people are going to be fiending to buy any low opportunity. So I'm going to wait for price to go ahead and create its low. Okay, I'm going to show you a good example of what that looks like. I'm going to go to my 4-hour again. Okay. When you start seeing price make that nice curl, especially with 4-hour closes, then that's when you know you're going to go ahead and catch your nice trade. Okay, take this little sweep curl up right here, right? Even if I decided to close the trade at this area of resistance up here, that's still a really, 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 really nasty futures trade. Okay, this is 862 points. Okay, just catching the V. Okay, catching it to this area of resistance up here. Okay, and as you can see, price decided to go ahead and fill the V. Okay, and you're just going to go ahead and be able to farm money on the micros, farm money on whatever. Okay, let me go ahead and just log into the paper trade here and just show you how much this would have made, for example. Okay. Go ahead and close that. So boom, even right here, right? So let's say you opened a trade right here. Okay. And I like to play with like 100 tick stop loss. Let's say I'm trading YM. Okay. 100 tick stop loss, right? I'm risking $50, and my take profit would be this resistance all the way up here. Okay, 473 ticks. So I'm risking $50 to make 236. And as you can see, price decided to continue forward. So as soon as price starts to make that nice V, So I'm looking for multiple 4-hour candles, and then I'm waiting for price to sweep in a upwards direction. Okay, I'm waiting for price to sweep in an upwards direction. So I can see price making an upwards V, even if I entered right here on this candle, okay? Because I want price to go ahead and make the formation of the bottom for me. Okay, I don't know where price is going to bounce at. Okay, it's too many people try to predict the ultimate bottoms. Okay, but you know that price at least wants to try and mirror areas of resistance. Okay, before it gets broken. So take advantage of the V. So even if you entered right here, right, you'd be able to enter right here. Okay, 100 tick stop loss. As you can see, stop loss just didn't get hit. And then we decided to go ahead and take profit all the way up here at this resistance of here, 484. Okay, and then you can go ahead and catch nasty trades over and over and over again, waiting for your V formation. Okay, so what I'm going to be waiting for is for price to make a certain low. I'm waiting for price to nosedive down. After price makes a low, okay, let's say maybe about this much on like the 4-hour at least, okay, then I'll be able to catch the remainder up until the previous resistance or support that it stopped at. Okay, and then I'm going to go ahead and close there. I'm not going to play for the breakout. Okay, I'm just going to go ahead and catch the V fill. All your trades should look like a V for the most part. Okay, so right here, I'm waiting for price to go in a downwards direction. Okay, I'm waiting for multiple 4-hour candles. I don't like to just go off of one 4-hour candle. I can't just see price make this one wick area here near this area of support and be like, oh yeah, this is going to be the best trade ever. Nah, I want to actually wait. This is where the 15 minutes going to come in too. So I can see on this area here, I have a previous area of support over here, and then I have an area of support over here too. Okay, price going in an upwards direction, starting to curl. Okay, but I'm going to wait for more 4-hour candles. Okay, maybe even some more daily candles to form too. Okay, and then I'm going to go my 4-hour here or 15-minute. Let me find myself a good take profit. Okay, so take profit here, even if I want to close at like this resistance area up here. Okay, so let's say I get like one more 4-hour candle or something like that. Okay, I might be able to go ahead and take this V formation up until at least this area up here. Okay, and then I'm going to go ahead and put a 100 tick stop loss. Okay, and then I can see if this area actually wants to go ahead and fill and catch it up to this area of resistance either here, or I could try and catch it up to the, yeah, I mean, honestly, I wouldn't be greedy. Try not to be greedy when it comes to futures. Just take your nice trades and just wait for re-dips and just do it again. Okay, because the greediness can really get you nipped in the butt. So I would really just take like your 15-minute take profits like this, catch your nice sweep, catch your nice V, close at this area of resistance up here. Boom, close out the area of resistance right there. Get on my 5-minute here, you're going to see the resistance here. You know, price might want to mirror that. And then you can go ahead and close your trade up there. Okay, very simple, very easy. And just go ahead and take your money. Okay, so even if price is in a downtrend, okay, price still has to go up to come down. And price has a better chance of going in an upwards direction than it is just falling in a straight downward direction. Okay, especially when it comes to futures. Okay, use your higher time frame, look at your bias, and put everything into perspective. Does it make sense to short something that continuously goes up in an upward direction year after year after year after year, regardless of inflation or anything? And the answer logically would just go ahead and be no in every single scenario. Okay, so when you're reading your futures chart, it's really just about taking your time, getting in your bag, and really just making sure you understand and can read what you're looking at. Okay, it's about taking your time. And when you take your trades, you got to take your profit. Okay, you got to be closing at these areas of resistance or support above current price. You got to. Okay, I wouldn't hold past up here. Okay, we also have this take profit up here too as well. Okay, if you wanted to take something like to up here. Okay, and this would be for like a 1-to-1, and then price decides to continue to go up in an upwards direction. Over and over. This area of support could be a take profit as well too. Okay, and then that's the cool thing about futures. As each take profit gets hit, you can go ahead and keep dragging your stop loss if you want, or you can go ahead and set your final take profit at a certain area, have your stop loss, and just buy at certain logical areas and just pray that you win, okay? Because price most likely wants to reach these areas of resistance again, okay? Even if price wants to fall straight down from these, that's fine. At least it went ahead and touched it. That's okay. Okay, it's not just going up for no reason. It might want to go ahead and touch this, okay? And that whole window of it going up is just money sitting there waiting to be farmed. So collect your income, okay? Whole sit there, whole bit of money just sitting there waiting to be collected, okay? So sit there and collect your money, okay? Even at this area of support right here, because as we know, just like resistance can be broken, turn into support, support can be broken, turn into resistance, okay? So that's why a take profit right here would be reasonable as well too. So if price goes up, okay, let's say it does this, breaks this, okay, price might want to fall down here, okay, or price might want to fall here, okay. So that's why these are all going to be different take profits due to the fact that these are areas of resistances and supports above current price. And I can see price is trying to recover here. Okay, so you can see it on your smaller time frame. Price really trying to recover certain areas. And it's about making sure you know when to close. Knowing when to close is going to be the most imperative and important thing. The trend already started. Okay, the chances of the trend just reversing here super duper hard, it could be pretty low. Okay, so it at least go ahead and touch this resistance. If it breaks this, then try the support. If it breaks this, then try the resistance. And it'll keep trying each leg until it finds a place it might want to reverse that, find a super low, then break that previous high and do it over and over and over and over and over again every single year. Okay, so it's about playing logically. So if you're a futures trader, if you're going to trade some futures and you want to make some quick income, okay, because futures, you only got to deposit one time. Okay, and it's about waiting for the right setups too. But after you deposit that one time, you can go ahead and you can get in your bag. Okay, you can run up your bag super duper duper hard. Okay, and it really just depends. Okay, so do some practice. Stackmode.net for all trading mentorship. If you guys have any questions, stay prayed to God and keep grinding. That's how you guys are going to be able to trade futures.
You might think that inflation is a normal part of life, but the reality is that your purchasing power is silently being stolen from you every single day by the very institutions claiming to protect it. Central banks have the power to print infinite amounts of currency at the push of a button, which dilutes your savings and forces you to work harder just to stay in the same place. They control the supply, so they control the value, and Bitcoin completely flips this power dynamic on its head. It's the only asset in human history with strictly finite supply that cannot be altered by any government or chairman. There is no backdoor and there is no print button because the code is absolute. And while fiat currency relies on trust in politicians, Bitcoin relies on mathematical verification, and it's created by actual power and resources. This is not just about digital currency or making a quick trade. This is about the separation of money and state and ownership. In this video, I'm going to show you exactly how Bitcoin renders the central banking model obsolete and why it's the ultimate hedge against the system designed to devalue your life's work. Let's dive into it. Let's go and let's jump into how central banks hold a monopoly on the money supply. So as you know, things have to be systematically processed when it comes to central banks' systematic formations, such as wire transfers or direct deposit, for instance. Certain things have to hit on certain days and certain time frames due to the fact that approvals have to be made by the centralized banks. Now, when we're trading cryptocurrency, you're working in the decentralized world. Everything is way different. Okay, everything is based off the peer-to-peer transaction system. Everything works off of smart, autonomous contracts. So whenever transactions are sent over, pretty much computers do all the processing. When you send a wire transfer over to somebody or even to yourself to another bank, the bank has the ability to approve or decline that. Cryptocurrency puts the freedom back in the people's hands. And let's go and let's jump into how all this works and why central banks really don't like this. Let's talk about the loss of monopoly. So central banks manage the economy by printing money, which is quantitative easing or pretty much restricting it. And Bitcoin supply is fixed at 21 million. So it having that fixed statistic baked into it, one, not only makes it more scarce, but it's going to have a more baseline stability cooked into it, and inflation is going to be a lot more manageable. When it comes to fiat currency, you can pretty much print infinite dollars nonstop. That's you might see things from 10 years ago might cost completely differently from today, since more money has been printed over the years have gone over. Okay, and the competitor. So for the first time, citizens now have a viable opt-out option. So if a central bank debases its currency due to inflation, people can flee to things like Bitcoin, and this forces central banks to be more disciplined, limiting their power. So you might have seen things recently, as of 2025 when this video is coming out. Banks are now starting to incorporate certain things like Ethereum, XRP, and Bitcoin systems within their system, since they know that people are now looking towards cryptocurrency to manage their money or even hold their savings. So instead of getting 2% or 3% APY, APY stands for annual percentage yield, people rather go put their money into a cryptocurrency and let their money grow faster at a rapid rate. And not only that, it's going to be a lot more manageable too. If you go to the bank, if you have 10 bands, you go pull up on the bank, a lot of the times you're not going to be able to pull that out right away. You might have to come back tomorrow, the next day, because the bank has your money pretty much invested. Okay, so if our money's parked in the bank, it's going to be their money too. It's being used. That's why certain things like Zelle have withdrawn deposit amounts, because they don't want people just pretty much managing their currency how they want. Cryptocurrency takes that all the way. If you want to send $1 million today and tomorrow, you can do that. With the normal traditional central bank based off of fiat currency, they're not going to let you do that, since that puts too much freedom in people's hands, and a lot of business moves can be made a lot quicker. So instead of the banks having the power, now people have the ability to build certain things like banks, their own hedge fund systems, and their own funds, etc. So now people have the ability to have some more individualization for their family even as well too, versus having to run to the banks every single time. So back in the day, people would have to keep all their cash in the banks for the most part. Okay, things aren't like that today. Now you have the ability to even keep your cryptocurrency on something small like a USB drive. Okay, so keeping it extremely decentralized, and the IRS can't get to your USB drive unless they raid your house and find it or things like that. Okay, so no more having random money put out of your account, or even if you get sued, for example, they can go into your bank accounts and clear you out. If you have your money parked in cryptocurrency, that's money that they can't touch, and it's pretty much digital cash that nobody really knows that exists. So let's talk about the threat of censorship resistance. The modern banking system is used as a tool for geopolitical control and surveillance. Big on surveillance. They want to see every dollar that's coming in and out. A lot of things have been changing recently too, since 2020 plus. As far as cash, for example, you can't really use cash to get certain things. Like a lot of realtors and realtor companies won't accept cash for certain down payments, since you can't really prove that you're a real legitimate person and where that money's actually coming from. Okay, so central banks want to make sure everything is controlled, and pretty much don't want you to have freedom for certain ways that benefit them every single time. Certain ways it does protect society, but for the most part, things aren't always fair and realistic, because it is the world. So if somebody's working hard at their lawn mowing business and they've been stacking up cash, okay, their money shouldn't be obsolete. So now you have things like cryptocurrency where you're going to be able to put that, send that over to your bank account, and then you could file your taxes and do things a little bit more legitimately there, versus just having random cash come out of thin air and then you deposit it and they're like, well, where's this coming from? Okay, so your cryptocurrency can be baked in and a little more hidden, and it'll help you out in a lot of ways too. And Bitcoin is really a neutral, permissionless network, and it helps you bypass sanctions. Systems like SWIFT allow the US to cut off nations or individuals from global finance. And Bitcoin operates on the peer-to-peer network, just like we talked about in the previous slide. Meaning if you want to send $1,000 to somebody in Africa, you can instantly do that within the next couple of minutes if you wanted to. Okay, if you want to do that via PayPal or the traditional bank system, it's going to be a lot more difficult. They're going to put some type of hold on it, have to verify your transaction, and it's going to be just a lot more difficult overall, making financial blockages significantly harder to enforce. And financial privacy is going to be a big factor as well too. So Bitcoin is going to be pseudo-anonymous. Central banks and governments prefer total visibility due to the fact that KYC laws are in place, know your customer, and AML, to track taxation for the most part. So pretty much just the government wants their piece of the pie when it comes to any type of currency. So a decentralized ledger obscures the identity layer that they rely on. So certain things like the SEC were fighting with Bitcoin legislators, etc., and that led to certain dips. But now the US government and other governments have started holding the currency themselves, and certain laws have been getting passed. So central banks are trying to gain control, but for the most part, Bitcoin at the core forefront of it is still peer-to-peer and a currency based off of freedom. So we'll jump into the neutralization of interest rates. Interest rates are going to be the steering wheel of the economy. And Bitcoin creates a parallel system that doesn't respond to that steering wheel. And the liquidity trap. When the Fed lowers the rates to stimulate the economy, they want people to spend pretty much. So if people instead borrow cheap fiat to buy Bitcoin, which is a store of value, since especially it has a limited cap, giving it scarcity, which is immediately going to give it value, the stimulus leaks out of the real economy and into crypto assets because people are starting to wake up as well. And broken transition mechanisms are going to come into place. If a significant portion of the economy uses Bitcoin for settlement, central bank decisions, which involves raising or lowering rates, affect fewer people, rendering the central bank increasingly irrelevant. So it's like trying to slow down a car by pressing the brakes, but the car has decoupled from the wheels. Okay. So Bitcoin's coming in to solve a lot of problems, especially now since people are starting to be more open to international travel too, and living in certain other countries, especially US citizens. And you're gonna, instead of have to go through certain transfers for your US currency, you can easily just keep everything in cryptocurrency and spend that all over the world simply, instead of having to go through that headache of a transfer system. And let's talk about CBDCs, the counter move, and what are they doing about it? So they're copying tech, but keeping the control, and enter the central bank digital currencies, and it's programmable money. So unlike Bitcoin, CBDCs are centralized, and governments could theoretically program money to expire, which forces spending, and restrict what you can buy with carbon limits or freeze accounts instantly. And definitely total surveillance is going to come into place too. So a CBDC ledger would give the state a real-time view of every single transaction in the economy, eliminating the concept of cash-like privacy entirely. And they market CBDCs as safe, convenient Bitcoin, but the reality is that it's the exact opposite of Bitcoin ethos of decentralization. So keeping the freedom in the people's hands is really the main point of crypto. Yes, there's money involved, but honestly, you can make way better profit doing other things, such as like trading futures, for example. Even if you trade crypto futures, that's gonna be way more profitable than holding and keeping spot. But as far as you holding your Bitcoin, your cryptocurrency, you're really doing it for your ownership and your assets. Okay, having ownership, especially in something that helps the future, is what's going to help you prepare your forward and keep your money in that constant cycle. So instead of you being on the hamster wheel, put your money on the hamster wheel. Have everything flow. Okay, so after you get that big bag from futures, let's say for example, you know to go ahead and throw it into Bitcoin, which consistently makes profit year after year after year after year. So instead of you having to hustle and bustle forever, you could maybe sit down and chill because you have enough money from hustling bustling stacked in your investments, and then your wheel will be spinning forever. Okay, so if you decide to use your fiat currency and throw it into something that's going to help your money flow into the hamster wheel, inshallah, you'll have a lot easier time. So they try and stop everything, just like they try and stop certain herbs as well too. They can't stop the Bitcoin network itself since it's distributed globally, and they target the entry and exit points and targeting on ramps. So regulators pressure banks to not do business with crypto exchanges, even though they're starting to do it anyways, because they know people have to sign up for their banks, otherwise they're going to crumble. So if you can't transfer fiat to an exchange, it becomes very difficult to buy Bitcoin. And let's talk about some regulation by enforcement. So instead of creating clear laws, agencies like the SEC sue crypto projects to drain their resources and create uncertainty, driving innovation offshore. But thank God, it's been a lot of righteousness going on. Certain people have been getting freed from jail, such as like the Binance creator and Bybit and stuff like that has been starting to get back on the United States soil. So a couple of years ago, around 2022, 2021, they started locking people up for enforcing certain cryptos or creating certain crypto brokers such as Binance and stuff like that. Thank God certain people have been freed, and just really things have been changing, and the crypto future is starting to look bright, especially since the US government now owns hundreds of millions of dollars worth it. That's really, really a solid and good factor, letting us know that, okay, the US doesn't want to fall behind since other countries also own hundreds of millions of dollars worth it too. Okay, so instead of being stubborn, the US is now actually turning on their brain, and that's leading crypto to future all-time highs, since the US dollar is the global currency of the world. But we never know, within a couple of decades, could be Bitcoin. So a lot of things are changing, exciting time in the world, and central banks are pretty much on a game theory bide. They can't end Bitcoin. The network is way too resilient and distributed, so they're pretty much trying to conform because they know people are starting to wake up. The righteousness is starting to oversee the darkness in the world for sure. People are starting to care about their health, want freedom for their money, and people might have family in other countries too, and you can easily help out your family in other countries with cryptocurrency. Once again, not as easy to do that if you're sending straight fiat in any country you're in. And they can't ignore it. Okay, it's sucking liquidity out of the fiat system. People are no longer keeping their money stacked inside of savings accounts, getting that 2%, 3% APY that most banks take advantage of in order to make profit. People are now just taking that money and putting it right into cryptocurrency. Even the same thing with credit too. A lot of people are starting to wake up when it comes to credit. Instead of balling out, just buying things, people are now taking that, either investing in all of it into some kind of business and buying cryptocurrency, buying any type of shares that they can too with the cash that you can extract from the credit card if you can't extract the whole thing. So the likely outcome of everything, integration, and that's been slowly happening. A lot of banks are starting to finally realize, and as we start seeing more younger people get into CEO level positions, I can see things change as well too, inshallah, especially as Trump come into office. The crypto support has definitely been in significant rise. So banks will eventually have to custody Bitcoin and treat it as a reserve asset, just like gold, because they know people aren't going to be going for anything else. Okay, people are now more open to leaving the US more than ever. So now the US is very desperate to make the right decisions to keep people here and keep America going forward. So this fundamentally changes how the global monetary system operates in the long run. And a really small percentage of the world only owns Bitcoin. So don't think that you're too late. You're really, really early, and there's a limited amount. Okay, you don't want Bitcoin to be mined up and be like, oh man, I wish I bought Bitcoin in 2025. You don't want to be doing that. Okay, I don't care if you got $5 in your account right now. You don't need to be buying nothing. Go buy some Bitcoin. Okay, live off the credit card, spend all your cash on assets, and watch how your life change. Wake up, pray to God, take care of your family, stay down, and get in stack mode. Let me catch y'all on the next one. What's going on, class? Today we're going to be talking about layer 0 protocols. Let's go and let's jump straight into it. So what is layer 0 in the first place? Layer 0 is the underlying infrastructure that connects and supports different blockchains, also known as layer 1s. So the foundation. So layer 0 is like the internet protocol. It's like the IP address, but for blockchains. And it provides the base layer for communication and security. And layer 1 protocols, like Bitcoin or Ethereum, are built on top of the network provided by layer 0. And enabling interoperability, it solves the walled garden problems where chains cannot talk to each other, and it allows for trustless transfer of value and data across different chains, and it's key for realizing the vision of a connected multi-chain future. So this way, cryptocurrency, the whole infrastructure, whenever money is being sent within the network, everything can be securely done. And share security, it allows for smaller, less established chains to borrow security from the robust layer 0 network. And it reduces the cost and complexity of launching a new secure chain, and is vital for the stability of niche decentralized applications. So, Polkadot, it's the relay chain, the central hub of the Polkadot network. It handles the finality and consensus for the entire network, and it does not process user transactions like token transfers. And it maintains security by coordinating all connected chains. And layer 1s, parachains, they're independent application-specific blockchains, and these are the layer 1s that process transactions, okay, for DeFi, gaming, and identity, and they rent a slot on the relay chain for shared security, and they can have unique governance models and features, and Polkadot uses shared security and a centralized relay chain approach. So let's talk about Cosmos, also known as Atom. So the SDK and Tendermint, they're tools that let developers launch independent blockchains easily, and Cosmos SDK is a modular framework for building application-specific chains. And the Tendermint, it provides the consensus engine for instant finality and security, and it allows chains to be launched in weeks, not months. And IBC stands for Inter-Blockchain Communication, and it's the standard for chain-to-chain message passing, and it allows sovereign chains to connect and exchange tokens and data. So it's going to be a big link for everything. And each chain manages its own security and validators. And IBC, Inter-Blockchain Communication, is the fundamental layer 0 protocol for communication. And Cosmos uses sovereign security and a decentralized hub and spoke model. So the blockchain layer stack. Let's talk about layer 2s. And the purpose of layer 2 is just to scale a single layer 1, okay? And examples are Arbitrum, Optimism rollups, and they improve transaction speed and lower fees by bundling transactions off of the chain. And layer 1s, purpose of layer 1s are going to be to execute and implement finality via smart contracts. Smart contracts are going to be the autonomous contracts that let the cryptocurrency space pretty much operate. Okay, so when you have smart contracts implemented, no middleman is going to be involved. So take a normal bank account system, for example, you would have to have a bank intermediary to confirm transactions or decline the transactions. Okay, but we can go ahead and bypass that by using smart contracts in the cryptocurrency sphere. So this is why the decentralized finance system and the whole blockchain sphere is extremely popular in the first place. It brings a lot of power back to the people, and people are going to be in an effective way to where they can go ahead and just transfer money. Say someone is completely out of in a different country, for example, you'd be able to go ahead and send them however much money you want to, whenever you'd want to, and it would go ahead and hit their account within their crypto wallet within a couple of minutes or hours. Okay. So, but using the traditional fiat bank systems, say you try to send, 1,000 USD to somebody in, let's say, Thailand using bot. Okay, there's going to be fees behind that, etc. Okay, but cryptocurrency, there's going to be fees, okay, gas, also known as the fees. And those are just going to be tiny network fees involved to just send your money from one place to another. Sometimes they could stack up depending if you're sending a large amount, but a lot of times if you're sending a large amount, the fees realistically aren't going to matter too much depending on what network you send them off of too. So that's also going to be a big factor too. And let's talk about layer zeros. The purpose of layer zeros affect interoperability and provide a network setup. And examples of layer zeros are going to be Polkadot, Cosmos, and they allow layer 1s to communicate and share security, forming a network of chains. And the future is going to be all interconnected. And layer 0 is going to be the foundation of everything. So think about a house, okay? What's below a house, especially that's tall? A lot of the time, it's going to be pillars that'll be connected to some mountains. Okay, a lot of the times, the house, before it's built, is going to have a B structured on a base. Okay, and layer 0 is going to be the base. And layer 0 connects all the building blocks of Web3. So the whole cryptocurrency sphere, okay? And it moves beyond single isolated chains. And the interoperability race. Polkadot and Cosmos represent two of the leading distinct architectural approaches to this critical problem. And layer 0 enables a seamless, cohesive, decentralized internet. So within the layer 0 functionalities, okay, we have to understand that, okay, it's used to connect all of the blocks within Web3, okay? And it's gonna be a hub. It's gonna connect the separate layer 1 blockchains that would otherwise operate in silos. And developers can also build custom blockchains like layer 1s tailored to specific use cases using the tools, consensus mechanisms, or security provided by the layer 0. And layer 0 offers a shared security model where multiple chains can inherit the security of the base layer's validators or consensus mechanisms. And some layer 0 protocols focus on ensuring data availability for transactions, allowing layer 1 chains to process transactions efficiently without storing all data on the chain. So Polkadot, for example, uses a relay chain, okay, for layer 0 to connect multiple parachains, which are layer 1s, enabling interoperability and shared security. And developers can create custom blockchains, parachains, tailored to specific needs like DeFi or gaming. Okay, so like a token like DOT, okay, and the token be DOT. So that's just how layer 0 works within the cryptocurrency space. Okay, and just think of layer 0 as the internet's core infrastructure. Okay, think of it as the cables, okay, the base to a house, the routers and the protocols. And think of layer 1s as the websites or the apps, okay, like Google or Amazon. And layer 2 is the tools that optimize those websites, like content delivery networks. And layer 0 makes it possible for websites to exist and communicate
even if they're built zero and built differently. And here's why layer zero even matters in the first place. As blockchain adoption grows, the need for scalable, interoperable, and customizable solutions become critical, and layer zero protocols address the limitations of isolated layer one blockchains, enabling more connected and efficient decentralized ecosystem. And they're particularly relevant for DeFi, NFTs, gaming, and other applications requiring cross-chain functionality or high throughput. Okay, and if you want to learn more about layer zeros or cryptocurrency in general, head over to stackmode.net. Stay prayed up to God, keep grinding. Catch you guys in the next one. Peace.
Bitcoin mining is the network's backbone, and it's not just about earning crypto, it's how Bitcoin is created in the first place. Miners use powerful computers to solve the puzzles. They secure the blockchain with an immutable new block each time, and this process is the global security system that prevents double spending and fraud, and it verifies all transactions across thousands of independent computers, replacing a central authority. Without miners, Bitcoin wouldn't even exist, and it would collapse. But with them, it's become one of the most secure financial systems on Earth, powering the trust and transparency of decentralized money. Let's go and let's talk about how Bitcoins are created and why the government owns it. Inshallah, God wills. Let's go. So, class, welcome. Let's go and let's talk about how Bitcoin is created in the first place. So Bitcoin is generated by mining it. Okay, Bitcoins don't just spawn out of thin air. And as you know, Bitcoin is also a limited cryptocurrency. So other cryptocurrencies for the most part are going to be infinite, but Bitcoin is actually going to have a limited amount of currency. Okay, there's only 21 million Bitcoins that exist. Okay, and each one of them is created by getting mined. So what happens is a computer, okay, and the computer is obviously powered by resources. Okay, so certain countries take more power than others to create certain Bitcoins. Okay, so if you're in a country that charges a lot for power, then you'd be paying more on your electricity bill in order to mine the cryptocurrency. Okay, and what you would need is a super powerful computer with a graphics card that can handle the Bitcoin mining. Okay, so what a graphics card is, it's a piece of the computer that's external. Not all computers have external graphics cards. Some have inbuilt graphics cards, which is why they're slower than others. But what you need is a really powerful computer. And then from there, you'll be able to load up the Bitcoin mining software and it can go ahead and get created. We're going to talk into the technicals, exactly how everything works. Bitcoin mining is super duper cool. You might even want to do it and see if this is a good way that you guys might want to generate some income, depending on what country you're in as well too. You'll be able to save a lot of money on power, and you could potentially mine yourself or create yourself a Bitcoin for way less than buying it. So let's jump into it, class. So what is mining even in the first place? Mining is not digging dirt. Bitcoin miners aren't digging into the ground with actual pickaxes, digging into the dirt, looking for resources. No. Okay, so what it is computers mining Bitcoin via a software. Okay, and the job is to secure the network and process transactions. Okay, so it secures the network by making everything decentralized. So in the traditional bank system, let's say you wanted to send a wire transfer, for example, right? The bank would be able to decide whether yes or no if the transaction wanted to go ahead and get approved or declined. Within a decentralized network, such as sending Bitcoin, things like that don't occur. Since everything is done by smart contracts, okay, everything is autonomous and automatic, done by computers, okay? And that's what Bitcoin mining comes into place too. Even creating Bitcoin, instead of just clicking print on the dollar like they do with fiat currency, Bitcoin actually has to go through a whole process in order for a Satoshi to be created in the first place, okay? So Bitcoin mining helps keep Bitcoin decentralized. The reason why the US dollar fails is because they just go up to the printer and click print, okay? There's no real strategical process that goes from start to finish for the most part that keeps its base value cooked in. Yes, you can just print more dollars, but that would inflate the other ones. Since there's a finite amount of cryptocurrency, there has to be a secure process in place in order for it to be created, for it to be fair for everybody. And mining is the way it's done. Let's keep going. So think of the blockchain network as a public notebook. So you might have heard of what the blockchain network is. So the blockchain network is pretty much a public copy of everything that's been done. Every transaction that's been created, every Bitcoin that's been mined, and every transaction that's happened, okay? So the blockchain is pretty much going to be a verifiable place to where you can see if your transactions were even completed as well, okay? So within the blockchain, you'll be able to put in your, let's say, address. Let's say you did a transaction. You could copy that transaction address, put it onto the blockchain or some type of blockchain checker, and you could see if there were any confirmations. Okay. Confirmations are pretty much going to go ahead and let you know when your transaction is ready to be completed. Okay. Either the money has been sent over, it's on the way to hit your wallet, okay, depending on the situation. So the blockchain is a public notebook that everyone has a copy of. And mining is the process of adding a new page, okay, which is a new block to this notebook. So page 1, right? Let's say Alice sent some money to Bob. Okay, let's say they sent 5 Bitcoin. You're going to be able to see that. Okay, you'll be able to see the Bitcoin addresses, etc. And you'll be able to see when the transaction was sent, how much Bitcoin or how much cryptocurrency was sent. And you'll be able to see the miners working on certain things as well too. Okay, you'll be able to see when Bitcoin transactions have been implemented and grounded into the blockchain. Whether a big whale is buying or selling, the blockchain shows us everything. Okay, keeping cryptocurrency really, really safe. So proof of work. So once again, Bitcoin, it's not created like the dollar. You don't just go up to the printer and click on print over and over and over again. It's created by POWs, also known as proof of work. So to add a page to the notebook, computers must solve a super hard math puzzle that requires a pretty powerful computer as well too. So make sure you guys have a good graphics card inside of your computer before you think of doing anything like that. Okay. So to add a page to the notebook, you got to have a super powerful computer, and then the computer has to do calculations and try to guess the number. Okay. So imagine guessing a number between 1 and 1 trillion. Okay. You have to guess randomly. So computers then make trillions of guesses per second to find the random number. Okay. Which is going to be the hash. Okay. So that's how the proof of work works. And that's pretty much all the work that the computer is doing. The computer is constantly running calculations, trying to find and guess the correct numbers in order to generate a Bitcoin. Okay. And that takes a lot of power, a lot of resources. So make sure you guys are watching your energy bill before you think about getting into this. So this is exactly what I mean. You need a powerful computer. Okay. Your computer has to be good. It can't be a weak computer. Okay. So understand that you cannot mine Bitcoin from your laptop. Okay, you cannot mine Bitcoin on a laptop anymore. Okay, so these with, you know, saying with the screen, a little keyboard, not cutting it if you want to mine Bitcoin. Okay, get yourself a real strong desktop with a real graphics card before mining Bitcoin even crosses into your brain. Okay, so you need specialized machines called ASICs. An ASIC stands for an application specific integrated circuit, and they do one thing: guess numbers for Bitcoin. Okay, they're loud, hot, and they use a lot of electricity. Okay, so before you guys think about just putting it into your room, keep all of this into play. Okay, keep all of this into play. Same for Airbnb owners as well too. If you guys have Airbnbs, what people are doing is signing up for Airbnbs and mining Bitcoin at Airbnbs in order to save money on power bills and stuff like that. Or people are also even moving to other countries in order to save on power bills too, so they can mine Bitcoin for a lot cheaper. So keep all of these things into play and understand that the future is really changing a lot. People are starting to get a lot more equipped and doing a lot more strategical moves to mine all the Bitcoin as possible before it goes away. So what's the point of this? Like, why do it in the first place? So the reward, right? The winner who solves the puzzle first gets paid in brand new Bitcoin. Okay, a brand new Bitcoin. So Bitcoin is created by whoever has the best computer, right? And is solving the most problems. Okay, the more computers you have solving more problems, okay, the more Bitcoin that you're going to accumulate in the first place. Okay, so it's going to be either one computer or a whole room full of computers. Okay, and what they're doing math. Okay, 2 plus 2 equals, okay, and then whichever one of the computers can find the hidden number, okay, goes ahead and generates the Bitcoin. Okay, after you find the random number, or one of the computers generates it and finds the right calculations, then a hash is going to go ahead and get created. Okay, then from there, you're going to go ahead and get paid within your Bitcoin. And you keep doing that, keep doing that. Now, the computers do have a high chance, once again, to consume a lot of power, which means that the resources inside of the computer, processor, graphics card, RAM, etc., have a high chance to go out and combust. So before you think about doing this, make sure you guys have some money to the side to pay your bills, maintain everything. So I don't want you guys going broke to do this. But this is how Bitcoin is created by computers solving complex math looking for a specific number. And once again, the more you have, the more Bitcoin you'll be able to generate. Since the more computers you have, inshallah, if God wills, the quicker you'll be able to look for hash codes, and the quicker those computers will be able to solve different types of calculations. So what's the point of this? Why is it essential for security in the first place? So it's costly to cheat, right? So to fake a transaction, you need more computer power than all other miners combined, making it pretty much obsolete, not even worth it, and not even, once again, not even worth the while. So immutable. So once a block is buried under other blocks, it's mathematically impossible to change it, because the way that Bitcoin works is that the computer is hunting for hidden numbers. Okay, it's hunting for random numbers and it's trying to guess the correct numbers. So the chances of it being faked or created within a false context would pretty much be almost impossible. Okay, since there's so many numbers and it's looking to guess the correct one, and it's decentralized. So no single boss controls the ledger. So no people can just be like, you know what, we're going to decline this transaction. We're going to approve this transaction. Oh, you want to send $10,000 to somebody in another country? You know what, we're going to go ahead and decline this and shut down your bank. Okay, that's happened to people. Okay, and that's not fair. It's not fair. There might be money you might need to send to somebody in another country to help send your family some money, to help pay your employees or whatever. Cryptocurrency is such a beautiful blessing on this earth. God is the greatest, you know? Is being able to send $1 million to somebody the next day, boom, just like that, snap of a finger, and nothing is even remotely concerning. Okay, it's beautiful. We want to be focusing on buying as much cryptocurrency as possible, guys. Focus on it. Okay, focus on it. So no single boss controls the ledger, guys. It's decentralized. We're all in this together as a family, and thousands of miners protect it together. Okay, the cryptocurrency community, it's really a family. They just want people to send money and collect their money freely, without any restraints, without any cringe blockages or anything like that, without any 3 a.m. shutdowns. They just want people to send their money borderless all around the world and spend their money all around the world. God is the greatest. You know, to be able to live in this type of time period where we can have this type of decentralization, it's really a blessing. Okay, take advantage of this time period, guys, and let's keep learning about cryptocurrency. So let's talk about the wall of energy. What is this? Okay, so it's a feature, not a bug. So people complain about energy use, but that energy is a wall protecting the money. So you have to understand that the printers, okay, if they just keep printing the dollars, inflation is going to continue to increase. Okay, which is why the US government, for example, is running to cryptocurrency to kind of save its tail. So energy equals real world cost. Okay, you can't really fake that. When that mean power bill gets sent over to you, you got to pay that. It just is what it is. Okay, it's kind of hard to dodge that because it costs real actual money, electricity to mine, and the actual account too. You can't just be like a fake person. You got to actually go sign up for the power account, put your card on there, etc. So because it costs real money, electricity to mine, you're incentivized to play by the rules, keeping it safe and free though for everybody. Okay, free for everybody to jump in, I'll say. Okay, because some things are going to be gate kept through certain other things, but as far as just the freedom to start, anybody can start. Okay, you might just need the ASICs computer, pay for the energy, but as far as just the freedom to start, anybody can start. So if you cheat, you waste electricity and you lose money. Okay, so it's pretty much not going to be worth it at all, because the point of this is to gain some Bitcoin. So inshallah, you can maybe see some profit. So keep everything stable and keep everything well-rounded. Make sure you have everything planned before you just start trying to do anything. Okay, so let's talk about the life cycle, right? So a broadcast. So if you send one Bitcoin to a friend, the network is going to hear it. Okay, the blockchain is going to see it. You could see if the transactions were completed via what's called confirmations. Okay, so compete. Miners then race to solve the math puzzle, the hash, to box up transactions. Okay, and then verify. The winner shows their proof and everyone checks it instantly. And this keeps it secure. Okay, this page is glued to the notebook forever, also called the blockchain, and then the miner decides to go ahead and get paid. So that is the full 1, 2, 3, 4 cycle of how Bitcoin mining actually occurs. Okay, so the computers are looking to solve the hash puzzle. Okay, after the computer solves the hash puzzle, then the miner will go ahead and get paid in Bitcoin, inshallah, if God wills. So keep it simple. All right, y'all. Happy Bitcoin mining. I pray you guys do well. If you want to go set up a rig or set up your own basement, do it. Okay, be ready to pay that electricity bill. But I believe in you guys. If you're interested in Bitcoin mining, head over to stackmode.net for all trading education. And I'll teach you guys and we can talk about absolutely whatever. Stay prayed up to God. Keep grinding. And I'll catch you in the next one. Peace. All right, I'm going to give you guys a quick introduction to DeFi and yield farming, decentralized finance, also known as DeFi. And I'm sure you've heard of DeFi if you're involved in the cryptocurrency or NFT space. DeFi is going to go ahead and be the space to where you can send currency without a middleman involved. So if you decide to send $1 billion from one person to the next, say you're in the US and they're in China, okay, you can send it with cryptocurrency with no delay. If you're using a wire transfer system or a bank system, they can approve whether or not they want that transaction to go through. And if they think it's fraud or too large of a transaction, they can definitely decline it. Okay. And DeFi definitely moves away from the traditional banks to blockchain-based protocols. And yield farming is a key strategy within DeFi that allows users to earn rewards by providing liquidity to these protocols. And DeFi eliminates intermediaries using smart contracts on blockchains like Ethereum. So smart contracts are going to be the autonomous processes used in order for contracts to automatically process without an approval yes or no process. And yield farming emerged in 2020 with protocols like Compound, offering high APYs to attract liquidity. If you don't know what APYs is, it stands for annual percentage yields. So that means that you're trying to make money year after year by just holding it in one place. So let's say, for instance, you make $100,000, okay, and you put $50,000 into a bank account, right? You let it sit there for a year, okay? Depending on your APY percentage, let's say it's a 0.5 APY percentage, 0.5, okay? The next year, that $50,000 might turn into 50,500, okay? So then you profited $500 just by holding your money in there, depending on the APY percentage, okay? And in DeFi, yield farming APIs can range from 5% to over 100%, but risk like volatility. So could be a good passive investment opportunity in order to potentially gain some income. So let's keep jumping into it. Let's keep learning about it. And don't forget that everything that you do trading wise can involve risk. So make sure you guys stand prayed up to God, be humble, and don't lose yourself. Don't lose your sanity. Even if you take a risk and it doesn't go well, you're going to be straight, run it back up again, come back harder, learn from your mistakes and run it back again. And what is yield farming in the first place? Yield farming is known as liquidity mining. Okay, so that's pretty much money mining. And it involves lending or staking cryptocurrencies, assets in DeFi protocols, such as Ethereum, for example. Okay, because it's going to involve staking. And staking is going to involve cryptocurrencies like Ethereum, for example, created by smart contracts. And it's going to go ahead and be staked instead of mined with POWs or power like Bitcoin is. Okay. So it doesn't do that in order to earn rewards, okay? And it involves lending or staking instead of POWs. And typically they come in the form of additional tokens. Users provide liquidity to decentralized exchanges, also known as DEXs. Okay, so if you ever see the term DEXs, stands for decentralized exchanges or lending platforms, and receive governance tokens or interest as compensation. Let's talk about the core mechanisms of yield farming in the first place. They're deposit tokens into a liquidity pool, and you can earn fees from trades plus reward tokens. Okay, so once again, you can earn fees from trades plus reward tokens. Okay, and compounding. Farmers often reinvest rewards to maximize yields. So when you make some money, put it right back into the market, okay, to maximize yields, creating exponential growth potential and always having wealth being generated for you. And platforms. Popular in 2025 include Uniswap, Aave, and newer trends like Solana-based protocols. And note, yields are not guaranteed and can fluctuate based on market conditions. And in essence, yield farming turns idle crypto holdings into productive assets. And similar to farming crops, where you plant seeds, also known as liquidity, and harvest yields rewards. And history of yield farming. Yield farming burst onto the scene during the DeFi summer of 2020. Fueled by high token rewards and low interest rates in traditional finance, it has evolved significantly by 2025, with more sustainable models emerging. So as of 2020, Compound introduces comp token rewards, sparking the yield farming boom, and that's when people really started doing it. And as of 2021 and 2022, explosion on Ethereum came into play, and people really started heavily trading it. Then multi-chain expansion to Binance Smart Chain and Polygon came out for lower fees, as well as Coinbase and stuff like that. So big brokers started implementing their own networks in order for people to trade and buy the cryptocurrencies. And in 2023, 2024, the focus on risk mitigation, post-hacks like at the Roman Bridge, leading to insured farming options. So this is bringing regulation to the crypto options. So once you guys start seeing insured stuff coming out, regulated laws, government bodies being involved, okay, that's how you know cryptocurrency is going to be heading into a positive space, inshallah. Why? Because it's going to be regulated, and that means it's going to be safe, no scams, and there's going to be laws protecting me and you. So anyone who wants to invest, there's going to be certain laws preventing a lot of things and preventing brokers from just taking your money. And there's going to be confirmations within every transaction too. Okay, so things can also be traced. And it gives you integration with real world assets as of 2025, also known as RWAs, and new AI optimized strategies for better profitability. So some people like to trade with AI bots. I don't recommend that. Recommend you guys do your research, your own trading, but as certain things do progress, there's going to be different programs coming out over the future. And AI may not just be used just to plot out trades. You know, it might be used to create certain programs like Watchlist or stuff like that, and include it on apps and stuff. So it's also a beautiful time. Alhamdulillah. So in 2020, for example, SushiSwap forked Uniswap and offered higher yields to suck liquidity away, demonstrating the competitive nature of yield farming. So they offered higher yields. They offered more money, APY, per year. So let's say, for example, Uniswap offered 6%. Okay, SushiSwap came out, and let's say, for example, they dropped 30% APY. Everyone's like, whoa, 30% return on my money per year. Let me go ahead and get in that. Okay, and that's going to go ahead and demonstrate the competitive nature of yield farming and the different tokens. So let's talk about how it works. Yield farming operates through smart contracts that automate reward distribution. So smart contracts is, once again, the autonomous process that controls the whole cryptocurrency flow. Here's a detailed breakdown. And step 1, choose a breakdown and choose a protocol. Select a DEX like Uniswap or a lending platform like Aave, for example, and provide liquidity. Deposit equals value of 2 tokens, for example, Ethereum and USDC, into a pool. Then you can receive LP tokens. Get liquidity provider tokens representing your share. And stake form. Stake LP tokens. Stake them in a farming contract to earn reward tokens. And step 5, harvest and compound. Claim rewards and reinvest for higher APY. And this process can be automated with tools like Yearn.finance in 2025, which optimizes yields across protocols. So once again, AI is being used in order to automate certain things within the trading space and not just plot out trades, for example. So some key components of yield farming. Let's understand the building blocks, and they're crucial for successful farming. So liquidity pools. So shared pots of tokens that facilitate trades on the DEXs, and LP tokens. LP tokens are proof of your contribution to the pool, and they're used for staking. Let's talk about reward tokens. Reward tokens are governance or utility tokens distributed to incentivize liquidity. And APY stands for annual percentage yield or rate. APY or APR, very similar. Okay. Even if you just see that on your banks or something like that, that's what it stands for. Annual yield percentage or annual yield rate. And it measures potential returns, often inflated by token emissions. And automated market makers, AMS, algorithms like constant product formula that determine the prices. Okay, once again, AI is also assisting with how the flow of the market is going to be changing. Okay, so in Uniswap v3, you provide liquidity and concentrated ranges for higher efficiency, potentially boosting the annual percentage yield from 10 to 50% on volatile pairs. So yes, there's a potential that it could not work out, but if you can get 50% returns on your money, then that's something that people are willing to give a big opportunity to and try. So some strategies for yield farming. To maximize profits, farmers employ various strategies, adapting to market conditions in the current years. So make sure you have a basic strategy. Single pool farming for stablecoins to minimize risk. And you can have layered farming. Stake LP tokens in multiple protocols for compounded rewards. Okay. And flash loan farming. That's also going to be a play too. It's where you use borrowed funds for short-term, high-yield opportunities. Be careful whenever you're using margin, okay, or leverage, or any type of borrowed funds. Okay, be very, very careful. Make sure you guys are doing your research, have a solid plan strategy, and make sure you guys have something to maximize your risk. And risk averse, it's where you farm on assured platforms like Nexus Mutual to cover impermanent loss. And AI optimize, you can use bots in 2025 to auto switch pools based on real-time APY. And advanced farmers monitor the TVL, token emissions, and whale movements for edge. Okay, so let's talk about what TVL is. Okay, so TVL stands for total value locked. It's a crucial metric in the cryptocurrency world, and it reflects the total US dollar asset staked on a blockchain or decentralized application, also known as the DApp. Okay, and whale movements as well too. So what a whale is, it's pretty much someone with just a whole bunch of money who's making one big giant trade or who's moving the market. Okay, just someone who has a big share or percentage of whatever token, stock, or whatever. That's what a whale is. Okay, so if you see someone put like a $5 million on a cryptocurrency play or something like that, for instance, and it's not even that popular, they would be a whale. So whoever owns the large majority would be a whale. So some risk involved in yield farming. While lucrative, yield farming carries significant risks that can wipe out capital. And impermanent loss. Loss from price divergence in liquidity pools, potentially exceeding rewards. Let's talk about smart contract vulnerabilities. Hacks like the 2022 Nomad Bridge example exploited to $190 million in losses. So as time goes over, security is increasing. Laws are getting passed, so things are going to be more regulated. So a lot of things are coming into infrastructure in order to prevent big exploits and big losses from happening. Let's talk about market volatility. Volatility is how fast and quickly the market's moving. Okay, that's pretty much what volatility means when you see that in the trading space. Tokens prices can crash quickly, okay, devaluing your rewards, aka, for example, a Luna collapse, okay, where people think it's going to be the best play of all time. And then once a continuous amount of people start selling or a whale sells, people might follow along, thus crashing. Okay, once a large percentage of the holders start selling, a lot of people might follow along, devaluing the rewards and devaluing the token, thus making price fall down. And high gas fees. Okay, gas equals fees. Okay, you ever heard of gas in the cryptocurrency space? Pretty much just mean fees. And there are sometimes high gas fees on Ethereum, and fees can eat into your profit. So if you made $500, you know what I'm saying, you don't want your fees to be $70. You know, this way you're only getting $430. You want your bread. You want a lot of your bread. But sometimes high gas fees can really eat into your bread. And they're mitigated by L2s like optimism, but we're still going to be careful. God, let us hop on the charts and make some bread by clicking buttons and holding. So we're cool. And sometimes there can be some regulatory risk. And in 2025, increasing scrutiny from SEC and DeFi fields. Okay, but stuff is trying. Certain laws are still working on getting passed, and the government is still just structuring out how they want cryptocurrency to legally be applied. So for example, if you provide 1,000 Ethereum and 1,000 USDC, and Ethereum price doubles, you might face a 5 to 25% impermanent loss compared to the holding. Okay. So profitability analysis. Is yield farming profitable in the first place? Let me know if you guys are profiting in the comments down below. And it depends on your strategy, timing, and risk tolerance. In 2025, the average APIs are 5 to 20%, down from 2020's highs, but still beat traditional savings accounts that offer like 1 to 3% at most, honestly. A lot of the times on most standard bank accounts, at least in America, from what I've seen. In pros, they can offer some potential high returns on your money. Once again, 5 to 20% added to your yearly money, okay, that could stack up over time, especially if it's a savings stash that you guys don't touch. If you're just in stack mode, you're staying down, putting the bread away, letting it make itself, okay, you're really going to be able to make some profitable plays. So it can be huge for building passive income, letting your money make its money while you grow, grind, and get some more money, inshallah. So that's ultimate stack mode. And there's also community governance perks too. So the more percentage that you own or have, there's going to be a lot of community benefits and a lot of community stuff just in the cryptocurrency space that can be pretty cool if you're interested. Let's talk about the cons. Not everything's peaches and creams and roses. So sometimes there can be high risk, and high risk require constant monitoring. And there can be tax complexities on the rewards sometimes, depending on how much you withdraw when you get paid, and depending if there's long-term tax benefits or not. Okay. And that's if you hold the trade for over 1 year. Okay. Factors. The bull markets boost profitability and bear markets reduce it. Okay, so just like traditional stock markets, it works the same for the most part. And real data. As of 2025, stablecoin farms yield 4 to 8%, and volatile pairs are 5 to 15% APY. Okay, so stablecoins, you can still make some good bread. It's still a higher APY, still a way higher annual yield percentage than a lot of bank accounts. Okay, 4 to 8% is still extremely strong. Okay, and it's also going to be a consistent way to make your bread. Okay, it's not about making bread now. It's about making your bread and make bread over the years. Okay, get rich slow and it'll happen quickly, inshallah. Okay, keep praying, keep grinding, keep staying down, keep stacking up. Okay, stay down. And volatile pairs like 15 to 50% can give you a good return too. But if they last a long time, it's going to be the good question. Okay, sometimes they can involve big crashes. So just be careful. And I'd advise you guys invest in something stable. Whether you're buying stocks, cryptocurrency, or whatever, something stable is always going to be where it's at. And net profitability, okay? The reward plus fees, okay? Minus gas plus impermanent loss plus opportunity cost, okay? So real world examples and case studies. Let's examine practical cases to illustrate yield farming in action. So case 1, AV lending. Deposit USDC and earn 5% APY plus AV tokens. Okay, so double benefits. Okay. And case number 2, pancake swap on BSC. You can farm cake on BNB, BUSD, LP, yielding 20% APY as of 2025. And case number 3, Yearn.finance vaults. Auto compounding strategies averaging 10 to 15% returns. Once again, some AI trading coming into play, and lots of new strategies and companies implementing new ways of success or failure, inshallah. So success stories. Early comp farmers. In 2020, early compound farmers earned thousands in comp tokens, which peaked at 900 during its peak. So that let people turn $10,000 of investments, for example, into millions of dollars. Okay. And some failure stories, like I said. Okay, so it's whatever God wills. Okay, it's not everything's always going to be peaches and cream. So in 2021, a bank run cost tightened to drop to 0, wiping out billions in total value and farmer funds. Okay, so just sending people's bread straight to a billion. Okay, straight to oblivion. Okay, straight down. Okay, so careful what you're investing in. Make sure you guys are investing in something safe, consistent, and strong that has some future value. So let's talk about yield farming versus staking versus RWAs. So I'm going to compare yield farming to alternatives for a balanced view. So yield farming versus staking. Staking is simpler and lower risk. So for example, ETH is staking at 4%, but there's lower rewards than farming 10 to 30%. So yield farming versus RWAs, also known as real world assets, like tokenized bonds, that offer stable 5 to 7% yields with less crypto volatility. Okay, so there's more consistent bread over time to just go ahead and invest in. And when to choose farming. For high risk tolerance and active management. Hybrid approaches like farming RWAs combine stability and high yields, so that could be a good option too. So determine what's going to be best for your bank account, your pockets, and do what you do. Do what God has planned for you. And I'm just giving you guys all the education so you can go take this and figure out what you want to invest and trade in. So tools and best practices for yield farming. To succeed, you got to use the right tools and follow the best practices. So you can go ahead and use certain wallets like your MetaMask or Wallet Connect for secure interactions, keeping track of everything, all your transactions, and keeping track of your percentage gains, etc. And analytics, DeFi, Llama, or Zapper, you can go ahead and track your annual percentage yields and your TVL, okay? Your total value locked. Okay, so TVL once again stands for total value locked. And security, you can use hardware wallets, audit protocols to avoid rug pulls. Okay, So use a hardware wallet, okay? Because you're not going to be feeding to pull your bread out and go invest into something else quickly, okay? And avoid rug pulls, okay? Avoid Instagram meme coins, avoid Twitter meme coins, okay? Avoid anything that you just see and shiny eye syndrome. Do your research, do detailed research on it. See if there's any other big whales, okay? Investing into it, okay? Check out the TA, the technical analysis, okay? Check out the chart, see how it's looking. Is it at a low? Does it have upside? Okay, do your analytical research, okay? Before you hop into any type of trade, don't just take anyone else's word and take a loss for no reason. And the future of yield farming, or even take a win for no reason, because then you're not going to know why you won, you're not going to understand the structure. And say, for instance, God forbid that person were to stop posting or whatever, how are you going to make bread for yourself? So get self-sufficient. And as DeFi matures, yield farming is shifting towards sustainability and integration. And by 2030, as a prediction, DeFi can manage 1 trillion with farming and corporations, including NFTs and AI, okay? Both very, very two strong sectors within the future that we've seen in the last couple of years as of this recording in 2025. So if you're watching this in the future, let me know how progressed AI is. I'm here. And cross-chain. Bridges like the wormhole enable multi-chain farming. And there's also sustainable models. Move from inflationary tokens to profit sharing. And regulatory clarity in 2025, which means laws being passed and stuff like that, could boost adoption, making it even more profitable for compliant users, people who are just trying to be law-abiding citizens and just invest. In conclusion, is yield farming really profitable in the first place? Yes, all forms of trading can be profitable, okay? If God puts a form of trading in your face, okay, or in your brain, if you do that, some people are millionaires off crypto. Some people are millionaires off Forex. Some people are millionaires off options. Some people are more millions off futures, okay? Different sectors you could trade. Trade what you want to do, okay? And yield farming can definitely be profitable in any year, okay? And it offers returns far above traditional finance, but it's not for everyone due to high risk. And success requires education, strategy, caution, and most importantly, prayer to God, okay? Humble yourself. Even when you touch that big bag, okay? Just like the story of Benjamin, don't go blow it, okay? Don't go blowing that big bag. Don't go think you're mighty. Don't go think you're the best trader of all time. Be thankful, reinvest, pay your taxes, come back stronger, okay? Never think you're on top of the world. Just keep going, keep staying hungry. And you'll be profitable if you manage your risk, okay? Don't be putting all your bread into it, expecting to get some yield returns. No, pay your bills, take care of yourself, and then come back. And diversify, and stay informed as well too. And if you're always risk averse or expected guaranteed returns, then I don't know if you're going to be ready for trading, okay? You can't be ready to always think that you're going to win, okay? And you can't be expecting that you're never going to lose, okay? You have to be okay with losing, and you have to be okay with putting some risk down on the table, okay? Do your research, okay? Paper trade, and never invest with more than you can infuse, okay? Or lose. So pay your rent, go get some groceries, do what you need to do, and then go ahead and invest and stay down. And you should be investing more than you're spending to the most part, okay? Stay down. All right, love you guys so much. Stay prayed to God, keep grinding. Catch you in the next one. Peace. What's going on, class? Today we're going to be talking about flash loans in decentralized finance. That's what DeFi stands for, if you're curious. What they are and how they work. Let's jump into a deep dive into decentralized finance's most atomic primitive. So defining the flash loan primitive, the power of atomic transactions. Some key characteristics. So it's based off of atomic execution. The entire process, borrow, use, repay, must happen in one single non-divisible blockchain. Transaction block. If any step fails, the entire transaction is reverted as if it never happened. It's also going to have a zero collateral requirement. And unlike traditional or most decentralized finance loans, no upfront collateral is required, making them accessible to anyone with sufficient gas. And gas is going to stand for fees within the crypto world, if you ever see the term gas. To execute the smart contract. The smart contract is going to be an autonomous contract in which the crypto system works off of. So instead of having middlemen like the bank systems confirming whether or not transactions can approve or decline transactions, the cryptocurrency system runs off of autonomous contracts that work automatically, calculate transactions, and confirm them on the blockchain as well too. An instantaneous repayment. The loan tenor is less than 15 seconds. The time it takes for a block to be mined on Ethereum. Okay, so it's going to take 15 seconds to mine a block of Ethereum. And the borrowed funds must be returned within the same block. And citing the source, Flash loans were popularized by protocols like AV, formerly ETHLend, and DIDEX, and the mechanism relies entirely on the deterministic nature on Ethereum's virtual machine, okay, also known as EVM, and transaction automacy. And the mechanics, how a smart contract manages payment and repayment. So the borrow, execute, repay sequence. So the code execution is handled by a sophisticated smart contract deployed by the user. So this is going to be the back end of how certain cryptocurrency structures are going to be ran. This is going to be the code and calculations behind everything, which is called the Flash loan pool contract. So the 3 stages within one block. So this is going to be for the borrowing call. The user's contract call is the lending pool, okay, requesting X amount of dollars in assets, okay, for example, DAI, for example. And then the execution phase to get an example, okay. And the lending pool transfers the dollar amount to the user's contract and simultaneously calls the user's contract defined function, okay. For example, execute operation, parentheses, okay. And this is where the user's logic runs, okay. For example, arbitrage swap, okay. And repayment check. Once the user's logic completes, the lending pool's check its balance and it must have received the original dollar amount plus a small fee, okay, typically a 0.9% back. Yeah. And the reversion guardrail. If the repayment check in stage 3 fails, aka an insufficient funds return, for example, the entire transaction, including stage 1, 2, and 3, is going to be reverted by the EVM, the Ethereum virtual machine, and the state of the blockchain remains unchanged. And the automaticity is the security feature that prevents lender loss. So a primary use case, decentralized arbitrage and capitalizing on price inefficiencies across DEXs, okay. So DEXs is going to stand for decentralized exchanges, if you're curious what DEX stand for. So arbitrage is commonly and one of the most intendedly used things within the decentralized exchange space. And flash loans provide the instantaneous, enormous capital required to exploit tiny temporary price differences across decentralized exchanges. So here's an example of some arbitrage flow for a single transaction. So let's say you borrow 10 million, okay, in USDC. Okay, USDC is going to be a stable coin based off the fiat currency in the US, okay, and the US uses the US dollar, so that's where USDC is going to be based off of from, okay. And the stable coin's purpose is pretty much to be like the fiat currency's version of cryptocurrency's reserve, okay. So yeah, cryptocurrency is pretty much just trying to make its own stable dollar that doesn't change and fluctuate too much, unlike other cryptocurrencies. So, for example, let's say the pair USDC slash Ethereum, okay, is 3K on Uniswap, okay? So that's DEX A. Then I'm gonna go ahead and say USDC is $3,005 on SushiSwap. All right, so that's gonna be $5 more, okay? And we're here to invest, so we're here to make money. So we wanna be getting the cheapest prices possible, inshallah. So let's say that's DEX B. So execution 1. So you can use 10 million USDC to buy Ethereum on Uniswap, okay? That's gonna be DEX A for $3,000. And then execution 2, you can immediately sell the acquired Ethereum for USDC on SushiSwap, DEX B, netting a profit, okay? So you wanna make sure that you're buying on the cheaper broker, okay? And then you could sell on the most expensive broker and you could go ahead and make a profit. And if you wanna make a certain amount of profit, let's say 10 million, for example, okay? Let's say you take 3,000, okay, 5, okay, and then take that by the 3,000, okay, minus the 10 million, and it's going to give you a 16,666 gross profit, okay. and repay the $10 million USDC plus the fee. Okay. So for example, $9,000 to have, okay, the original place where you bought the USDC from or borrowed it from in the first place, and the remaining profit. Okay. So you have to take whatever you locked in minus the fees. So that's going to be the 16,000 number minus the 9,000. Okay. And then that's going to go ahead and be your net profit. So if successful, the block is mined. And the speed and skill of the flash loan execute the trade so fast that the price gap cannot close before the profit is secured. And it's a feat impossible with traditional capital. So advanced use case, collateral swapping and refinancing. So managing risk and optimizing debt positions. So beyond simple profit making, flash loans are crucial infrastructure tools for managing complex DeFi debt positions and risk. So collateral swapping, risk mitigation. So a certain scenario here. Let's say a user has a loan collateralized by Ethereum, but expects the price of Ethereum to drop sharply. Okay, let's say Ethereum's at 5K. And they think it's going to drop down to 3K. And the user can flash loan the debt amount. Okay, pay off the original loan, withdraw the Ethereum collateral, swap the Ethereum for a stable collateral like DAI, for example, and then repay the flash loan and recollateralize the loan with the new stable asset, all in one transaction. The user can mitigate liquidation risk by swapping volatile collateral that fluctuates a lot for stable collateral without ever needing to close their debt position entirely, making your profit being able to be there, and then your profit's not going to be moving much afterwards, inshallah, because you're going to be investing in something stable. So refinancing, so rate optimization. So users can use a flash loan to instantaneously repay an existing loan on protocol A, which has a high interest rate, and immediately take out on an equivalent new loan on protocol B, which has a lower interest rate, all while preserving the original collateral. And this is known as debt migration. And the dark side, flash loan attacks and exploits, the vulnerability of price oracle manipulation. So while the flash loan contract itself is secure, the lender funds are protected by reversion, and the ability to access massive temporary capital exposed other protocols to sophisticated attack vectors, primarily through price manipulation, and how flash loan attacks work. So target vulnerability. The attack exploits a protocol that relies on a single low liquidity DEX or an easily manipulated on-chain mechanism to determine the price of an asset, okay, the price oracle, and the capital injection. The attacker uses a flash loan to buy or borrow a huge sum of the token. Okay, let's say, for example, 50 million. Okay, so just like we talked about, you could borrow 10 million of USDC. Let's say they try to get 50 million, okay, for, a flash loan. And then price pump. The attacker dumps the 50 million loan worth of the token, okay, into the DEX, dramatically inflating the price of the token, okay, which the vulnerable protocol uses as its price oracle. Okay, so they're going to go ahead and dump 50 million into token X, and that's going to inflate the price of token Y. And the attacker then uses the artificially high price of token Y to borrow massive amounts of other assets from the vulnerable protocol, often exceeding the value of their collateral based on the manipulated price. And repayment and profit. The attacker repays the initial flash loan plus fee and keeps the huge surplus borrowed from the now drained victim protocol. And defense. Protocols have largely countered this by adopting robust, time-weighted average price, also known as TWAP, oracles that are resistant to single transaction price swings. So summary and future outlook, okay? Jump into it. So here's a quick summary of flash loans. Flash loans are not inherently good or bad. They're powerful, neutral financial tool built on the unique properties of blockchain automaticity. Some key takeaways for the class. An uncollateralized loan that exists only for the duration of a single atomic block transaction, okay, and has security mechanisms. The lender is protected by the Ethereum virtual machine's atomic transaction reversion if repayment plus the fee fails. And some legitimate uses: arbitrage, debt refinancing, collateral swaps, and self-liquidation mechanisms are all going to be some uses for flash loans. And vulnerability is also going to be subject to play.
They expose protocols with weak price oracles to manipulate and exploitation, so be careful. So the future of atomic finance. Flash loans have paved the way for meta transactions and complex financial maneuvers that treat multiple DeFi operations as a single unit. And their continued presence is essential for maintaining liquidity and efficiency in decentralized markets. Stay predator, God, keep grinding. Head over to Stackmode.net for all trading education. I'll catch you in the next one. Peace.
The real danger in the options trading space isn't the market, it's the people jumping into it with zero understanding. And options can either be one of the smartest tools in your trading toolkit or one of the fastest ways to blow up an account. And the difference comes down to one thing: knowing what game you're actually playing. Most people think that options are some get rich quick button. They might see a clip on TikTok, hear someone brag about a 300% gain, or see something on Twitter, and suddenly they're buying weekly calls or puts like it's a lottery ticket. And that's exactly why they lose. Options aren't risky by nature, but they're risky when you don't respect how they work. Let's go and let's talk about and see if options are too risky, and let's talk about the difference between a gambler and a proper trader. Inshallah. Alright, let's go and let's talk about the truth. So is options trading truly too risky? This is the prevailing myth in finance, is that options is just strictly gambling. So with options, it's a little bit different. So let's go and let's break it down. So on options, you make money based off of time. So there's going to be two directions you can either buy based off of. You're either going to buy calls, which is when you're waiting for a price to go in an upwards direction, or you can go ahead and purchase some puts, which is when you're going to be waiting for a price to go in a downwards direction. Okay. Now on options, you get paid based off of predictions. So let's say for current example, a share price is at $50, right? So let's say you opened a stock and it's at $50 right now. If you think it's going to go up to, let's say, $55, okay, then you would go ahead and purchase a calls contract since you think price is going to go in an upwards direction. Let's say the share price is $50 and you think price is going to go down to $40. In that instance, you would go ahead and play a puts contract since you think price is going to be going in a downwards direction. Okay, so speculation is what they're mainly going to be used for, when speculation means that you're getting paid based off of directional bias. Okay, also hedging too. So since options contracts aren't pure ownership, you're getting paid based off time, and if your time prediction is right within a certain time period, then you'll get paid depending based off of that. So on options, you want to, a lot of the times too, have some time on your contracts. Once again, that's going to be one of the most important things that separates it from gambling versus actual trading. Okay, so your time matters a lot. There's going to be things called Greeks. You're going to have your delta, gamma, theta, and those determine how your profit moves. Okay, the more time that you have on your options contract, the more it's going to kind of pseudo play as a actual real investment. Okay, but if you have your options contract expiring tomorrow, the chances of a certain number hitting could be very, very skeptical. But if you have your options contract expiring in a couple of years, the chances of it hitting could be very, very likely. So it can be gambling if you make it, but it can also be a really, really good way to keep your money, let your money flow within the market, and dominate the instrument by just taking advantage of the time on your contracts. So let's talk about if there are insurance policies on your portfolio, and let's go ahead and explore the mechanics of risk versus reward on options. Also, one thing on options too, options, you can make infinite profit. Okay, so your profit that you can make is infinite, but your risk is going to be set. So if you pay $200 for an options contract, the max you could lose is going to be $200. Okay, but the max you could win is going to be infinite. Okay, so that's the big advantage of options too. So let's go. So just like we talked about in the last slide, what is an option in the first place? An option is a contract, not an asset itself. It derives its value from an underlying asset, stock, ETF, or index. So a call option, right? It gives you the right, but not the obligation, to buy shares at a specific price by a specific date. Okay, so if you think price is going to go in an upwards direction, then you're going to go ahead and purchase a call options contract. Okay, calls, think of picking up the phone. What do you do when you pick up the phone? Okay, you call. Okay, and then we're going to have the puts to the right. Think of putting the phone down. Okay, so call, pick the phone up. Puts, put the phone down. Okay, so puts give you the right, but not the obligation, to sell shares at a specific price by a specific date. So calls is if you're betting on the price going in an upwards direction, and puts is going to be if you think price is going to go within a downwards direction. Okay, the United States stock market though is made to go up year after year after year after year. There's also laws in place such as the short sale restriction law, which kind of prevents and helps things from crashing down to zero very, very quickly. So a lot of the times on options, you might be better off playing calls, since it's going to go ahead and be on the actual investor side as well too. And the double-edged sword, let's go and talk about leverage. So options provide leverage, and one standard contract controls 100 shares of stock. And this is where the risk and reward are amplified. So scenario, right? Let's say stock XYZ is at $100. So the stock investor, let's say they buy 100 shares, right? So if the stock price is at $100, in order to buy 100 shares, that would cost $10,000, okay? And an options trader, let's say they buy one call contract, okay, with the $5 premium. So let's talk about the decimal numbers on options too. So if you ever see an options contract, let's say 2.50, you always want to multiply every options contract by 100 to get the real dollar value. Okay, so 2.50 times 100 is going to go ahead and be 250. If an options contract is 14.20, okay, we're going to multiply that by 100. That's going to equal 1420. Okay, just make it super easy. Okay, whatever you guys see, you multiply that by 100. So let's say the stock price is, or let's say the options contract is 5.70. Okay, then multiply that by 100. It's going to go ahead and be 570, and that's how you're going to go ahead and get the share price for that. Okay, so if the stock goes to $110 and you have a calls contract, then that would be a 200% return. Okay, but if you have it on shares, then that would be a 10% return. Okay, let's just say that for example. So if the stock stays at $100, the stock investor loses nothing, and the options trader would lose 100% of their $500 because the contract expires worthless. Okay, so if your contract doesn't move the amount of ticks that you think it's going to move within that time period, then the options contract could very, very easily expire worthless, and you would see it at a negative 100%. But when you're buying things like shares, you're actually having the actual investment, and you have the ownership power within your account forever until you decide to close. And why is it risky in the first place? So options aren't inherently risky. So gambling behavior is risky, and most retail traders fail due to two specific factors, right? Let's talk about time decay, data. So options have an expiration date. Every day that passes, the contract loses value if the stock doesn't move, and stock owners can wait forever. Option owners are also fighting the clock. So a good way to counter this though, if you do want to play some options or you see some good plays, try and play what's called leaps if possible. Okay, leaps are going to be contracts that you're holding for like 1 to 2 years out. Okay, try to stay away from like zero DTEs and things like that, and use your options as a seed to plant for the future. Okay, if you're buying contracts like 1 to 2 years out, and let's say the share price is at $50, right? Once again, so if share price is at $50 and your take profit, you think it's going to go up to $60, okay, the best contract to buy would be a $51 call. Okay, and you might ask me, Chris, why would we not buy the $60 call if that's our take profit? Because on options, once again, you get paid based off of prediction, and there's going to be bonus points on option. So if the share price is at 50 and you buy a $51 call, but your take profit's at 60, that's going to be a lot of bonus points versus just buying the take profit 60 contract, because then your contract wouldn't really start juicing and making good money until it gets hit. So if you buy a number before your take profit, you're going to get a bunch of extra bonus points, and it's going to hit really, really hard. Now let's talk about buying out the money, right? Try not to do that. Try not to buy cheap contracts. Also, don't forget that it's called trading. When you're winning, somebody else is losing. When you're losing, somebody else is winning. So beginners buy cheap, unrealistic contracts hoping for a lottery win, and these have a low probability of profit. And consistent losses of small amounts add up to account blowups for sure. So don't just buy any random contract thinking it's going to hit. Try and buy 1 to 2 years out, and whatever the current price is, try and buy one above if you're going to purchase a call. Okay, so if the share price is at $50, try and buy a $51 call contract. Okay, if the share price is at $50, you think price is going to go down, try and buy a $49 put contract. Okay, play it like that, buy 1 to 2 years out. The chances of you losing is going to be really, really low. And using options for safety. So professional traders use options to reduce risk, not just to speculate. So they cover call income. So let's say you own 100 shares, right? You sell a call option against them, and you collect the cash premium instantly. This lowers your break-even price on the stock, and this is safer than just owning the stock. Okay. So whenever you have enough shares of a certain stock, you're going to be able to actually sell the options contracts. Okay, and then you're going to have protective puts as insurance. Let's say you own 100 shares and you're worried about a crash, then you would buy a put option. If the stock crashes to zero, which most of the time, if it's a half decent investment, it won't, then you have the right to sell it at the strike price, and you've capped your maximum loss, protecting you on really both sides and just giving you a lot more leverage on your account to manage and maneuver your money exactly how you just want. So covered calls and selling options is something you can also look into. Going to be dropping a video on that very, very soon as well, inshallah. But before that, let's talk about it. So let's talk about selling versus buying the premium. So the house usually wins in options, and the house is going to be the options contract seller. So the options contract seller is pretty much wanting you to do some insane decision. Okay, they want you to make the most dumb decision of all time, and then they're going to get paid off of it. So that's not what you want. You don't want to get taken advantage of, so you need to outplay them. Okay, so the statistical edge. So approximately 70 to 80% of options expire worthless. Therefore, buyers have unlimited profit potential, but a low probability of success. But if you want to see a lot more successful wins within your options trading portfolio, I recommend you guys focus on contracts 1 to 2 years out. And once again, wherever the current strike price is, buy one above or below that number in order to have that consistent value. Okay, that way you're pretty much gonna trick it into almost a shares type of play. Okay, but you're getting the options profit. Okay, focus on time and stay near the current price. And sellers have capped profit potential, but have a high probability of success. Okay, due to the fact that they know people are going to make some uneducated, silly decisions and destroy their account. So don't let it happen to you, inshallah. So conclusion. So risky trading usually involves buying short-term options, right? Like 0 DTEs, weeklies, etc. And conservative trading involves selling options or using spreads or buying contracts within 1 to 2 years out to define your risk in every single scenario. Really just protect your money, okay? You're not on this earth working hard for no reason. Don't go burn your money down to the ground making dumb decisions, okay? You got it. So if you're not focused on your take profit, options can definitely be a problem. If you get reversed on certain areas, the Greeks are going to really hit you extremely hard. And it's things that's happened to me. There's been times where I've been up at almost $1,000 in a day, come back later on due to the fact that I was playing 0 DTEs, come back to negatives, okay? So it's not things like that I want you guys to go through. It's extremely toll taxing on your mental when you guys are trading, and it can bring a lot of anxiety on your next trade, and I don't want you guys to go through that. So understand that they're going to be too risky if they're going to be treated like lottery tickets. So if you're buying weekly out the money calls, 0 DTE without risk management, expect those results. But they're not too risky if they're used for hedging, income generation, or if you're buying leaps, which are going to be contracts that are 1 to 2 years out. Okay, so the danger really lies in the trader, not the trade. Okay, so control your flesh, be disciplined, don't make dumb decisions, stay prayed up to God, keep grinding, protect and provide for your family. I'm gonna catch y'all on the next one.
Class, today we're going to be talking about how to read a futures quote. This is going to be a beginner's guide to just understanding the futures market, understanding the terminology, and before we even put any money into the market, we want to understand what we're investing in, how we're going to invest into it, and how we're going to make some profit in the first place. So let's decode the contract symbol and the price stage data. So if you guys have ever seen a symbol like NQH, for example, okay, NQ would go ahead and represent the index. Okay, it stands for the NASDAQ 100, which represents the 100 tech stocks. Okay, so the first part of the term we're going to see is going to be what you're trading. If you're trading CL, that's going to stand for crude oil. Okay, if you're trading NG, it's going to stand for natural gas. All right, if you're trading ES, that's going to be for the S&P 500, okay, also known as SPX. So when you're trading YM, you're going to be trading US 30, also known as the Dow Jones, okay. So that's going to be what all of those mean. That's going to be the contract symbol. The contract symbol is going to be the first thing that you guys are going to be looking at. So once again, the contract symbol is the first thing that you guys are looking at. So futures contracts, the basics. So a futures contract is an agreement to buy or sell a specific quantity of an asset at a predetermined price on a specified date in the future. And it's an obligation, not ownership. And you're buying the right and obligation to transact later. Okay, so that's what you're doing whenever you purchase a futures contract. And the trade is secured by margin. It's a good faith deposit. So pretty much, let's say you want to trade with $1,000 worth of size. okay, they would go ahead and let you do that, but you would have to have at least $200 deposited, for example. Okay, the margin is going to be the minimum amount needed in order to open up the trade. Okay, so make sure you guys have more than the minimum amount, okay, because if you go under that amount, you can possibly get what's called liquidated, okay, and you could potentially lose your account, okay, it could be sent down to zero, and if your account goes in the negatives, you could owe the broker money, okay. And unlike stocks, you don't own the underlying asset when you buy the contract. You're more just playing off of speculation, okay, and speculation is pretty much just playing off of directional bias, whether or not you think it's going to go upwards direction or downwards direction. Some common underlying assets, there's some indices. Okay, you can play the E-mini S&P 500, okay, or the NASDAQ 100, also known as the NQ. E-mini is the ES, okay, etc. And then you're gonna have commodities, crude oil like CL, you got gold, okay, GC, corn, okay, and then you can also trade some certain pairs too, similar to Forex. You could trade currencies, so you could trade euro, some Japanese yen, and some other currencies as well too. And as well as interest rates, you can trade 10-year treasury bonds and some other things as well too. Every broker is going to have different things you can trade, but for the most part, this is just what it's going to be. So the symbol, identity and expiration. So example quote symbol, okay, ES. Okay, the part of the ES is going to be the first part that you're going to see here. That's going to be what you're trading. That's going to be the instrument you've decided to trade, whether it be the currency, the index, whatever. That is the index that you decide to trade. Okay. The M is going to stand for the expiration month. Okay, it's going to stand for when the contract is going to go ahead and expire. And the 25 is going to represent the year. Okay, so if I'm in 2025 when this video is dropping, then the contract will go ahead and have year. So first, the product code. So when it starts to pop out in your face, you'll see ES, for example. Okay, the first part that you're going to see of a futures contract is going to be the underlying asset that's being traded. Okay, and ES, for example, stands for E-mini S&P 500. Okay, GC for gold, CL for crude oil, etc. Okay, so the first part of it is going to be the product code. The second part of it, okay, the letter that you're going to see, you might see M, H, Z, etc. They're going to go ahead and represent the expiration month. So the month of the contract, okay, determines on the letters that's there. Okay, so whenever it's going to expire, look at the letter. So M is for June. So M is for June. U is for September. Z is for December. And contracts generally expire quarterly. And the expiration year is going to be the number at the very end of it. So the expiration year is going to be the last two digits of the contract ending. Okay, so the last two digits is going to really stand for the year. So you know how you guys abbreviate the year. So 2025, for example, would be abbreviated as 25. Okay, 2022 would be abbreviated as 22. Okay, so for instance, a 2022 contract would be like ES. Okay, say in the month of September, ES. Okay, if I'm trading the S&P 500, okay, U would represent the June expiration. Okay, and then the 22 would represent the year 2022. And this ensures that the symbol is always unique and points to the exact contract. And reading the price data. So last, the price at which the most recent trade was successfully executed. That's going to be the last price. Okay. And this is the most visible price, but not necessarily where you can buy and sell right now. And the difference between the bid and the ask is going to be the spread between everything. Okay. So the spread between everything is going to be how much you buy something for, which is normally going to be the ask price. Okay. And how much you sell something for, which is normally going to be the bid price. So a lot of the time for the ask price, it's actually going to be more expensive, okay, than the bid. And the bid a lot of the times is going to go ahead and be cheaper. Okay, so the reason why a lot of the times people might purchase the ask price is due to the fact that the ask price is going to go ahead and fill them faster. Okay, getting filled in means that you're being entered in the market. Okay, so your order is going to start being able to make you money, or you're able to lose money. So that's what getting filled is. Okay, how instantaneously the broker can put your position into the market. Okay, so you're going to have your ask price, and then you're also going to have your bid price. Okay, so your bid price is going to be the cheapest price. And that's what the buyer is going to be currently willing to pay. Okay. So your bid price is going to be cheaper. Your ask price is going to be higher. Okay. So risk management. Let's talk about size and value. So the contract size. So the standardized amount of the assets one contract controls. Okay. So for example, to catch up with certain examples here. So for example, one crude oil contract, let's say CL, equals 1,000 barrels. And one E-mini, ES, okay, is 50 times the index value. Okay, and then the tick size is going to be the minimum movement. The smallest increment at future price can move. Okay, so for example, if ES moves 0.25 a point in increments, okay, then depending on how many contracts you have, you can calculate how much money you want. So for example, for ES, one tick, 0.25 tick, and it moves in 0.25 ticks. So you can calculate exactly how much you're going to make and exactly how much you're going to lose in futures. Okay, that's the beautiful thing about futures. So you can calculate all of your risks. So for example, one tick is worth 0.25 points. Okay, and that's going to be worth $12.50. Okay, so depending on how many ticks stop loss that you want to do, go ahead and calculate your math depending on the tick value. Okay, so your total P&L is your price movement, okay, slash the tick size. Okay, so your price movement, depending on how much it's moved, how many ticks it's moved, and how many contracts that you have, how much size, how much money you have put in, that's also going to affect your P&L, your profit and loss total. So know your product code, and the first letters tell you what you're trading, okay, so you don't get confused with certain contracts, or if you're trying to just read the chart in general. And watch the expiration dates. Futures contracts have limited shelf life, okay, depending on the month and the year, avoiding holding into expiry. Okay, don't do that. And mastering the quote is going to be the first step to mastering futures risk. Okay, stay prayed up to God, keep grinding. Head over to stackmode.net for all trading education. Peace.
If you guys are struggling to invest or save some money, this is going to be how you can get into stack mode. Get ready.
Class, what's going on? We're going to be talking about stacking up cryptocurrency, stacking up that Bitcoin, that Ethereum, XRP, etc. All right. We're going to talk about some things, how we invest, what DCAing is, and how we're just going to get into stack mode. Okay. Successful investing is not about timing the market, but it's about time in the market. An unwavering mental discipline. The discipline is going to be the foundation of stack mode. So have some strong commitment to your goals. If you're going to tell yourself, I'm going to put away X amount this month, do that. Stay down. I don't care if you don't got to go out with your friends. If you don't want to eat the food you don't want to eat, do what you need to do. All right. When you're in stack mode, you got to reject emotional trading, emotional decisions, and things that you don't want to do. Okay. You want to go cop that cake. Okay. It costs $5. That could be $5. That could be stacked into some cryptocurrency. You got to rewire your mindset completely. Okay. You got to be prepared to rewire your mindset completely. All right. So buy assets regardless of the market volatility. Okay. This mimics a consistent practice. Okay. I'm telling you guys. All right. Just invest. Okay. Sometimes people might be thinking like, oh, what if it's an all-time highs? What if it's this or that? Certain things you don't trade like other things. Okay. Now, if you're trading something like Forex, futures, or options, right, be extremely strategic with where you're buying. And when market makes a nice dump, okay, you start seeing some support getting formed, buy the dip. Okay, buy the dip. Okay, if everyone's thinking, oh, we're in the worst bear market of all time, if you just start seeing a nice curl on your higher time frame structure, take that. Go ahead and take that. Get in, start stacking up some cash, and watch your money grow. Watch it turn into more money over time. Okay, but it's not going to happen if we don't start trying, if we don't put in things now. Some of you guys might have $20 chin in your checking account right now, right? Put $15 in there. Okay, keep $5 in there. Stay down. Do what you need to do. Okay, keep your checking account empty. Keep yourself broke. All your money should be planted in some type of investments. Keep yourself broke. I'm telling you, it's going to change you guys' mindset entirely. Okay, and the biggest threat to a portfolio is really going to be greed. Okay. So one thing that is going to be extremely important though is one, knowing when to close, knowing when the trade is just really finished. Okay. Knowing when you just need to exit for some profit, take some money off the board, etc. Okay. And fear. Okay. Fear can be absolutely destructive. Okay. And we're not going to have that. Okay. That can cause certain things like anxiety. Okay, which can mentally make you do horrific decisions, such as closing your trade early, okay, destroying your whole risk reward, destroying your whole goal of to trade in the first place.
Okay, so we're not going to do things like that. Okay, we're going to change our mentality. We're going to come stronger. We're going to be better. Okay, we're going to ask God for strength, and we're going to go forward. Okay, even if you do make a mistake out of greed, even if you held the trade a little too long, and then you wake up the next day, your profit's a little lower because you got reversed on, it is what it is. Learn from that mistake, journal it, and don't let it happen again. Okay, you're good. And make sure you guys are trading things that are halal. Okay, you guys want to be trading good things, clean things. Okay, because when you start trading things that the worldly community just doesn't support of, you can start seeing a large decline in assets. You've seen it with certain stocks like Target, for example, and things like that, where points have some dramatically dropped due to the fact that the world just didn't agree with certain decisions that were made. Okay, so be aware of that. And have some delayed gratification. Okay, make it fun. Stay down. Okay, stay down. Go on like a 6-month run. All right, the core principle of investing is buying assets instead of buying random items. Okay, that's what you're going to be doing. Make sure you guys are buying items and things that are going to be making you more money in the future instead of just buying random miscellaneous items. I'm telling you, your money's going to get spent either way. Okay, so don't just keep it stacked up inside of a bank account. Do something with it. Plan it in something to where it's difficult to pull out, to where you actually have to press buttons to withdraw. I'm telling you, if you have it sitting in your account, you might do something that's not going to make your money turn into more money. Okay. So every potential consumer purchase is viewed through the lens of opportunity cost. Be like, dang, that could have been some crypto. That could have been some Bitcoin. That could have been some Solana. Dang, that $20 on McDonald's again. Dang, that could have been some Bitcoin. Okay, you do that 3 times a week. You go out on the weekends. Okay, you go out. Okay, you get McDonald's Friday night. You do it again Saturday night. That's $40. Okay, 2 weeks, 3 weeks of that, it's $120. Okay, that you guys could have put away. That could then grow, turn into easily $200, okay, within a couple of months, okay, a couple of weeks even, okay, and then that grows, and then you put in some other cryptocurrency, then that grows, okay. Just the fact that your money is making you more money instead of you going home buying one big batch of groceries for significantly less, okay, because how do you think these food places are making money in the first place? All right, they're buying large bulks and selling it to us for an upsell. That's how just business works. So instead of getting flipped on, okay, because you're in stack mode, you're not getting robbed, you're not getting flipped on, okay, inshallah, you're not getting finessed, you're not getting tricked out your spot, okay, you got to have your head on, have it straight. Make sure you guys know exactly what you're investing into as well before you put $1 into it. Don't just hop into something because your boy or somebody said it was fire or somebody said it was a great investment. Yeah, hop into this. No, do your research, understand the fundamentals behind it. Fundamentals means the investment. Okay, the true purpose of the future. Is it helping people? Okay, is it improving lives? Okay, think about what it's doing. Okay, and if so, then you can go ahead and make your potential decisions based off of that. Then you want to go ahead and check the charts, etc. But make your decisions before you invest. Do your research. So a long-term portfolio, it must be resilient also. Okay, so a long-term portfolio must be resilient, and we allocate capital based on conviction, decentralization score, and time horizon. Okay, and this minimizes the impact of any single asset's failure. So the foundation, right? This is going to be the floor. Okay, so when you guys are investing, think of everything like a house. Okay, on the base of the house, you got your pillars. Okay, to make sure that the house doesn't blow away in case a big storm comes, tornadoes, etc. Okay, so think about that. You're going to have your foundation. Make sure you guys have your foundation in something that's not too volatile. Okay. The foundation of your portfolio shouldn't be fluctuating too much. And if it is fluctuating, it should be positive within a positive equity over the course after year after year after year after year. Okay, you don't want your money to be fluctuating extremely heavily into something where you have a large majority of your investments. Okay, especially if you're using this investment as a savings. Say, for example, if you're using Bitcoin as savings, okay, something I personally do. Okay, if you're going to use Bitcoin as savings, you can see year after year after year, it's been something that's been stable. Okay, the U.S. government owns it. Many other governments own it. Okay, and you could see other companies have been buying hundreds of millions of dollars worth of it as well too. Okay, showing us that it's very safe, and it seems that the world's organizations that control the economy seem to be investing into it. Okay, even that things like the S&P 500, ETFs, which stands for exchange traded funds, those stuff like that can be invested into. Okay, so your foundation, large majority of your portfolio should be into something safe. Okay, then you're gonna have your infrastructure. Okay, your infrastructure is really gonna be 15 to 30% of your account. Okay, it's gonna be some key platforms in there. Okay, some other cryptos that you might believe in. Okay, cleave platforms, smart contract layers, and scaling solutions that are essential for the future. Okay, so the reason why, for example, you might want to use Bitcoin as your foundation, Bitcoin is a limited resource. Okay, so eventually it is going to go away. It's going to go ahead and go extinct. So you could go ahead and use it as the floor due to the fact that it's something that's almost guaranteed to go up, due to the fact that just off of humans' ideology alone, we want to have the most of something, especially if it's going to be rare. Okay, so that alone creates value, leading it to go in an upwards direction year after year after year. Thank God. So, and they also allow us to trade currency from one person to another. So even if you wanted to send money to your family or do something like that, okay, if you have some family in Thailand, okay, and you're in America, instead of having to go through the tedious wire transfers, getting your payment declined, etc., PayPal, blocking or putting your money on hold, etc., what you could do is just send it easily through cryptocurrency. Everyone's going to be happy. Okay, so if you have family in a whole another country, you can easily send money to them using cryptocurrency. Okay, so it has value. Okay, it has value, and there's also going to be tons of things like Bitcoin ATMs as well too. Like for example, at my local gas station, there's Bitcoin ATM. Okay, you can go ahead, and I'm sure maybe near you as well too. Okay, if you guys check, see if there's a Bitcoin ATM near you. If you guys have some cash, okay, say if you guys get paid through tips or something like that, go take that to the Bitcoin ATM and go buy some crypto. Okay. I don't care if you guys have cash, do whatever you need to do. Okay, take every dime, but you need to have that investment mindset. Okay, don't think about the amount, think about the action. Okay, I don't care if it's $5, go put it in the market. Okay, you need to have the mindset. Some of you guys are attached to the money, some of you guys want to see big figures, but your discipline is not in place. Okay, and this is something I personally talk to God on a lot. Praying for strength, okay? Because if you want to see these numbers, you have to be the person that's able to see these numbers, okay? If you want to make 7 figures a month, a year, etc., right? You have to be somebody who acts like it, somebody who moves like it. Are you waking up, okay? Do you pray every day? Do you pray for assistance, okay? To stay healthy so you can continue grinding, working, and innovating on your ideas that you've been blessed with in the first place, okay? Are you spreading love? Okay. Okay. Are you spreading good energy on the earth? Okay. There's going to be a lot of things that go into this. So you got to change your mindset on money too. Some of you guys are still disrespectful to money and you might not even have any money. Okay. Some people think that $5 is not a lot of money. $5 can go a long way. $1 can go a long way. Okay. It's about your mindset. Okay. Stacking everything. Okay, make sure you guys are getting the cheapest things that you can. If it's not something that you could have to be overly excessive on. Okay, if it's something like food, okay, get yourself some high quality food. Okay, but if it's something like an expensive t-shirt versus the normal t-shirt, and you know you can't truly overly afford the expensive t-shirt right now, why are you trying to pop it? Relax, you're in stack mode. You got to be okay with that. Okay, God got you. Okay, if you got some family that loves you, you're blessed, you're good. Okay, stay down. Stay down. Don't worry about what people are thinking. You got to be in your own lane. Okay, if you're going to be in stack mode, you got to be tunnel vision. Y'all wake up, pray, and grind. You can't be thinking, oh, what's this person finna think? What's this person finna think? Oh, they see me in this fit 30 times. Like, man, you got to get all that stuff out your head. You got to run up your bag right now. Some of you guys are running your bag. You're too much in people's world. Okay, you're way too much in people's world. You're worried about, oh, who's in this relationship right now? Who's doing this? Who's doing that? Okay, we got to worry about us. We got to worry about us. There's plenty of times where I realized I had to take a step back and worry about Chris. Okay, and I had to get in stack mode. Okay, and it's important to do that. It's healthy to do that. Okay, focus on yourself. Even if you guys got to go ghost, do what you need to do. Okay, focus on God and just build yourself. Come stronger. Okay, change your whole mentality. You're not going to be able to invest the way that you want to if you're at the same mentality. You can't say you want to be a millionaire and you're not ready to sacrifice. When the sacrifice comes, you're like, man, I'm not doing this. I'm about to just get the fast food, whatever. You can't say, yeah, I'm about to get groceries. You know what? I'm swapping the groceries. And then you drive by the fast food place, you go cop some. Okay, spending way more money than you need to. Once again, keep yourself in the loop. So when you are ready to break out the hamster wheel, let yourself know, okay? Let yourself know, because God knows when you're ready to break yourself out the hamster wheel, okay? But you got to write your good story, okay? Don't wake up and don't be on nothing. Wake up and go be hungry for it, okay? After you wake up, you make your fajr, you pray, go get to it. Be hungry. Whatever you had in your head the next day or the previous day, get to it the next day. And then the next day, keep yourself hungry, keep it forward. Okay, you can't be doing all these researches on these cryptocurrencies, being like, oh, this is going to be the greatest investment of all time. And then you have no capital put in because you're not grinding. Okay. So a lot of the big portion of trading too is really having the capital outside of trading. Okay, what are you doing outside of these markets to even have money to make these cryptocurrencies turn into any sort of profit or help any sort of people within your family or anybody within the world? Okay, if you say you want to do X, Y, and Z, okay, it's time to make some sacrifices. Okay, and I really do believe in you guys, but if we want to make it happen, we got to sacrifice. I believe in you. If you have even the thought in your head, I believe in you. But you got to sacrifice, okay? Once you show yourself that you're not ready for sacrifice, you're going to fail yourself. And then you might start not believing in yourself, okay? And that can really tear you down, okay? Don't lose track. You guys are good. I'm telling you, you're good. Stay decent. When you're dead tired, when you think you can't do it anymore, keep going. Keep going forward. Do one more rep in the gym, one more phone call if you're a salesperson, one more video, okay? You got to set yourself apart, okay? That's pretty much all this is. If you guys are chasing wealth, you have to set yourself apart then. That's all it is. All money shows you is who's setting themselves apart, who's waking up every day, who's praying, who's grinding. That's all it shows, okay? We got to understand that this is all numbers on the screen at the end of the day, okay? All money is numbers on the screen. It's numbers on the screen and it's paper that can be ripped. But it's things that can keep roof over your head. You can help people and feed yourself and people around you, okay? So it can do really important things, okay? So I need you guys to understand, like, okay, cool. So this is why being close to God is really important, because I'm telling you, if you guys just made $1,000, right? Pay your bills, okay? Get your groceries. Please don't eat out, okay? Don't eat out. Get your groceries, okay? Pay who you need to pay. Clear your debt. Credit cards, make sure you guys clear that debt off the table, okay? Clear that debt off the table. There's a reason why God talks about debt as well too, okay? Clear that debt off the table. You guys don't want that haunting you. You don't want interest to be building up, okay? Interest could definitely come bite you like a shark, okay? Leading you to have less money to invest in the long run, okay? So money that could have been invested, you would be paying to whatever debt that you'd be laid on, okay, instead. So please, inshallah, work harder. Okay, I don't care if you guys are tired. That's beautiful. Beauty in the struggles. There's times in life where you're going to be significantly more tired than others. There's times in life where you're going to be working significantly harder than others. Okay, and then there's going to be times in life where you might be chilling, you might be taking a step back. Okay, and that's life. That's just what it is. Okay, whether you guys might get sick, event happens. Okay, you might just need to take some time to get your mental recourse and build yourself back stronger. Okay, it happens. We're all human beings. Okay, sometimes we go through phases, things like that, all right? But if you're going to be in stack mode, you got to understand the main goal of the mission. Even if you are going through said phases, you can't let your emotions dictate and control and over-centralize your decisions. All right, if you're going to tell yourself, all right, I'm putting away $30 this week, I'm not eating donuts, and I'm not going to work out. Okay, if you say you're going to do all those things, right? And then you get up, it's late alarm, you boot up 3 donuts, it's goofy, okay? And every time I would fail myself in the morning, I would just have a strong, furious hatred for myself because I failed myself. The higher level of Chris, right, who expected more from me, okay, failed. So then I told myself, you know what? Every morning I get up, I'm going to strive as hard as I can to be disciplined. I don't care how badly I don't want to work out. I'm there. Okay. I'm going to have the weighted jump rope in my hand. Okay. And this is the type of mental infrastructure that I built within myself because I was tired of being disappointed in myself. Okay. Some of you guys are also chasing financial goals because you're tired of being disappointed in yourself. And I feel you. Sometimes we got to upgrade our life. Okay, we don't want to be living lower than we expect. Okay, and I understand that we're all here once on this earth. Let's live nice. Okay, let's live nice. But if we want to live nice, we got to understand the sacrifice and the other side of that. Okay, and I just want to be extremely real with you guys. So it's like, people might come on here and show you guys the beautiful side, especially of trading and investing, etc. Might come on here, show you cars and things. You know, there's a couple times I come on, I'll show you guys some things, right? Might show you some cars, I might show you on vacation or something, right? But I do want to just keep it extremely real with you, okay? There's times where it's 18-hour days, I'm extremely just frustrated, okay? Just tired, okay? Appointment after appointment after appointment, call after call after call, okay? Once again, keeping yourself broke, okay? Being like, oh man, you know how many times I've wanted to pull money out of my investment account to go buy something, but no, you don't do it. You stay down. You got to have your future goals set, especially if you guys have families. It's time to take things extremely serious, okay? That's a blessing you guys have been blessed with, okay? If you guys have been blessed with a family, people who love you, it's time to go hard for them, okay? Show them a new side of life. Show them something turn, okay? But in order to show them something turn, you got to turn up, okay? So stay down. Stay down with it. I don't care whatever you're doing. I don't care if you're making pots and pans. Stay down with it. Keep making pots and pans. Make the best pots and pans in the world. Stay down with it. But some of y'all give up, okay? You're never going to get to any type of bands if you give up, okay? This is why praying to God every day is a good way to build discipline, okay? Start your structure. Wake up. Pray every single day, okay? Be grateful. And also being in a gratitude mindset, it's going to be hard to be mad. Okay, when you wake up, you're grateful for your life. You're grateful for what you're going through, whether it's good or bad, struggle. Okay, whether you're chilling on a beach house and you made it. Okay, or you're living in the trap. Okay, either way, be grateful for what you're going through. You're alive. You can innovate your ideas, and you can come different. You can pop out. Okay, you can show yourself that, you know what, I'm better than whatever version I thought I was. Okay, I'm better than whatever mental level I'm at right now. I can be way stronger right now. I can be way more disciplined. I can be way hungrier for it, like a lion. Okay, so go hunt. Go hunt. Okay, go hunt. Whatever you guys want to do, that business you say you want to start, go hunt. Go hunt. Okay, we're in way different times now. Okay, back in the day, we're really meant to wake up and go hunt lions and go hunt animals and stuff like that, and defend and take care of our land and things like that. That's really what we're meant to do as human beings. So to be as passive as to not want to start your business or not go for your goals, it's really crazy. Okay, it's crazy. You gotta have way more testosterone than that. I don't care if you're a woman or a man. You gotta just have way more thumos than that. God did not make us here to be sitting around wasting our lives. Don't do that. Okay, if you play video games, hop off of that. Why are you building your character there instead of your real life? Okay. If you play video games, don't book a call. Don't book a call. I don't talk to nobody who plays video games. Okay, don't do that. Okay, you're wasting your time. You're already showing me and yourself that you're not serious. I don't want your money. Okay, if you play video games, if you're undisciplined and you're not serious about getting disciplined, don't book a call and don't send me a single dollar on Stripe. I don't need it. I'm perfectly fine. Okay. But if you're serious about improving your life, okay, going in a further direction, okay, working on getting closer to God and really cleaning up your mistakes, okay, I understand. I'm willing to work with you. Okay, but I'm telling you, if you guys are just trying to trade just to make some money, you're not really trying to improve as a person, I'm telling you, you're going to lead to a downward spiral. Even if you run up some decent money, have a good luck like keeping it. It's not going to be fun when you have no discipline, no structure, and no base level morality built for your money. Okay, you're going to be treating it like it's nothing. Okay, you might make some over leveraged trades, and you might have some expectations that might over exceed reality. Okay, and that could definitely lead you to despair within trading. Okay, so take your time, work on your decision making before you put a dollar into the market. I'm telling you, before you start investing, you have to change your entire mindset. I was extremely humbled when I started investing. I realized my ego problems. I realized how impatient I was, okay? To the point here, I'm gonna show you guys, I even have patience tattooed on me here, okay? I realized how impatient I was. There was times on futures where I just couldn't wait for setups, okay? Couldn't wait for setups. As soon as I would blow the prop firm account, I would immediately go take some money and go buy another one, go buy another one, go buy another one, go buy another one. Spend like $3,000 in prop firm accounts, just being a failure. Okay, and I don't want you guys to go through hard times like that. That time was very depressing for me. Okay, made me feel like a failure, made me feel like trading wasn't for me. Okay, until I caught my edge, and then from there I started teaching my friends, and then friends told me to teach you guys. Okay, and thank God everything worked out systematically, ended up becoming profitable. Okay, understanding the market on the long-term side and the day trading side, and through all that failure, I started to understand the market on a global perspective, whether it be futures, options, forex, cryptocurrency, or stocks and shares. Okay, so failure, understand that if you see your portfolio in the red, failure is really going to build you. Okay, you gotta fail. The fact that you're hunting, you're not going to catch everything. Okay, lions don't catch everything. There's plenty of times where the animals start realizing, like, especially when they're in packs, they can fight back. Okay, even if you're a mighty lion, you're not going to catch everything. You're not going to catch every zebra, and that's all right. Okay, what's life if you're winning everything? That's not, come on. That's not realistic, and let's have some grit. Okay, let's put some grind in it. Let's hustle. So understand that, okay, if your portfolio's in the red, you can't panic. Okay, have a mindset of, okay, not everything in life is going to be a win. Sometimes it'll be a loss, but that information will turn into a win later, inshallah. Okay, so just keep praying on it. Pray for strength. Okay, don't have anxiety. Don't be shaking in your boots when you see your portfolio on the red. Okay, keep investing. Keep stacking cash into it. Okay, keep stacking cash. Okay, I'm telling you guys, it'll play out in the end. Give it a couple of weeks, a couple of months, a couple of years. Sit on your investment. Okay, some of you guys are expecting that profit the next day so fast. Okay, stop scrolling on shorts and doing things like that. Go post some shorts. Go get some money. Okay, post some shorts. But you yourself, okay, if you want to be a strong individual, I really recommend you guys stop doing fast things. Okay, the more you do fast things, the more you do instantaneous things, you'll be an instantaneous person. Okay, and that's literally going to lead you to despair. You're going to make the worst decisions of all time. Okay, and then you're going to be like, dang, why am I broke? Why am I in this situation? And it's because you didn't realize that you just set yourself in despair. Okay, so I realized after a multitude of doing the worst decisions of all time, okay, I was like, okay, I need to think on my decisions. And since then, things have been a lot smoother. Okay, you're going to start realizing, okay, I really sat on this trade. I did thorough research on this investment, on this crypto token, for example. Okay, and I made sure that, one, it wasn't a rug pull. Okay, what a rug pull is pretty much just people who pay advertisers or hack influencers to just gain a large audience to influence people to buy a crypto token that they have a large percentage of, so you can buy, invest into it, and they make money and you don't. Okay, that's what a rug pull is. Okay, and then it doesn't have any value, so it's going to go down to the floor and no one's going to keep buying it because there's no demand for it. Okay, versus something that actually has some strong value. Soon as price makes a dip, creates a floor, people are fiending to buy every single dip of something that's actually profitable. Okay, so focus on trading things that are going to have some value within the world. Okay, if it has value within the world, take a shot at it. Okay, stack some cash into it. Stop being scary. Some of y'all are being way too scary. Like, once again, we come from sleeping outside. We come from hunting lions, defending ourselves from bears, etc. And y'all are scared to throw some bread in investment. You got to relax. Okay, relax. All right, it's time to be reckless, especially if you're young. Okay, throw all your bread into your investment. Okay, throw all your money into your investments. Really believe if God puts in your heart, all right, this is what you should be doing. You should be stacking cash into XYZ. Do that. Okay, do that. Don't go making other decisions, being influenced by other people. Okay, if you feel like, you know what, I should heavily invest into this, do it. Okay, do it. Do it. Do it. Okay, some of those chains in your mind, you got to break free from that. You got to break free from that. Some of you guys are scared to invest, but then you have no problem shopping at a store. And it's like, you didn't think the store didn't invest to attract you to go shop. So it's like, change your mindset. Okay, how are you scared to invest, but you can go shop at the store that invests to attract customers like you? Okay, don't be scared. Okay, God got you. You're good.
And once again, keep yourself broke. Okay, once you guys keep yourself broke, after you once again pay your bills though, pay your bills, make sure you have some food in your crib. Okay, so that way you're good. Once you come back, put some gas in your car if you work outside. Okay, and if you work outside, bring food from home. Stop worrying about what people think. Stop kicking it at work. Some of y'all are kicking it at work. Stop getting food with the homies. Stop. Okay, at work, do something. Upload. Hop on the charts. Do something while you're on break. Okay, but some of y'all are wasting time. Okay, the more time that you waste, the more you'll be in the infinite loop. Okay, so the more that you wake up the next day, you're like, oh, I really don't want to do this. It's okay. Did you wake up? Did you continue to grind when you were frustrated? Okay, did you continue to grind when things weren't working out? Okay, and really ask yourself, what type of position do you want to be in? All right, let's talk about some technology and decentralization. All right, ask yourself, what are you investing into? Okay, before committing any type of capital, any type of money, a Stackmode investor performs deep ethical due diligence to ensure that the investment aligns with righteous principles and sound technology. Okay, is it helping the earth? Okay, or is it destroying God's beautiful earth? Really ask yourself these questions. Okay, because stuff like that might steer people away from investing into it, or certain ethical laws coming into place destroying it. Okay, keep that in mind. So technology and decentralization. So is the code open source? And who controls the protocol updates? And high decentralization and clear governance reduce single points of failure and central authority risk, aligning with self-sufficiency. To the team and the community, right? Ask yourself, does the team has a track record of integrity? Okay, this is what I mean by keeping it halal. Okay, does the crypto token you're investing into, do they have a history of scamming? Okay, do they have a history of activity that's just not normal like other tokens? Okay, is it heavily advertised? Heavily advertised tokens, right, being pushed by hashtags, tweets, things like that. You gotta watch. Okay, you gotta watch. Okay, make sure you guys do your extreme due diligence, and especially new tokens. Watch the way new tokens move. Okay, if a token just comes out and it's advertising that it's going to be the best and strongest and most lucrative token of all time, you gotta watch that. Okay, watch that. Do your research. There's also things you can look at on the order flow. You can see a percentage actually of who owns the token. Okay, so if you start seeing lucrative advertising about it, crazy talk, okay, talking about it's the new Bitcoin and things like that, okay, do your research on the order flow. Okay, see who has a percentage of it. Okay, and if you see like over 60% of the coin is owned by one person, most likely it's a rug pull. Okay, so be careful. All right, there's going to be a lot of deceptive people and things out there. Okay, I don't want you guys investing in your money into things and then getting finessed and robbed for absolutely no reason because someone wants to be lazy. Okay, so be safe. Okay, be safe. And ask yourself, is the asset supply transparent? Okay, is it inflationary or deflationary? That's going to help too. Okay, so if the world is going to shambles, are people going to be looking to invest into it? Okay, that's why people invest in things like Bitcoin, since it's a limited resource. That's why things like gold go up in value when the world goes in inflation mode. Okay, since the dollar becomes useless, something has to be of value. So let's run to the limited resource that God put on this earth. Okay, so then we're going to have power as well too. Okay, which is also created by God's resources. Okay, but we're going to have oil. Okay, or we're going to have solar, which is used to once again create things like Bitcoin. Okay, and ask yourself, okay, what would I get out of this token if I were to be the only one to have it? Okay, would anyone care? Okay, if you had keyboard coin, would anyone care if you had keyboard coin? But if a really popular coin went away right now and people couldn't buy it, would people be upset? Okay, how would you be treated? Okay, what type of benefits would you gain? We don't know what type of world we're going to go into. So especially limited coins, I really advise taking a look into that and seeing if it'd be a decision that you'd want to check out. Okay, like Bitcoin, for example. So position sizing, okay? Don't trade with what you can't afford to lose.
Okay, please pay your bills first. Please, please, please. Let me tell you guys another crazy story. All right. So there's one time I put my whole work check into the account. I lost my whole work check in like 5 minutes. Let me tell you this story. All right. So I got the work check, and what I did was I put it into the account. Okay. This was a few years ago. So I put it into the account, and it was some futures. Okay. And at the time, I think it was a J Powell news day. Okay. So market was just landsliding. So what I was doing, right, like a genius, right, guys? So I was trying to long the market. Okay. So while the market was falling, just in an extreme knife, okay, I'm there trying to long the market. And I just lost all my money in like 5 minutes. Okay. Playing with too much size, literally crashed it out. Just pretty much crashed out the whole check. And I remember withdrawing maybe like $200 left. Okay. And I was like, okay, what did I do? Okay. Really reflecting on the decision that I just made. And that like destroyed me. Okay. So don't trade with money that you cannot afford to lose. Please, for the love of God, pay your bills first. Pay your debt first. Get some food first. Okay. You do not want to put your money into all your investments and then you can't survive. You don't want to be in that position. That's backwards. Okay. I will always keep pushing this. Okay. Make sure you guys please pay your bills and get some groceries first. When your bills are paid, you got groceries in the fridge, you're good. Okay. Then you can live broke. Then you're good. Okay. Then live broke. Until then, please take care of your stuff. For the love of God, I'm begging you, take care of your stuff. Please. I don't want you guys to go. It's very stressful if you go through certain things. Okay. If you have too much debt, you got to file bankruptcy. No one is giving you a crib. Life gets extremely more stressful if you go broke. Okay. God forbid, when certain things happen, life just becomes extremely like difficult. Okay. The world treats you a lot different. Okay. If you file for bankruptcy, they're going to judge you whenever you go try to get a house. Okay. You could be in a completely different financial position. Okay. But even if you try to rent, they're still going to see that on your record. Okay. So take heed of these things. Okay. So really take care of yourself, take care of your debt. Okay. And just clear that for yourself or your future family. Okay. You don't want that debt to be falling on them too, because they'll really come and try stuff like that as well. Okay. So bringing me into that, please don't leverage trade. Don't leverage trade and just avoid crypto futures. Okay. I don't care if you guys think you're the best trader in the entire world. Please don't trade crypto futures. Okay. Just don't do it. Don't do it. Okay. We don't want to be trading with leverage. We want to be trading spot. SPOT. Trade spot. Keep stacking your cash. Take your time. Let your money stack and build over the course of months and years. Okay. Why are you trying to rush? Okay. Because I'm telling you, once you guys hop on that crypto futures, okay, especially when you don't have any type of discipline or rootedness built up, it can be scary. Okay. You can realize your true self. You can realize how undisciplined you truly are. And it can make you crash out. Okay. Once again, making you destroy all of your money extremely quickly. Or even worse, owing the broker money. Okay. When you're trading with things like leverage, you're borrowing funds from the broker in order to play a higher position size. Instead of playing a position size that would be normally relative to your account, you're then borrowing it for an X amount multiple. So if you lose, okay, you're going to be responsible for that type of loss. Okay, so always keep things like that in mind. Even if you have a stop loss placed down, if price action is too quick, price can easily run through your stop loss and it might not fill exactly where you might think. Okay, market is not perfect. Only God's perfect. Okay, so even the market has some issues. Okay, you could have a smackdown stop loss place and market could run straight through it, making you to lose or, making you to lose more money than you think, or just liquidate your account. Okay, so the same thing. But if you liquidate your account, that means your funds are going to go down to zero and you're going to be sick. Okay, and then you're going to owe the broker money. Okay, once again, all things that I'm telling you guys from experience. Okay, and then the broker is going to send you that email quickly. They're going to be right there. They're going to need that. Okay, you got to go ahead and wire transfer that money. Boom, because if you don't do that, they're sending those court papers. Once again, stress that you don't want to be going through. Okay, you want to be living life on chill mode. You don't want to be dealing with court. You don't want to be dealing with bankruptcy when you're trying to get a crib and they're judging you. You don't want to be dealing with things like that. It just makes life extremely difficult and hard for no reasons. Take care of yourself. All right. Pray for strength. Keep hustling and putting that money away. Stay in stack mode. Your future self is going to thank you. So, primary goal, right? Convert these digital gains into stable, physical, or income producing assets. All right. Once again, having no debt. Clear all that debt out. Okay. Wipe it all out. You guys don't want any payments haunting you as soon as you wake up, like, oh, the bills are due and stuff like that. You don't want that. You don't want to be living like that. Okay. All right. The bills are going to kind of always be due, but you don't want it to be stressing you out. Okay. You want it to be like, you know what, bills hit, and, be happy. Be like, it's something to grind for, something to hustle for. Be grateful to God that you can even be in a position to take care of yourself and pay what you need to pay. But if you're waking up and stressing like, oh, the bills are here, and it's a different position. Okay. You don't want to be like that. Life hit different when it's that. Okay. I don't want you guys to be feeling like that. Okay. Let's live. Let's have fun. Let's take care of ourselves and let's be happy. And targeted partial sales. Okay. So try to sell in predetermined small increments. Okay. So instead of just selling all 100% of your asset, unless you have a predetermined target and take profit where you want to close a position, that's a different story. But if you're investing something, say you like, I want to hold this until I die, or I want to hold this asset, etc., or you leave the crypto password for your kids or whatever, anything like that. If you just want to have it as a infinite family account or whatever you want to do, right? Try and sell in partials. That way is because you never know what's going to happen. You never know what type of multiples or how high a price jump is going to happen. Okay, so just keep some increments in there, and maybe that small increment will, even if you sell like 80%, maybe that 20% might turn back into 100% over the course of some years, and keep letting it stack, inshallah. Okay, so the most powerful investment principle is consistency. Okay, wake up, pray every single day. Okay, try and work out at least like 3 to 5 times a week. Go hard. Okay, and stack away that money. Please take care of your bills first. Get something to eat, some groceries, and then you're good. Stay broke. Okay, put some gas in your car, get a full tank if you go to work, and that's it. Okay, get yourself some Tupperware, bring your lunch to work if that's what you do. Okay, or if you work from home, you don't need to be ordering no type of DoorDash or things right now. We're staying out. Okay, until you have at least 6 figures. And I'm realizing as I stay in stack mode, I'm like, yeah, it's really just about consistency. Okay, so running up things like 6 figures, right? It can be possible, especially within like a year and a couple of months if you're going hard, putting away the cash that you need to, and investing in the right things. Okay, so stay hard, guys. All right, stay prayed up to God, keep grinding. I'm gonna catch you in the next one. Head over to Stackmode.net for all trading education.
So let's go and let's talk about central bank digital currencies, also known as CBDCs. Now, don't confuse this with cryptocurrency, because cryptocurrency is decentralized and doesn't have a ruler, and CBDCs are money ruled by the government. And think of this as a digital version of cash in your wallet, but with one massive difference: it's programmable. So that means that in theory, the issuer could track every single transaction you make, limit how much that you could save, or even decide what you're allowed to buy. And supporters claim that it is the upgrade our financial system needs to be faster and safer, but critics are calling it the end of the financial privacy embedded in us as humans forever. So we're looking at the future of convenience, or are we looking at the ultimate tool for our total control? Let's jump into it, inshallah. So what is a CBDC in the first place? CBDC stands for Central Bank Digital Currency. So imagine if the cash in your pocket turned into a computer code, but it was still worth exactly the same amount. That is the basic idea of a CBDC. And it's digital money issued directly by the country's central bank. Okay, it's not physical paper, and it doesn't come in coins. It exists only on computers or digital wallets. And unlike some cryptocurrencies that change value wildly, a CBDC is meant to be as safe as a dollar bill. Okay, so think of it like virtual cryptocurrency just created and ran by the government instead of it being on the peer-to-peer decentralized network. Okay, so the government's pretty much creating a currency in order to combat cryptocurrency coming out and its whole decentralized features. Okay, so we'll talk about the benefits. Let's jump into what it is and let's continue. Physical cash versus the CBDC. So we already use credit cards and apps like Cash App, PayPal, Venmo. So how is this going to be any different than things like that? So the commercial bank money that works today. So when you swipe a card, your bank promises to pay the store, okay? And it's an IOU between the banks, okay? And the CBDC, it's a direct liability of the central bank, and it's like handing someone digital cash directly without a middleman bank needing to promise the payment, okay? And as far as the speed, so regular bank transfers can take days, especially on the weekends. And also, when it comes to wire transfers, things like direct deposit when you're getting paid, things like that work on a time-based schedule, whether it be your direct deposit hit at 6 a.m. Some people have direct deposits hit at 6 p.m. Okay. Some people don't have direct deposits that hit on weekends and have to wait for the following business day, such as a Monday or a Friday, etc. Okay. But with CBDCs, payments and bank transfers are going to be instant. Okay. So they're creating a base and a way for people to instantly send money without having to use outside apps. Okay. So sending money today is like sending an email that goes through 3 different servers before actually arriving. And it has to all get approved too. Okay. If you decide to send money via wire transfer, it could definitely bounce. Okay. And sending a CBDC is like handing whoever you need to instant money, okay, or instant $20 bill, but doing it over the internet instantly. Instead of sending the $20 bill via the mail, waiting for the bank to sign off on it, and then sending the $20 bill to the person you want it to go to. That's how traditional banks work. So CBDCs really save a lot of time, make things a lot quicker, okay, and hopefully, inshallah, that'll bring a lot more control back into people's hands versus how we want to spend our money and when we need our money. So if CBDCs are out, what's the point of crypto, Chris? So if they're the same thing, and when they're not, and they both use digital technology, the real difference that comes in between them, okay? One is decentralized and one is not, okay? So they both use digital technology, okay? Sometimes the blockchain, but they're both different in the point of who controls it, okay? So cryptocurrency, Bitcoin, Solana, your XRPs, Ethereum, all decentralized. And the term decentralized means that it's not controlled by a centralized network, okay? When you decide to send Bitcoin to somebody, okay, it directly gets sent to their Bitcoin wallet, okay? No ifs, ands, or buts, okay? Peer-to-peer transaction system, also known as the decentralized system, okay? Then you're going to have the CBDC side, okay, which is going to be controlled, just like traditional banks, by that centralized bank fiat currency system, okay? But the price will be stable, okay? So $1 will equals $1. It's not going to be fluctuating as much. And as far as privacy concerns between the two, crypto is often anonymous, okay? You have to go into the blockchain in order to check certain transactions out, etc. But CBDCs allow the government to see the transactions in order to stop crime, any type of money laundering, or any type of fraudulent activities happening. Okay, so think of Bitcoin kind of like a digital gold that you own yourself. And CBDCs are going to be like digital dollars managed by the Federal Reserve. So one is for freedom and investment and speculative purposes, and the other is going to be for stability and spending. Okay, so one's purpose, okay, it's going to be for speculative, freedom, and investment reasons. And the other purpose is going to be for stability, spending, and sending your money how you want within your centralized bank, okay, when you want, without having to use any type of external apps that you may potentially have to get approved for, especially when you already have your bank. Let's head over to the next slide. So let's talk about the 2 types of CBDCs. Not all CBDCs are for regular people, okay? There's going to be 2 main types. One, you're going to have the retail CBDC, okay? So this is going to be just for the day-to-day person. It's used for buying coffee, clothes, paying bills, and it really just acts like cash in an app, okay? And then you're going to have number 2. Other side of it, you're going to have your wholesale CBDC, okay? This is going to be for banks, and it helps huge banks send millions of dollars to each other instantly and safely, replacing the old slow systems. Okay, so retail is like the debit card in your wallet, and wholesale is like the armored truck that moves money between bank vaults. Okay, so really understanding the 2 different types of services and reasons why is going to help you make some future investment properties, especially when we start seeing banks implement CBDCs more and more due to the fact that they're trying to create some type of competitive edge against the whole cryptocurrency decentralized space. Okay. So why create a CBDC? Okay. Governments aren't just building these for fun. Okay. One, it's for competition to create a space for them to still be profitable in the financial world, especially as cryptocurrency grows year after year after year after year, and people are starting to wake up to what's actually happening and how the currency works. Okay. And the efficiency of everything. So payments become instant and cheaper. So no more 3% credit card fees for shop owners, etc. And financial inclusion is going to come into play. So people who don't have bank accounts can still have a digital wallet on their phone to receive money safely. So that means you can still be able to do jobs and get paid exactly how you want. And in case you get declined by any app such as Cash App, Zelle, or anything like that, you're still going to be able to survive and pay your bills how you need to. And programmable money is what it is. So the government could send stimulus checks that expire if not spent, or can only be spent on food using CBDCs. Instead of having to get checks or use certain cards to spend money, CBDCs could be used to fund government programs to help out citizens. Okay, so during an emergency, the government could pretty much airdrop money directly to everyone's phone without having to mail paper checks and give everyone an essentially virtual card by using CBDCs. Okay, so we can start seeing things transfer away from traditional bank financial fiat currency system that we've been seeing for the past couple of decades into a whole new blockchain involved world. Okay, let's head over to the next slide. So let's talk about the risk and the concerns. So why are some people worried in the first place? So with great power comes great responsibility. Okay, so giving the government total control over digital money has risk, and it's going to be a privacy loss factor that comes into play. So cash is going to be private. Okay, if you buy a candy bar with a $5 bill, nobody knows where it came from even. With a CBDC, the issuer can technically trace every penny that you spend, which takes away people's privacy, which adds control back into people's lives. So if money is programmable, they could stop you from buying things. Okay, so that means that they could deny transactions, freeze certain things, just as a normal bank account can. But banks and credit unions have a little bit more separate control from just the straight up government centralized system directly. Okay, so cybersecurity reasons as well too. If the central system is hacked, the whole money system could freeze, or even if it goes down. So let's say a CBDC risk system is running on like a system like AWS. Okay, if AWS were to go ahead and shut down, that means people weren't going to be able to access their funds. Okay, so do you want convenience or privacy? Okay, both things are going to go ahead and have concerns, and a lot of factors are going to come into play. So deciding what you're using your money for and how you want to invest is going to change year after year after year. So make sure you guys are staying on top of things. And as far as compliance for even your own stores, even if you want to take CBDC currency, we'll see how the things change over the next couple of years. So are CBDCs real yet? Answer is going to be yes. Okay, it's not just a theory. Many countries are already using and testing them. Okay, for the Bahamas example, using the sand dollar. So the Bahamas is the first country to launch a full CBDC. So people use it to pay across different islands using mobile phones. And then we got China. Okay, China using the digital yuan. And millions of people in China are already testing the ECNY. Okay, electronic CNY. Okay, it's just digital fiat currency for China to buy subway tickets, groceries, etc. And then we got US. We got the Project Hamilton. Okay, the Federal Reserve and MIT are researching how our digital dollar would work, but haven't launched one just yet. But the United States is working on things. Okay, so over 100 countries representing 95% of the world's GDP are currently exploring a CBDC. Okay, and this is going to be research done as of 2023, and we can start seeing a lot of things change, especially when it comes to government-funded projects, such as like food stamps, unemployment, or anything like that. Instead of people getting the money placed on certain cards or traditional bank account systems, a CBDC wallet could be used in order to have people spend money on that throughout the entire network. So monies came a long way. It came from seashells to gold coins, seasoning, to paper bills, and now we got plastic cards, and now we can just send money digitally with numbers on the screen with our phone. And CBDCs seem to be the next logical step in a digital world realistically. So as you grow up, you gotta understand how money works, you gotta be able to adapt, and you gotta be ready to change how your asset classes are being moved and how your money is growing, especially as things get more expensive over time. Your money has to be working for you. Okay. Keep that logical perspective. If the world is going to get more expensive over time, that means that your money can never stop working, especially when we have to do things like use the bathroom, sleep, etc. You have to be getting money while you're doing that stuff. Okay. If you want to be competitive in this world, you got to be getting money at all times. In your sleep, while you're awake, while you're getting money, you should be getting money, and it should be that serious, inshallah. Okay. So CBDCs offer speed and safety, but we must come to terms with the fact that you're going to be losing respect of privacy, but you are going to be getting a lot of convenience as well too. Okay, no more long paperwork, waiting for cards and stuff like that. And a lot of that stuff can be frustrating. Okay, just instant funds that come on a wallet, and we'll really see how it plays out for the future. So stay prayed up to God, keep grinding, and head over to stackmode.net for all trading education. Catch you guys in the next one. Peace.
Class, let's go and let's jump straight into it. Today we're going to be talking about mastering financial analysis, and this is going to be the beginner's guide. So what is a financial statement analysis? Financial statement analysis is going to be the process of reviewing and evaluating a company's past and present financial reports, the three statements, to make better economic decisions. And then it involves calculating key ratios and comparing data over time against competitors. So we want to be making sure we know how to read how much is a company making. Does it have a lot of debt? And are we going to be able to profit off the company due to the fact that they're putting a smile on people's faces and it's a profitable company, which is going to affect the future? And is it a company that's hiring people and nonstop making profit? Okay, because that's going to let us know that the share price has an incentive to increase. So it's going to be a comprehensive course on analyzing a company's financial health. Let's understand that the financial statements are going to be the bedrock of intelligent investing, effective management, and sound business decisions. Whether you're an aspiring investor, a business student, or a founder, these skills are going to be fundamental and imperative. So let's take a look at past performance. So you got to look at past performance to identify trends, growth rates, and recurring issues with the company. And comparative analysis, benchmarking the company against its closest competitors, peer group, or industry averages. Okay, see how it's faring up. If it's a tech company, see how it's faring up against other tech companies. If it's a healthcare company, see how it's doing against other healthcare companies. Okay, and do it like that. And forecasting, using historical data and current trends to project future financial performance. So it allows us to answer certain critical questions about a business. Once again, how much money are they making? And are they in debt? It's pretty much going to be the two main questions that's going to let us know if something's going to be a good investment or not. So the income statement, profit and loss, and measuring performance. So the income statement is also known as the profit and loss statement, and it measures a company's financial performance over a specific period of time, for example, quarter or a year, and it shows how revenue is transformed into net income. And the core structure, a journey to profit. The statement is constructed like a ladder, and subsequently deducting expenses from revenue to arrive at different levels of profitability. And the revenue sales. Revenue is going to be the total amount of money that's generated from the sale of goods or services. And this is going to be the starting point. And the first thing we want to look at is the company making money in the first place. Let's check the cost of goods, COGS. The direct cost attributable to the production of goods or services sold. And this includes raw materials and direct labor. And gross profit. Gross profit is the revenue minus the cost of goods sold. And this metric shows a company's ability to manage its production cost. An operating expense, OPEX, the costs not directly tied to the production, and primarily selling, general, and administrative, SG&A, and research development. An operating income. This is earnings before interest and tax, and this represents the profit generated from the core business operations. And let's talk about net income. Net income is going to be the bottom line. And net income is going to be the operating income minus interest expense and taxes. And this is the profit available to shareholders. So the key income statements, ratios. How to analyze the P&L effectively, you got to use margins to see what percentage of the revenue remains at certain profit levels. And gross profit margin is calculated by dividing the gross profit by revenue. And a higher gross profit margin indicates better efficiency in production, which means they can go ahead and scale the business up while still bringing in profit. Okay. So the balance sheet, the accounting equation. So the balance sheet provides a snapshot of a company's assets, liabilities, and the owner's equity at a specific point in time. And it's based on the fundamental accounting equation, which must always hold true. So the foundation assets, okay? Assets equals liabilities plus equity, okay? So this equation dictates that everything a company owns, its assets, must have been financed either by debt or by owners' contributions, which is going to be the equity. So assets, they're going to be whatever the company owns. Assets are anything of economic value that can be used to produce goods or services. And current assets, they're expected to be converted to cash within 1 year. For example, cash, accounts receivable, and inventory. And non-current assets, long-term items are not easily converted to cash. Okay? Property, plant, equipment, and intangible assets. And liabilities, they're going to be what the company owes. Liabilities represent the company's obligation to external parties. So current liabilities, obligations due within 1 year, for example, accounts payable and short-term debt. And non-current liabilities, obligations due beyond 1 year, for example, long-term bonds and deferred tax liabilities. And section 3, the shareholder's equity, okay, and that's the owner's claim. And equity is the residual claim on the assets after all liabilities have been paid off. And it includes common stock and retained earnings, which is cumulative net income minus the dividends paid. So that's how you get that equation too. And so let's talk about tracking real cash. The cash flow statement is often considered the most reliable statement because it bypasses non-cash entries like depreciation and crucials found in the P&L and balance sheet, and it shows the net change in a company's cash balance over a certain period of time. So the 3 core activities, OIF, the CFS is divided into 3 sections that explain where cash was generated or spent. So 1, the cash flow from operations, CFO. This section starts with net income from the P&L and adjusted for non-cash expenses and changes in working capital accounts. This tells you the actual cash generated by the company's normal business activities. So the key adjustment, adding back depreciation and amortization, which is pretty much going to break down expenses on the P&L, but do not involve an actual cash outflow. And working capital changes. Changes in accounts like inventory, accounts payable, and accounts receivable are adjusted here to reflect real cash movements. And cash flow from investing, CFI. This tracks cash used for investments in long-term assets or revenues from selling them. And the largest item here is usually capital expenditures, CapEx, which is the cash spent on maintaining or expanding PP&E. Okay, so interpreting CFI. So a negative CFI, right, which is going to be the cash outflow, is often a sign of a growing, healthy company that's investing heavily in its future by purchasing equipment or new facilities, looking to scale its business outcome and business income by putting all the profit back into the business pretty much. And a large positive CFI may indicate a company is selling off core assets, which can definitely be a red flag, okay? Which means they're going broke. So if a company's going broke, that's not a good sign. And it's a good sign that the stock might actually crash within a negative direction. So check a look for that. So turning data into insights. Ratios allow us to standardize financial data across companies of different sizes and asset-specific aspects of their health. Most notably liquidity, which is the short term, and solvency, which is the long term. And liquidity ratios, can we pay the bills? These ratios measure a company's ability to cover its short-term obligation using its short-term assets. Generally, a higher ratio is better, but industry context is crucial. So it's current ratio. The most common liquidity metric is it compares a company's total current assets, which is its cash, receivables, and inventory, against its current liabilities, which is its payables, short-term debt, etc. And the ratio below, let's say $1, is usually a 1 sign. And the current ratio is calculated by dividing current assets by current liabilities. So, quick ratio, the asset test ratio. A stricter test of liquidity, excluding inventory from current assets, as inventory can be slow to convert to cash. And this ratio focuses only on the most liquid assets. And the quick ratio is calculated by subtracting inventory from current assets, then dividing the result by current liabilities. So, solvency ratios, long-term survival. Solvency ratios gauge a company's ability to meet its long-term debt obligations, and whether it is financially sustainable. Excessive debt can cripple a business during economic downturns. So debt to equity ratios, DE. It compares the amount of debt financing to the amount of owner investing financing, and a high ratio indicates a company is highly leveraged. And the debt to equity ratio is going to be calculated by dividing total liabilities by the total shareholder equity. Let's talk about the interest cover ratio. It measures the company's ability to cover its interest payments using its operated earnings, the EBIT, and the interest coverage is calculated by dividing EBIT by interest expense. And a ratio of 1.5, for example, or higher is generally considered safe, but the higher is going to be better. So putting it all together, let's talk beyond the numbers. While the financial statements provide the objective data, a world-class analyst always incorporates qualitative analysis to provide context and foresight. And let's talk about the qualitative factors, the moat. These are non-numerical factors that determine the longevity and strength of a company's competitive advantage, its economic moat, and management quality. It assesses the track record and reputation of the executive team and asks, do they make rational capital allocation decisions? Are they investing their profit profitable? Okay. And asking those questions is going to be a good thing to know before we just put money into an investment. And doing the industry analysis. Is the industry growing or is it shrinking? Okay. Tech industry as of currently in the 20th century has just been booming, for example. And what are the key competitive dynamics? Okay. Is there any threat of new entrants? And what's the pricing power of it? Okay. And competitive position. Does the company have a sustainable edge? Okay. Patents, brand recognition, low cost reduction, and how many smiles does it put on people's faces? And the small summary of the three statements. Okay. The three financial statements. Okay. One, your income statements. That's going to be the performance over a period, and it focuses on the profitability. Okay. For example, margins, how much money a company's making. And the balance sheet, it's going to focus on its assets, liabilities, and equity at a point in time. And it focuses on resources. And then we have the cash flow statement. It tracks cash movements over a certain period, and it focuses on liquidity and funding activities. Okay. So look at all of them. Okay. So your goal is to cross-reference the three statements. For example, if the net income, okay, is high, but the cash flow from operations is low, it suggests that the company is booking sales, but not collecting cash. That's a critical finding, okay, meaning that it's sinking, okay? So figure out what you guys want to invest in, okay? Stay prayed to God, keep grinding, and head over to Stackmode.net to learn how to trade and invest. Peace. I'm going to go ahead and talk to you guys about how to make money with the stock market. I'm going to break down all the basics. Let's go and jump into it. So what is a stock in the first place? At its core, a stock, and it's known as an equity. It's a security that represents a fractional ownership in a corporation or company. When you buy a share of the stock, you're buying a small piece of that company and a percentage of it. That makes you a part owner or what's called a shareholder. And it gives you a claim on a portion of the company's assets and earnings. And companies issue stock for a primary reason, to raise money for growth. Instead of borrowing money from a bank, a company can sell shares of ownership to the public through an initial public offering. This capital allows the company to expand operations, develop new products, or fund research. And we'll talk about two types of companies, public companies versus private companies. A private company is owned by a small group of investors, and it's often its founders. A public company, on the other hand, trades its share on the stock exchange, like the New York Stock Exchange, or the NASDAQ, and anyone, such as me and you, can buy these shares. And there's going to be shareholder rights involved, and as a shareholder, you typically have voting rights on important company matters, such as electing the board of directors, and the more shares you own, the more influence that you have. And when you buy a single share of Apple stock, you become a tiny part of the owner of one of the world's largest companies. And your ownership stake, while small, means you have a claim on a fraction of Apple's profits, for example. And two ways to make money with stocks. So there's two ways. One, capital gains. This is the most often and most common way that people make money. And a capital gain is the profit that you make when you sell a stock for a higher price than you paid for it. And the goal is simple: buy low and sell high. The difference between the selling price and the purchase price is going to be your profit. So for example, if you purchase 10 shares of a company, say company A, at $50 a share, and a year later, let's say the company's been grinding, they've been dropping new products, they've been helping out people, okay, the future innovation has been coming into play. A year later, the stock's value rose up to $75 per share. If you sell 10 of your shares, you make a capital gain of $25 per share for a total profit of $250. And that's before any taxes or fees. Okay, so that's capital gains, just standard profit that you make by price going in an upwards direction. Okay, so the more companies decide to innovate and stuff like that, then capital gains is going to relate to that. So let's talk about dividends. Dividends are a portion of a company's earnings that it distributes to its shareholders. And not all companies pay dividends, but many mature, profitable companies do. They're typically paid out quarterly in cash, and they represent a passive income stream for investors. And companies that pay dividends often do so to attract and reward long-term investors. So for example, if company B pays a quarterly dividend of 50 cents per share, if you own 100 shares, you would receive $50 every quarter. And this adds to $200 in passive income over a year, in addition to any capital gains you must realize. Okay, so the more shares that you have, the more that you're going to get paid out in dividends. Okay, so you can stack up on certain shares and you'll get paid on dividends depending on certain parameters. Do your research before you invest. So speaking of research, let's talk about the importance of it. So to be a successful investor, you have to do your homework. Making informed decisions is going to be crucial to minimize your risk and maximize your returns. You want some bread, right? It's time to be grinding harder than ever. It's time to be staying down, putting that bread away so we can have more bread to put into our investments. And let's talk about fundamental analysis. This method involves evaluating a company's financial health to determine its intrinsic value. And you look at factors like its revenue and earnings. How much money is the company making in the first place? And is the company growing? And we'll talk about the PE ratio, price to earnings ratio. This compares a company's share price to its earnings per share, helping you understand that if a stock is over or undervalued. And management and market position. Is the company's leadership strong? And does it have a competitive advantage in its industry? For example, a company with consistently growing revenue, high profit margins, and a strong balance sheet is generally considered a good long-term investment. Conversely, a company with declining sales and a lot of debt may be a risky investment. And diversification. This is the strategy of spreading your investments across different assets to reduce risk. And the old saying, don't put all your eggs in one basket, applies perfectly here. Okay. And only God is perfect, but it's a great scenario here. And this is by investing in a variety of different sectors. Let's say AI, cryptocurrency, healthcare, whatever is going to be used to progress the markets forward. Okay, it's going to be a potential factor that you could invest in and make some money in. So let's talk about some investing stuff. So investing in general is a long-term strategy, and investors typically buy stocks with the intention of holding them for years or even decades. And they focus on the fundamental value of a company and its long-term growth potential. And they are less concerned with short-term market fluctuations. Some key characteristics: time horizon. Okay, it's going to take years to decades and months, days sometimes to make some great profit from shares. Okay, but sit on your trades, let them cook. Okay, let your trades hold for a long time and gain APY, also known as annual percentage yield gains per year. Okay, let your money stack up, and the longer that you hold, let's say you hold for a year, then you're going to be subject to a lot of tax benefits. Okay, and have a good mindset. Be patient. Okay, God says be patient and stay focused on the fundamental growth. And you're trying to build wealth over time for retirement or major life events if anything happens. Okay, so have your checking account, have your maybe your savings account, your business account, and then have your trading account money. Okay, all separated, and make sure you're doing your taxes. And trading is a short-term strategy, and it's where traders buy and sell stocks frequently, and it's often within the same day. Okay, and that's called day trading, whenever you're closing a position within the same day and opening it within the same day. And swing trading means holding a trade for over a day. Okay, it could be for a couple of days, a week, months, or years. Okay, and they heavily rely on technical analysis to spot patterns and indicators for quick profits from short-term price movements. And some key characteristics: time horizon. Okay, for day trades, you can hold from minutes to hours. Okay, and that's any trade close and open within the same day. Okay, and swing trading can go from minutes to months. Okay, to minutes to days. Okay, so as soon as you open your contract, as long as you're holding it for over a day, okay, from the minute you open it, as long as it's open for over a day, that'd be considered a swing trade. So the mindset, okay. You can either if you're like a futures trader, for example, and you can't afford the full margin, then you're going to be forced to be a day trader. But if you're a stock trader, okay, for example, okay, or you trade stock options, then you're going to be able to hold for many months, many days, depending on the contract that you buy. Or shares, you can go ahead and just buy and hold for days, years, and months. And use this in order to generate income. And even from day trades, take that profit. Don't go buy LV, don't go buy the Lamborghini just yet. Stay down, reinvest it into profits, reinvest it into shares, Okay, buy some more stocks. That way your money's going to always be making you money, and then go ball out later on. Okay, stay down first. Trust me. You don't want to be going broke or be getting into debt because you didn't invest. So some common investment strategies. Choosing the right strategy is going to be key to success. And here are the two most popular and accessible ones. One, DCA, so dollar cost averaging. And this is a strategy where you invest a fixed amount of money at regular intervals, regardless of the stock's price. For example, investing $100 in a stock every month. This approach averages out your purchase over time, reducing the risk of buying at a market high, and it's simple, disciplined way to invest. So for example, and don't be buying at all-time highs. Do your TA, do your technical analysis research, make sure your chart lines up with what you want to invest in. Okay, don't buy at all-time highs. Wait for a pullback, and if you're struggling with how to identify pullbacks or you don't know what to buy, head over to stackmode.net. So, for example, in January, for example, if you buy one share of a stock for $100, in February, you'll buy another share for $90. In March, you buy a third share for $110. Your average purchase price is now $100. If you had invested $300 all at once in January, your average would be higher. Okay, and value investing. Made famous by the legendary investor Warren Buffett. Okay, value investing involves finding stocks that are trading for less than their intrinsic value. And value investors look for bargains in the market. So look for lows. Okay, we're going to be going over certain lows, and let's go ahead and break down the chart with certain things. Okay, so when it comes to breaking down certain lows, you need to understand support and resistance first. So resistance is going to be the area where price is going to be falling in a downwards direction, as that's due to the fact where sellers came in. Okay, so let's take this example for here. So I can see here that there's going to be resistance above current price. Okay, I can see that price open the same year that this video is going to be recorded in. I'm expecting a big sweep here. Okay, due to the fact that I see, okay, the IPO, initial public offering, hit the stock market here. Okay, shares went down. Looks like it created a low here at this area of support, and I can assume that price wants to sweep up to an area of resistance. Okay, so always understand that within the stock market too, price is going to always be trying to chase and break areas of resistances. That's going to be the main goal of the stock market. Okay, so once again, price is going to try and chase and break areas of resistance. It's not going to keep falling at the same areas of resistances forever. Okay, one day, inshallah, the company's going to grind, drop a good product. Okay, investors are going to invest into it. They might collab with some other company, and resistances are going to be broken because there's going to be investors putting money into it, increasing its value, thus increasing its share price. Okay, so a lot of the times in the stock market, I'm looking to play within a bullish scenario. I personally don't really short the stock market too much because I know that it's a left to right chart. Okay, I know that any good stock, for the most part, I can see here from left to right, from year after year, it just goes in an upward direction. Okay, no matter how many pullbacks happen, the goal of the stock market is to go in an upwards direction because companies are working hard, hiring customers, waking up, grinding, okay, and putting their all in order to grow the company, inshallah. Okay, so technicals are going to be really the simple part. So let's get back into the lesson. So value investing. Okay, value investing helps you just keep buying in increments over time, buying at certain pullback levels. And some risks to consider. No investment is going to be without risk, and understanding these risks are going to be crucial for making informed decisions and protecting your capital. And remember, past performance is not a guarantee of future results. Okay, past performance is not a guarantee of future results. You have to be consistent. Okay, you have to keep going hard. Okay, you have to keep your head in the game and don't stop. Keep on. And market risk. This is the risk that your entire investment portfolio would decrease in value due to a downturn in the overall market. And factors like a recession can affect you, global events, or political instability that can cause a broad market decline. And diversification is the primary tool to mitigate risk, okay, whether it be in certain sectors, healthcare, AI, broker stocks, etc. And inflation. So this is the risk that your purchasing power of your investment returns will be eroded by inflation. That's when pretty much everything gets more expensive in the company. And if your stock portfolio only grows 2% in a year, but inflation's at 3%, you effectively lost purchasing power. And liquidity risk. This is the risk that you won't be able to sell your investment quickly enough to prevent a loss. And this is generally not an issue with major stocks on major exchanges, but can be a factor for penny stocks or investments in smaller, less known companies, for example. And the role of a brokerage account. To buy and sell stocks, you're going to need a brokerage account. And a brokerage is the financial firm that facilitates transactions between buyers and sellers on a stock exchange. And think of them as the gateway to the stock market. And here's what to look for: low fees on your brokerage account. Many brokerages offer commission-free trading on stocks and ETFs. And find yourself a user-friendly platform. Okay, there's going to be a lot of brokers available. Figure out which one works for you. Okay, it should be easy to navigate, easy to understand. Shouldn't be any type of hidden fees and stuff like that. And research tools. Okay, a lot of them offer good research tools, stuff where you can look at the chart, okay, set alerts, etc. And make sure that the broker has a good customer support team. Okay, you don't want to be having your bread stuck in loops. Okay, you don't want to be having your money stuck in a financial ruin and be going through financial turmoil for absolutely no reason. Okay, so choose a brokerage account that has some good reviews, has a great customer support team, and make sure that it has some insurance too. So in case the broker ever shuts down, you'll be able to get your money back. So that's what regulated is. And make sure you guys just play a good broker that has some money saved up. Okay. For example, a brokerage account is going to be like your bank, but for the stock market. And then you can deposit cash into your account with your card on some of them. That's also going to be something too. Some brokers don't offer instant card transfers, but some do. Okay. But you can deposit using your bank account, wire transfers, etc. And then you can use that cash to place orders to buy and sell stocks on the market. And investing in the stock market involves risk, and this presentation is going to be for educational purposes only, and it's not considered financial advice. Okay. Before you make your decisions, okay, pray to God. Okay, take your time. And don't lose yourself. Even if you lose money, it's going to be good. You're going to run it up again as long as you stay persistent. Okay. Keep going. No matter how many losses you take, no matter how many times you think you're not going to get to where you want to be, ignore all those thoughts. Stay focused. Ignore everything and just stay focused. Okay. I love you guys so much. Stay prayed to God. Keep grinding and head over to Stackmode.net for all trading education. Peace. Class, we're going to be talking about value investing versus growth investing. We're investing for a reason. It's time to stop being broke. Being broke isn't cool. Late bills isn't cool. Debt isn't cool. And suffering isn't cool. If you want to start